of the models coming down, or people shifting from premium, more expensive models to cheaper models. That's mostly likely the open source models.
Yeah, Carmen, when people talk about the U.S. model and the approach that China is doing, right, we highlighted really the cost advantage that China has at the moment. It's pretty much split around 9-1 to the U.S. right now. What other measures do you see, or what other sort of efforts do you think could happen to really narrow that gap?
So I want to be precise here, right? So the indices we cover are text-based. They are coding-based model, now, different model modalities. So the ones we see here are obviously driven by cheaper electricity, as you mentioned, also by just in general more robust providers than the few that's really premium lab-based, right? When you have a lot more participants, any token factories can offer any open source models. Then you definitely put on pricing pressure on those open weights providers.
Okay, well, let's talk about then end user of perhaps a better pricing mechanism. Have you noticed in as far as the index is concerned, or the data that goes into and how you compute this index, a closer correlation between where the index goes and, say, actual cloud computing costs, for example? I just want to get a sense of, from a CFO's perspective, can I trust the index, is my simple question.
Right. So the H100 indices precisely measured on-demand NeoCloud per GPU per hour rate. Okay. So it's highly correlated with H100 NeoCloud rental rate globally. Obviously, there's a basis trading going on between the US East H100 rental rate versus, let's say, somewhere in Europe. However, this is highly correlated with the spot prices. What I would like to point out is people assume that should be a correlation between the token indices as well as the on-demand H100 spot rate, right? Because you need one GPU to produce tokens. Right now, the correlation is rather weak. There are many reasons for that. One can be, there's a huge subsidization going on, and people really shifting from the AI sort of, pay it and take, do all you need to a actual billing by token consumption. So once that's start sort of going to full action, we're probably going to see correlation between the token indices as well as the GPU indices.
Daily token consumption in China, I think some numbers that you've kind of played out and found and recorded for us was 140 trillion in China. It's really grown exponentially in the last few years. What does it tell you about where we are in this whole AI adoption in China now? I mean, you mentioned before that it's not really about leveling the playing field, but it's more about amplifying the advantages that China already has. But how do you see this all evolve?
I think the next few months are going to be very interesting for the whole AI ecosystem. I just came from Race Summit in Paris, and we had a lot of conversation with open source, open weights providers, as well as other AI token factory providers in Europe and across in the US. The way we look at it is as the pricing going to continue to change and evolve, we're going to see less VC subsidization going forward. And then companies will be more strategic on how to routing their AI workflows to different, basically, plans. We'll see potentially a very interesting price changes throughout different ecosystem. Another thing I want to point out is Goldman Sachs just published a report last week. It's a thematic AI long China. Basically, that's the long China AI industry thesis. Basically, saying that the China AI-related stocks probably about 16% of global AI revenue. However, only 1% of the mutual fund actually invest in any China-related AI companies. So they call it huge AI, long AI China stocks. I thought that was pretty interesting.
Okay, just to ask you, do you agree with that thesis that the world is underweight what explicitly, to our knowledge, seems to be a no-brainer buy there, Carmen?
So that's interesting because all the AI token factories, a lot of them we work with are based in US and Europe. You can argue the revenue generated based on the Chinese open source models are actually captured by the American and European firms, right? So it depends on who actually able to capture the margin. And not only that, right? If you think about the differentiation between token factories, before H100 is all bare metal. You can argue differentiation is not as strong as the token factory AI API layer. Depends on how you optimize your software stack, your model deployment efficiency and timing, latency. There's potentially a lot more you can differentiate against other token factories.
When you talk about just how cheap some of these tokens are in China, I'm just wondering, is it just likely just going to have a spark a price war? I mean, are we already in a bit of a price war? And how do you think that's going to impact long-term monetization for some of these AI players now?
I don't think we're in a very competitive market quite yet. If you think about, just from NeoCloud point of view, right? If your business model can be bare metal rental or can be token factory definitely has a lot higher margin than bare metal and commercials. And then it was an interesting study we did last year is whenever we see the GPU price comes down, if it's really truly competitive market, the token prices should come down as well, right? Because they're supposed to pass down the savings to customers. It's a true competitive market. We didn't see that happen last year, right? That translates to the token factory, the LM layer, they do have pricing power, right? They kept their margin, even the GPU costs came down quite a bit last year. As we moving forward, I think people still want to have the latest access. People trust their NeoCloud provider, token factory, and are willing to pay a premium potentially than looking for the cheapest provider all the time.
Yeah, and now that I guess, there is global, somewhat better price transparency globally for people to be able to find what the best, find out where they can get the best deal. And, against the backdrop, Carmen, of this raging debate whether there is a bubble in CapEx spend, particularly on the GPU side, with us being able to find where the excess supply is likely much easier now than 6 months ago, does it seem to you there is a looming or coming oversupply of GPUs currently, or am I just overthinking this?
David, I would love to know where you get your secret stash of GPUs. I definitely don't now see there's excess supply right now. Compute Exchange, we couldn't meet about 50% of our RFQs on the platforms. And then, but bear in mind, we work with all NeoClouds in the US, in Europe, and in Southeast Asia, right? So we do have a really vast network, and we still couldn't meet 50% of our RFQs. That being said, what's interesting is if you look at our term structure for H100, B200, the backend got flattened. So for a very long time, it was contango, meaning instead of having a discount as you sign a longer term contract, you're actually paying a premium for longer term contract for a very long time this year. And now we start seeing the curve flattened, which is a lot more normal. Supposed to be, downward sloping curve because the longer term contract you signed, the cheaper it should be per GPU per hour, right? So we definitely see that kind of correction. So we do see more supply, but doesn't mean that's enough. And then no one can really predict, I don't think, the demand side, right? Who knows when people are gonna start ramping up their adoption and which country. So that's one thing. Another thing is interesting is token side, right? People just assume that they have to pay on-demand prices for tokens. There's actually, you can go enter a forward contract with tokens, translate to you can lock in token prices and without worrying about the volatility going forward as well.
Carmen, it's great to have you. Carmen Lee, CEO at Compute Exchange and Silicon Data there. Of course, you can rewatch our shows on the Bloomberg Video Hub. Subscribers can explore live streams and our news and interviews there, including the one we just did with Carmen. Check it out at bloomberg.com/videos.
Western countries, all of them are cutting funding to Africa. And some of these programs were supported by funding coming from Western countries, like for human resources, for testing, for transportation of samples. And suddenly, African countries have to think how to fund money and to cover this gap. But it takes some time. And I think the combination of all of these factors are fueling this mistrust that we see at community level. We value the support we got and we are still getting from the US. And we think that if we continue to work together, and there is no reason for the US not to work with Africa CDC, Africa CDC is the leader in terms of public health in Africa.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Well, China has renewed its rejection of the South China Sea arbitration ruling and criticized a joint statement by the U.S. and its allies marking the 10th anniversary of that decision.
Yep, let's bring in Min Lo, our China correspondent. Let's start with a stance from China to saying this ruling is invalid.
Yeah, this has always been China's long-standing position, right, on this international tribunal ruling. It's seen it as illegal and invalid, mainly because it violates this principle of state consent, and China has never agreed to a legally binding agreement. It also says the UNCLOS, which is the United Nations Convention on the Law of the Sea, doesn't have any scope to rule on land or territorial sovereignty. But at the heart of this, China doesn't agree with the whole premise as well as the outcome of the ruling, right? It's always laid claim to a large part of the South China Sea based on its historical rights, which it says traces back to the Han Dynasty, 2nd century BC, where China was the first to discover the islands and has since then continuously and peacefully administered its jurisdiction over the islands. And so it is seeing the Philippines in this case as the one that is trying to expand its territory and unilaterally changing the status quo here, and also dragging in other external parties like ASEAN, like the US, into this conflict, using this as a pretext for foreign interference. And China also says that it's, under its jurisdiction, there has been no issue of freedom of navigation or overflight in the South China Sea. And so the fact that the US is conducting these patrols, all of that is an act of provocation to China.
Yeah, and tell us a bit more about the statement that came out from the U.S. and its allies about this, 10th anniversary of this ruling. I mean, what do we make of it? And China has condemned it, of course.
Yeah, so the U.S., along with Japan and the Philippines, have all put out a joint statement saying that they are reaffirming their commitment to the freedom of navigation in the South China Sea. They are commemorating this 10th year anniversary of the ruling from the International Tribunal. And of course, China is not happy about that. And it has come up with statements specifically targeting specific countries, primarily Japan and the Philippines. When it comes to Japan, it's saying that Japan, number one, it's not a claimant to the South China Sea. So first of all, it shouldn't have any right to even comment on this issue. But it's also pointing out the double standards that is being applied by Japan, and pointing out the crimes against humanity and the infringement of other people's territory that Japan had done back in World War II, right? And also using this example of a Japanese atoll that Japan claims is an island that gives them 200 nautical miles of EEZ, exclusive economic zone. But China and Taiwan says that that's not an island, it's just a rock, right? So there's a double standard being applied there as well.
Min, thank you. Min Lo, our China correspondent there. We'll leave it. We'll look at markets. Lots more ahead. This is The China Show.
latest business news wherever and whenever it happens. I'm Scarlett Fu, reporting from America's biggest military shipyard. This is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need,
There's going to be now tons of tariff headlines until midterm elections.
hear it first on Bloomberg.
$11:29 in Tokyo. Japanese markets are heading to that lunch break in just a moment. We're taking a look at when it comes to stocks there. The Nikkei is seeing a bit of pressure. We're lower by about 1% there on that gauge. Topic's doing a little bit better, but still, look at yen. We're still trading that 162. We're back, in fact, back to that 162 level here. Despite some of the moves that we saw last week, right? When we saw JGBs were up, the yen was also slightly up after what Katayama had mentioned about the government wanting to encourage pension funds, including the GPIF, to increase investment in some of these domestic financial assets. So, but we'll see, right? We're back to 162 now.
Yeah, after quite a big move, in fact, to the downside on Friday into the weekend. The rest of the region looking like this. So, of course, today is, I wouldn't say misleading, but it's worth noting that Taiwan is reopening today. The markets were shut there because of the typhoon on Friday. So there is that offset and that catch-up trade that is limiting the downside we're seeing on the Asia-Pacific benchmark. If Taiwan was largely in line, of course, with what we're seeing elsewhere in the region, as far as, I guess, the overall mood of the market is concerned, we should be down even further. Let's put it that way. S&P futures are down 0.4 of 1%. The risk assets, suffice to say, are very much under pressure. And of course, this fresh wave of attacks on the weekend is certainly front and center too.
Yeah, let's talk a little bit more about that, right? The U.S. has launched fresh missile attacks against Iran, with Tehran responding with drone and missile fire on American allies, including Kuwait, Jordan, and Qatar. Let's bring in our Mideast correspondent, Abir Abu Omar. She joins us now from Dubai. Also want to bring in our oil reporter, Nicholas Lua, who joins us from Singapore. Abir, I'll start with you. Just bring us up to speed of what happened over the weekend.
Good morning. Yeah, so what we've seen is this repetition in the patterns that we've seen over the past couple of months or so, and that is essentially Iran attacking commercial ships in the Strait of Hormuz, the U.S. retaliating. So over the weekend, the U.S. had retaliated by striking over 140 targets in Iran. Now, this follows strikes from the United States over the past week, 2 days in a row. This is after President Trump, during the NATO summit last week, had said that as far as he's concerned, the ceasefire between the U.S. and Iran is over. So that escalation in the rhetoric was already present at the beginning of last week. Now, some caveats there, of course, that President Trump went on to say that the negotiators, namely Jared Kushner and Steve Witkoff, can go on to have those conversations with Iran if they wanted to, that they'd have to come back to him. But then what we saw over the weekend is yet another escalation in the rhetoric, and that is after Iran launched attacks against a Cyprus-flagged ship in the Strait of Hormuz, the U.S. Central Command retaliating, again, the 140 targets in Iran, and Iran again in the tit-for-tat attacks, attacking countries in the region. As you have mentioned, those include Jordan, Kuwait, and Qatar. Qatar saying that 3 people were injured, including a child. In Kuwait, we are also reporting some damages to Kuwait Oil Company, the drilling department of that. And in the midst of all of this, the talks are suspended because of the late Supreme Leader's funeral that ended last week. So we have no clarity on whether they're going to come back or not. For the time being, we're not assuming a return of full-on, full-fledged kinetic warfare similar to what we've seen in March, but definitely a more complicated layer of additional strikes that have happened into the early hours of Sunday morning. And something that we keep on monitoring is that traffic in the Strait of Hormuz, the dispute between the United States and Iran. They have conflicting statements about what exactly is happening in the Strait of Hormuz. Iran says it is shut until further notice. The U.S. says not really. President Trump says it's the movement there still continues. And so we'll have to monitor just exactly what is happening over the course of the day in the Strait of Hormuz.
To your point, both can't be true at the same time, at least, that simplified version of those headlines, Abir. So what do we know about the traffic currently through the Strait right now?
Look, I mean, it's still too early to tell. Even before this whole thing started, David, the traffic in the Strait of Hormuz was nowhere near what it was pre-war levels. But we started seeing a trickle of movement since that MOU was signed in Switzerland about 3.5 weeks ago. But since then, ships started treading with a little bit more caution, with Iran escalating those attacks. Now, this Cyprus-flagged ship is not the first ship that Iran attacks over the course of the past 2 weeks. The whole thing started when Iran, at the beginning of last week, attacked an LNG-laden ship flagged to Qatar, which led the U.S. to retaliate. And so even after that, we started seeing ships treading with a little bit more caution. What Central Command is saying is that it escorted 20 ships through the Strait of Hormuz with the help of the U.S. military. Iran says that's not the case. The GMIC is saying that actually the southern part of the Strait of Hormuz still can see a movement there. But again, we're seeing that conflict. Iran still has the potential to attack ships in the Strait of Hormuz, and so you're seeing every ship owner treading with just a little bit more care in the strait. We'll have to again monitor through the course of the day and the week if we're seeing a little bit more marked movement, or if ships are just deciding to hold still for the time being until the situation is a little bit more alleviated.
Yeah, and we're just seeing some more headlines crossing here from the U.S. perspective, and they basically have said that these military strikes, they say they've completed the latest round against Iran. So they have completed another wave of strikes against Iran here and hitting dozens of targets at multiple locations. Nicholas, I'll bring you in here right now to chime in on what this means for oil markets right now. What are you guys tracking today?
I'm going to talk about how tight the refining system looks, Yvonne. In some ways, if we came into this war not exactly comfortable on inventories, although crude somewhat eased, at least on the fuel side, so things like jet fuel, things like diesel that the world desperately needs to keep the economy going, to keep people going on holiday, all that's somewhat tightened up already. I'll give you an example. Last week, Trafigura told us that refineries in the US are already operating at the highest levels possible, right? And so that means that there's not much more incremental additions to fuel supply that can be added, because right now, as we've seen, like it looks like Hormuz has closed back up again. Traffic today, much as with the weekend, has basically come to a near standstill. So all this means is that we are basically at a time when the refining system, when fuel supply is very tight and the market is very delicate. And we see a little bit of that reflected in today's Brent price. You know, we're up as much as 4.6% since the open. We've had some gains, of course, but yeah, I'll talk a bit about what you said with regards to the strikes being concluded, as the US has said. So this is a pattern that they've done at least since last week, and in previous times when they've escalated against Iran, like they will announce a series of strikes. A couple of hours later, they'll say they've stopped, and they'll tell us exactly what they've hit, more or less, roughly, and where. Right? And I think this sort of reflects this pattern that Abir was talking about, the US wanting to show that while there is some kind of escalation, it's a controlled escalation, and it's not a return to the sort of like all-out conflict that we saw early in the war during the days of March.
Okay, so, I mean, just to ring fence potentially a massive leg up in oil prices, Nicholas, do you see anything on the horizon that could take us beyond 90.95 here in Brent?
I think we need to see an escalation above and beyond what we've already seen, right? I think the markets are already very used to this sort of like incremental and then sort of like then sort of U.S. attacking Iran, and then there's some sort of little exchange or skirmish, but these conflicts are always very contained, almost like ritualized, you know. You say it's going to happen, it happens, and then you say it's done, right? I think what we need to see that kind of level, 1995, would be some kind of big escalation back, as we've seen early in March, right? The sense that, negotiations are completely off the table. If Trump says something to the effect of like, it's not just the end of the ceasefire, but negotiations are done, I think then we might get closer to that kind of nightmare scenario that we've so far been able to avoid and have come down from.
And let's hope it stays that way. Team, thank you so much. Covered all angles there. Nicholas Lua in Singapore on oil, and our Middle East correspondent, of course, Abir Abu Omar in Dubai for us, really on the latest and as far as the skirmishes are concerned here. Just on that as well, so we now have some conclusion here as far as what the statement out of the U.S. military is concerned. They have completed now, we understand, this fourth wave of strikes against Iran. And the U.S. is also reiterating on that point we made on Hormuz, that Iran does not control the Strait of Hormuz. Believe that for you, for now, oil prices have already reacted past tense and, of course, currently are trading sideways over the last few minutes or so. Lots more ahead. This is The China Show.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
SK Hynix did not do this extra fundraise to pay out a dividend. They did it to build capacity. So 1-2 years from now, they will have more capacity. At the same time, the buyers are constantly innovating to try to lower the amount of memory usage, compute usage that they have to accomplish what they need. So you're going to have demand slowly coming down, you're going to have supply slowly going up, and the market is going to look a year, 18 months forward even, maybe, and start to price that in.
Yeah, that comment was from our earlier conversation about 90 minutes back here with Alexei Mironenko, Global Head of Investment Solutions at Leo Wealth, when we asked him, of course, what he thinks about the general situation here of SK Hynix, which, if you draw it back just 3 weeks, we're actually now down 34% on the share price, and how quickly actually this has come down, given, of course, how quickly it's actually come up too.
Yeah, I mean, certainly it has been a golden goose, as Julie Ren, our Bloomberg opinion columnist, has called it here. We'll talk a bit more about that with her. But just take a look at the volatility that we have seen, right? And really, this ADR listing is now weighing on what's really happening in the Seoul-listed shares as well. We did speak with the SK Group chairman, Chae Tae-wan, saying that the conglomerate has an ambitious plan to invest more money in the U.S. and betting that demand for chips will continue to grow. Speaking to us after that landmark ADR listing for SK Hynix, Chae also discussed the potential for additional ADR rounds.
We try to expand our ADR size and also that actually requires a better return. So once we have the better return, then there is more demand. So first thing is that we have to keep the stock price stable, and hopefully in a long run, then we can have that upside potentials. And I see that this moment, so this is the AI era. So this AI era is actually spiked at a lot of demand for the memory. So this is a kind of time for us.
A reason to do the ADRs is to raise capital, in part to boost capacity. Your industry peers, Micron, had said very recently they have line of sight to supply improving 2028, the other side of 2027, in part because of the capacity that is coming online. What does SK Hynix see?
Well, we didn't talk to our customers. So we just announced that, 3 months ago, so we're going to double up our capacity.
Yes.
Within 5 years. So that means that we've been doing the business more than 25 years. And then with next 5 years, we're going to double up our whole capacity. People see that that's unrealistic and probably the oversupply and people worry about. Yes. But my customer said that that's not enough. We needed more. So double up is not. It's not enough. Actually, what they want us that we're quadrupling, or 5 times, 6 times. So the more is the better, because demand will be exponentially grow in the future.
Based on that customer demand, what do they see then? If they are the crystal ball, the lens to the future, they believe that their level of demand will stay where it is 2029, 2030. How long does supply tightness respond to that?
Well, nobody expected, I don't know, what's going to happen in next years. But I'm saying that, I have some confidence that the demand will be grow. And our supply capacity never going to catch up. So I don't know how long, but if I think it's going to be until that our society, human society, has set some settlement with the AGI. Then, I guess that that's a kind of normalized at all the cycles. But anyhow, that until then, we need that a lot of memories.
What about SK's commitments? Where are you going to prioritize your investment, domestically versus here in America? Not just with the proceeds from this U.S. share sale, but generally with your balance sheet.
Generally, outside of the Hynix, and the most important matter is the AI data center business. So we announced that almost at the $1 trillion investment in the next 10 years and to set up with the AI data centers. My target is about 15 gigawatt in Korea. But I guess at the 5 gigawatt in outside of the Korea. So I'm looking for that whatever area, including U.S. side, and if there is a good chance. And the problem is that the main thing is the power. So power and the price of the electricity is that's a very important matter with these AI data centers. But once we build that AI data centers, and then it can actually synergy between the memory chip and this infrastructure matter. That's what I'm doing in the future.
Chairman Che, it's a historic day.
Right. Thank you.
Literally making history with the ADRs, but the focus on America, SK's relationship with America. What is your relationship like with the Trump administration, and how are you working with them to bring more of SK Hynix to this country?
Well, not only just SK Hynix, and we've been SK already investing in more than $35 billion in U.S. side, and not many people notice those things, but we do have bio business, we do have the battery business, and Hynix just announced that a new fab in the Indiana side, and also SK Telecom made a lot of investment in the AI startups. So we already invested in the 35, but I see that my plan is that a much bigger number. So
bigger than 35 billion.
much bigger than 35. So I'm planning to, and this is one milestone, and we access the U.S. capital market, and we have a lot of options, and we had that responsibility to keeping that share price, and There's one good thing is that we made it the right investment, and so we keep that at our own value.
SK Group Chairman Che Tae-wan there speaking with our tech anchor Ed Ludlow last week there after that blockbuster debut. It's interesting to talk a little bit more about SK Hynix as well. Our Bloomberg opinion columnist Julie Ren thinks SK Hynix is that golden goose that has to lay more eggs. And now the question is whether or not the firm can satisfy competing demands from stakeholders. Julie joins us now. Let's start with the Korean government. Walk us through the competing demands right now.
So the Korean government is actively pushing SK Hynix and Samsung Electronics to boost capacity. Late last month, they announced the 3 mega projects, and the Samsung and Hynix both promised to open a new factory in the southwestern part of South Korea, which is quite far away from the center of the manufacturing hub south of Seoul. And we also see that the U.S. government, Commerce Secretary Howard Lutnick was pushing Hynix to invest more, right? And then the chairman said, "Oh, we're going to put in a lot more than $35 billion in an interview with the Bloomberg TV." And these capacity boosts, they are not necessarily good for shareholders, right? Like what we are seeing with the record profits from the memory chip holders is that the prices of DRAM memories have gone up. And if you have so much supply coming to market, ultimately the customers, they're not willing to pay so much for the memory chip for the memory chips, and also they're not willing to sign those long-term contracts to lock in demand for the conceivable future. So that cannot possibly be good for shareholders. And we have seen what happened to SK Hynix shares, right? Yeah. Like Korean investors, they bought into those leverage ETFs in late May, which was kind of late, right? They are nursing a lot of losses right now. And I think somehow SK Hynix has to balance out the competing demands from the government and from shareholders.
Yeah, public stability too, if you think about it that way. Some of the forecasts out there, we are trying to figure out how long does this shortage last. And the company says maybe until 2030.
I think it's kind of irresponsible for them to actually come up with a number like 2030. Right now, what we know is that 2016 and 2017, there is supply shortage, right? Because the new
2026, 2027, you mean?
26 and 27, yes. There is a supply shortage. But going further, we don't know what will happen to the supply side, right? The Koreans, they are boosting capacity, forcing Micron to boost capacity too. And China's CXMT is coming to market. In fact, they are going to do their IPO. And with those billions of dollars, they're going to boost capacity too. So we would not know what the supply-demand dynamics will be like going all the way to like 28.
Well, since you mentioned it very quickly, that's going to be a big IPO now. CXMT.
Yes. It's going to be a big IPO, and it's probably going to be the biggest in China this year.
Okay, stay tuned for our coverage on that. Julie, fantastic. Thank you so much. Julie Ren, our Bloomberg opinion columnist. You can check out her piece on the terminal if you're a subscriber or on the website on Bloomberg.com.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
Insight with Haslinda Anand, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Right, welcome back. Before we wrap up the show, we're getting further updates on what's happening in the Middle East now. So this is out of Iran. So two things. One is that they're saying that they have used missiles and drones at the Jordan Prince Hassan Air Base. That's number one. And number two, that the IRGC has hit a U.S. drone center at the U.S. base in Bahrain. So this is continuing updates, of course, from the news we woke up with this morning, and both sides, of course, are continuing to hit each other here.
This is the signs of patterns that we've been talking about, right? Where there's going to be tit-for-tat strikes, and then the U.S. says they've completed this round, and then
the fourth round. Yep.
And then so, as what our oil team has said, is these sort of comes in waves, and in some ways it's quite contained as well. That's why we haven't seen Brent go back above $80 or $90 anymore at this point, right? The market has gotten used to these sort of strikes that's been going on for some time now. This was on the back of what we heard from just the last couple of minutes about the U.S. military completing that another wave of strikes against Iran. They hit dozens of targets at multiple locations as well. So still a lot of questions about where the Strait of Hormuz is. Obviously the U.S. wants to keep it open, but certainly we see composing sort of views from Iran. So we'll see how this all continues here in the next couple of days or so. But certainly it has led to oil prices to spike up just a little bit here this morning, and oil stocks are also following as well.
Yeah, we're going to see that very, very shortly on your screens. We're up on across the futures curve, and some of these names, of course, across your screens. And of course, stay tuned. Of course, coming up as well on Bloomberg Television in about an hour's time. Of course, Horizons Middle East will be all on top of this, completely on top of this story. So stay tuned for that specific program as well. Before we wrap things up, just a quick glance at other stocks that we're tracking. SK Hynix, we've talked about this, and last we checked we were down 10. We're now down 11% on that specific stock. It's pulling down the Kospi index by 5.6%. And just before we wrap up, a look at Chinese markets, please, if we can. As we wrap up, of course, the show today, and just keep in mind the backdrop is here. We're coming off 2 weeks of fairly solid gains, and we'll see whether or not we do get a third week of gains across Chinese markets. That's it from us here today. We will see you all tomorrow.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Oh, hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Live from Sydney, I'm Heidi Stroud-Watts. This is Insight, where we dive deeper into the stories that matter with crucial context and sharp analysis. The US renews missile strikes on Iran as both sides trade fire and claims over Hormuz, raising new questions about shipping safety. Oil jumps and yields push higher, with markets recalibrating inflation risks and pricing in more rate hikes from the Fed. And SK Hynix warns the AI boom could keep memory supply tight for years, suggesting a structural shift for semiconductors as demand continues to outpace capacity. We'll be hearing from their parent company's chairman. Plenty for investors to be ruminating over as we have a blend of the tech rally as well as what we continue to see when it comes to geopolitical tensions as well. This is a picture. It's about 1 o'clock here in Sydney. We're seeing the broader MSCI Asia Pacific down by just about 1%. Really seeing that drag from these Middle East concerns souring the broader mood there. We saw Japanese stocks seeing that decline flipping to losses during the morning trade. We're also seeing some drag when it comes to the Kospi as well. The defensive rotation when it comes to the AI chip play continuing to play out there. SK Hynix, of course, is one to watch, as I mentioned. Those shares slumping in Seoul after that $25.5 billion US debut as well. Some profit taking place, I think. Also a shift to the ADRs as the main drivers when it comes to those domestic stocks trading in Korea. The other major story, of course, is what we're watching with energy prices. Oil jumping again as that conflict over the Strait of Hormuz escalates. We're seeing fresh strikes from the US. The US saying that it's hit dozens of targets in its latest strike against Iran. So to that point, let's get you the latest details when it comes to where this ceasefire essentially sits, because we do have the two sides ramping up tit-for-tat attacks, really issuing conflicting declarations too over whether the Strait of Hormuz is open to shipping. Traffic in the Strait almost non-existent today. Washington launching missile attacks against Iran for the 4th time in about a week. Tehran also using drones and missiles against American allies across the Middle East, including Kuwait, Jordan and Qatar. CNN also reporting that the Islamic Revolutionary Guard Corps fired at commercial ships again. For more, let's bring our Bloomberg Middle East correspondent Abir Abu Ammar, who joins us in Dubai. And in that context, it's perhaps unsurprising that we're not seeing much in the terms of commercial vessel traffic through the Strait of Hormuz, given how heightened these risks are. What do we know about the state of play between the US and Iran right now?
Good morning, Heidi. I mean, it is essentially what you have mentioned in your intro. We're seeing these tit-for-tat attacks continuing to happen, similar patterns repeating themselves. This whole thing started when early in the week, last week, Iran targeted a Qatar-flagged LNG-laden ship in the Strait of Hormuz, leading the U.S. to have 2 straight days of attacks against targets in Iran. That is according to Central Command. And then President Trump during the NATO summit in the mid of the week, really saying that as far as he's concerned, the ceasefire talks between Iran and the United States are over. We caveated that multiple times because President Trump did say during the same setting that Jared Kushner and Steve Witkoff, those are his top negotiators, can go back and talk to the Iranians if they wish and get back to him. And then we saw a slowdown in the escalation, Heidi. But then over the weekend, things picked up again when Iran attacked a Cyprus flagged ship in the Strait of Hormuz. The U.S. going back and attacking more than 140 targets in Iran. Just a few moments ago, we heard from Central Command saying that they finalized the final attack. So 4 attacks in total by the United States on Iran over the course of the week. Iran, on its own accord, not backing down. It attacked countries in the region, as you have mentioned. That includes Kuwait, Jordan, and Qatar. Qatar yesterday saying that 3 people were injured, including a child. Kuwait citing some infrastructure damage to its Kuwait oil company, the drilling department of that oil company. And then in the midst of all of this, oil prices are ticking higher this morning. And that is because of the Strait of Hormuz. The state of play there is still unclear. You've got the United States saying that it is free for shipments. Iran saying no, it's shut until further notice. And so when we talk about those technical negotiations that have already been suspended because of the mass funeral of the late Supreme Leader, going back to those, just what exactly is going to be discussed is going to be interesting, Heidi, because according to the U.S. or for the U.S., the main goal here is the nuclear component. But that seems to have taken a back seat because right now everyone's concern is really the Strait of Hormuz and Iran's assertion of power over it and what the United States decides to do to help ships carry through their movement and those much needed crude exports.
This is it, isn't it? Because never mind these longer, bigger picture existential issues like the nuclear program, even the sort of immediacy of being able to get commercial crude vessels through is at threat at the moment. What is the rhetoric that we're hearing from both sides? Because President Trump over the weekend, calling Iran very, very evil, sick people, quote, we bombed the hell out of them last night. Is it possible to get back to, talks? Even just a few days ago, we heard that technical talks were still on foot.
Yeah, you're right. And look, the underlying assumption for the time being is still that we're not seeing a return to the full-scale, kind of full-fledged war that dragged the entire region that we saw back in March and early April. For now, the underlying assumption is that we're still going to probably go back to having those ceasefire negotiations. It's just that this is all underlined by a big sense of distrust between the U.S. and Iran, especially after this escalation in the narrative that we saw over the weekend and the attacks that we saw over the past week. But the assumption is still that we're probably going to see another round of negotiations carry through. It's just that the elements of those technical talks, as both sides have been calling them, what exactly is going to be discussed? Iran, for the time being, is adamant on the fact that it will control the Strait of Hormuz, that once the negotiation period that is edging closer at the time, it's the deadline for that is in August. We're in mid-July at this point. So what exactly is going to be discussed, how Iran will assert dominance, and then those tolls and fees in the Strait of Hormuz are going to be a big element of that discussion.
Just an enormous amount of uncertainty, and we see that continue vexing of the energy market as well. Bloomberg Middle East correspondent Abir Abu Ahmad there in Dubai with the latest. Let's get some more in terms of how market participants are contending with these, once again, heightened geopolitical risks. Grace Tam joins us. She's a Chief Investment Advisor at BNP Paribas Wealth Management in Hong Kong. Grace, really great to have you with us. We've seen previous bouts throughout the course of this war, really, that investors have been pretty happy to remain sanguine about those risks and continue to focus on the main narrative of the AI and tech theme, right? Is this going to continue persisting, or is it time for markets to have a reality check in terms of these broader war risks?
Yeah, I think especially for this time, market actually not really have a lot of focus on the geopolitical risk. I think the market baseline is things is going to calm down as especially for the U.S. The midterm election is just a few months away, and also we don't think the Trump administrations would like to see like inflation going higher, and that also means yields going higher, and that could detrimental, for the election outcome. So we think, especially for the markets, yes, there may be a little bit like higher volatility, especially in terms of the energy prices. But other than that, we think markets actually will focus on a lot on the fundamentals, especially the fundamentals for the AI, whether the story will continue in coming months.
Well, this is it though, right? Does this now really impact the broader inflationary outlook, Fed expectations as well? We're seeing Treasury markets certainly reacting.
Yeah, I think the yields actually has gone a little bit higher, and I think markets will focus on, especially for this week, the U.S. CPI numbers, whether especially for the headline CPI, with the oil prices actually comparatively speaking, especially versus the first half, is actually lower. Whether in terms of the headline inflations we could see maybe peak, but of course there is also focus on the core inflation, whether it would remain sticky. So that would give us like some hints in terms of the Fed's path outlook. And also, like for this week, Kevin Warsh is going to have the testimony in terms of the semi-annual monetary policy report. I think market would like to see if he has any hints on the inflation outlook and also the interest rate path outlook. But as we all know, Kevin Warsh, he doesn't really prefer to give markets any forward guidance. So I think this would be actually quite interesting. Yeah.
It's interesting because you talk about expecting this bull market to remain intact globally for the second half, and one of those factors is the tax cut effect of lower oil prices. Does that meaningfully change if we start to see longer-lasting higher oil prices sticking around?
Yeah, I think our base case is still things between the U.S. and Iran is going to come down. So for energy prices or oil prices, it could be up higher a little bit, but could be like capped. So I think overall, like inflation could still be like contained, and also as I mentioned, the falling oil prices or lower energy prices, especially compared to the first half, this looks like a tax cut for the economy. So we actually expect a stronger economy in the second half, and this kind of backdrop, and also even with the we also expect like one rate hike maybe after the midterm election in December, but this is just like one and done, and this is actually almost priced in by the market. So I think overall in terms of the macro backdrop, it's still very supportive for the bull market to continue.
What about obviously the other side of the story is perhaps weaker demand from China, right? We've known that the weak domestic demand story has been more difficult to get out of than perhaps earlier perceived. Do you think that makes an impact when it comes to how that domestic market is shaping up?
Yeah, I think for China, especially in the second quarter, we've been seeing like a lot of the economic data, apart from the strong exports, but other domestic demand data that actually has been slowing down. I think the key will be to look at, especially for this month, the Politburo meeting, whether the top leadership, especially in terms of the economic policy directions, whether there is some like change in tone, especially if they are going to be like more supportive to the economy.
Grace Tam of BNP Paribas Wealth Management Hong Kong. Do stick around with us because, of course, we haven't yet gotten to AI and the chip trade yet, because shares of SK Hynix sliding in sold today after Friday's strong Nasdaq debut. We'll be hearing more from the SK Group Chairman Shay Tae-won, who tells us about
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
The world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Welcome back. You're watching Insight. This is one stock that is jumping out for perhaps all the wrong reasons. Down by the most in well over a month, actually. SK Hynix there just extending losses throughout the course of the day. We're down by just over 12.5% now. So really kind of is that the trade for that 13% rally that we saw in the US American depository receipt debut that we saw on Friday? Because we are seeing that shift to traders citing profit taking in the Seoul session, that shift to the ADRs as some of the main drivers that we're seeing here. But the lowest level in more than a month is what we're seeing. And this push from the sort of follow-on demand for those ADRs coming after the biggest first-time share sale by any foreign company in history in the US market. So that was so highly successful. How much of that has really been priced in, and whether we're kind of seeing that weakness in today's Seoul session, a kind of sell the news type reaction that's being expressed in the Korean, the Kospi, versus that American market? It's hard to say that any kind of fundamental shift has taken place when it comes to the outlook between Friday and today. But in the meantime, SK Group Chairman Shea Tae-won says the conglomerate has an ambitious plan to invest more money in the US, betting that demand for chips will continue to grow. Speaking to us after that landmark US listing, Shea also discussed the potential for additional ADR rounds.
We try to expand our ADR size and also better. That actually requires a better return. So once we have the better return, then there is more demand. So first thing is that we have to keep the stock price stable, and hopefully in the long run, then we can have that upside potentials. And I see that this moment. So this is the AI era. So this AI era is actually spiked that a lot of demand for the memory. So this is a kind of time for us.
A reason to do the ADRs is to raise capital, in part to boost capacity. Your industry peers, Micron, had said very recently they have line of sight to supply improving 2028, the other side of 2027, in part because of the capacity that is coming online. What does SK Hynix see?
Well, we didn't talk to our customers. So we just announced that 3 months ago, so we're going to double up our capacity.
Yes.
Within 5 years. So that means that we've been doing the business more than 25 years. And then with next 5 years, we're going to double up our whole capacity. People see that that's unrealistic and probably the oversupply, and people worry about. Yes. But my customer said that that's not enough. We need it more. So double up is not. It's not enough actually. What they want us that we're quadrupling, whether 5 times, 6 times. So the more is the better, because that demand will be exponentially grow in the future.
Based on that customer demand, what do they see then? If they are the crystal ball, the lens to the future, they believe that their level of demand will stay where it is 2029, 2030. How long does supply tightness respond to that?
Well, nobody expected, I don't know, what's going to happen in next years. But I'm saying that, I have some confidence that the demand will be grow. And our supply capacity never going to catch up. So I don't know how long, but if I think it's going to be until that our society, human society, has that some settlement with the AGI. Then, I guess that that's a kind of normalize at all the cycles. But anyhow, that until then, we need that a lot of memories.
SK Group Chairman Shea Tae-won there, speaking with Bloomberg Tech anchor Ed Ludlow. Well, Grace Tam from BNP Paribas Wealth Management Hong Kong is still with us. Grace, thanks for sticking around. Do you think this time is different when it comes to the semiconductor chip cycle?
I don't think this time is different. I think the AI, especially for the upstream story, remain intact. Especially, I think recently we did see some kind of corrections on semiconductors, on hardwares, etc. But that actually we think is a good buying opportunities, because we do still expect them to regain the momentum. To lead the markets higher, especially coming up, we will have the second quarter U.S. earnings season. I think for now, of course, the bar is quite high in terms of the earnings forecast. But I think we still think the demand's still there, especially for the hardware, for the semiconductors, as as long as the hyperscalers, they could continue to expand their capex.
Which markets do you prefer then? Obviously, South Korea with the sort of idiosyncratic trade that we've seen in SK Hynix and Samsung. Taiwan as well, two of the biggest beneficiaries. Do you think there's better opportunities in some of the less tapped markets like China or perhaps even India?
Yeah, I think for now, to play the AI, especially the upstream story, we still like the U.S., we like Taiwan, Japan, and also the China. I think probably the Asian markets, because I mean they have more exposures to the AI upstream trades. For Korea, we think the market tends to be very volatile because I mean they have a lot of like domestic retail, especially leverage positioning, and that's trigger a lot of volatility in the markets. And actually, and also we've been seeing foreign outflows actually from the Korean markets, probably due to the heightened volatilities. So we prefer to play those markets with like more healthy trend. And as I mentioned, it's the U.S., Japan, Taiwan, and also the China A shares. And comparatively speaking, for example, like China A shares and also India, we think they may continue to underperform, although we may be seeing some kind of like mean reversion recently after the overselling situations or actually market has been oversold, so that there's some kind of rebound. But we do see that they need more catalysts to sustain the rally. If there is no catalyst, especially a lot of people to regard a lot of the like China H shares and India, especially the IT services, they're kind of like the software that may be disrupted by all the like new AI tools. So I think if that sentiments continues, they may continue to underperform.
Yeah, we have seen, as you can see in this chart on the Bloomberg, that this confluence of the geopolitical situation, oil prices, of course, AI as well, really weighing on that broad, heavyweight IT sector for India. The valuations have really just dropped this year. But Grace, the other school of thought that's becoming fairly well held is that this AI story is going to become a broader economic story, right? And when it comes to inflation, when it comes to growth. Where are you starting to see that, and how does that sort of broaden out the investment opportunities beyond just within the chip space?
I think in terms of the broadening out story, maybe it's already happening, especially, the war, with the U.S. and Iran war, especially the energy prices falling. But I think people need to see more evidence, especially in terms of the economic data, if we're going to see like stronger momentums in terms of, for example, the U.S. Economic data, and also for the inflation numbers is still like contained, and also for the upcoming earnings seasons. For now, like the second quarter, the earnings growth forecast is over 20%. It's actually very high. But if the market, if the company is still able to beat that, and that could be like driving the rally continue, and especially in terms of the broadening out of the sector performance, like we particularly like financials, industrials, and also the healthcare.
Grace Tam of BNP Paribas Wealth Management in Hong Kong joining us. Really appreciate your time. Well, coming up, India's IT giants, we were just talking about them, set to report earnings this week. Investors
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Welcome back. You're watching Inside. Really choppy start to the trading week as we're seeing in Asia. The sort of contention between the rotation trade firmly underway, being led lower, I should say, by the Kospi, by Korean markets, but also, of course, this uncertainty created by continued tension over the Middle East, fresh strikes over the weekend between the US and Iran, conflicting statements from both sides as well in terms of what exactly is going on with the Strait of Hormuz. Traffic is essentially at a standstill, although depending on who you're talking to, traffic could still technically pass through. That's not happening at the moment. So we are seeing that gain in oil prices rising above $78 a barrel after gaining almost 5.5% last week. That's for Brent, WTI. Near those levels as well, $74, I should say. We're also seeing European natural gas adding as much as close to 3%. So that alleviated concern when it comes to crude supply is back in play. That's feeding through to what we're seeing across treasury markets, across those inflation expectations, as well as on the US dollar, and passing through to precious metals like gold and silver there as well. We have heard that the US military completed a new wave of offensive strikes. This is the fourth time in about the last week or so. And again, conflicting sort of statements from either side as to what's happening. We've also seen sort of retaliatory action from Iran, drone use and the like with some of these Middle East and Gulf nations as well. So really ratcheting up the tensions in that region. Air defense system being struck, radar sites as well, drone capabilities are all some of the targets that we've seen from the US side. On the upside, we are seeing as a result some of the energy names across Asia tracking oil higher there as well, as the likes of Woodside, Santos in Australia seeing gains, Impex in Japan as well, S-Oil in Korea. And in Korea, of course, we're talking about a broadly lower session being dragged down by SK Hynix. This is such a reversal of fortunes from that 13% bump that we saw with the ADR debut last week, but that is sort of almost in exchange for what we're seeing, a decline of almost 13% in the domestic Korean session. Taking a look at India as well, we spoke a little bit a few minutes ago just about the drag when it comes to the broader India IT sector as a result of the AI theme. And at the moment, we are seeing a lot of caution going into the trading day today in India, given that we do have the oil concerns as well as energy prices up, stocks down, bonds down, dollar stronger. All of that is going to play out for the Indian market there as well. Also, foreign and domestic inflows, though, remaining strong. So that is one cushion that we could expect to see give further support for the Indian markets. We'll also be getting India's latest inflation reading in a few hours' time. Bloomberg Economics expecting price rises likely accelerated in June due to high energy costs. Let's get more from our South Asia economy editor, Ruchi Bhatia. Ruchi, really great to have you. We don't see sort of alleviation in this set of numbers, at least, and perhaps not ongoing as well if we continue to see the rise return for oil prices.
Oh, absolutely. India's inflation is expected to accelerate, and it is likely to, come at the RBI's around the RBI's 4% target level for the first time in more than a year and a half, and that is going to keep policymakers on guard. Remember, the central bank governor had said that they do expect inflation to, see some sort of an uptick from here, given the geopolitical crisis and the fact that India is heavily dependent on the monsoons. The RBI's own forecast is for 5.1% for this fiscal year. Having said that, as I said, any sort of acceleration in numbers is going to keep policymakers on guard, but the RBI will refrain from acting on rates anytime soon. One also has to take into account the spatial distribution of rainfall in the coming weeks, and that will, certainly be something that policymakers will be keeping an eye on. In the last few weeks, we have seen that the monsoon deficit has certainly reduced a lot, but what is it really going to mean in the weeks to come is something that we will be watching out for. Also, how the geopolitical crisis plays out and what it is going to really mean for oil prices is something that the policymakers will be watching out for very closely.
The rupee looking like it will continue to be a headache for the RBI, right?
Oh, absolutely. I mean, any sort of rupee weakness, will put pressure on the RBI. And it's sort of going to be a catch-22. The RBI will not be able to raise rates. Neither they will be able to, hold at this moment. Having said that, the RBI has tried to hold fort for a very long time. They have said that only once they see on the inflation front, some sort of second round effects will they look to act. Having said that, right now the focus is squarely on growth. In fact, some of the RBI MPC members that we spoke to in the last few weeks, they have said that after some sort of an easing of the geopolitical crisis, they had expected India's growth to top 7% for the current year, but now we're back to square one. We're seeing the re-emergence of the geopolitical crisis once again. So it is going to be really tough for policymakers as to how they really navigate through these very testing times.
Bloomberg South Asia economy editor Ruchi Bhatia there. We're also expecting some major earnings out of India this week. The likes of HCL Tech, Wipro, Tech Mahindra set to report their first quarter results. It is a broad sector, as we've been discussing, weighed down by the broader macroeconomic uncertainty, elements of AI disruption, the ongoing Middle East conflict as well. Let's bring our South Asia breaking news editor Harshita Somanathan from Mumbai for us. So Harshita, HCL Tech, let's start off with that reporting today. How are expectations shaping up?
Well, for HCL Tech, the most important thing is really their revenue growth guidance. Last quarter, they told investors that they expect to grow at between 1% and 4% for the year on a constant currency basis. And by and large, analysts expect them to hold on to that forecast. Apart from that, there's, of course, the AI risk that's weighing on not just HCL Tech, but pretty much the whole sector. And there's really both risk and opportunity to be had there because on one hand, they risk losing business because of this new technology, but also there's opportunities for more orders because clients want their help in implementing AI in their business, and there's productivity gains to be had from it as well. So we'll really have to see how it goes for HCL and the others.
What else are you watching in terms of Wipro, Tech Mahindra this week as well?
So Wipro has been fairly active in the acquisition space over the last year. So we'll be looking for commentary on how their the acquisitions so far have been shaping up in terms of integration and if they have any new deals in the pipeline. For Tech Mahindra, it's in the middle of a big cost-cutting exercise in order to bring up their margins. The company calls it Project Fortius. So we'll of course be looking for updates on that. More broadly for the sector, the biggest overhang at the moment is all of the macro uncertainty, as you spoke about earlier as well, with all of the Middle East and Iran escalations. The IT companies' clients seem to be pushing back or rethinking a lot of their big IT services projects, which is not good for their revenue, of course. And all of this, along with the AI uncertainty, has kept their stocks pretty beaten down. Year to date, the NSE IT index is down more than 25%. So at this point, markets are just looking for any good news to any signs that a recovery should be around the corner anytime now.
What else are investors watching for in terms of broader signs for the India IT sector?
One Q was the TCS earnings on Thursday. Broadly, it was positive since the shares did go up right after the earnings. And on the positive side, we had TCS report the first rise in revenue on a constant currency basis, the first rise in 5 quarters. And the CEO also told investors that he expects a lot of demand to come back in the second quarter onwards. So a lot of the projects that had gotten deferred or rethinked earlier in the year, there was some pent-up demand from that, which is likely to come back from Q2. Apart from that, there's also the rupee. The rupee has depreciated a lot in the last few months, and generally that tends to be good for their top line because these companies do make a lot of their revenue in US dollars. But some analysts do expect forex hedging losses to be reported in this quarter. So, and again, that differs a lot company by company. So we'll have to wait and see how it plays out.
Bloomberg South Asia breaking news editor Harshita Somanathan there in Mumbai. Let's get more when it comes to that IT services sector in India. The earnings momentum with Sonam Srivastava, who's the founder and CEO of Rat Research. She believes that this is a margin defense quarter, not a growth quarter. So, Sonam, really good to have you with us. So what are you expecting when it comes to these numbers, first and foremost?
See, I think, like you said, it's a margin defense quarter, right? It's not a growth quarter. TCS did give, very good numbers on the rupee side, but if you look at the constant currency, the growth was still very, very slow. And I think that's what we're expecting across the board this time. I think there's a good shift happening in the Indian IT sector where, we see this huge opportunity that AI can be the big enterprise. AI can be the big lever or the big transformation for these companies, but they're not there yet. I think TCS has made some move. 9% of their revenue is coming through AI, but others have not moved that much, and there's a lot of focus on optimization and cost cutting. So I think this is a transformation quarter, and I think margins will be under pressure. But any positive news that you start getting from AI adoption in these companies, I think that would be where you can see growth.
That's a big question, isn't it? Given, as you say, AI is a structural story. When does it transform from being a drag to being the revenue engine that we do expect at some point in the future?
See, I think Indian IT does have like a lot of positives in this space, right? See, I think NASSCOM put out a report that AI, enterprise AI, can be like a $300 billion industry, which is almost the same scale as Indian AI. And Indian AI, they have like a big set of experts who are very good at these enterprise contracts where you're taking them to production instead of doing POCs. A lot of POCs in AI fail, but then you need engineers to make them successful. Plus, there's a lot of data engineering that's needed. So I think Indian IT would have a role to play, and you're slowly seeing some numbers. I think TCS gets 9% of the revenue from AI right now. I think there is, HCL Tech has Sarvam AI, which is with the government, which is sort of there for them. And I think even Tech Mahindra has made some movement. So, I think, we have to wait for that number where, we see a significant shift of these companies adapting to the AI, which won't be there, right away, right? It will take some time.
Do you think that happens or will happen faster in the mid-cap segment?
Faster than the capital goods segments? I think capital goods segment is a different story, right? So right now, India is a very, there's a lot of dispersion in the Indian market, and there's a lot of volatility. Even our VIX is unpredictable. If you saw last week, we saw a day of 25% hike in VIX and then a 25% fall down. But there's a lot of dispersion. So while you're losing a lot of money the IT industry is losing in the capital goods space, especially stocks that are in the data center theme or stocks that are in the government capex theme, have literally turned multi-baggers during this year. So there's a lot of dispersion in India, but the capital good as such might be plateauing for a bit, right? And yeah, I think IT is interesting, but apart from that, there are other sectors where we're also seeing some opportunity.
We've seen that cushion of foreign inflows causing financials banks to that 14-month high. How sustained do you expect this to be?
The financial rally?
That's right.
I think, so I think it's very interesting. I think you've seen a massive amount of selling in Indian by FIIs in India, around 1.26 lakh, and of that around 44% is banks. So there's been massive amount of selling in Indian banks, and I think when FIIs come back, they come back to financials first, and there's a lot of undervaluation in that segment. In terms of earnings, there will be a lot of interesting things to note here. In the bank's earnings, I think in the coming week, we might see ICICI and HDFC also come back with their earnings. So banks definitely look exciting. You've seen some rally in the PSU banks, and going forward, once we see some ramp up with the private bank space, that will really consolidate that banks are picking up. But yeah, I think there's a structural shift now that people are selling IT. Where do they invest? And banks are at such a low, and they're such a major part of Indian economy that they are definitely looking interesting. And fundamentally also, they are pretty stable and strong companies, right?
Is there a sense that, if you're seeing a rotation out of IT, kind of at the moment financials is the only place that can be absorbed? Is there a sense of that playing out as well in terms of not many other options?
Yeah, that could be there. I think in terms of other options right now, see, if you look at the price movement, pharma definitely is doing very strongly in India. So, it's a defensive play. In this currency environment, pharma definitely does well. So pharma is an interesting pick. But yeah, I think there's a structural story or a technical story to money rotating out towards financials as well. Plus, I think fundamentally also, if you look at the earnings, these companies are strong. Plus, now that we are moving into that regime where rates might be higher for longer, right? That definitely helps the banks, right? That might help in their NIM pressure that they have been facing, and some RBI moves are also positive for the banking sector. So I think there are some positives, and I think there's a mean reversion trade that could happen.
How do you see the broader macroeconomic impact of if we potentially see a continued revival of Middle East tensions, right? We've seen this peace deal essentially kind of fall by the wayside. Oil is starting to surge again. Dollar is returning to that safe haven trade. All of this has some pretty significant implications for Indian assets.
So definitely, I think in India, the passive beta definitely is losing some interest, right? I think the real opportunity right now, like what we do, is coming in systematic stock selection. And like I said, there's a lot of dispersion in the market. So while you have some sectors doing extremely well, there are other big laggards as well. So I think risk targeted allocation to these sectors is important. And I think, if the crude price rises again, that will have another impact. We'll see our trade deficit number come in, right? I think it will have an impact on the inflation numbers coming in. I think, like we discussed, that the growth outlook has been revised a little bit. For different sectors, you'll see different plays. Like, for example, on the IT side, any hike in currency. So right now what's happening is all this tension is, there's a lot of domestic buying in India. There's a lot of strong SIP flows, and foreign investors are selling, right? So even though there could be a bigger correction, the Indian investor is absorbing it. But what's really hurting is the rupee, right? And any rupee depreciation sort of helps the IT sector a little bit, but it does impact various other sectors, and it definitely reduces, or the outlook for IT, for banks, for different sectors in the economy goes down with the hike in crude price. So definitely, I think that is something to watch out for.
Do you see that as being the biggest barrier to a continued rebound, fragile as it is, when it comes to Indian stocks?
See, I think definitely that could be a story that does impact India. But along with it, I think structurally the AI trade has hit the big players in India, which are the IT stocks. They are all corrected 35%. We are a services economy, so that definitely has an impact. And that has also played a role in FII selling, in the rupee depreciating. So I think there are few things going on in the Indian economy, but it's a wide and diverse market, and we see structural opportunities, that are still doing really well. So right now, from the market, I am pretty, confident or very positive about it, because I see distinct opportunities, right? So right now, like I said, you're seeing an opportunity come up in pharma, you're seeing an opportunity come up in banks. Even your, capital goods have done extremely well. They have very strong order books. So that could also be a positive in the current scenario.
Sonam, really great to have you with us. Sonam Srivastava, who's the founder and CEO of Right Research there. And of course, we do have the market opens in the last couple of minutes in India. It is a cautious start to trading as expected. There is sort of this view that despite the rebound that we've seen for Indian stocks, a positive run for most of the past month, of course, part of that story, as we've been discussing, has been the role of foreign inflows coming back in. Investors clearly are not sort of prepared for crude oil climbing back towards that $80 a barrel mark with this revival of Middle East tensions and airstrikes resuming, I think, for the fourth time over the past week from the US to Iran, and some of the retaliatory reaction from Iran as well. The Sensex coming online 0.8% lower. The Nifty, they're also seeing some softness. This as we continue to watch for the impact on IT companies, in particular, big earnings week, of course, as we've just been talking about, and whether or not some of these bearish bets will budge in India. Speaking of bears, we are seeing quite a bit of bearish action when it comes to Korean stocks as well. Essentially, this turnaround of what we saw with the ADR debut of SK Hynix in the US session on Friday, that gain of 13%. We are now, though, interestingly, just about half of the losses that we've seen for SK Hynix. And in fact, we have given back a lot. If you're looking at Friday's US action as being kind of a trade-off for SK Hynix, we're still down just about 12% for domestic trading in the Kospi, the broader Kospi down by 6% as that rotation trade from AI and tech continues to play out. Well, still ahead, the sudden death of US Senator Lindsey Graham sets up a succession drama less than 4 months before the US midterms. We get the latest on that next. This is Bloomberg.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream. And a lot of dreams are, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start in the third floor or the lobby. You actually have to start in the basement.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story. This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
South Carolina Senator Lindsey Graham died unexpectedly over the weekend at the age of 71. It sets up a succession drama in the state less than 4 months before the midterm elections. For more, let's bring up Bloomberg Managing Editor Jill Desis. So, Jill, take us through the implications of this.
Right. So, Heidi, with this unexpected death of Senator Lindsey Graham, what this does do is open up an opening for a potential replacement and ultimately a fight against the Democratic candidate, Annie Andrews, later this year during the midterm elections. So there's a little bit of latitude here in terms of what this may look like from a political perspective. So sitting governor has the ability to appoint someone to serve out the rest of Lindsey Graham's term. Donald Trump, I think, actually has said that he has some ideas about who this may be, though it's not necessarily the time so soon after Lindsey Graham's death to announce that. What that person would do is ultimately, again, set up this electoral fight in the fall. Now, one thing I will point out is that when it comes to South Carolina, this is a deeply, deeply conservative state. So it's highly unlikely in any event that a Democratic candidate would ultimately challenge, but there are some issues at play here. So we'll have to see who ultimately comes in to replace Lindsey Graham in this seat.
There's also been, of course, weeks of speculation about the health of Senator Mitch McConnell as well.
Yes, that's right. He actually just released a statement after a month out of public view saying that he had a fall, was hospitalized for pneumonia. Again, very rampant speculation about the health of Mitch McConnell, 84 years old. But again, he's released a statement along with a photograph saying that he's doing okay, but that he did suffer from pneumonia.
Bloomberg Managing Editor Joe Desis there. Well, that is just about it for Inside Horizons. Middle East and Africa is up next. This
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but is going to be a platform that runs in parallel to our more traditional exchanges.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Oil and treasury yields jump as the United States and Iran launch fresh tit-for-tat attacks, reviving concerns of higher inflation and interest rates. Meanwhile, confusion abounds as both sides issue conflicting statements about whether the Strait of Hormuz is open or not. Plus, SK Hynix tanks dragging the Kospi and broader Asia lower. That's amid profit-taking after the memory chipmaker's highly anticipated U.S. trading debut. It's just gone 8 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. Happy Monday. A lot to get through today after the happenings over the weekend in the Middle East. But before, let's get into a picture of what equities are looking like. U.S. futures, 0.5% lower. Now, there's a lot at play here. Earnings season kicks off again. We have the likes of Goldman Sachs and JP Morgan reporting on Tuesday. Two themes at play still, tech and the geopolitics from the region. We're keeping an eye out on SK Hynix's ADR listing in the United States. That debut on Friday, 13% higher. But in Asia this morning, it's actually tanking, 13% lower, dragging down the MSCI Asia Pacific and the Kospi in South Korea. We've got Winnie in a second to talk to us about the weaknesses there. So we're keeping an eye on the AI rally, whether those earnings are going to solidify the argument of whether that AI rally that we've been seeing over the past quarter is justified or not. But the big story and the big gain this morning is in Brent crude prices, 4% higher. We're getting closer to the $80 on the barrel mark. Yet again, fresh escalations into the early hours of the morning. Just moments ago, Iran saying that it continues its attacks in the region against allies of the United States, namely Kuwait, Qatar, and Jordan. And then we're also keeping an eye on the yields, the 10-year yields in the United States, 2 basis points higher. We've got economic data out of the United States tomorrow, CPI numbers for June. But we're also keeping an eye on the rate-sensitive 2-year treasuries, which climbed 3 basis points earlier. Now, this is important because it's the highest level since February 2025. U.S. dollar is strengthening against all G10 currencies, precious metals, gold is dropping, silver is dropping. And so we're keeping an eye out on those precious metal assets, similar to a position we found ourselves in a few months ago. But on the weakness that is happening across Asia this morning, we've got Winnie Su in Hong Kong for us. Winnie, what do you have for us this morning?
Yeah, good morning, Abir. Really, we are seeing Kospi here dragging the broader region lower with the gauge here down about 7.5% to its lowest in about a month. Now, you just mentioned that biggest drag still comes from SK Hynix, which is down about 14% here after that ADR listing on Friday. Now, some say that it is just profit taking after how the ADR listing jumped about 13% in the U.S., but others are actually becoming more cautious, citing a potential peak out in the memory cycle. And also we are seeing local brokers flagging that the second quarter earnings might be a miss for the company. So that's also weighing on the Korean stocks here today. Now you flip the board and take a look at how that's impacting the broader region, because we have MSCI Asia here extending losses to 1.8%, also headed for the lowest in about 2 months. Now that sentiment is also weakened by how we are still seeing higher oil prices driven by the geopolitical tensions, but overall tech stocks leading declines, with Japan's Nikkei 225 also lower by more than 2%. The bright spot, though, is actually in Taiwanese stocks. We are seeing the gauge really flat-ish here, and that is a bit of a wait-and-see mood ahead of the June sales data that is expected later today, and it was already postponed due to the typhoon last week, so we will be closely watching out for that as well. Back to you, Abir.
All right, so at least one bright spot there. Winnie Su in Hong Kong with those market updates as usual. Now let's turn back to the regional story. Oil is jumping after the U.S. and Iran launch fresh tit-for-tat attacks. It comes as both sides issue conflicting declarations over whether the Strait of Hormuz is open to shipping. Washington's attack was the 4th U.S. strike in about a week and followed one of the heaviest bombardments since a June agreement intended to halt the fighting. For more on this developing story, we're now joined by Stuart Livingstone-Wallace, our executive editor for the Middle East, North Africa, and Russia. Stuart, where does this latest escalation leave us in terms of the wider talks, the technical talks?
I mean, not in a good place is the short answer. And it's the speed at which it's happening and the fact that there clearly is escalation. We don't have specific numbers on what the Iranians are throwing across, but we do know from CENTCOM, that is the US military, I think on the first day of the most recent round, it was something like 80 targets, then 90 targets, then 140 targets. We don't have the numbers for the most recent rounds, but one would presume it's of that similar order. So, you tot it all up, and it starts looking increasingly like full-scale hostilities again. We're not quite there yet, it has to be said. Where exactly is the off-ramp here? What exactly is the mechanism under which they're both going to agree to sort of step back and start talking again? Really not clear. Yeah. And all the rhetoric we're seeing coming out of both sides is increasingly hostile.
Yeah, and I was talking to our colleagues in Asia earlier, and they were pointing out that when it comes to the Strait of Hormuz, two things can't be true at the same time. Yeah. The U.S. says it's open for shipping. Iran says closed until further notice. What are we seeing in terms of the movement there?
So on Saturday, we could observe very little. But again, that comes with the caveat that increasingly the ships are turning off their transponders again. So we don't necessarily have visibility. Short of sitting on the side of Hormuz itself with a pair of binoculars, it's very hard to tell what exactly is going through. So there's usually a lag when we figure it out. Again, one side is saying a few ships are getting through. I think there was a report overnight that something like 20 ships went through. Whether that's true or not, I don't know. The Iranians are saying nothing's going through. The truth is probably somewhere in between. But I would imagine you would have to be a very brave ship captain right now to be willing to navigate the strait.
And what has the response been from the GCC? I mean, Qatar, up until less than or a little bit more than a week ago, was mediating those talks, and yesterday it was attacked. So what has been so far the GCC response from the countries that have been attacked?
So again, we don't have great visibility on that. What we suspect, because we know it's happened previously repeatedly, is that they're working behind the scenes. They tend to do things a lot less publicly than, say, the Iranians or the Americans, which is not terribly difficult. But I think what we have to remember is really they were the key parties, obviously along with Pakistan and others, of getting to this place in the first place. In other words, to getting some sort of resolution going. They are very effective mediators under very difficult circumstances, so one would presume they're doing the same thing now, but we don't have hard evidence of that.
All right, Stuart, thank you as always for those timely updates on this fast developing story. Stuart Livingstone-Wallace, our executive editor for the Middle East, North Africa and Russia. Now let's carry on this conversation about what is happening in the region. We're now joined by John Sfakianakis, chief economist and head of research at the Gulf Research Center. John, good to have you on this morning. It is a fast developing situation. We're hearing these headlines from Iran up until moments ago. So with this escalation in the rhetoric from the region, where do we go next?
No, thank you for having me, Abir. Nice to be with you. It's difficult to tell because both of them are trying to see who kind of blinks first. And it's over the strait. This is contested over who controls the strait. So there is a lot of brinkmanship, but also there is a lot of bravado that is going on. I think that they will de-escalate. This is not yet the time. I think that we will see a few more rounds of peace and war, a little bit of peace, a little bit of war. Again, the MOU is kind of structurally difficult and hollow in that sense. And we're going to see more of the same. But I do expect that there will be intervention from Qatar, Pakistan, and others. Cooler heads will eventually prevail because oil is beginning to jump to close to 80, and then from there on, higher than 80. So I think they will de-escalate, but it is a contested area, the strait.
The strait, that was exactly going to be my next question. It does feel, and I was just talking to Stuart about how two things cannot be right at the same time. Iran has asserted dominance over the Strait of Hormuz. The U.S. is trying to help ships through the strait to carry their crude exports and other shipments as well. So when it comes to the Strait of Hormuz, who really do you think has the upper hand at the time being?
Well, right now, neither. Both of them are trying to vie. They're trying to contest their sovereignty, meaning the good side versus the bad side, whatever is the pick you make. But Iran certainly is back on the table, and they're trying to make it obvious that they want to control. It's not necessarily just the fees, but it's the issue of sovereignty and control and this sense of empowerment that Iran has in the regime over its population. So they want to demonstrate that by having control. On the other hand, the U.S. clearly has a way out, which is the Strait of Hormuz to be used through the Omani shore, and that has been working quite well. More than 600 vessels have gone through, but that is being contested. So if Iran continues to attack vessels that are using the Omani shore, I think the U.S. is going to attack them vociferously, and they're going to be pounding. And we're going to go back to 2.0, an invasion of 2.0.
So is that actually a base case scenario? Do you think that we're going to go back to a state of full-on kinetic warfare where the entire region is dragged? We're seeing oil closer to $100 a barrel. Do you think that, given the current circumstances, that is a possibility at the time being?
Oh, I do see it, but not yet. This is on Iran's court. Okay. The ball is on Iran's court. If they do continue, I think the U.S. is going to go back and they will do a lot of kinetic kind of 2.0 attack. So I think the Iranians are underestimating the ability of President Trump to go back. They believe that because of the November elections, there will be very little war going on, and they think that this is going to be pushed down the road. I think if you do underestimate President Trump, you end up losing, and this is where we're getting at right now.
John, just to bring the GCC into this, because they have been bearing the brunt of all of this, even Qatar, I mean, again, we were just talking about how up until a week ago, Qatar was mediating, and yesterday it was getting attacked. So when it comes to their economic model, the state of play as it stands now, this, war, but not really a full-scale war, what are the long-term disadvantages or what are the long-term damages to the economic models that these countries have been trying to prevail over the past few decades or so?
Yeah, thank you. It's a great question. I mean, you want to diversify. You want to, in many ways, de-harmonize, so to speak. So you want to delink your dependency from the Strait. Very difficult, easier said than done. But the UAE will do it. Saudi Arabia will do it. Oman has been quite successful and doing quite well economically right now. The difficulty is confidence, investors coming in, and this back and forth, little bit of peace, little bit of war is not working out quite well. So you need to have stability. But overall, I think for these countries, they will do well. For Qatar, it's more complicated. For Kuwait, it's more complicated. For Bahrain, again, it's difficult. So you need to have proper peace. Right now, we have neither war nor peace.
Yeah. Yeah. All right, John, we're going to have to leave it there. John Sfakianakis, Chief Economist and Head of Research at the Gulf Research Center. Now, still ahead, UTI International tells us why they think Fed Chair Kevin Warsh is a dove in hawk's clothing. This is as treasuries drop in response to the latest round of strikes by the United States and Iran. More details ahead. This is Bloomberg.
Fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern right here on Bloomberg. Context changes everything.
Welcome to Bloomberg This Weekend. I'm David Guerrero.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Welcome back to Horizons Middle East and Africa. Oil and treasuries are in focus after the United States and Iran launch a fresh round of strikes against each other. This comes amid renewed concern that higher energy prices will keep inflation elevated and interest rates higher for longer. So to discuss more on the story, we're now bringing in Global Head and CEO at UTI International, Praveen Jagwani. Praveen, good to have you on this morning. Thank you for joining us on the table. I was taking a look at your notes, and we were just talking about this, the classification of Kevin Warsh as a dove in hawk's clothing. With the latest escalations in the Middle East, we've got a June CPI report coming out this week from the United States. What do you think will make the case for Kevin Warsh? Do you think he'll have to hike rates?
He is playing it really clever because, yes,
presently the inflation does seem to be fairly sticky, but there already are signs, not just in the US, but globally, of persistent destruction of demand. And that would force the hand of the Fed of whether to support Main Street or Wall Street. You know, what's happened over the last couple of years is that media has conflated the economy with the markets. And every time you speak to anyone in the Trump administration about the state of the economy, they refer to the markets. Hey, look at the markets. That's the barometer of health. And nothing could be further from truth. Because we have seen even companies like Walmart, Walgreens, McDonald's cut prices. That's simply because the consumer cannot afford all of that. So demand destruction across the world, Europe, China, Japan, US, that's a reality. When demand destruction becomes a bigger problem than inflation, all the central banks have a dilemma. Who do you support more, markets or the economy? So far, the data would seem to suggest that central banks are leaning in favor of inflation management rather than growth management. This could flip really quickly. We've already seen the Atlanta Fed data come out on GDP, and it's falling off a cliff. So the economy really is on its knees. It's living on a prayer. So I would imagine by the time, by end of the year, Fed is going to hold through, but then the next move is a cut.
Okay, let's turn to the markets. I mean, the Fed will have an impact there, but let's turn to the tech play, the tech story. We're seeing divergent growth. We're seeing divergent policy. And you also mentioned those. We're also seeing concentrated asset allocation. So in one question or another, do you think that, first of all, do you think we're in a bubble and we're set for a little bit of a disaster when it comes to those concentrated allocations in specific names?
Unquestionably, we are in a bubble. See, the whole promise of artificial intelligence was it's going to make everyone's life better. And the truest test for me would be to see rising profitability, rising profit margins for all companies. But there's a case of chalk and cheese between the Mag 7 and S&P 493. The profit margins of the remaining 493 companies have been flatlining for 3 years. So where is the promised gain of all this AI investment? I'm not dissing AI. AI is going to be profoundly useful for civilization, but the amount of money that is chasing AI returns right now, that more likely than not is going to be disappointed.
So that's the question. How does an investor now distinguish between real AI productivity and then the hype?
That's the billion-dollar question now. It is really hard to do asset allocation because global capital is mercenary. It's been shifting asset classes, segments, countries so rapidly, it is hard to make the classic well-diversified global allocation because correlations pretty quickly go to one. And even within the AI trade, you've seen it go from CapEx, hyperscalers, semiconductors, DRAMs. There is a lot of correlation and concentration in this particular trade. I suppose you could, when this corrects, and it will correct, when the earnings don't match up, you will get defensives, dividend yields, even bonds, maybe at the short end, then gold.
Okay, so that's something to look forward to in the upcoming earnings season. But just finally, on the geopolitical situation, I mean, we're seeing the latest rounds of escalation. If we remain in a status quo of some sorts, no war, but no peace, really, do you think the market will still move over that the way it has over the past 3-4 months?
No, so global capital is going to be risk averse. Political and policy uncertainty, they kill markets. Markets can absorb any amount of bad news, provided it's certain bad news. It's the uncertainty that markets dislike completely. And a phase like that, it's going to hurt markets.
All right, Praveen, we're going to have to leave it there with geopolitics hurting markets. That was Praveen Jagwani, Global Head and CEO of UTI International. Now, for a look at some of the other stories we're following, Apple is taking OpenAI to court, accusing the startup of stealing trade secrets. The lawsuit names former Apple engineer Chang Liu alleging he downloaded confidential files and continued accessing Apple systems after joining OpenAI. Apple is seeking damages and and wants OpenAI to destroy any proprietary materials and redesign future products that include its technology. OpenAI denies the allegations. Bloomberg has learned that Nippon Paint has made multiple offers for AkzoNobel's decorative paints business in the last month. Sources tell us the latest bid values the unit at about $8.6 billion and would reunify the Dulux brand globally while expanding Nippon Paint's footprint in Europe. We're also told AkzoNobel has yet to engage with the proposal. And Bloomberg has also learned that SoftBank and PayPay are considering buying a stake worth several hundred billion yens in 7&I. Sources say the 7-Eleven owner may issue new shares to be acquired by SoftBank and PayPay. It signals a willingness by 7&I to surrender some control over its future in return for an alliance with key strategic partners. And coming up, an audit ordered by the president of Senegal has uncovered a hidden debt crisis. We'll have the details later in the program. This is Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Welcome back to Horizons Middle East and Africa. Qatar's former emir, Sheikh Hamad bin Khalifa Al Thani, has died at the age of 74. Sheikh Hamad transformed Qatar from a small Gulf state into one of the world's wealthiest nations, building its influence on vast natural gas wealth and helping establish the country as a major diplomatic and investment power. He ruled for 18 years before handing power to his son, Sheikh Tamim bin Hamad Al Thani, in 2013. In South Carolina, Senator Lindsey Graham died unexpectedly over the weekend at the age of 71. His death sets up a succession drama in the state less than 4 months before the midterm elections. The governor can name a replacement for the remainder of Graham's term, but state election law then calls for a special primary election. Meanwhile, Republican Senator Mitch McConnell has given an update on his medical condition, breaking a lengthy silence after public and political pressure. In a statement, he says he suffered a fall in June and contracted pneumonia that required hospital treatment. Now, before we head into the break, let's take a quick look at where asset classes are. Everything is in the red when it comes to equities. S&P future edging lower by the second 0.5 lower. Similar story in other U.S. benchmarks. And oil prices are edging higher because of that escalation from the Middle East. Now, coming up, as venture capital plunges in the Middle East, we'll talk to Philip Bahoshi, CEO and co-founder of private capital data platform Magnet. This is Bloomberg.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start in the third floor or the lobby. You actually have to start in the basement.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
Welcome to Bloomberg This Weekend.
Breaking news today from Wall Street to Washington.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Oil and treasury yields jump as the United States and Iran launch fresh tit-for-tat attacks, reviving concerns of higher inflation and interest rates. Meanwhile, confusion abounds as both sides issue conflicting statements about whether the Strait of Hormuz is open or not. Plus, SK Hynix tanks dragging the Kospi and broader Asia lower. That's amid profit-taking after the memory chipmaker's highly anticipated U.S. trading debut. It's just gone 8:30 a.m. across the Emirates. I'm Abir Abamar in Dubai. Still a lot to get through for the show, but another quick look at where equity markets are this morning. U.S. futures sticking lower by the second 0.5% lower now. We still keep an eye out on the beginning of the earnings season yet again. J.P. Morgan, Goldman Sachs set to report earnings tomorrow in the United States. We're also keeping an eye out on SK Hynix, its debut in the United States on Friday, 13% higher by the close, although that is not the same same picture in Asia this morning. It's actually 14% lower, trading in Seoul already. That's dragging on the wider benchmark, the MSCI Asia Pacific. The Kospi in South Korea dropping about 7% at this point. So the wider gauge is about 1.8% lower. But then the big story for us is, of course, in oil prices, 4% higher. Brent crude edging very close to the $80 on the barrel mark. Fresh escalations in the region up until the very early hours of this morning. Iran retaliating to fresh U.S. strikes by hitting countries in the region, including Kuwait, Qatar, and Jordan. Air bases there as well. So we keep an eye out on the movement of ships, tankers in the Strait of Hormuz for the time being. A standstill is what it looks like. And then we're also keeping an eye out on the 10-year yields in the United States, about 2 basis points higher. Fresh economic data out of the United States. CPI for June comes out tomorrow. We're also keeping an eye on the yield on the rate-sensitive 2-year treasuries that climbed about 3 basis points earlier in the day. Now, that's important because it's the highest level since 2025, February 2025. And then the U.S. dollar strengthening against all G10 currencies. Precious metals dropping, gold and silver dropping this morning. We find ourselves at a place that's very similar to a state of play that was the case in April or May because of those developments in the Middle East. But for the continuing weakness we're seeing in Asian equities this morning, let's check in on how markets there are doing. And we've got Winnie Su again in Hong Kong for us. Winnie?
Temperatures. Well, Joe Wirtz, thank you so much for your time today. That's Bloomberg's weather and climate reporter out of London. Now to some other top stories we're following this morning. The French far-right leader Marine Le Pen has extended her poll lead ahead of next April's presidential election. A survey by Elab suggests that Le Pen would get as much as 35.5% of the first-round vote. That is 3 points higher than it was back in March. Le Pen has recently been cleared to stand by an appeals court, which shortened her election ban while upholding her conviction for embezzling EU funds. And Andy Burnham, the UK's presumptive next prime minister, is reportedly considering unveiling a bolstered budget later this year. According to the Financial Times, one idea officials are exploring is merging the annual budget with the spending review for departments, which is typically held separately. And police in the UK have arrested a man on suspicion of murdering the former minister and Reform UK politician Anne Widdecombe. This suspect is a 28-year-old white British national who was arrested in South Yorkshire. Widdecombe was found dead in her home in Devon on Thursday, having suffered serious injuries. Police believe she'd been attacked the day before. And a quick correction here and clarification. A story earlier about SoftBank considering buying a stake in 7&i. We said PayPal was involved in the bid. It's actually Japanese payments company PayPay, which is looking at joining the acquisition. Plenty more coming up. We'll set you up for the week ahead with earnings season kicking off here in Europe, but also in the United States. A busy week for the Federal Reserve. And of course, that all-important U.S. inflation data. That's coming up next. And this is Bloomberg.
income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
What happened was you were out.
Welcome back to Bloomberg Daybreak Europe. Some of the charts that we are watching today ahead of some of the important action throughout the week. We are looking this morning at Brent, the unrefined crude oil versus the refined products. We've got a record and the sort of spread of the pricing of those two products. The price of refined petroleum products remain as high as if crude was trading at $100 a barrel. We've, of course, come down fairly rapidly over the last couple of weeks, down to about $80 a barrel for Brent this morning. Obviously, this is an important story. It hits the consumers because they're not buying crude oil. They are buying gasoline and diesel and things like that. It goes into the calculations of inflation. And of course, it's something that Trump has complained a lot about and talking about targeting oil companies. But it's possible that they may have limited influence because, of course, part of this story is the Ukrainians knocking out a huge amount of, for example, that Russian refining capacity that is having an effect on those cargoes that can ship. We're also watching earnings season this week. We've got a lot of earnings on deck here from the United States. You can see here looking at the different, the sort of market cap being presented in terms of earnings this week of $5.9 trillion and sort of building into next week about $13 trillion worth of market cap reporting then, and really sort of culminating there for the last week of July where we get almost $25 trillion worth of reporting. We'll be watching it very closely this week as we watch U.S. banks kicking off earnings season tomorrow, and of course watching the Federal Reserve and Kevin Warsh's testimony. But of course here in Europe it's also earnings season, and it is an earnings season that may be a little bit more optimistic than we have seen in a while. Here we have analysts raising European earnings estimates for basically the first time at that sort of pace in more than 2 years. We're expecting that basically after 2 years of uninterrupted downgrades, analysts now raising that at the fastest pace since the mid-2024. European profits are expected to rise 12% this season. That's the highest growth in more than 3 years, according to the data that we have put together over at Bloomberg Intelligence. Of course, though, all of this is susceptible to some changes and some vulnerabilities to the downside with the war in Iran, and of course the sort of shipments and through the Strait of Hormuz bearing drastically on European energy prices. To access, search, and save all the Bloomberg terminal charts used on this show and across Bloomberg TV, terminal chart subscribers can go to the function CHRT Go. And the things we're watching a little bit later this week, Tuesday is a big day. It kicks off U.S. CPI data. We're watching that very closely for any hints on where inflation is going. And, of course, Kevin Warsh testifying before the House Banking Committee or the Senate before Tuesday, where we get the U.S. bank earnings, as we were mentioning there. That kicks off. And, of course, Wednesday here in Europe, one of the companies we watch most closely, one of the most important in Europe, ASML earnings. The opening trade is up next, and this is Bloomberg.
think the productivity increase is not going to be marginal. I think it's going to be an order of magnitude. It's going to be significant. We're working on it internally, and we're really excited about it. I could see a world where an analyst who previously covered 20 stocks could cover 200 because they are maybe managing a fleet of agents that looks at all these stocks and tracks them. I could see a world where we're able to tackle a far greater number of top of funnel ideas and do a bit of work on them and more accurately pick what the best 15 to 20 best long ideas in a given year are. So I actually think it's going to reshape how we do things in the long term.
One of the things we struggle with is it's very easy to get siloed as an analyst, and these are the sectors I look at, these are the tools I rely on, these are the models I've built, and for us, we are spending more and more time as a research team collaborating around ideas with multiple people looking at sectors or trying to solve key questions or things in the market. And so the ability to have standard tools that we're all using to track lots of different things, to inform how the models are trained, will be super helpful, I think, in people being able to pick up someone else's work and say, I totally get this because it's in the same vocabulary that I do it myself.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
Good morning, everybody. It's another Monday, July the 13th, to be precise. Here's what's on this morning's agenda. Oil prices jump after another series of U.S. and Iranian attacks in the Middle East. SK Hynix climbed in New York on Friday, but the stock is dropping again in Korea this morning. And we get you set up for the macro and earnings stories. Oh, and of course the football that are set to dominate the week ahead. Tom.
So across the markets, then the focus is on the oil price right now. So the geopolitical risk premium being priced back into Brent. Price is up 4.5% right now. As Anna was saying, the Kospi's in focus. SK Hynix dropping double digits right now, at least in the Korean session. Nasdaq 100 futures then also lower by 1.3%, called lower by 1.3%. S&P futures also looking lower. European futures pointing to the downside as well after ending last week moderately lower. But it is the oil price story that is front and centre again for European stocks in today's session. The countdown to the opening trade starts right now.
Welcome to the programme then, everybody. This is then Monday morning. This is the opening trade. And Tom, let's start with everything that's moving energy prices, shall we? Because we have a really big jump in oil prices this morning. 4.4% higher on Brent at 79.37. So we seem to have moved a long way downwards in the oil price and then very much back upwards on the back of more attacks. So more overnight attacks, weekend attacks. And over the past week, we've seen this sort of tit-for-tat exchange taking place. And actually what's notable overnight is what the US are doing seems to be heavier than was previously the case. What the Iranians are doing seems to be wider, targeting more states than was previously the case. So all of this really prompts questions about what this means for the talks, the longer-term talks that were supposed to settle all kinds of long-term issues between Iran and the United States. What it means right now for the Strait of Hormuz as well, because there are different takes on how open the strait is right now. The Iranians saying it's closed, the Americans saying no, it's open. And so all of that is adding up to a higher oil price. But it's not just oil we're focused on, it's also other refined products. And that takes us to other geographies and everything that's been going on in Russia, Ukraine against Russia and their infrastructure. So there's a lot pushing higher on these energy prices.
Which does raise the question as to whether or not at least some investors and some market participants out there have been complacent in terms of their assumptions about lower energy prices, given the double whammy that we're seeing from Russia in terms of the refined products, as you say, and what's happening in Iran. Really interesting in terms of the step up in attacks, and this is crucial as well, is Kuwaiti infrastructure being targeted for the first time in a number of weeks. We've got Jordan and Qatar being targeted by the Iranians as well. Gas prices in Europe are higher by about 3.6%. Brent is up about 11% since this time last week. So the inflation push is there. President Trump with strong words again for the Iranian regime, but also saying that the opportunity for negotiations is still there, and we still don't know. It seems like the traffic through the Strait, at least today, has pretty much ground again to a halt.
Yes, we were just showing there the impact that we're seeing on refined product and crude. So crude had dropped quite a lot, of course, since we saw the Memorandum of Understanding being put in place, but it hadn't taken down the refined product with it, and some of that is to do with that other geography, which is, as we've been saying, what's been going on in Russia. Russia, usually a big exporter of all kinds of refined product, whether that is jet fuel or diesel or gasoline. And so now there's all kinds of talk about whether, that doesn't seem to be happening, and whether they even have enough for their own requirements. And broadly speaking, Javier Blas talking about how the world is without some 10% of its refining capacity right now. And so all of that does just add, as you say, to that inflationary dynamic that is going to be front of centre this week.
That's the household, that's the business impact on a big week, of course, inflation, and we'll break that down for you in terms of the preview around US CPI as well. So another big week in terms of the inflation story, of course, what all this means for central bank thinking as well. To the tech story, SK Hynix, very successful ADR listing in the US, of course, on Friday, pretty well received by the markets, double-digit gains. But today, is it profit-taking? Is it because some of those fund flows have shifted to the US? But SK Hynix is under pressure, significant losses for that stock. We know that it is volatile, so we're getting used to the volatility. At least we talk about it on an almost daily basis for SK Hynix, but it is having that negative effect more broadly across the Kospi, which is down sharply in the Korean session right now, down 7.8%. I think halted for trading as well. It certainly was for a period of time. So we're working out whether or not this is profit-taking, or this is just a reallocation of your capital, maybe to the ADRs. Again, it was a positive session, and the team in the US speaking to the head of SK Hynix, who said that he still sees strong demand and shortage of the supply of memory through 2030.
Absolutely, and some of these companies in this sector in Korea, so it's an SK Hynix, one of them, talking about doubling production capacity. And we go back to that old question about whether this is cyclical, whether this is structural. A lot of people making the assumption that this is structural, and therefore that big capacity build-out really makes sense. Is that going to be what shareholders want from this business, though? It certainly seems to be what lots of governments want from the business, because the US and Korean governments both want capacity to be expanded in their geographies, of course. But will shareholders want this? We've talked about how the Kospi is already in a bear market. Well, we also note that the Kospi is incredibly cheap right now, which seems kind of incredible. But that's the extent to which. But that's because of the earnings strength. The extent we've seen the drop, and it is now in correction in a bear market, but it's also because of that earnings strength, because of the forecast for earnings. So this is on a forward PE, and how much confidence do you have in the E of the PE when you're looking forward? And that just seems to be, there's so much volatility around those numbers, so many varied expectations.
Close to 70% versus the same month last year. So TSMC coming through with some numbers suggesting that the AI demand story is holding up for them. OK,
lots of risk events ahead this week, Tom, so let's just go through some of those. Of course, bearing in mind that we have two huge football games taking place, Tuesday night, Wednesday night, so that will distract people, let's just put it that way, shall we? France, Spain, England, Argentina, those are going to be in focus. But in the markets, US CPI is going to be front and centre, but also Kevin Walsh testifying, a semi-annual testimony, to Congress. Will these things added together give us a sense of whether July is a live meeting? And it doesn't seem like the market thinks that July is a live meeting right now. We've got a 24% or so chance of a hike attached to the month of July. So it seems like the market is thinking, no, this is not the month where we get any hike, if that's what we're going to get. And we add into that all of the banks that are going to be reporting just tomorrow. It's going to be an incredible few hours for the bank reporters and anyone following the banking sector. But lots to watch out for there.
So earnings season kicking off to kind of stress test where these markets are right now. The picture for Kevin Walsh was so different at Sintra when he spoke, with inflation, at least the oil price story heading in a very different direction to today. So whether or not the language changes from Kevin Walsh when he gives this testimony, with, to your point, markets pricing between 1 to 2 hikes by the end of this year, is going to be something clearly that investors will be focused on.
And will he be trying to just talk about his task forces? He's now
7. Is it 7 task forces?
15, I think.
15.
He's nominated 15 leaders to the task forces. So actually, no, I take that back. Not sure how many there are, but he's nominated a lot of leaders to them. And Bloomberg Intelligence talking about how they managed to be a list of both respected and unconventional thinkers. So, maybe that's a success, at least for now. But the bank earnings story is going to be amazing. 5 US banks reporting on Tuesday. Stock trading are going to be in focus. IPO boom's going to be in focus. 2 of the conference calls actually overlap with each other. So I don't know if anyone has the bandwidth. We're going to need all the AI tools available.
OK, coming up, we're going to get to what is happening in terms of the geopolitics with a focus, of course, again on the Strait of Hormuz, as we've been discussing. We're going to be hearing from the French President Emmanuel Macron later today, hosting a summit of the coalition of the willing countries in Paris to discuss Ukraine, more on what to expect from the meeting of leaders. Plus, Bloomberg learning that Nippon Paint has offered $8.5 billion for Akzo Nobel's paint business. We're going to dig into the potential tie-up and track those shares at the open. Up next, we're joined by Elliot Hentoff, head of macro policy at State Street Global Advisors. If you have any questions.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
Welcome back. We are a little over 45 minutes from the opening trade this Monday. European futures pointing lower by 0.9%, risk-off across equities, and higher oil is definitely part of the story when it comes to the negative risk factors for the equity market and the inflation risks. Oil currently up, Brent up 4.3% at $79 a barrel, WTI at 74.57. So oil prices rising then this morning after the US and Iran exchanged a fresh round of strikes. US Central Command says forces hit dozens of targets in the latest attack. The escalation came after Iran reportedly fired again at commercial ships in the Strait of Hormuz. Both sides issue conflicting declarations over whether the passage is open to shipping. Let's bring in Bloomberg's Abir Abu Omar in Dubai. Abir, what do we know then about the latest round of US attacks on Iran and how Tehran is responding to this?
Good morning, Tom. Well, we're seeing similar patterns repeating themselves, right? So Iran starts by attacking ships in the Strait of Hormuz. The U.S. retaliates by hitting targets in Iran. And this is certainly what was playing out over the weekend and into the early hours of this morning. So it started again with Iran hitting a Cyprus-flagged ship in the Strait of Hormuz over the weekend. The U.S. Attacking parts in Iran that includes blasts that were heard in the southern coast, including energy hubs in the Bushehr province and also the port cities of Bandar Abbas in Iran. Iran retaliating to the U.S. attacks in turn by hitting countries in the region. So that's Jordan, Kuwait, and Qatar. So we're hearing some infrastructure damage in Qatar's oil company, particularly the drilling department there. And Qatar yesterday saying that 3 people were injured as a result of the Iranian attacks, one of them a child, actually. So again, these patterns that we are seeing repeating themselves, although we didn't think we'd be here at this stage, especially after that MOU was signed about 4 weeks ago in June in Switzerland. It does look like the talks for the time being are suspended. Now, they were suspended, Tom, because of the mass funeral of the late Supreme Leader that ended last week, but we just don't have a lot of clarity yet on whether these talks are set to recommence and whether the mediators will get involved again. And just to note here that the mediators, including Qatar, that's one of the countries that were attacked. And so we're seeing, again, these repetition of patterns of tit-for-tat attacks between the warring sides. A lot of unclarity still. And at the heart of this, of course, is the Strait of Hormuz and the shipping movements there.
Yeah, absolutely. A bit. What is the current situation in the Strait of Hormuz then? Because we get conflicting reports from the two sides.
You're right. And look, I mean, two sides cannot be right, because what Iran is saying is that the Strait of Hormuz is shut until further notice. The U.S., President Trump, Central Command are saying, actually, no, the ships are free to move in the Strait of Hormuz. The GMIC is saying that the southern part of the strait is free for movement. But up until this morning, we're seeing traffic yet again at a standstill. Yesterday, our team's reporting that some ships are successful at passing through. We reported that 6 ships have been able to pass through with their transponders off. But we're still seeing ships and tankers and these ship owners going through the Strait of Hormuz, treading with a little bit more caution. But up until this morning, we're seeing traffic at a standstill. And so that's yet another thing to monitor. And just to bear in mind that the Strait of Hormuz is one of the major concessions in that MOU that was signed, the 14-clause MOU. It does look like every other clause has taken a backseat for the time being. Iran really wanting to assert its dominance over the Strait of Hormuz. The U.S. not biting and hitting Iran at any chance when Iran strikes those ships in the Strait of Hormuz, Anna.
Abir, thank you very much. Bloomberg's Abir Abu Omar in Dubai. Let's bring Elliot Hentov into the conversation, head of macro policy research at State Street Global Advisors, with us on set this Monday morning. Elliot, good morning to you. So another weekend of these tit-for-tat attacks between the US and Iran, and oil prices as a result of that and other news flow out of Russia, perhaps up by 4%. So we're back to $79 as the handle for Brent. How comfortable do you feel about your earlier assumptions, Elliot, about where oil prices go and where that allows your investment strategy to head?
Well, I think the last time we spoke, we didn't have an MOU in place. We were pretty confident that it would come before July. It did. And we thought oil would be hover around $85. And then we saw the markets got excited. They cashed the full peace dividend before time came. And so I actually think oil prices are back to where they should be. We should kind of be around the 80 range, maybe a little bit above, a little bit below, depending on where news flow is. But fundamentally, we don't really have new information. We knew it was going to be a fragile agreement. It is a fragile agreement, but fundamentally the structure has not changed. Both parties do not want to return to full war. And the disruption is not sustainable over a long term.
Okay, because, yes, I mean, it does seem as if maybe fewer ships getting through than maybe our hopes at the time that the MOU was signed. I mean, it's difficult to say. As we were hearing from Abir, they turn transponders off, so sometimes it's for understandable reasons, but then it's difficult to know exactly how much gets through. But is that the risk? Is there upside risk to energy prices because fewer vessels will decide to make the journey?
At this point, it's, I think, classic more tail risk. The way you think about geopolitics broadly, things could go badly wrong, yes, but the core base scenario is that there will be some type of arrangement over the coming weeks that kind of lessens the strains on energy markets over time. That has to be the core base assumption at this stage.
And Elliot, good morning. Your call or your view on $80 to $85 a barrel on Brent, that is something the equity markets can handle, right? I mean, at what point what level of oil becomes an issue for the stock markets?
We're far away from that point. That's just simply the reality. If you look at inflation data, if you look at market pricing of inflation data, the oil shock has kind of been put into the rearview mirror. Again, I think a little bit prematurely.
Yeah.
It's kind of cashing the full peace dividend that was probably not justified. But we're far away from territory where it becomes punitive. That's well north of $100 over sustained periods. That's when it starts to become an issue for the equity market.
You're still comfortable with your call that the Fed doesn't hike this year?
Yes. And look, if you again look at the inflation data, it's not the acute pressure there. You have some mixed signals in the market, and I think as long as the signals are mixed, kind of an employment market that's mixed, price signals that are mixed, I think the Fed does not move. The Fed needs kind of more definitive data to react. Yeah. And that could come next year in quite a different form.
OK, so we're getting headline inflation this week, and the headline number could show that drop below 4% once again. So maybe there's that ambiguity there on the inflation side of things. Another inflation watch, though, you say that the developments around Ukraine and Russia, that this is becoming more of a market-relevant conflict once again.
Yeah, I'm frankly a little bit more worried about that conflict. We've had Russia curtailing certain diesel exports. It's actually Russia's buying in refined products into international markets. So the squeeze in some subsets of energy markets is going to get worse. And the big thing is the Ukraine-Russia war has changed in fundamental terms. And I think that opens up a variety of scenarios that were a little bit unthinkable. A lot of them are downside scenarios. I think the upside scenario has also become a little bit more credible now that there's incentives for Russia to perhaps come back to the table and actually move diplomacy ahead. Either way, I'd say there's more uncertainty and unpredictability, whereas the Iran war is not resolved, but we kind of know where the guardrails are, and we have a better sense of how to predict and think about scenarios there.
I'm just trying to think about how the European equity story was, at the start of the signing of the MOU, started to diverge in a positive fashion from US stocks. That didn't play out last week. So European stocks ended lower, US stocks ended marginally higher by the end of the week. Where does all of this leave the European equity story?
Well, again, I think the peace dividend markets just got too excited to cash the full chunk when the MOU came out.
Yeah.
I do think as the year progresses, that story of the broadening equity rally outside of the core sectors in the U.S., outside of the U.S. geographically, it does speak in favor of a European recovery a little bit.
Okay.
Is that what diversification means to you then, Elliot? We heard a lot last week about diversification in lots of different forms. Some people talking about moving between different parts of US tech, others talking about different geographies, and some talking about, actually time to get into financials now. What's the diversification trade for you?
Well, in the equity side, it's certainly a broadening out sectorally away from the core drivers of the rally the last 2-3 years, particularly as we now start to see some of the AI capex show up in non-tech sectors, and one would assume that delivers improved profitability there. But also geographically, as long as these geopolitical risks get resolved, you do have kind of a little bit of a tailwind for those equity markets to catch up a little bit.
Which are those non-tech sectors then where it's showing up? I mean, we're going to focus on US banks this week and IPOs and the boom there. M&A, the boom there, that seems to CapEx, everything that goes into funding this big CapEx boom. I suppose there's a more than tangential link between that and what's going on for US banks. But where are you seeing it show up?
I think the data to watch really is who's spending in serious ways now spending money on CapEx that is not in the tech sector. And those are the quarterly figures to watch.
Okay. The company's spending on CapEx that is not within the AI sector. So kind of third order effects of this spending story. How do you think about the bonds? Is the bond sell-off got further to run? I mean, you see the Fed on hold. Yields have been rising, and you can link that. That's pretty linked to the higher oil price story. Is there a bond sell-off shock that we should be bracing for?
Yeah, I think the bond story is a little bit more tricky because structurally we're in a world where yields are going to stay high and rising over the very long periods. That has a lot to do with, obviously, the fiscal picture. But near term, you've had a little bit of a relaxation on the inflation story. You have the nominal GDP growth holding up pretty well. So that speaks actually for a little bit of a relaxation on long-term yields. But that's a short-term cyclical story. The long-term story is that the pressure is upward.
So duration remains... You want to steer clear of duration at this point?
Yeah, very, very much so. For long-term investors, we really do not like duration.
And so if we see hikes from the Fed, this will be a genuine hiking cycle, not just some sort of, one-off signal.
Absolutely.
But not till 27,
precisely. I think you need to see something a little bit more definitive turn, kind of the supply shocks in the rearview mirror, oil, immigration, tariff shocks, all behind us. Then you see kind of the real economy, relatively robust. The labor market tighter than it was before, wage pressures, inflation pressures, a hiking cycle.
OK, Elliot, thank you very much. Elliot Hentov, Head of Macro Policy Research at State Street Investment Management. Tom.
OK, here's what else you need to know this Monday morning. Bloomberg learning that Nippon Paint has made multiple offers for AkzoNobel's decorative paints business in the last month. Sources tell us the latest bid values the unit at about $8.6 billion and would reunify the Dulux brand globally while expanding Nippon Paint's footprint in Europe. AkzoNobel has said the offer, quote, significantly undervalues the unit and has yet to engage with the proposal. Andy Burnham is reported to be considering unveiling a bolstered budget later this year. This is allies and experts seek to persuade him to pursue a land tax, public control of utilities and a more ambitious devolution strategy. Burnham is on course to take over from Keir Starmer as the UK Prime Minister next Monday. And South Carolina Senator Lindsey Graham died unexpectedly over the weekend at the age of 71. His passing leaves Ukraine without one of their most effective conduits to the White House. In the last 3 days before he died, the South Carolina senator met Ukraine President Zelensky, visiting a drone production factory in Ukraine and sealing an agreement to advance a Russia sanctions bill. So the death of Lindsey Graham having a potentially significant impact on Ukraine and where Ukraine sits in terms of the president's thinking about the level of support that he wants to give this country. Lindsey Graham, of course, a key ally, had been a key ally of President Trump, and President Trump not always seeing eye to eye with Zelensky, but Lindsey Graham consistently pushing the need for support for Ukraine and punitive measures in terms of potential additional sanctions on Russia as well.
And that's what Lindsey Graham was pushing for, some of those additional sanctions. And he'd made many trips, as you said, to Ukraine. And it was interesting that we got a lot of warm words about Lindsey Graham, of course, on his passing, but including from Volodymyr Zelensky. He was making that point, which is notable geopolitically. 7:26 then here in London. Coming up, as simmering Middle East tensions signal persistent inflation, we will talk to Michel Vernier, a fixed income strategy head at Barclays Private Bank. That is next. We'll be focused on the start of the European bond market session to see whether we get yields going much higher this morning on the back of a higher oil price. This is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
Oh, hello there. Just wanted to say,
Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in Season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is, like, very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch Season 2 on all these lovely channels.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Welcome back, everybody. 30 minutes then from the start of the European equity trading day for this Monday. Yes, another Monday. And the European futures picture looks negative. Eurostoxx 50 futures down by around 0.8%. We've got a negative handover, Tom, from the Asia session. Further selling on the Kospi, of course. We're very used to that, very accustomed to it. But Nasdaq futures, if we look ahead, down by 1.3% as well. So it seems that what is riling tech stocks could pass through Europe.
Yes, and your 60-40 portfolio is not working for you today because bonds are selling off as well. Not particularly aggressively, but you are getting a move of 4 basis points higher in yields on the German 2-year at 2.86. The 10-year Bund is at 3.09. Yields up just shy of 3 basis points. A bit of selling pressure for BTPs as well. French OATs yields up between 2 to 4 basis points. And Treasuries as well also selling off in the session with the 10-year currently at 4.57. Let's bring in at this point Michelle Venier, Head of Fixed Income Strategy at Barclays Private Bank, joining us on set. Michelle, good morning. Thank you for your time. How much further does this bond sell-off have to run?
Well, it depends really on the time frame. For when it comes to oil, obviously, we have now learned a hard lesson over the last couple of years now that transitory is this narrative doesn't really work. And most of the economists and also the markets have tried to look through the oil peak, and it doesn't really work for now. So the bond market needs to get used to that uncertainty. Break-even so far have been fairly contained when looking at the US. It has been a little bit different in Europe and in the UK. But I think there's probably a bit more to come in the next couple of months. Again, our previous speakers said it's not about if we get a resolution, but probably about the timing. And the timing is the big uncertainty this time.
OK, so the timing. Do European sovereigns more exposed then? You think there's further to run up in terms of yields higher for European sovereigns on the back of higher energy prices?
Well, there are two narratives here. I mean, when we look at the short end of the very first point, we have a very dependent economy on prices, on commodity prices. Not only energy, by the way. We also have the El Nino, which you reported about. So there's a lot of price pressure for the European economy. But then on the other hand, and the ECB needs to act. We have received more comments from ECB member Schnabel, who said actually we probably would need more hike and probably more hikes potentially. So we think there's definitely one more hike at the very least to come. But on the other hand, we have the very vulnerable economy. I mean, we came out with a contraction in the UK growth profile, European growth profile, and we also have a fairly weak labour market as well. That's something which the European economy needs to also take into account. So there's only so much what the ECB can do. Now, the other bit is obviously the long end. There is more uncertainty most likely to come. The summer is probably going to be hot in the autumn as well.
OK, so a lot more issuance at the long end to be nervous about. Is that the story for Europe?
Absolutely. I mean, France probably will stay in the limelight. We know that in focus, so we know that the French election is coming up, and that will bring some noise. The bond market will look at the fiscal path, and France is now within the EU member states the third largest leveraged country. I mean, this is definitely not sustainable, and the bond market will have its moments once again in Europe, and therefore we think there's more volatility.
OK, so more volatility there. What about the US side of things? We're looking ahead this week, Michelle, to Kevin Walsh. He's going to be speaking on Capitol Hill, and I was going to ask you, what messaging will he want to communicate? But this is a person who doesn't want to really give us much of a message, at least not in terms of our expectations of rates. So where do you think what will be interesting to watch for from his speaking?
I think Kevin Walsh, this is not only about a tweak in the Fed, it's about a regime change. He made that very clear very often, and he may not actually give too much about what his current thinking is about rates. Obviously, he has done, or let's say adopted, I wouldn't say U-turn, but adopted his language because he can't ignore the high oil price, inflationary pressure. We should have normally or would have been much lower in the CPI core CPI or PCE better. And that's something which he probably will mention and consider at least. But I think more importantly, he will point to the big regime change. He obviously appointed all the leaders within the different task forces, and that's something which he will most likely address. And what we are expecting, and I think what the market needs to learn as well, is that we will have a new phase of the Fed. So there will be a phase with the old, or phase of the old phase, so PH phase, and then the old phase of the Fed, so still operating under the old or current regime, and then we will have a new phase. And that's something which Kevin Walsh will take into account, and the market will need to adopt to that as well.
I want to get back to the kind of the issuance story, but with a focus on what's happening in terms of the corporate space. So corporate bond issuance, and we're seeing a lot from the hyperscalers and those trying to build out the AI infrastructure story. Relatively well received so far by the markets. Is there a point this year when there's pushback on that? How much ability is there for the markets to absorb additional bond issuance at the corporate level?
Well, look, I think we have already had the word monetization quite repeatedly in the news, and that's something which the market will look at. Now, interestingly, if you look at last week, for example, Amazon came out, and yes, it was fairly well absorbed, but not at the issuance, the bond issuance, but wasn't as absorbed or well absorbed as before. So we had the first or second wave of hyperscale bond issuance, and that's out now. Now we have actually a very big increase in technology bond issuance in the broader corporate bond indices, and portfolio managers now need to make an assumption or consideration or decision, actually, do I actually overweight, do I actually put on more hyperscaler bond issuance in my portfolio? To what extent do I exposing myself too much? And what we've seen actually, interestingly, with the Amazon bond issuance, that's probably more reflective and which will probably pave the way for the trend in the next coming quarters, is that recycling is happening now. So basically, portfolio managers are basically soaking up the primary, but then selling the old ones they already had from the first or second wave. So whereas primarily we had the primary market as a price guidance, now it will actually directly affect the secondary market as well. So I think we will see in the next 2 or 3 quarters more of that story coming, that supply is not as easily absorbed. And finally, it will be all about the price.
Yeah, it will all be about the price. And speaking of price from a different asset class, I just want to note that SK Hynix shares have fallen by 15.4% in Seoul. That is the most on record. We see incredible day after day, incredible volatility in the share price of this particular company, but also in the Kospi more broadly. And I wonder how that ties into the sort of the limits of corporate debt issuance that maybe we're talking about. Are we talking about the limits of corporate debt issuance, Michelle, or are we talking about just people asking tougher questions of these issuers than they would in the past?
I think it will be tougher questions to ask. I mean, what we need to really consider is, for example, when we go back to the late 90s and the TMT bubble, when the telecoms have really re-leveraged, and then there was a big question mark because then we have seen all these downgrades. This is not really happening this time. We have seen this obviously with one big company, but everyone was already expecting that. Spreads were wide already. Now this time, the bulk of the hyperscalers or bond issuance are actually in the AA, AAA segment. So the bond market is still happy to absorb that, also because as a alternative to US Treasury, which seems to be much more volatile than corporate bonds these days.
Michelle, thank you very much. Yes, interesting world, interesting times we live in. Michelle Vernier, Head of Fixed Income Strategy at Barclays Private Bank. Coming up on the programme, investors still weighing the pace of CapEx spend by tech companies.
Like everything, what we tell people is you can't market time these things to the day. You have to kind of sense changes in the second derivative, and we're sensing it. I mean, just look at some of the news flow that you're seeing from companies like Meta. It kind of signals to you that there are conversations about the rate and speed and return on investment on some of this CapEx and how can they pull forward their monetization strategies.
Morgan Stanley's Lisa Shallett there. More on the tech story next. This is Bloomberg.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
Oh! You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting. What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it paradise ahead or Gattaca? Maybe somewhere in the middle.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern right here on Bloomberg. Context changes everything.
Welcome to the opening trade. We are approaching that opening trade, and the futures picture looks like this. We are expecting something negative. Now, there's obviously the sell-off that we've seen through Asia, MSCI Asia Pacific down by nearly 2%, and some of that is tech-related. We'll come to that in a moment, Tom. But there's also the higher oil price story, and so we factor that in. We're up by 3.8% at 78.90 on the back of further attacks between the US and Iran around the Strait of Hormuz over the weekend, and that has elevated oil prices, lifted yields, so all of that weighs on stocks.
Another negative catalyst for the equity markets. We're used to volatility, of course, when it comes to South Korean stocks, SK Hynix, of course, but the volatility of today has been quite something. SK Hynix shares actually falling more than 15% in, so you can see, in fact, 16% by the close. That is the most on record in terms of the size and scale of that drop. And that's after the memory chip makers' highly anticipated US trading debut, which actually saw a gain in the stock price on Friday, stateside double digits. Let's bring in then the details around this. It's worth noting as well that Bloomberg spoke to, after that US listing, the SK Group chairman, Chae-Tai Wong, who says the conglomerate has an ambitious plan to invest more money in the US and commented on the company's chip capacity outlook. Take a listen.
I have some confidence that the demand will be grow, and our supply capacity never going to catch up. It's going to be until that our society, human society, has set some settlement with the AGI. Then, I guess that that's a kind of normalize at all the cycles. But anyhow, that until then, we need that a lot of memories.
OK, for more, Bloomberg Intelligence Senior Strategist Matt Bloxham joins us. Matt, so the IPO was well received in the US, double-digit gains. Today, a brutal day for SK Hynix, and we gave that kind of the historical context there. What is leading? Is this profit-taking? Is it reallocation to the US? What is going on with SK Hynix, or what has gone on with SK Hynix today?
Yeah, very good question. I wish I had all the answers. I mean, it's quite a big drop, isn't it? And I think to some degree this is like a continuation of what we saw last week with the Korea market. A lot of pressure there, and some profit taking because these shares have been up a lot. And we've not really had any incremental fundamental news of late to kind of really justify more positive views on the stock, given how far it's gone. We heard there from the chairman about this kind of optimistic view about the midterm, and that beyond the current AI generation, there's AGI, which is going to sustain demand. But I think a lot of people are still kind of reserving judgment on that. But we're now at a really big arbitrage between the newly listed ADRs and the Korea stock. I think I just did a quick calculation, and I think it's something like a 27% discount in US dollar terms between the two now. So the big divergence there, and the trades are going to be interesting to see what happens with the ADRs later today.
Absolutely. So which is lower?
Oh, so the Korean shares are 27% lower than the on a US dollar equivalent.
Okay, so that's something to watch. And so this might just be a reaction to that listing in the States. But thinking about the broader picture and all the signals we're getting around AI, we got numbers out of TSMC, just a rise in sales of almost 68% in June. This is just one monthly sales report, but leading up towards an earnings report fairly soon, I think.
Yeah, that's right. So the earnings are on Thursday this week, so we'll get more of the detail. I think people are going to be closely watching the gross margin figure in particular. This number, 68% year-on-year growth in June, but that was largely anticipated by the market. The numbers coming in pretty much in line with consensus. So I think the message is being received loud and clear that there's really strong momentum in this business. So I think beyond gross margin in the quarter, the market's going to be very focused on the kind of the forward guide on sales to see whether that growth can be sustained. I think consensus actually looking for an acceleration in growth in the next quarter.
TSMC has to buy a lot of lithography machines for ASML, so Europe's most valuable company, and they are reporting results on Wednesday. Does this signal optimism for ASML and the demand that's coming through there? What are you going to be looking for from those results?
Yeah, I think it does. They're one step back in the kind of the food chain, if you like, and so they should be benefiting quite substantially from all of this capital spending we've had announced and the kind of stuff that's just kind of coming through. So the fact that the likes of SK Hynix and others are deploying more capital should ultimately flow through to demand for their machines. I guess obviously you've got the the kind of consumer electronic side of it that's been a little bit softer, so maybe that's a kind of a bit of a counterbalance. But I think overall the demand for AI technology, AI chips is probably more than enough to compensate for that.
Okay. Matt, thank you very much. Bloomberg Intelligence senior strategist Matt Bloxham with the latest on the tech sector. Plenty more on the tech sector, of course, as we go through these this week with those key earnings reports still due. Let's turn our attention to the markets in 3 minutes on the opening trade with our Asia Markets Executive Editor, Paul Dobson. Paul, good morning to you. It's Monday once again. What is your focus right now? Because, of course, the tech sector has been in focus through the Asia session, but are we also seeing developments in the Middle East cutting through into the Asia session? A substantially higher oil price, of course, doesn't play well for some of the nations that you're watching.
Yes, good morning, Anna. So a colleague said to me, flippant, off the cuff remark, there's just one narrative today, it's all about the Middle East. And I said, no, I think that there's two narratives here, right? Because while things are moving the way that you would expect from the Middle East playbook perspective. So we've got stocks down, we've got bonds down, we've got stronger dollar, we've got weaker precious metals. A lot of the same trades that we saw when the tensions were at their height earlier on in the year. The move in equities is much stronger relative to the move in other markets. And that's also because this the sell-off in SK Hynix really is catalyzing another downdraft for AI stocks overall. I think for SK Hynix, there's a few things going on. One, this is, a diluting for the existing shares in South Korea. If you think about it, they haven't. I saw someone joking they haven't done this share sale of ADRs in the US to pay back dividends or do a buyback. It's because they want to invest more. So there is going to be that big spending drag on the share. We've seen foreign investors putting cash out, suggesting maybe selling the South Korean stock in order to buy the ADRs. And on top of that, I think that there's just the ongoing concern about those spending plans with earnings coming up. So that overall contributed to a bigger drop in the tech stocks than you might expect just from the Middle East tensions alone.
And Paul, you mentioned the sell-off in bonds, and obviously the fact that oil ties into that. Higher oil prices typically means higher yields. When it comes to the trajectory from here, then, for the bond markets, is it US inflation data tomorrow or Warsh's testimony that's going to be more important?
Yes, Tom, both are important, but I think the market is going to be paying a lot of attention to Warsh and what he has to say. We had the Fed minutes. The Fed minutes was interesting. It didn't just indicate, the concerns about inflation from an oil market perspective, but also the concern that AI is actually inflationary in the short term, the idea being it's pushing up consumer goods costs. So it'll be interesting to see whether he labours on that very much, lingers on that. The market has moved back to pricing in the Fed much earlier as a result of the latest Middle East tensions. We have 2-year yields at the highest since early last year. So, the market is getting more and more worried about the need for the Fed to act sooner.
And Paul, are you watching the earnings season this week? It certainly kicks off stateside, but what's in focus for you?
Yeah, I think that Tuesday is going to be an extremely busy day for earnings, with the US banks kicking things off. I think that on our side, we had the TSMC sales today, but we get fuller earnings on Thursday. I think that that's going to be pretty critical given where we are with this AI cycle. And I think that in general, people are going to be looking for across the earnings season to the AI companies to see what their capex plans look like and what their hopes for returns on all of those investments are, because that's really been the overriding concern that's clouded markets in the second half of this year.
Paul Dodson, Bloomberg's executive editor for Asia Markets. Thank you. Let's switch focus and look at the stocks to watch this Monday and bring Chloe Melly. Chloe.
Good morning, Tom. Let's start with some M&A this morning. We got Nippon Paint making a €7.5 billion offer for the decorative paints business from AkzoNobel. And this comes just a few weeks after Nippon Paint, alongside the US company Sherwin-Williams, tried to buy the entirety of AkzoNobel. We can see that reflected in the graph with the shares soaring and then plummeting after those two companies abandoned their pursuit of AkzoNobel. The company has decided not to engage, apparently, with Nippon Paint on that potential deal for for the decorative paints business, but we'll be watching out for any market reaction on this. Moving on to tech, which of course has been one of those main sectors in focus over the last few weeks, as we've seen this AI trade see so many ups and downs. And so this morning is going to be relevant because of the Kospi in South Korea seeing this major plunge and this sell-off, which is due partly to those renewed tensions in the Middle East that could extend over here in Europe. And so all of those names that we've been watching out over the last few weeks, ASML, ASM, Infineon, ST Micro, all the chip making sector is going to be in focus, and we could see some red this morning across that sector. And finally, let's go over to Volkswagen, because the CEO is trying to walk the line between making those really big cost cuts and also trying to appease labor unions, with the CEO saying that there's the need for those major cost cuts, but that maybe there are smarter solutions than just closing down some factories. And so there's this restructuring plan right now in focus. There's going to be job cuts, there's going to be changing of the model lineup, etc. But maybe the saving of those factories is going to be enough to diffuse the tensions with labor unions, and we'll be watching out for any market reaction. As we can see here, Volkswagen has not been having the best year, so it's going to be one of the ones to watch out for as well.
Chloe, thank you very much. Chloe Melly with those stocks in focus. Yeah, really fascinating story around Volkswagen and what's been happening there. Let's talk about the broader markets, though, as we go into the start of another trading week then, Tom. Of course, European equity markets broke a few weeks of gains, didn't they? Last week actually saw a retreat. And we are looking at some weakness coming through today, and partly that will be due to a higher oil price. So we're up by 3.7%. As Paul was saying, two dynamics, a higher oil price and weakness in tech. Both of those things could be driving us.
Year-to-date, European stocks up 8%, US stocks on the S&P 500 up about 10%. So we're also watching, of course, the energy majors that may get a lift on the back of high oil prices. On the flip side of the commodity story, you do have a lot of pressure coming through for gold and silver right now, presumably on bets that maybe the Fed will have to hike faster and sooner than expected. Silver is down 3% and gold is down 1.6%. So we watch the miners as well this morning.
Absolutely. So the European equity market futures picture points to some downside. Will the London market be cushioned by exposure to big oil? We will come back with the market open for you this Monday morning. This is Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
Welcome to Bloomberg This Weekend.
Breaking news today from Wall Street to Washington.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg.
Up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
From From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything.
Welcome back to the opening trade. A few minutes then until the start of another trading week here on European equity markets. And does Friday in the United States tell us anything useful that we take into today's session? Well, the European equity markets closed around this yellow line. And since then, we did see a push higher in US stocks, or after that, we saw a push higher in US stocks during the US session. But perhaps we've forgotten all about that over the weekend. The beginning of this chart does show you the power of those news headlines around the Middle East, the power that they still have to move markets. And we saw that on Friday, both in the European session and again over the weekend. And so if we show you the futures picture, that does seem to be reflecting Middle East news flow. So we are expecting some European stocks to be substantially weaker as a result of the higher oil price. Certainly that will stick to anything very energy intensive, but the FTSE 100 could outperform, even though that might just mean a flat performance, Tom, as a result of having some heavily weighted oil stocks, of course. So we put in that dynamic around the Middle East, but the other dynamic, the negativity around technology, and specifically SK Hynix and the Kospi, are all something we will watch out for as well, Tom.
And all part of our stocks to watch then this Monday. Let's start with the oil stock story then on higher Brent and higher WTI. This could be a part of the equity market in Europe that outperforms given the higher oil prices. So we watch the oil majors, of course, listed here in the UK and in France, predominantly in terms of the big names, as to whether or not there'll be upside on the back of prices up around 3% on Brent. Tech stocks, of course, in focus. To Anna's point, SK Hynix, a record drop in the session today over in Korea. The Kospi ending lower by close to 9%. The SK Hynix falling double digits to a record drop. So the read across to the likes of Infineon, ASML, ASM, all of those in focus for us today. AkzoNobel on a potential upping of the offer, at least a new offer coming in through Nippon Paint. So we see if that stock moves on the back of that, Anna.
Yep, M&A in the mix as well this Monday morning. More broadly, we're heading into a busy week from a macro perspective with CPI out of the US, and we're going to hear from Kevin Walsh. So European equity markets getting into their stride then this morning, or at least getting out of the gates this morning. And the FTSE 100 is the first to wake up, if tentatively. Pretty flat, though, on the FTSE 100 right now. As I mentioned, we're heading into a big week with CPI, Kevin Walsh on Capitol Hill a couple of times. We will also, of course, get into the earnings season. And over the next 3 weeks, we start to build gradually the amount of market cap that we'll be hearing from when it comes to the earnings stories. And this week is quite busy from the banking sector. Some 5 banks reporting in just Tuesday's session. So that said, we have taken a moment to let the European market settle, and the AEX is down 0.25%. The IBEX, the CAC aren't both down around 0.4%. So a bit of negativity then, Tom, coming through on anything tech-related. Maybe the FTSE 100 being supported by the energy trade this morning. That seems to be pretty flat. What are you seeing?
The energy story is there in terms of the gains coming through on a sector basis. That is top of your list. Energy up 1.6%. So energy is getting currently the top performing sector in a session otherwise of modest downside so far across the European stock 600, down 0.3%. Tech is the worst performing sector, currently down 1.1%. Basic resources also soft. You've seen a knock to prices for gold and silver. Basic resources down 0.9%. Travel and leisure also weaker. That tends to be a sector that is punished on the back of an uptick in geopolitical risk premium, particularly coming out of the Strait of Hormuz. So travel and leisure also feeling a bit of a squeeze, down 0.8%. Energy with the gains there currently 1.6% is the upside. That is the picture. AkzoNobel then on that M&A story, with Nippon coming in with an offer for part of that business, and Akzo is gaining right now. 3% is the move higher for Akzo, having been up a little bit strongly, more strongly in the first few seconds, currently up 3%, Anna.
Yes, I mean, the picture then for European stocks, it is weaker, but not by a huge amount, down by 0.3%. Perhaps that's the London market effect, and we're still waiting for the DAX to open, so we haven't got that component. But things are maybe a little more positive than anticipated. So more than 2/3, I think, of the sector's more than 1/3 of the sectors in positive territory. So it's not just energy. And some days like this, we only see energy going higher. So that perhaps is interesting. Remy Olupitan joins us, head of multi-asset growth and income at Schroders, and the perfect conversation to kick off this 8 o'clock hour of the programme. Remy, thank you for coming to see us. So you are overweight stocks, I think, and very much focused on the earnings story. So how are you thinking about heading into this week then, when earnings are increasingly in focus?
Oh, absolutely. This week is all about earnings. We continue to expect earnings to continue that positive momentum. Admittedly, a lot of good news is already in the price, so that's why we are seeing some pullbacks, particularly in Asia, where a lot of leverage players are involved. But if you can sit through it, we think that for the next 12 months, this earnings momentum is ripe.
And is that very tech and AI focused, or is it a different earnings story we're watching for?
Well, the good news is that we are seeing positive earnings, particularly in the US market, across sectors, energy, banks, but the big divergence is coming from the banks, so coming from the tech stocks. So the magnitude of the positive earnings growth is quite dramatic there. But if we're thinking about positive trend, it's quite broad-based.
Where does that leave your view on European stocks?
I mean, we like European stocks. The challenge is we are in the middle of a prolonged managed conflict. That's our view. And as a consequence, Europe in general tends to be the peace trade, and we're not getting a clear peace deal. And so it leaves Europe vulnerable if we just look at Europe naively. But within Europe, we do like the banks.
Okay, you like the banks. Can you expand on the banks? Because I get it in an environment where rates are on hold, maybe they're moving up, maybe the ECB goes with another rate increase, and yet there's the weakness in the domestic economies of the Eurozone. So what are the factors that you're seeing that can propel the banking story going forward for Europe?
Absolutely. So we think that financials, particularly in Europe, are benefiting from the earnings story. So that's where we're seeing a clear positive earnings momentum. And why is that? Because we finally have a rate cycle in Europe, something we've struggled with for many, many years. So you are seeing that profitability come through. You are seeing a steep curve. And when it comes to the European growth story, actually, I think a lot of economists are surprised by how resilient Europe has been, given everything that's been thrown at it.
So we do see this as a rate cycle then? It wasn't just a sort of insurance hike. I know many in the ECB have pushed back against that narrative, but some have suggested that it was an insurance hike in case of a prolonged conflict. I was interested in your prolonged managed conflict terminology. I think maybe that does help us understand what we're seeing. And in that context, do we see a proper hiking cycle then from the ECB?
We have to get used to it, absolutely. It won't be a fast hiking cycle because you are right, we're not seeing phenomenal growth to support that. But what we're likely to see is interest rates are higher for longer here to stay. And so a likely steady hiking cycle, absolutely.
And to be absolutely clear, that higher interest rate environment for Europe, corporates can push through that, and therefore banks can continue to drive revenue gains. So they get the NIM, the net interest margins from higher rates, but they're not going to suffer from a depressed corporate or macroeconomic picture. They can that is going to be favourable as well, even in a higher rate environment.
To a point.
To a point.
To a point, absolutely. So as long as it's a steady rate environment, as long as the growth remains resilient as it has been. I think the key is that we are seeing a managed conflict. I mean, if we do see a major escalation, which takes the oil price back above 100 and gas prices spike, then we will have to revisit that view.
Yes, and on that, how are you thinking about getting exposure to energy right now? I think we've heard from you in the past, Remy, about liking the UK and Canadian stocks on the back of this. Do you play it at a whole index level, or do you try to just pull out sectors that you want to be exposed to? How do you think about energy exposure?
In a variety of ways, but right now we really do prefer global energy stocks. So in a lot of our portfolios, we have been adding to energy, not specifically just the UK, the US, Canada. We tried via the markets because, again, earlier this year, we took the view that the UK equity market and the Canadian equity market were underappreciated. I want to use that term because of the exposure to energy. We think that has played out quite well. And right now, let's really target the stocks globally.
Yeah, well, that takes us onto your call around the UK, which has flipped to negative, I think, despite the weighting of financials and energy within the FTSE 100. So energy and banks do not come to the rescue of the FTSE 100. Why are you underweight UK equities?
It will come to the rescue on negative days, like today. But more broadly, we think that actually it's time to step away. UK equity markets have done fantastically well this year. And we're quite positive on the market for the rest of the second half of this year. And so we think that there are more interesting themes elsewhere, so particularly European banks. Even in the US, we think that there are more opportunities there. So the UK has done very well, has been quite resilient, and now it's time to look elsewhere.
And Remy, talking about looking elsewhere, can I talk to you about investment-grade credit? And you say you're negative, I think, on US investment-grade credit in the States. You don't think it offers sufficient compensation for the risks. What are those risks, then, for that level of credit?
The spreads are far too tight to justify the risks, particularly around the private credit market. We do think that it's highly correlated, public and private, and sentiment, some concerns around private credit will filter into public credit. And at the moment, spreads are too tight to justify that. Now, while we're very positive on the outlook for growth in the US and also equities, you're getting paid for that earnings growth. You're not getting that in credit. And now, with spreads so tight, you're really playing inflation. It feels like you're taking exposure to nominal rates rather than credit.
Right. I mean, one credit analyst said to us last week, in credit, you don't need to pick winners, you just have to not pick the losers. I mean, so how much does that apply to that core? Are you actually expecting failures within the maybe software-related credit markets then? Is that where you're expecting the weakness to come through?
Going back to that terminology of the cycle, we think that we're towards the end of the credit cycle, so a little bit too early in terms of meaningful defaults or failures. That's something we're likely to revisit perhaps in 2026, 2028. But this is the time to prepare for it. So all we're saying is you're not really getting paid. It's not really interesting. There are better ways to use your capital.
Do you have a preferred FX trade right now, or currency cross? Are you concerned about the yen? There's further weakness of the Japanese currency.
So we were very concerned about the yen, and in our portfolios we did express a negative view, which we have taken profit on right now. So we're flat the yen. Doesn't mean we're excited about the yen. To be honest, we think that you're not really going to see much movement there because it is really an interest rate issue. So the market needs to price major rate hikes in Japan, and I don't think that's forthcoming anytime soon. In terms of currencies we are excited about, I'll be brutally honest that it's a little bit murky in the currency market because the dollar is still hanging in there, but we need a really attractive carry, so that's why we're sticking to emerging market currencies where you are getting paid.
If we get this prolonged conflict, managed prolonged conflict, but it carries on, does that mean dollar strength continues over that time frame? What we've seen the dollar underpinned by this conflict.
Yes.
And there was an expectation that when it was resolved, maybe some of that dollar weakness would return. But if we have this continuing over the long term, which is what you've suggested, what does that mean for the greenback?
It means that the dollar will stay bid, but against what? Definitely against the low yielders. It means that we really have to focus on the interest rates we're earning. And at the moment, the dollar is actually a high currency, a high carry currency within G10. So let's be careful about the low yielders like the euro, like the Canadian dollar and some of the Asian currencies.
OK, Remy, thank you very much indeed walking through all these different asset classes for us this Monday morning. Remy Olopitan, Head of Multi-Asset Growth and Income at Schroders. Let's get a check on your Core 6. Right now, 10, 11 minutes into the trading session, and you are seeing ASML as part of the pain trade when it comes to technology. The earnings, of course, for that company coming through on Wednesday. Currently it's down 1.7%, tying, of course, to the weakness we're seeing more broadly in tech equities today. Nestle's up 0.6%. You're seeing weakness for Schneider Electric, also, of course, with the exposure to the data centre story. So that's under pressure as well for the similar reasons that ASML is, it seems, down 0.8% on Schneider. Rheinmetall largely unchanged. LVMH a bit weaker as well. The luxury stocks under pressure, down 0.5%. Novo getting a bit of a lift in the healthcare space, up 0.6%. That is your Core 6. Let's check in on some of the other individual stocks on the move with Chloe Melly.
Good morning, Tom. AkzoNobel, the paint maker, is up this morning, up about 1.4% after rejecting an offer from Nippon Paint of 7.5 billion euros to acquire its decorative paints business. And so AkzoNobel will instead keep pressing ahead with its merger with the US company Axalta. And so we're up a little bit on the back of this M&A interest for AkzoNobel. Moving on to technology, and we are seeing all of those AI-related stocks, those chip-making stocks, in the red this morning. As as expected on the back of that read across from this huge plunge in the Kospi index in South Korea. We're seeing some of those renewed tensions in the Middle East feed into that. And then also there's really big tumble in SK Hynix shares. So there's a lot of volatility in that South Korean market, and that is spilling over into those AI-related stocks over here in Europe, with Infineon down particularly this morning. Another sector that is actually benefiting from those renewed tensions in the Middle East is the oil sector. Of course, we're seeing BP up particularly strongly this morning, but really green across the board as the US and Iran exchange those fresh strikes. And we have also those conflicting statements from both sides about whether or not the Strait of Hormuz is open to shipping. And so we are seeing those potential continued disruption to oil flows really benefiting that oil sector this morning. Moving on to defense, where Kongsberg, the defense company, came out with some earnings this morning, which were actually quite strong on the face of it, but perhaps just not quite enough, not quite impressive enough against maybe high elevated expectations. And so we're taking quite the hit this morning for Kongsberg, down more than 7%. And finally, the recruitment company Page Group is up this morning in London. We're up actually more than 7%, so quite strongly there as well, after confirming guidance and saying there were really strong results in Asia and the Americas in particular. This actually echoes what we heard from its peer Hayes last week, with this quite cautiously optimistic outlook from that recruitment sector after really what had been years of weakness. So we're seeing quite a big movement there for Page Group.
Chloe, thank you. Chloe Melly with those stocks on the move. And that is really interesting for anybody who's tracking, who thinks it's important that we all still have jobs. An important story to keep an eye on. Another important story we are watching comes to us from Japan. What will the government pension scheme in Japan be incentivized to invest in the future? Seems to be an ongoing question for markets. Earlier on, we'd seen some real yen weakness as a result of reports in other media that suggested that there would be no plans to incentivize money coming back into Japan. Well, now we hear from the Chief Cabinet Secretary Minoru Kihari, who is saying that amendments will be made to the GPIF portfolio, the GPIF portfolio, if required. So it seems a little bit of a still work in progress as to what exactly will be amended there and whether that will have an impact on the currency.
OK, we keep across the yen currently at 162, just above 162 right now, US dollar JPY. Of course, we will continue to monitor that for you. Meanwhile, coming up, oil rebounding as the conflict in the Strait of Hormuz escalates. We're going to bring you the latest on the energy markets. This is Bloomberg.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
What happened was you were out.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern right here on Bloomberg. Context changes everything.
Welcome back to the opening trade. We are 18 minutes into the Monday session. You're seeing the European benchmark stock 600 down 0.2%. The FTSE, though, here in the UK, gaining 0.2 as a result of the strength coming through for the energy sector. That sector is currently up 1.4% on higher oil prices. It is oil, it is energy, and it is tech as well, to the downside. So tech is one of the biggest losers across your sectors. And again, you are seeing broad losses across the benchmark. Tech down as a sector around 1%. Energy at the top of the list, gaining 1.5%, and that is lifting the FTSE 100, at least for now, Anna.
Yeah, let's talk about oil, because the impact of oil is clear on what we're seeing across the European equity space. Oil jumping this morning as conflict in the Middle East continues to escalate with fresh strikes by the US against Iran. The two sides continue to dispute whether the crucial Strait of Hormuz is open, which remains yet again at a standstill over the flare-up. Let's get the latest details then from our Bloomberg Asia energy reporter, Stephen Stachynski. So more tit-for-tat exchange of fire between the two sides then, and indeed deepening, widening would seem to be the way to describe this. An escalation, this escalation of risk for resupply efforts, is that what we're looking at for the global energy markets then, Stephen?
You know, I think the escalation is a key word here, and I think there is certainly a risk, at least according to the analysts and traders that we've been speaking with. I think there are two things that they're watching. Of course, one, where do we stand in terms of the conflict? Because if it were just between the U.S. and Iran and bases and things like that, yeah, perhaps it will stay contained to just those two countries. But at the moment, there have been a few worrying signs. One, there have been strikes of drones and missiles from Iran on Jordan and Qatar for the first time in months. The UAE also had some alarms over the weekend. If this spirals into a wider conflict where maybe oil or refining or any energy assets are then starting to get targeted outside of Iran, that could start to be an issue because, you know, if any of that gets hit, if any of that's offline for weeks, months, if it's damaged, it could take years, then that does really tighten the market. Now, in the near term, people are looking at the Strait of Hormuz and how many ships are going in and out. And as of right now, at least in terms of ships with their transponders on, the ones that we can track on MapGo on the Bloomberg terminal, there's very little happening. It's at the lowest level in weeks, according that I've seen. There is some dark transit, though. So there are some ships. I spotted one LNG tanker that went through over the weekend. They turned off their transponder to get through, likely for safety reasons. That does indicate it's very difficult to tell how much oil is getting out of the region, but if you're restocking your supplies, there are two big issues. One, not as much oil is getting out. And then two, the oil that is getting out, there are some Iranian barrels. Those Iranian shipments are now, again, at risk of sanctions because the U.S. removed their waivers on it. So that effort to restock after the big drawdown over the last few months could be more challenging.
So that's one flare-up in terms of the geopolitics, and arguably that's drawn most of our attention for obvious reasons in recent weeks, Stephen. But in the background is a changed dynamic when it comes to the conflicts between Ukraine and Russia, and that is starting to have an impact, particularly on refined products. What are we seeing there?
Absolutely. Bloomberg columnist Javier Blas had a really good column on this today. And what you've seen is, especially last week, every day a Ukraine drone has hit a Russian oil refinery. There has been a real increase in the amount of attacks. And actually, when you look at across the board how much refining capacity has been targeted, hit, or brought offline, it makes up a majority of their refineries are offline. Now, that's a big deal for a few reasons. One, of course, that hurts the domestic market in Russia. But at the same time, Russia is actually an exporter of some of these products, including diesel. and they've had to restrict their diesel exports because of this. At the same time, they've been flooding the market with crude because they're unable to refine it. So there's this chart that's up on the screen right now shows that there's this growing divide between the products, those downstream products that you make out of refineries, and crude. Crude prices have dropped, and they've come up a little bit over the last week. But it's when you look at the gas, oil, gasoline, diesel, it has been stronger. Now, it's not all just down to Russia. You've also seen China reduce their exports of refined products as well to help their domestic market and the consumers there. At the same time, all of these countries from the U.S., Japan, they've been releasing their strategic reserves of crude oil. So the amount of crude oil has flooded the market. The amount of refining capacity has been able to meet the demand, especially with the different outages in different places. You've actually seen the refining profits increase quite significantly to the highest year on records on the Bloomberg terminal for the 3-2-1 refining spread, which is what makes gasoline as well as diesel. So it's a very interesting time in the market because while we are talking about the drop in oil and crude oil, WTI and Brent, it's not exactly the same for gasoline, diesel, and some other products that actually are what consumers buy. It's what they buy at the pump, and it affects inflation.
It's that context and that detail that is so important. Breaking it down for us really nicely is Bloomberg's Stephen Straczynski. Stephen, thank you for the context and the details. Of course, the energy story ties into what's happening in the airline space, but this is more now a news story about potential M&A with EasyJet shares up pretty sharply in the last week or so, of course, as investors await an update from US investment fund Castlelake after Apollo's surprise £5.7 billion counter-offer last week. Any acquisition of the budget carrier will expose the buyer, whoever it is, to a challenging sector, of course, that is regularly unsettled by geopolitics and fickle consumers. Let's bring in Bloomberg Global Aviation reporter Benedict Carmel. Benny, where do things stand then at this point for EasyJet?
Well, it was a mercifully quiet weekend. We had actually expected maybe Castlelake to come back. They haven't yet, so they're still weighing their options. There was that brief statement from them on Friday saying we've taken note of the arrival Apollo bid, which really, I have to say, landed out of nowhere. That was Friday morning that Apollo came in and trumped the existing Castlelake offer. The numbers that exist now are 715 pence from Apollo versus 690, and you saw that chart just now there with that sharp increase on Friday, but yet investors are still, the stock is still trading considerably below either offer, so investors are probably still thinking there is some room to run here, and maybe either Castlelake comes back with a better offer still, or Apollo will need to sweeten. So that's sort of where we're at. A bit of a holding pattern, who blinks first kind of situation. But for the time being, it looks like Apollo has the upper hand.
As Tom was saying in the intro, aviation stocks then, Benny, can be notoriously volatile and vulnerable to shock. Do Castlelake or Apollo have much experience with running airlines, even if they're not going to be worrying about the share price, that there is still the volatility to deal with?
I mean, they both do have some exposure to this industry. Castlelake deals in leasing aircraft. Apollo has bought some aviation assets. What might be a little bit surprising is if you think sort of classically private equity comes in and looks for, should we say, fat to cut. And EasyJet is a company that really has perfected the low-cost model. This is a very lean operation like Ryanair or like low-cost companies in the US. So if you come in, there wouldn't be anything immediate where you could say, okay, let's get rid of this or let's get rid of that. And that's usually where the big turnaround happens. So it'll be interesting to see how Apollo plans to make this work. But, you know, we don't know for the time being, so we'll have to see.
OK. Benny, thanks so much. Bloomberg's Benedict Carmel on the aviation stories. Coming up this morning, we'll be talking to Francesco Schiattino, co-founder and CEO at Proxima Fusion, as the German startup secures funding to develop commercial fusion energy. That is next. This is Bloomberg.
the Vivian Tom clientele.
Yeah, power women, like the dragon women. They are lawyers, they're CEOs, they're all important decision makers, women in the world.
Why do you position your products for this group of women?
When I started, designing, I always want to do something that is empower women.
When you take a look at your store, there is something for everyone. Take a look at the T-shirt, for example.
My customer growing, like 30 years already, so they become more powerful. I also want to grow my Gen Z audience too, They are like in the 20s, so it's a more affordable price for them. And then, my powerful women's daughter wearing their mom's dresses, and they feel that the power, the energy. So now they come back to the store and they buy more.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Welcome to Bloomberg This Weekend. I'm David Gurray.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Welcome back. 30 minutes into your Monday session. European stocks across the benchmark are down 0.2%. The FTSE 100 have been up, but is currently flatlining at around 10,500. Energy is the top of the list across your sectors. On the downside, travel and leisure, construction and tech from the read across of and from Kospi and the SK Hynix. Currently across the member breakdown on the Stock 600 then, in a day when volumes are lower, down 50% versus that 20-day average. You're seeing 257, 258 in positive territory, but the majority of stocks are seeing some downside pressure, at least so far in the session on the Stock 600, currently 335. Individual stocks down and in negative territory, but again, on a day of weaker volumes.
Yeah, the focus to the downside then, and US futures also pointing lower. Tom, let's get an update on some of the other stories that we're covering this morning. SK Hynix shares in Seoul plunging more than 16% today, the most on record after its highly anticipated trading debut in the United States. Traders are citing profit-taking and a shift to the memory chip maker's American depository receipts as the main drivers. The weakness dragged on the Kospi, sending it down by 9% at the close. Andy Burnham is considering unveiling a bolstered budget later this year here in the UK as allies and experts seek to persuade him to pursue a land tax, public control of utilities and a more ambitious devolution strategy. Burnham is on course to take over from Keir Starmer as the UK Prime Minister on July 20th. And the US launched fresh missile attacks against Iran as both Washington and Tehran issued conflicting declarations over whether the Strait of Hormuz is open to shipping or not. US Central Command says it struck dozens of targets to degrade Iran's ability to attack international shipping. Iran launched counter-strikes against US allies and also attacked some ships over the weekend. Tom.
OK, let's get a different angle on the energy story and a future energy story as well, potentially, because German startup Proxima Fusion has raised 411 million euros, including from backers RWE and Google, to develop a nuclear fusion plant. The deal giving the 3-year-old energy firm, just 3 years old, a valuation of 2.4 billion euros. Francesco Ciaritino is the co-founder and CEO of Proxima Fusion and joins us now. Francesco, thank you for your time. It's a significant raise. What does this capital raise tell us about the appetite from investors to back Fusion, and how you and the team planning to deploy this capital?
Well, first of all, it says that there is an appetite for clean energy, new sources of energy, and that Europe is able to fight back and to be in the race of fusion worldwide. So it's not just a game between China and the US. Europe has done a lot more than most people realize on magnetic confinement fusion, so-called tokamaks and stellarators. And with this round, we are right at the front of the stellarator race.
Yeah, and I remember meeting you, Francesco, a few years ago, and you were making that impassioned case. Look, Europe has skin in the game here. We have real expertise, real depth of expertise, but we need to lean into it. And so this is a signal that the pieces are coming into place for that story. Why is this so important for Europe to not just play a role in fusion, but arguably to potentially lead when it comes to that competition with the US and with China?
Well, Tom, as you said, just a piece before, thinking about the Strait of Hormuz, this is a crazy level of exposure of the European energy markets. Europe does not have its own natural resources to reliably have a dispatchable source of energy, not to even speak about clean energy. So in Europe right now, and Germany is most acute in this respect, you have a need for energy, any source of energy. Then there is a desire for that energy to be clean. There is a desire for that to be the baseline, what helps us to avoid the industrialization, to not only get, the increase of energy with data centers and so on, but also support our existing industry. In Germany, this is front and center of all national politics. So the story with Proxima is not a story of just a startup coming out of a national lab and with a great technical idea. It's really a story of public-private partnerships. It's our partnership with the Max Planck Society, the national laboratory organization that we spun out from, but also the Bavarian government, with which we announced a partnership. It was late February between Bavaria, RWE, the Max Planck Society, and Proxima Fusion. And now we've been developing more and more of a partnership with the German federal government. So all the parties involved get the situation. There is great sense of urgency. There is an opportunity in the technical leadership that Germany and Europe have in this domain. And so now it's time for a European fusion champion to emerge.
Francesco, yes, talking about the technical domain, good morning. Thanks so much for joining us. Can I ask you about net energy gain? Because it did seem to be quite exciting when we saw some research suggesting that we got to a point where we can prove in a quite limited sense that more energy can result from this process than is required to feed into it, but with some caveats. So what's the next technical challenge for a wide audience to understand? How close are we to more progress on the fusion front?
Yeah, we have a clear scientific basis for this QI stellarator concept. We built one of these devices in the north of Germany, inside the Max Planck Society. That device is called W7X, and it shows that it can operate in continuous operation, so as long as you want it, in a fully stable manner. Now, the next step is to demonstrate that we can make more energy out than in, which of course is a requirement if you want to build a power plant. And the step to get there is a magnet of a new technology. We labeled this high-temperature superconductors, which is now in production. So Proxima Fusion and its partners at the Paul Scherrer Institute in Switzerland, but all across Europe, have been developing a technology stack that allows us to make magnets that are much more powerful than the ones that we previously had. That stellarator model coil, as we call it, will be up and running in 2027, by the end of the year. So we're about a year and a bit away from this very important hardware demonstration. Once you have that hardware piece, the next step is straight to a net energy device. We call that Alpha. We have a site for that. It's in Munich. And then following that, a first-of-a-kind device that we will place in the west of Bavaria on the ex-fission site of RWE.
Okay, so those are really interesting staging points when it comes to the physics and the engineering behind this. In terms of the commercial reality, Francesco, how are your timescales shifting around the commercial reality of fusion as an energy source?
We are sticking to the general picture we started with 3 years ago, which is we aim for the stellarator model coil late 2027, a net energy gain device early 2030s, and a full-scale power plant in the late 2030s. It means it's a 1 decade long journey. And of course, that's just the beginning of a new fusion industry, of all the creation of the supply chains. So the partnership with the German government and the European community here is very important. This is not a San Francisco garage kind of startup that makes it or breaks it in just a couple of years. it's a journey that, if we're successful, will absolutely change the European industry.
And Francesco, you touched on the demand coming through from AI in one of your previous answers. You are backed as well by Google. There is that partnership. What does that tell us? What does that support from Google tell us about the demands for AI and energy that supports AI developments into the future, and what their expectations are?
Yeah, both Google and XTX Markets is one of the true co-leads of this round. They both develop data centers at quite some scale. And they are realizing, of course, what many have heard, which is that energy is the bottleneck in expanding compute. So humanity now has intelligence and energy as the true key foci of attention. One needs the other. Intelligence, as in artificial intelligence, is helping us to get to energy with stellarators via better modeling, better systems for design. But the energy needs to feed back into the AI centers. And now these developers of data centers are those that are willing to also go out and make sure that the new energy sources are available. Of course, these data center builders, they're looking at every source of energy. The fact that the advanced energy solutions that Google has been looking at are now coming closer to fusion, and Google has been backing multiple fusion companies at this point, it really tells you how important it is that fusion is brought to market. And the timescales here are understood. None of the investors of Proxima think that we are going to deliver power plants in the next couple of years. It does take the time it takes, but when it comes, this will be transformational.
Are you getting closer to getting additional support from either the Bavarian government or the national government in Germany? Are you in conversation? Is there potentially further funding coming through at the national level?
At the Bavarian level, we've already announced in late February 400 million of non-dilutive capital. That's a very important signal for us, and it really helped us in raising this new 400 million private round. On a German federal level, the budget has been stated. Germany is allocating more than almost 2.5 billion euros for fusion over the next 3 years, more or less. And then there is an ambition of scaling up an industry. So we know that Germany is being very serious about scaling fusion. There are a few options on the table. We have been in heavy conversations with the German federal government, as one might expect. It's still a work in progress. We can share that there is the creation of a milestone program that is running, and we're very excited about partnering with the German government in such a way. So setting milestones, and when they're met, the federal government supports financially, and also in terms of licensing, in terms of regulation, in terms of a number of domains for which we need their support.
Yeah. And before we let you go, if there were one or two things that Brussels could do to accelerate this sector, Francesco, what would it be?
We're waiting for a fusion strategy from the EU, and that has been in waiting for some time. We need the EU to realize that the creation of a private industry is not in opposition to the strengths of the public sector. Europe has done more in public research for magnetic confinement fusion than any other geopolitical bloc. And we should be proud of that, and we should celebrate it. And that's how we created the supply chains that Proxima now relies on. Now, the clear success for Brussels in seeing how the money, the funding that has been used for fusion in the past decades can bring us to a new success. They need to see a private company scaling and developing further those supply chains and creating a real European success.
Francesco, thank you very much indeed. Congratulations on that raise. Francesco Ciottino, co-founder and CEO of Proxima Fusion, with also a line there and a view there on what Europe needs to do to support this emerging sector. So from a potential future energy source, Anna, to a current challenge, which is what's happening with oil and the Strait of Hormuz.
Absolutely, and we heard Francesco referencing it as well in support of other technologies. So we are getting some lines coming through from the Iranian Foreign Ministry spokesman holding a press conference saying that the US has consistently violated the agreement. I assume he's talking about the MOU there. We know that the US has said the Iranians have violated it as well. We're also hearing from him that he's saying that the US-Iran Memorandum of Understanding is in a crisis phase, and saying that that ships are at risk via the US parallel route in the Strait. We know that the Iranians have tried to increase their influence. They have, of course, been trying to do that by disrupting that more southerly route, that route that is closer to Oman. And so we continue to watch all of these developments in the Strait. And this is not pushing oil prices any further to the upside. In fact, they've been dropping in the last half hour, but still up by 3.4% versus yesterday's, the last close.
And we're going to get the geopolitical lens shifting to Russia and Ukraine after the break, because EU leaders are set to gather to discuss Ukraine as President Zelensky seeks to spare his war-weary nation a repeat.
Is there anything that humans today can do?
Yes.
That will change the lives of the humans currently on the Earth?
Well, first of all, people who switch over are getting the benefit right away. But coming back to the point about the fossil fuel industry and our debt to them, there's an old saying that came from the king of Saudi Arabia years ago. The Stone Age didn't end because of a shortage of stones. It ended because something better came along. Something better has come along now to replace fossil fuels, which are dirty and polluting and threatening humanity's future. The cheapest electricity in the history of the world is solar energy. Second cheapest is wind energy. And now batteries, the only thing that's come down in price faster than solar is utility scale batteries, doubling every single.
Why are we ending the wind farms that are now being built off the coast of the United States? We're ending them.
Because Trump is insane.
On another subject,
you don't want to explore that, but let me add one point on the solar. If you look at all of the new electricity generation installed worldwide last year, I often ask people what percentage of it was renewable, and people say, you know, they're looking for a high number, say maybe 30%, 35%. Correct answer is 93%. Because it is taking over the electricity generation industry.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
Welcome back to the opening trade. Now, Ukraine is expected to be at the top of the agenda at a couple of meetings that are taking place this week, both the EU Foreign Affairs Ministers meeting and a meeting of leaders of the coalition of the willing countries. They're both due to take place today. Now, the gatherings come as Ukrainian President Volodymyr Zelensky removed the nation's prime minister as part of a shift in political strategy ahead of another winter under attack, under threat of Russian attacks. For more, let's bring in our chief Europe correspondent, Oliver Crook. And Ollie, let's start with the gatherings that are taking place today. Two separate forums, and both of them set to put the spotlight back onto Ukraine.
Yeah, absolutely. The first of which is here in Brussels, where foreign affairs ministers from the European nations, EU nations, are arriving here at the European Council to have a discussion, yes, about Ukraine, also going to talk about Israel, and of course the latest developments within Iran. But I think for the Ukrainian conversation, I think overarching in both of the meetings, the second taking place in Paris, hosted by Emmanuel Macron and the coalition of the willing, I think also a lot of it is just going to be a strategy discussion. There is a really different dynamic for the Ukrainians coming into this year. They've gained the momentum on the battlefield. They've got that EU loan that we've been talking about, but then they've also won this sort of unexpected, almost not quite full-throated, but endorsement from the President of the United States last week at the NATO meeting, where he had some really very warm words to say about President Zelensky, about the sort of Ukrainian war effort. And I think also the sort of within his own mind, the President of the United States, this idea that the Ukrainians now are holding cards. It's not like it was 18 months ago when he was sort of, yelling at Zelensky in the Oval Office saying you have no cards. You basically need to submit to the will of the Russians. So this is going to be, I think, part of how the Europeans then try to take that momentum that they've got from the American side and try to put it in their own sort of efforts to try to end the war. For the coalition of the willing, the conversation still surrounds some of the same themes we've discussed before, Anna. It's also about the security guarantees for the day after, potentially getting more air defense to the Ukrainians, which we've heard a lot about from Zelensky. He obviously very critically last week won the permits and the rights from the United States to build those Patriot batteries within Ukraine. But those are going to be the two sort of themes coming out of those meetings that we'll be watching very closely today.
Ollie, you've spent time on the ground in Ukraine. You've interviewed Zelensky. What assumptions should we make about how concerned the Ukrainians are right now about the passing of US Senator Lindsey Graham, who was such a pivotal supporter of Ukraine within the Trump administration, not serving in an official role, but with the ear of the president?
Absolutely. The ear of the president and really a constant lobbying effort on behalf of the Ukrainians. We know Lindsey Graham is sort of one of the senators most interested in foreign policy, one of the most hawkish senators, certainly on the Republican side, particularly now in an era of sort of MAGA Republicanism, which is much more about sort of anti-intervention. That was not at all the sort of person that Lindsey Graham was on the question of Iran, but certainly on the question of Ukraine. And obviously a complete shock, I think, to the entire world, but certainly to the Ukrainians, because Lindsey Graham was in Ankara last week at that meeting of NATO leaders. He was also in Ukraine just a couple days after that, and he just died very suddenly over the weekend. So I think for the Ukrainians, he has been a constant conduit in the sort of vibe side of the administration that is getting sort of the president on side, but he's also been the author of these sort of sanctions, this next level of sanctions that have still been stuck with the U.S. Senate, that have not moved forward, but that apparently made progress over the last couple of days. And a reminder of what those include, and these would be absolutely massive if they went forward for the Ukrainians. This is the sanction package that Lindsey Graham put forward. These are all about the secondary sanctions on those who support Russia. That would basically see the United States imposing tariffs and those kinds of measures on them. So that is something that the Ukrainians will be very concerned about, A, not having the sort of support in the ear of the President of the United States, but also potentially stalling the efforts of that Lindsey Graham sanction package, which has not yet been put into effect.
And Ollie, tell us a little bit domestically within Ukraine what it means, the fact that there's this broader cabinet reshuffle taking place, a removal of the Prime Minister and somebody new in post. What's the broader interpretation of these moves?
Yeah, exactly. This is a prime minister. I mean, there was a shuffle just about a year ago, which is when the current prime minister, came into office. She's now basically being sent off. She may become ambassador to the United States, we understand from some of our reporting. And there are a couple other people that are in the pipeline. One is the CEO of the state-owned Naftogaz, that is the Ukrainian gas company. And of course, there is Denis Shmyhal, who is the former prime minister. We've interviewed him a few times and spoken to him. But he's also taken over the domain of energy minister. So both of these men that might replace the former prime ministers are people that are very sort of well-versed on the question of energy and stabilizing energy. For example, within the sort of all the issues that we've had with the bombing of infrastructure, the destruction of Ukrainian energy infrastructure, Naftogaz, which is responsible for all of the natural gas, they have managed to keep their supplies stable. So these are two individuals who are very well-versed within the energy complex within Ukraine, and something that they're going to be thinking about very, very concertedly going into the winter. Of course, this has been a sort of the renewed bombing campaign on all the infrastructure. So energy security is going to really be front and center as we sort of end towards the height of summer and, of course, into yet another winter.
Chief Europe correspondent for Bloomberg, Oliver Crook. Ollie, with the update there, out of Brussels. Ollie, thank you. Let's look ahead at what else we are watching throughout the week. Later today, EU foreign affairs ministers will be meeting in Brussels, as Ollie was saying. Macron will be hosting the coalition of the willing in Paris. Tomorrow is US bank earnings kicking off. Bank of America, JP Morgan Chase, Wells Fargo, Goldman, Citigroup. So really getting underway with some crucial earnings all starting tomorrow in earnest. We also get on the macro front, US inflation data. That will be consequential. And Fed Chair Warsh, as we've been discussing on this show, testifying before the House Financial Services Committee on monetary policy. On Wednesday, on the earnings front, the big one for Europe is ASML, Europe's most valuable company. Earnings coming through there. Also US bank earnings, done numbers coming from Morgan Stanley. On Thursday, we get TSMC earnings and Netflix. And on Friday is the World AI Conference in Shanghai. Now, Bloomberg MLive editor Morwenna Coniam joins us for the here and now, the market action. Morwenna, it seems to be, this is a question for the markets today of oil, higher oil prices, risk off across equities, and tech also not playing a role as well, given the volatility we've seen again in Korea. What is standing out to you today in the session?
Absolutely. I mean, we've really seen a return to that sort of two-pronged trade. We've got oil prices rising on renewed conflict and uncertainty about where we go from here. I think in June we saw a lot of that coming back, and now we are back to a period of volatility and uncertainty. So we've got energy stocks rising, and then at the other end of the scale we have got technology stocks trailing as the AI trade does appear to be losing momentum. It's ebbing and flowing a lot more than we saw earlier in the year. And actually that does seem to keep coinciding with these days where the broader mood is risk off as well. And so that's weighing on equity indices, particularly in Asia, but also in Europe. And of course, the UK is benefiting from the higher oil prices whilst not suffering from the loss of its AI stock momentum.
Yes, absolutely. We see the London market stand out for those reasons. And the same dynamics around a higher oil price also pushing yields higher. We're seeing that in Europe today.
Yes, we are. Bond yields are higher across the curve, across the continent. Actually, particularly so in the UK. We do tend to be more sensitive to energy price shocks. And I think there's also probably a little bit of political uncertainty going on there as well. And we're also seeing yields move slightly higher in the US. Of course, we have got that key inflation data coming up tomorrow, which I think may show things were a little bit better in June. But at the same time, as we've just seen and been discussing, the story has changed again in July. So what that means for the Federal Reserve in terms of the interest rate policy going forward, I think it will be very, very interesting what that data shows, but also putting it in the context of a changing picture since it was the period it covers.
So that's one potential risk event this week, which is inflation data out of the US tomorrow. What are you and the team, when you came in this morning, what is exciting you about other risk events? What is kind of grabbing your attention? What are you all talking about in terms of what is going to be taking up most of your attention this week on the risk events?
Yes, well, there's plenty going on. Of course, globally, we've got US inflation. We've also got all those bank earnings, which will really start to drive narrative as earnings season ramps up in the UK as well. I think sort of politically and economically in the UK, we've got Mansion House tomorrow, and Rachel Reeves will be talking about small businesses and AI. But looming on the horizon,
if she's not the Chancellor,
I think there's probably a bit less. I mean, you know, it's still important because it's still the government. But obviously, on Friday, if Andy Burnham is set to become the Labour Party leader and Prime Minister from July the 20th, then we will be really looking at who he appoints as Chancellor. Could be Reeves, but it does appear that other candidates probably are more favoured at the moment, and that will probably determine policy going forward. But, you know, with no mandate, I think it'll be interesting to see how much shift we really see there.
OK, Morwenna, thank you very much. Bloomberg Markets Today editor Morwenna Coniam with some of the events we're looking forward to this week, and indeed things moving markets right now. We'll add to the list of things we're looking ahead to then. US CPI, Warsh testifying. There's going to be a lot of football watched here in Europe,
so
Tom.
Spain, France.
Tuesday, that's tomorrow night.
Talking of risk events of a different type. Spain, France tomorrow night.
Yes.
An epic head-to-head. And then, of course, the big one for us, at least. England, Argentina. 8
England, Argentina. Yes, exactly. And John
Authors
has a nice piece with all of the backstory around England, Argentina, if anybody is at all interested
refresh our memories
in reading all of that. That is it for the opening trade. We have European equity markets then on the back foot this morning. US stocks pointing lower as well. So that tech negative theme looks as if it could spread into the United States. Oil prices are substantially higher as well. 78 is the handle on Brent, so not as high as they were, but still higher as we watch the Middle East developments. The Pulse is up next. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people,
There's no question this industry is composed of some bad actors and some good actors.
the transactions,
Volumes have surpassed $24 billion per day.
and the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
Newsmakers and market movers. This is The Pulse.
Good morning. Welcome to The Pulse. I'm Tom McKenzie in London. These are your top stories. SK Hynix shares tumbled by the most on record in Seoul after making its US debut, but positive news for TSMC, with sales there jumping by 36%. Oil spikes and government bonds fall as the US and Iran exchange new strikes, with both sides claiming control over the Strait of Hormuz. And Moscow faced a second day of large-scale drone attacks from Kyiv. Ukraine's President Volodymyr Zelensky overhauls his government, including changing the Prime Minister. So it is risk-off across these markets. The negative impulse coming through from the tech trade with that record drop for SK Hynix. US futures negative on the back of that. NASDAQ 100 futures lower. But you're seeing some negativity in Europe as well. Oil prices higher, yields up, bonds selling off. It is risk-off, as I said. US futures pointing lower by 0.4 on the S&P E-minis. NASDAQ 100 futures, as I mentioned, down 362 points right now. Brent spiking 3.4% after a 5% gain for oil prices last week. Gold under pressure on expectations that maybe the Fed will have to hike rates faster than expected, above 4,000, but down 1.3% in the session today. Let's take a look at the European markets map as well, briefly to check in. You did actually start the session with the FTSE 100 in positive territory, with energy as a sector playing that role. The FTSE 100, though, right now here in the UK is just down 0.1%. You're down a similar amount for the CAC 40 over in France. The DAX is actually flat. Similar picture for the FTSE MIB as well. Let's get you a print right now on pre-market pricing for SK Hynix ADRs. After that 11-12% gain by the close on Friday, after that successful IPO, right now the ADRs are pointed lower by 8.5%, again after a torrid session for the SK Hynix in the Seoul session with a record drop of 16%. So that had not, of course, augured well for the opening of the ADRs on Monday, and you're seeing that picture then, currently down 8.5%. Not looking to wipe out all of the gains from Friday, but closing in on that. We'll continue to monitor that for you. On a positive part of the story when it comes to the AI story, though, TSMC reporting a rise in quarterly sales of 36%, meeting high expectations and signalling that global demand for AI hardware remains intact. It comes as the Kospi slumped 9% today, driven by that record plunge for SK Hynix after the memory chip maker's highly anticipated US trading debut. Let's bring in Bloomberg senior strategist Neil Campling right now for the details. Neil, before we get to SK, let's start on TSMC. Just for the month of June, am I right thinking sales were up more than 60% just in a single month? Is TSMC validating the AI trade at this point?
Morning, Todd. Clearly, with regards to being NVIDIA's key chip provider, then it's no surprise to see TSMC sales continuing to be very robust. The June data was strong. It was in line with expectations because analysts have been taking up estimates in recent weeks. The biggest thing now for TSMC itself and for the AI narrative will actually come on Thursday, when we get the actual full list of results in terms of profitability, margins, and crucially, the guidance. Then we'll get a sense of where we're guiding to for the back end of the year, and also in terms of what their CapEx requirements and expectations are.
Neil, it's interesting on TSMC, so we'll get more details through this week. But yes, they are the key producer, as you say, for not just NVIDIA chips, but Apple as well, with those absolutely key foundations in terms of the factories, I should say, in terms of the build-out and what they have in not just in Taiwan, but they're building out aggressively as well, the foundries in the US. We've lost the line with Neil. We get him back, of course, because we want to understand what is happening with SK Hynix. There was some debate as to whether or not the pressure that was on the stock in Seoul today was down to profit-taking, maybe funds moving into the ADRs in the US. It doesn't seem to be that there is a structural reason for the pressure that we've seen on SK and the maker of those memory chips, of course, today. It may be a question of profit-taking, but we'll get Neil back, hopefully re-establish that line and get some context and some details as to why that stock in particular has been under so much pressure. And again, pre-market cooled lower as well in the US. Let's get to the oil story. Oil prices jumping this morning as the US and Iran trade fresh attacks, and the rhetoric is coming through from both sides as well. US Central Command says forces hit dozens of targets in the fourth strike by the country in around a week. The latest escalation came after Iran reportedly fired again at commercial ships in the Strait of Hormuz, as both sides issue conflicting statements over whether the passage is open to shipping. Let's bring in Abu Omar, who's Bloomberg Horizon's Middle East and Africa anchor. Abi has been following all of this, of course, throughout the weekend and today. What do we know about the latest spate of attacks, Abir?
Good morning, Tom. So perhaps I could start with a new development that has happened since we last spoke, and that is through the Ministry of Foreign Affairs in Iran, through the ministry spokesperson Ismail Baqai, saying that the MOU between the United States and Iran in its current state is now essentially in crisis. This is what he said. And he also said that the ships that are crossing the Strait of Hormuz through the parallel U.S. lines are prone to getting attacked. And so this has happened just moments ago. Iran also saying that it's not going to allow the IAEA to enter its nuclear facilities. So we're seeing an escalation in the rhetoric by the second. And this follows a weekend of events as well. Tit-for-tat attacks that have happened between the United States and Iran. Iran starting this off at the beginning of last week, Tom, by hitting an LNG-laden ship in the Strait of Hormuz, flagged to Qatar. The U.S. in turn attacking Iran for 2 straight days. And then over the weekend, Iran hit yet another ship flagged to Cyprus this time. The U.S. continuing the attacks on southern provinces, including Bushehr in Iran, and some military sites. Iran doing what it did over the past few months when these attacks happened, retaliating on countries in the region, hitting the likes of Jordan, Qatar, and Kuwait. We reported earlier some infrastructure damage in one of Kuwait's oil facilities. In Qatar, also saying yesterday that 3 people were injured. And let's just remember that up until a week or so ago, Tom, Qatar Qatar was one of the mediating sides in all of this. So it looks like the retaliation is happening, bearing no mind to those that were involved in resoluting the conflict between Iran and the United States. And of course, at the heart of all of this is the movement in the Strait of Hormuz that up until the early hours of this morning seems to be at a standstill.
Give us more details a bit in terms of what is actually happening, what traffic we are seeing, if any, through the strait. There's the transponders on, there's when they switch them off, so I know there's that complexity. But what is our current best understanding of the flow through the strait?
Yeah, so we're monitoring the situation. Our energy teams are tanker tracking those movements through the Strait of Hormuz yesterday. So over on Sunday, we reported that about 6 ships have made their way through the Strait of Hormuz with their transponders off, as you have mentioned. So essentially what we call turning their lights off to be able to cross the waterway. This morning, however, it seems that the traffic has gone down to a standstill, something that we've reported has been happening over the past few weeks or so. But Tom, even before all of this started happening, since the MOU was signed and, you know, those positive remarks about the traffic coming back to the Strait of Hormuz, as you can see on the chart there, it still nowhere was at the levels that we had pre-war. And so ship owners were treading with a little bit more caution because of Iran's assertion of dominance over the Strait of Hormuz, because of Iran saying that even though the MOU was signed and the Strait of Hormuz was supposed to be open, ships that are passing through had to stick to routes that Iran had laid out. And those that did not stick to those routes, those that were crossing the part of the strait that was closer to the Omani side or the southern part of the strait, were prone to getting attacked. This is what we saw happening over the past week or so. And so we already had been seeing ships treading with a lot of caution. But as of this morning, it seems that ship owners are holding still, deciding not to go through because the risk is just really severe. We still await whether those technical negotiations between Iran and the United States will actually happen. But for now, a lot of unclarity regarding the situation.
OK, Bloomberg's Abir Abu Omar with that important update out of the region. Abir, thank you. Let's bring in at this point Seema Shah, Chief Global Strategist at Principal Asset Management. Seema, how concerned should we be right now about this flare-up? There's been an expectation, almost consensus from investors and guests that we've been speaking to, that we're kind of past the worst when it comes to Iran. We can look at other factors now. Do we rethink those assumptions? We've seen this surprising resilience for the global economy. Does it get challenged in an environment where maybe oil is around 80, 85 for a longer period of time?
Well, so I don't know if we can necessarily challenge the idea that we're past the worst point. I think this is still looking a little bit better than we were, 6 weeks ago. But it certainly does challenge that perspective that we'll be looking at $70 a barrel through to the end of the year. And you're almost retracing some of the concerns that we had earlier in the year. Now, the big concern is, of course, what the implication is to inflation, second-round effects, and therefore how the Fed is going to respond. Now, of course, tomorrow we have the CPI data, which is going to be really key. But actually, we won't really see any evidence for a couple of months. So I think the debate around what the Fed is going to do and how they're going to respond, particularly considering that we have a new Fed chair that we're not very familiar with, I think just adds a lot of volatility into the market at this point.
So how important are those comments from Kevin Warsh later this week?
They're really important, but I don't know if we're necessarily going to understand or see anything else that he hasn't already said in terms of not committing to any forward guidance. And that tells us that uncertainty is likely to linger. It may well go through to Jackson Hole. I think that's a new kind of key date that we're looking to have a better understanding of how the Fed is going to be responding. But of course, we're heading into earnings season, and when you have this renewed inflation concerns and how the Fed is going to respond, it means that the importance of that earnings season really coming through and delivering has just been raised quite significantly.
So I want to get your take on the earnings season, but before we get there, so markets pricing at about 30 basis points of hikes from the Fed. Does that seem reasonable in the current environment? Are you basing your assumptions on that level of interest rate hike coming through from the Fed, or are you calculating, is your base case somewhere else?
So we're expecting no hikes through the rest of this year. Now, that is based on the idea that inflation is likely to peak fairly soon and start heading down, and because inflation expectations have been anchored to this point. But of course, we have to acknowledge, particularly given what's been happening in the last few days with the US and Iran, that the risks around that are very, very heightened. So the odds of a hike are clearly much, much greater than the odds of a cut. So I wouldn't say that we're particularly wedded to that forecast, and it's something that we have to watch and see how that pans out. the market has fluctuated a lot between how much, they're going to price in any hikes this year. For now, we're sticking to no move, but that is definitely under challenge.
On earnings, is it still all about AI and whether that gets confirmed?
I think that's definitely the predominant focus, and we have to make sure that, demand is not waning. That would really start to be a significant challenge, not just for the specific tech stocks, for the broader market as well. But the other thing that we did see last quarter was this broadening out in earnings growth, which was a really, really positive take on how the economy is responding, the resilience of the economy.
Europe was part of that.
Europe was certainly part of that, and actually we have seen some really good news coming through. The problem for Europe specifically, though, is that vulnerability, the greater vulnerability to the US-Iran conflict. And so for Europe, the earnings growth factor is very important. Almost the hurdle has been increased. So it's important for everyone, but particularly for Europe, I think, coming into the earnings season with the increase in tensions.
Is there a margin concern for Europe then on the back of that oil price story? Or do you see margins holding up? The earnings forecasts, do you align with? Are they looking a little punchy, or are you comfortable with where the forecasts are for European earnings?
I think they are quite punchy, and I'd say that that's actually the case globally.
Yeah.
And specifically with regards to margins, that is one of the key things that we're going to be looking out for, particularly with regards to guidance. How are they talking about margin pressures? Are we starting to see them peak, given the increase in input pressures? So I think there's a lot to be discussed, or at least to be seen, in this earnings season for Europe and broadly for the rest of the world too.
When do higher yields become a problem for the equity markets? Do you expect a further sell-off for the bond markets?
We are expecting yields to rise a little bit further. We're not expecting them suddenly to come down. Even if the Fed doesn't hike any further, we're expecting a little bit of upward pressure. In terms of how the equity market can digest it, it really comes down to the strength of the economy. If the macro backdrop stays really resilient, constructive, which itself comes back down to the AI capex story, then actually slightly higher yields is okay. It's when you start to push the 480 of course, towards the 5% mark that we do start to get some concerns. But at least at this stage, where yields are, we do think that it's not a headache for equities.
We had a previous guest on the opening trade saying that they were avoiding investment-grade credit because of how tight the spreads are, not being rewarded for the risk. How are you thinking about credit and about that tightness that we're seeing in spreads?
Look, I mean, the tightness of spreads is really interesting because it does show us that actually credit has been incredibly resilient. Equities have gone up and down, but actually credit has outperformed from that regard. From here, you're right, that the return isn't that compelling. And I think that from our perspective, given that we're not expecting growth to really weaken over the coming quarters, given that defaults actually seem like they're heading down, that this is probably the time that you can even move into high yield, keeping in mind that the quality in high yield is much, much higher than it was previously. So there is opportunity within the credit space, but if you're looking at a broader asset allocation portfolio, we do think actually moving, having a greater allocation to equities does still make sense, and keeping in mind that you need to have exposure to real assets in this environment where inflation is still a concern.
OK, this is quite a constructive view with important caveats that you've laid out for us. I'm wondering if what your preferred hedge is in an environment where things are looking a bit more negative. Where would you look for safety?
That's a really good story. I mean, look, diversification has been the key story throughout the last 2 years or so. Increasingly, look, it's about resilience, but it's also about trying to access those multiple layers of strength that do exist, created by the AI capex drive. But there is vulnerability within that trade. So Europe and China continue to be good in terms of if you're trying to diversify away from AI. The geopolitical conflict, of course, means that it puts a bit of a shadow on Europe. So we are thinking more about China, but also look across at the other sectors that exist beyond AI. So we're thinking about financials. Healthcare, of course, is a good one. And then in this inflationary dynamic, again, you have to look towards real assets. So that's still commodities, a really good play at this kind of time when we're still concerned about the geopolitical conflict.
OK, and we're seeing at least parts of the commodities trade playing that role today. Seema, thank you very much indeed for those insights on these markets. Seema Shah, Chief Global Strategist at Principal Asset Management. Coming up, a political reshuffle in Kyiv and the loss of a key Trump whisperer in Washington. We bring you the latest on the Russian invasion of Ukraine next. This is Bloomberg.
a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Welcome to Bloomberg This Weekend.
Breaking news today from Wall Street to Washington.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
This is The Pulse. I'm Tom McKenzie in London. Now, Ukraine is expected to be top of the agenda as meetings of both EU foreign affairs ministers and leaders of the so-called coalition of the willing countries are due to take place today. The gatherings come as Ukrainian President Volodymyr Zelensky removed the nation's prime minister as part of a shift in political strategy in the run-up to another winter under threat of Russian attacks. For more, let's bring in our chief Europe correspondent, Oliver Crook, who has the details. Ollie, let's start with the gatherings today. What is going to be top of the in-tray for leaders? What is going to be discussed with the most urgency in these meetings?
Yeah, Tom, two big meetings today. The first is here in Brussels, where foreign affairs ministers have gathered to discuss a number of different issues. Obviously, Ukraine's going to be top of the agenda. They'll also be talking about possible sanctions on Israel in terms of their activity in Gaza and the West Bank, though there's a chance that they'll probably delay that given ahead of the election in Israel. But of course, for Ukraine, particularly at this meeting in Brussels, and then there's that coalition of the leaders meeting hosted by Emmanuel Macron over in France. I think in both of these meetings, the thing that you will find in common is going to be a sort of strategy session for the Europeans now that there has been a pretty radical shift in tone from the U.S. administration and Donald Trump himself following those meetings last week in NATO with a number of European leaders. But of course, the one-on-one with Volodymyr Zelensky and President Trump, in which you saw really, I think, the warmest relationship you've seen between these two men. Obviously, Zelensky has gone to great lengths to get himself back in the good books of Donald Trump and has been, having some success with that occasionally. But really, you sort of heard the most positive pronouncements from the President of the United States with Zelensky last week. We also had the United States granting Ukraine licenses to produce local Patriot systems, which is something that's absolutely fundamental for them. But for the meetings here for the Europeans, what they'll also be discussing is the 21st sanction package against the Russians. We are doubtful to get an outcome on that this week, but it's something that they may be looking at getting into effect next week. But of course, for the coalition of the willing, it's some of that architecture, right, Tom, for those discussions about what the day after looks like in Ukraine, what Europe's role is in guarding security, but of course potentially getting some more of those air defense systems that the Ukrainians so desperately need. So we'll be watching both of these meetings very closely. We'll hear from Kaja Kallas a little later once the meeting here wraps, and keeping an eye out for Emmanuel Macron as well.
OK, so the French president will be on the ground and you'll be watching for any progress on that question. And Ollie, meanwhile, I know you've been across this as well, the domestic politics of Ukraine obviously having international implications. What is happening when it comes to the new PM, or at least the proposal for the new premier role in Ukraine? What's behind this move?
Yeah, absolutely. I mean, you get these reshuffles every now and then from President Zelensky when you look at sort of the cabinet and the prime minister. The prime minister now stepping down and going to be replaced. She may become ambassador to the United States. There's some reporting around that. But of course, Zelensky does this every now and then. And this is really girding, looking at the possible candidates that would replace her for the winter and keeping the lights on in Ukraine, which is, of course, the fundamental question with the Russians, particularly last winter, really stepping up all the attacks on infrastructure. There's two main candidates. One is the CEO of Naftogaz, which is the national natural gas company over in Ukraine, and his sort of track record of being able to actually keep the gaining momentum on the battlefield. They're gaining support from Donald Trump, and of course they gained that critical loan from the Europeans, that 90 billion euros to keep them in the fight. Really thinking about what the sort of next steps are domestically, absolutely crucial for Zelensky as he enters. Obviously now is the summer, but again, another winter which could be, again, very, very difficult for the Ukrainians.
OK, bracing for another potentially tough winter for Ukraine. Bloomberg's chief Europe correspondent Oliver Crook. Ollie, thank you. Meanwhile, the death of Senator Lindsey Graham has left key US allies like Ukraine without one of their most effective conduits to the White House. The South Carolina senator died unexpectedly over the weekend at the age of 71. In the last 3 days before his death, he met Ukrainian President Volodymyr Zelensky and sealed an agreement with senators to advance a Russia sanctions bill. For more, let's bring in Bloomberg's Jill Desis. Jill, just talk to us, give us the details around the sizable impact that Graham had in terms of pushing the need and the case for supporting Ukraine. He was a central and significant figure in the foreign affairs of the US.
Yes, that's right, Tom. And I mean, we just heard there from Oliver about the relationship between Zelensky and Trump and how that seems to have warmed recently. I mean, you have to imagine that when you have Senator Lindsey Graham, one of the most hawkish Republican senators in the United States, also just one of the ones that's been most insistent on the Ukraine issue. I mean, that's a huge loss in terms of that idea of being that sort of linchpin ally. I mean, again, his death, very shocking. He had just returned from a trip to Ukraine. It was actually his 10th trip to Ukraine since the war broke out in 2022. He had been at the NATO summit in Turkey just before then. So you do see, this really, really heavy involvement in these types of policies. I mean, again, Tom, it's really difficult to underscore or to overstate here. I mean, how important he's been for sort of shaping this type of foreign policy under the Trump administration. Trump is a man who, going into office was pledging to be a little bit more isolationist. Lindsey Graham is a massive interventionist. So he's really been pushing for U.S. involvement in these conflicts. I know obviously we'll have to see what ends up happening post this, but this is a pretty key ally who did have President Donald Trump's ear on a lot of these matters. And so it's hard to imagine that this isn't sort of shifted in some form in terms of, how things actually look at U.S. policy going forward.
What does it mean for the domestic politics of the U.S.?
So, I mean, when it comes to replacing Lindsey Graham's Senate seat, it's in South Carolina. This is a very, very heavily conservative area. There was going to be an election later this year, still is, that Lindsey Graham would have been up for re-election for. Not particularly great odds for the Democratic candidate, but there is a little bit of shuffling going around just sort of on the Republican side. So the governor of South Carolina will be able to appoint somebody who can fill out the rest of Lindsey Graham's term. There will also be a special primary, Republican primary, that does sort of create the opportunity for some infighting within the Republican Party, depending on how that shakes out. So again, a little bit of uncertainty about what that ultimately looks like. I do have to point out that when it comes to domestic politics, Lindsey Graham also a big supporter of the Iran war, which of course has become more unpopular in the United States as energy prices remain elevated, gas prices remain elevated. So, interesting to see whether or not that builds into the equation here.
OK, Jill Desis, thank you very much. Coming up, we're going to shift focus. We're going to bring you the outlook for M&A for the rest of the year after a deals surge in the first half. That conversation is next. This is Bloomberg.
comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything.
Good morning. Happy Monday. Welcome to The Pulse. I'm Tom McKenzie in London. These are your top stories. SK Hynix tumbles in US pre-market trade after shares fell by the most on record in Seoul. But positive news for TSMC, with sales at that company jumping by 36%. Moscow faced a second day of large-scale drone attacks from Kyiv. Ukraine's President Volodymyr Zelensky overhauls his government, including changing the Prime Minister. Plus, oil spikes and government bonds fall as the US and Iran exchange new strikes, with both sides claiming control of the Strait of Hormuz. Let's get more right now on that story and bring in our Middle East energy correspondent, Anthony De Paola. Anthony, where do things stand in terms of the conflict, in terms of the aggression, and what is actually flowing, if anything, through the Strait right now?
Good morning, Tom. Yeah, the way it stands is conflicting reports from both the U.S. side and the Iranian side. Iran claiming that Hormuz is closed to traffic, the U.S. saying it's open, saying repeatedly that it's open. There's that channel along the Omani coast that the U.S. is saying vessels are able to take. And so far, we are not seeing a huge amount of traffic in terms of vessels that we can see with their satellite trackers on. It does appear that there are some vessels that are going through without the satellite signals on, and that allows them to kind of sneak through the Strait of Hormuz, as it were. If they don't have those satellite signals on, they can't be seen by the regular radars. They're not transmitting, and oftentimes we understand these vessels are going overnight with the lights off, potentially with some military escorts to try to get through there. So those kind of voyages are continuing with vessels that are going dark, as it were. Whereas the flow of normal traffic through the Strait has really dried up, really since last week, when we saw those attacks on shipping, particularly on some vessels that were taking that Omani route. So that's dried up, and it's becoming really difficult for crude buyers, for traders, for shippers who want to go in to the Gulf and pick up some oil. It's becoming really hard for them to do that, and so we're just not seeing the availability of vessels willing to go into the Persian Gulf because of the risk of getting stuck there or even being attacked while trying to make the voyage. So that's really impacting the traffic going through the Strait, Tom.
Okay, Anthony, with that update, thank you very much indeed. With Brent at $78 a barrel, up 2.6% in the session so far. Bloomberg's Anthony De Paola. Of course, the energy price story ties into what's happening with travel as well. But this is a different story when it comes to EasyJet. Investors are awaiting an update from US investment fund Castle Lake after Apollo's surprise £5.7 billion counter-offer, which, of course, came through last week. The battle between the two US funds stands out because the volatile, low-margin airline business rarely draws financial suitors. Let's get more with Bloomberg's European Equity Capital Markets reporter Pablo Mayo Sequeira Sequeiro. Pablo, where do we stand on this story? And this is another example of possibly a publicly listed European company going private in the airline space. How close are we to a deal being actually closed? Two suitors. Where are we in this story?
Well, we'll have to see if there's a bidding war here. Clearly, it fits into a broader theme. There's been a growing number of UK-listed companies that have been taken private in the last few years, and that number just keeps growing and growing. I'm not sure that trend is going to slow down anytime soon.
OK, and there's an IPO drought in London, at least. Is that what kind of opens the spigots, if anything? What opens the taps on IPOs in London? Is it a question of the LSE making additional changes? Is it a regulatory question, or is it a broader market sentiment story?
It's a great question that a lot of people in the city are asking themselves. And clearly, you're putting your finger on the fact that there's a big gap between the number of companies that are being taken private versus the number of companies that are joining the stock market. The good news is that there is a decent pipeline of IPOs looking to come to London. The question is, when are these companies actually going to come to market, and what happens in the meantime, because these takeovers are not going anywhere. I think that the regulator has done a lot to make London more attractive for companies to list. The question now is around the availability of capital. Capital to invest in these IPOs and remain invested, so that valuations keep going up, and then potential buyers don't see the bargains that they're spotting right now in the market. The current Labour government has done a fair bit in terms of reforming pensions, but there's still a lot to get done, and obviously we have a new administration coming in, and we'll see what they do about it.
OK, so the pipeline is there, but we need to see that pipeline actually being executed on. Pablo, thank you for that update, of course, in terms of what's happening, potentially with the IPO story in the UK. Pablo Mayo Sequeiro, who is our European Equity Capital Markets reporter. Let's start on the M&A story, or stay on the M&A story more broadly. It's been a bumper first half for global M&A as we think about EasyJet. Of course, it hasn't crossed the line yet, but even before EasyJet, it's been a pretty solid first half of the year for transactions. Values were up transaction values up about 30% year on year to $2.6 trillion between, that sounds like a lot, between January and June. That puts deal makers on course to potentially pass the record haul they achieved in 2021. Let's bring in right now Cassandra Verwey, who is JP Morgan's head of mergers and acquisitions in EMEA. Cassandra, good morning. What is the current state of we kind of gave a bit of a snapshot there. Does that momentum continue into the second half, and what are the drivers?
Thanks for having me, Tom. No, look, I think there's a clear drive and a clear continuation of that trend that we've seen from the second half of last year all the way into this first half, and I think continuation into the second half. There's some structural drivers which sort of drive M&A in the short to medium term. One of them is the propensity to sort of take strategic action from large corporates. We've seen that already happen over the course of the last 6 months, with mega deals being up 250%. We saw 21 of them in Europe. We were fortunate enough to advise on 12 of those. The reality is there's a clear sort of bias to action in the corporate boardroom. That's not going to change. There's a strategic imperative to act. And sort of they need to counterweigh, I would say, the volatility in the markets and the volatility in the macroeconomic outlook with sort of that strategic imperative, and sort of there's a clear...
What is driving that strategic imperative?
It's a search for scale. So if you look at what the board is looking at in today's market environment, scale comes really at a premium. So if we look at valuations in the market, scale companies trade at around 40% on average premium to smaller and mid-cap companies. Scale drive benefits for growth, ability to invest in growth, higher margin, cash flow generation, and therefore scale is at a premium in today's market environment. And if you've seen all the mega deals that I just spoke about, and the volumes, which means that corporates are sort of fearing a little bit that they're sort of being left behind, and therefore there is an imperative to act.
With a particular lens on Europe, what are the challenges around cross-border consolidation right now?
Well, you just talked about sort of the UK, which is a clear example of where there's a lot of cross-border M&A. Cross-border M&A has seen a massive uptick over the last sort of 12 months. Yeah. Following Liberation Day, there's a massive surge of cross-border activity. A lot of that has been into the UK. There's a nuance to it, though. The UK is actually the second largest acquirer of companies globally. So the UK is actually, throwing quite a few punches in sort of the global M&A arena. Now, it's fair to say that the US is above that. The US is the biggest buyer and seller of assets, with a lot of focus on the UK, as I said. But it's clear that the UK is also there.
That's interesting. We don't talk about that side of the story quite as much. So it's interesting you bring that up. But let's bring you back to the other part of the story, which we do talk about it, which is that move from public to private in the UK. Does that continue in the second half? Does the publicly listed stocks, for valuation reasons maybe, look attractive to US investors?
I think there's a valuation argument. Look, US companies trade at a premium to European companies. So that is a benefit when you want to do large-scale M&A, which is what we've seen in today's market environment. So clearly that is going to be the case in the second half as well, because the valuation differentials will not disappear. I think the reality, though, is that the UK will always be an attractive market from a public to private perspective. The UK is the largest market in Europe. It has great international companies. They're trading at a discount to US peers. It has the largest roster in Europe of large companies. So if other companies from outside of Europe are trying to look for scale, the UK is one of the first markets they look for.
Do you think the IPO pipeline opens up for the UK?
I think it's a challenge. I think the IPO pipeline is very much bifurcated towards what we call trophy assets. Those are companies that have secular growth trends, that have high margins, high cash flow generation, and are not impacted or actually are a beneficiary of AI. That's a small group. So there's only a small number of companies that sort of tick all those boxes in today's environment. And that's really the reality that we find ourselves in. But it does mean that the UK and other European companies, by the way, as well, who see public to private, need to replenish those companies with high growth, innovative companies that grow through the cycle.
How are boards talking about a potential Burnham government and what that could do to deal making?
I think boards taking a longer-term view. I think what we've seen, if you bring it back to a broader macroeconomic environment, I don't think the UK is specific to that. Boards take a long-term view, and I think they look at long-term secular trends, what is driving our businesses. AI is clearly one of them, if we look at the scale point I made earlier. So I don't think that boards are saying, let's look at the government that's in place and now act on that, and let's drive M&A, yes or no. They take a much longer-term strategic view and therefore come back to that strategic imperative. Are we capable of doing the dream deal that we want to do in today's market environment? Balance sheets are actually quite healthy. Operating and earnings momentum is actually quite healthy. So that actually gives them license and allows them to do these bigger transactions. And I don't think the government in a country is necessarily going to drive that change in the short term of that thinking.
You talked about AI. I'm thinking about Schneider Electric recently doing a deal in that space. Yep. When we think about cross-border consolidation in Europe, then, which industry is kind of top of mind for you in terms of where we could see major deals coming through?
If you look at one of the growth drivers is AI, but AI is a big buzzword, and it talks about many industries. Of course, it's about compute, it's about storage, it's about data centers, right? That is a massive area of investment. There's $5 trillion of capex coming to the market in the next 5 years. But there's a whole roster of adjacent industries that are sitting next to that AI trend. Think about electrification, think about automation, robotics. So those are thermal management. So those are all sorts of areas where AI and the investments in AI and the capex in AI is creating a lot of side effects, if you will, that are going to drive sort of the trend and the growth. Now, as a company, if you're not in those industries or those adjacencies, you want to be in those adjacencies. So we see a lot of growth in those sectors. They tend to be industrials, they tend to be technological, and we see a convergence of industrials and technology to create those large corporates that, and the example you gave just now about Schneider is exactly on trend. It's creating a software platform within Schneider, which historically was a traditional DI company.
Are you getting the sense that Brussels is more accommodating to deals either within AI or within defence? Is there more? What is the signal? What signals are you getting from the regulators?
Yeah, look, I think around the regulatory sort of environment, both in the US as well as in Europe, both the CMA as well as European regulatory authorities, we've seen a more pragmatic stance towards antitrust in particular, which went from we say no to let's think about remedies. And therefore, as a board, when you think about doing a transaction, you want to know what the certainty is that you're going to get to the finish line. So that's helpful. That has limited the amount of time that people need to spend on things, and also the regulatory throughput and the lead time for it to close is different. However, there's a big but. In today's market environment, there is more focus on security, resiliency, and therefore in that context, the dynamic shifts from only antitrust more toward foreign direct investment regulations. And we haven't really, everybody's talking about national champions in Europe, but we haven't really seen those deals yet.
Okay, that's interesting. The banking space. I mean, do we get? I mean, I'm thinking obviously of UniCredit and Commerzbank, and you have to talk about individual names. But do we get banking consolidation? I mean, that is one example of where things are held up, arguably for domestic political reasons. Do we get more activity in banking? Is there more consolidation that can come through this?
The reality is FIC and banking as part of that, and insurance is already the second largest area of M&A activity. So the reality there is that we will continue to see that. What we've seen so far, though, is really transactions that are about economies of scale, and they tend to be more local. So we've seen that in Italy. We've just seen the Intesa transaction. We see that in Spain. We see that in other jurisdictions. One could actually argue about the Commerzbank situation. There's a big domestic German angle to that one as well. So you see that more on a national level, I would argue. The reality is that we haven't seen these cross-border M&A situations yet in banks across Europe, and that's because the regulatory framework is still not quite there.
Still not quite there for those cross-border banking deals. Kasana, thank you very much. Really interesting insights. Kasana Verve, who is JP Morgan's head of mergers and acquisitions, M&A in EMEA. Now, to defence, and more details on the defence space. Europe's largest defence startup, Helsing, has completed a financing round at a valuation of $18 billion US. Helsing has gained prominence since Russia's invasion of Ukraine. Let's get more details and bring in Bloomberg's global defence editor, Jerry Doyle. Jerry, how significant is this latest funding round for Helsing?
It's quite significant just in terms of the dollar value. Obviously, $18 billion valuation is very high. But it also shows the seriousness of investing in the defense space even now. Goldman Sachs, JP Morgan, they're a big name pouring money into this space. And something that started out as a hot investment area after the full-scale Russian invasion of Ukraine in 2022 is now turned into an even larger space after the Iran war sort of showed the importance of a lot of the technology that defense startups are working on. Things like drones and drone defenses are now extremely hot areas.
Jerry, as we think about drones, we think about connectivity. It's so important, and clearly the Ukrainians are showing some strength there. But that relies on having satellites in space. Where does Europe stand? Europe has strength in the satellites in the satellite sector. I know you've been doing reporting on this. Is Europe positioned strongly enough when it comes to ensuring it can get satellites into space and maintain connectivity?
Yeah, I mean, Europe has some excellent technology companies. It has companies that can build these high-tech satellites that can do Earth observation, spy satellites. They can track fires. They can track things on the ground, radar, communications, all of these things Europe is able to manufacture for itself. The tricky thing is getting these objects into orbit. Right now, it relies on heavy lift for Ariane space, the Ariane 6, which can only launch, say, 10 times a year. 22,000 kilograms to orbit, that's a big number, but it can't do it very often. So for national security payloads, they really have to rely on a lot of foreign companies, most namely SpaceX. And Europe wants to get away from this in order to get more deeply into the defense space in orbit. Right now, that's a big challenge for them.
OK, Bloomberg's global defence editor, Jerry Doyle, with that update and that reporting as well. Jerry, thank you. Coming up, as Europe endures its third heat wave of the season, the World Health Organization warns extreme temperatures are a dress rehearsal for what's to come. More on that next. This is Bloomberg.
studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
Welcome back. This is The Pulse. I'm Tom McKenzie in London. To UK politics then. Andy Burnham is reported to be considering unveiling a bolstered budget later this year. This as allies and experts seek to persuade him to pursue a land tax, public control of utilities and a more ambitious devolution strategy. Burnham is on course, of course, to take over from Keir Starmer as the UK Prime Minister next Monday. Let's get more with Matt Bunny, UK economist and Bloomberg with Bloomberg Economics. Matt, what more do we know about these ideas being kind of tossed around by Burnham's team, how real they are, and whether the Treasury is ready to kind of implement them?
So the bigger budget you referred to would be bringing forward the spending review that happens, which sets out departmental budgets for 3 years ahead. So essentially, this kind of measure would allow Burnham to really reset fiscal policy in quite a clear way and demarcate himself from Starmer. In terms of the specific policies, they are still shaping up, but one of them you mentioned is land tax. This is something which economists have been advocating for a long time. It is less distortionary than things like a stamp duty tax, for example, although it is complex to reform the property tax system, and that will take some time. Fiscal devolution is another particular point that Burnham has advocated for in the past and has continued to do so in recent speeches. So fiscal devolution would basically allow the regions to have more power over tax and spend. So the UK is actually one of the most fiscally centralised nations compared to other G7 countries, for example. The idea being if you allow more power to the local regions, they can make better decisions for their area about how best to raise money and how best to spend it.
Matt, any other clues about other policies that are being worked out by Burnham? Do we believe him and the team when they say that they've been working on things for 12 months? I mean, is this a team that's going to come in and actually have policy ready to go?
I mean, this is a question that time will tell. I mean, certainly we are still trying to figure out the details. The policy platform is hazy at this point. What we can kind of glean is from recent public statements from people in his circle and policy papers that have been put out. So, I mean, we know one key thing he said he's going to stick to the fiscal rules that Rachel Reeves implemented, which will be some kind of which will appease bond markets. He's also said he's going to stick to Labor's manifesto commitments on tax, which kind of narrows the room that he has to make any major changes. What we do expect, I mean, all these policies we've just been speaking about are things which are going to get long-term growth going, or hope to get long-term growth going. But those kinds of policies usually have little short-term political payoff. So what we expect is that in the upcoming budget, it's quite likely Burnham would implement some kind of cost of living package, which would quite possibly be funded by something like a capital gains tax hike.
OK, Matt, thank you. We continue to watch, of course, and get any signals and monitor and assess any signals we're getting from Burnham's team in the lead-up, of course, to Monday. Matt Bunny from Bloomberg Economics, thank you. Meanwhile, this year's record-breaking heat in Central and Western Europe has already caused close to 10,000 deaths across the UK, France, Spain and Germany. That is according to research groups and government bodies, 10,000. In England and Wales alone, heat waves may have resulted in more than 2,700 deaths. That's according to an estimate by researchers at Imperial College London. The World Health Organization, the WHO, has warned that the extreme temperatures are a, quote, dress rehearsal for what's to come. Let's bring in Bloomberg climate and weather reporter Joe Wirtz. Joe, it's pretty terrifying in terms of the human toll that's already been taken as a result of these record high temperatures. Is this part of the new normal? Talk us through. Put this in context for us. These sound like huge numbers in terms of lives lost.
These are big numbers, and really these are early counts. I mean, I've talked to some health authorities and researchers, and they expect those numbers could climb even higher. And to the dress rehearsal line, we know that these heat waves are getting more intense and more frequent. And look, this summer they started early. We started seeing these heat waves in May. We saw, monthly records in May across UK, France, and then hit again in June, and again right now in July. We've had 3 of these in a row, and each of these heat waves, had their own toll, but the accumulation of that over time is really starting to wear. It's wearing down, any of the really all of the human systems that people rely on for their lives and livelihoods. We've had factories have to rotate workers off to because it was too hot. We've had just daily life be suspended. It's been too hot to do a tour of the Eiffel Tower in the afternoon at some of these places. And, the 2,700 number out of the UK, that doesn't account for some of the deaths we're starting to see now from other artifacts of the heat, including the wildfires. We've had a big one in Spain. It's the deadliest in at least 5 years, one of the deadliest ever. 13 people died just in that event alone. So we're just in July now, and more hot weeks.
Starting earlier and going on for longer.
That's right.
And so the human toll is there. Talk to us about the infrastructure. But we are not built, our infrastructure is not built for these temperatures. What are you seeing when it comes to European and UK infrastructure?
Well, I mean, the infrastructure not built at a time where they were dealing with these types of temperatures and these types of extremes. Many homes here in the UK don't have air conditioning. 7% have built-in air conditioning here in the UK. A further 8% are using these portable, air conditioning units, and you could stretch that out and look at rail infrastructure. We've seen rail lines have to be suspended due to concerns about reliability and safety on these networks, all the way to power. We've had the UK grid operator warn several times about potential energy shortfalls, and in France, the nuclear plants have had to curtail output due to hot rivers.
Okay, Joe, thank you for that, an important update in terms of the climate damage. Bloomberg weather and climate reporter Joe Wirtz. There's a lot more coming up. We're looking at European stocks currently flatlining. US futures down 0.3% on the S&P even. NASDAQ 100 futures down a full 1%. Bloomberg Brief is next. This is Bloomberg.
What happened was you were out.
Are you a different president from your father?
I have to be. It's a different time. There are fundamental lessons that I still hold close to my heart. But in terms of the practical things that you do, very few of those things apply any longer.
How is Mom? She's in her 90s.
Yeah, but I always say she's 95 years old. She didn't get the memo. She doesn't believe she's 95 years old. And she's still very active. I mean, I still get calls from her, and she says, you need to do this, you need to do that. And she doesn't let her age hold her back.
Does she try to advise you, even as president of the Philippines?
Constantly. And, I always learn something new with my mom. In my family, she's the real politician. And she's a natural. My father was an intellect. He was a statesman. And we always said that he lived in his head. He was very, very, very deep thinker. That's what I learned. My mother, on the other hand, she has this uncanny ability to connect with any kind of person. Any person she runs into in the street, kings, presidents, anyone, her childhood friend. She doesn't know how to fight. She's very bad at conflict.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. The U.S. and Iran trade fresh strikes. Oil jumps on conflicting claims over whether the Strait of Hormuz is open. Two tech tales. SK Hynix posts its biggest drop on record in Seoul after its U.S. debut Friday. TSMC sales soar on AI momentum. And a big week for markets. Kevin Warsh makes his first appearance on Capitol Hill as Fed chair, plus CPI data and Wall Street earnings on deck. It's been a big session, though, in Asia. A heavy Monday, particularly in Seoul. Let's get a check now around the world. We'll start in Hong Kong with Winnie Su. Winnie.
Yeah, good morning, Vonnie. A very dramatic sell-off in the South Korean market, with the Kospi here down about 9% today, having also triggered a 7th circuit breaker so far this year. Now it's mainly being led by SK Hynix, as you just mentioned, stocks tumbling 15%, having its worst day on record. There is a bit of profit taking, of course, after that U.S. ADR listing surging about 13% on Friday, but also investors pointing to some concerns about the potential peak out of the memory cycle. And also we have heard from local brokers that expectation for the second quarter earnings might actually miss expectations. So that's also dragging tech stocks further down. As we flip the board and see how that spillover is into the Asian session, we have broader Asia gauge here down about 1.8%, having also headed for its worst, its lowest in about a month. Now Taiwanese stocks are doing slightly better, slightly helped by the TSMC results. We did see quarterly sales jumping about 36%, meeting expectation, but a bit of optimism into the Thursday's earnings. Now, in terms of the broader market, when it comes to currency space, we are seeing Japanese yen actually a bit lower on the back of that stronger U.S. dollar, but also we did hear from Japan that they have no plan to, in fact, change that pension fund allocation. Back to you, Vonnie.
Fascinating, Winnie. Thank you so much. Winnie Su there in Hong Kong. We'll begin in Europe ourselves. Brent crude, one of the main stories today. The Iranians saying just in the last few minutes that the memorandum of understanding is in a crisis phase. It's also warning ships not to pass through the strait, even on so-called U.S. routes through that strait. So we do have Brent crude higher again. We seem to be capped, though. We haven't gone up to $79 a barrel yet, but we are still up 2.5%. As regards stocks in Europe, we have $2 trillion worth of market cap reporting this week. That'll be $6 trillion in the United States. So we are going to be reacting a lot to that, also to this Iran story, also to the South Korea story. We have the Stocks Europe 600 just inching into the green in the last few minutes. It has spent the last couple of hours in the red. And as you can see, energy is a big part of that, with oil prices higher. Also telecom in Europe after Vodafone and that stake by Niels last week. Let's take a look at the U.S. picture. A lot of the same reaction, a lot of the same drivers. Earnings, the Fed chair testimony on Capitol Hill, and data, including inflation data. We do have futures lower, primarily too on that SK Hynix drop, which was a huge drop. It is something like a 27% discount now trading in South Korea versus where the ADRs traded Friday. They were up 13% at the end of the session. As you can see, Futures pointed lower across the board, with the exception potentially of Russell 2000 futures. And then Treasury yields are higher once again. We are testing those highs that we saw last week, with the 2-year yield almost up at 4.22 and the 30-year yield at 5.07. And for some context, Friday was the lowest volume of trading this year. It was also the lowest for the VIX this year. That is not going to be the case today. All right, let's get to some individual movers now. Back over to London and to Chloe Melly.
Good morning, Bonnie. U.S. tech stocks are very much in the red this morning in pre-market trading after we saw this huge plunge in the Kospi index in South Korea. And so this actually created a lot of weakness in European tech stocks. We saw the likes of Infineon, ASML in the red as well at the open in Europe this morning. And we can see that also spilling over into this U.S. tech stocks, with SanDisk in particular, we're down almost 7% there. But Intel and Nvidia are also in the red. We're seeing this growing volatility in the South Korean market, some of it due to those renewed US and Iran tensions, some of it due to this massive drop in the shares that we saw for SK Hynix. And so this volatility and this growing concern around whether, AI spending, the AI boom is overstretched, that is really spilling over there into the US, into Europe. And so we are having once again these questions around the AI trade and how much further really it can go after so many ups and downs. So very much those names to keep in mind as well this morning.
It really is a yo-yo market these days. Chloe, thank you so much. Chloe Melly there in London. And coming up this hour, we look to the busy week ahead with Terry Wiseman of Macquarie. But first, oil rising as the US and Iran continue their tit-for-tat attacks and debate whether the Strait of Hormuz is actually open. Iran's foreign ministry saying in the last hour that the memorandum of understanding is in, quote, crisis phase. Joining us now is Bloomberg's Abir Abu Omar. What does this mean, Abir? Have crossings completely stopped?
Good morning, Vonnie. What this means is yet to be seen. For the time being, we're watching these tit-for-tat attacks, as you have mentioned, through the early hours of the morning in the Middle East. Now, this whole thing started, of course, with Iran hitting a ship in the Strait of Hormuz at the beginning of last week. That was a Qatar-flagged ship. And then the U.S. launched 2 straight days of attacks. That also coincided with President Trump and the NATO summit saying that as far as he's concerned, the ceasefire talks are over. A lot of caveats that we reported about that, him saying that the negotiators can go back to the table and negotiate with Iran. Now, over the weekend, things escalated a little bit more, with Iran hitting yet another ship, Cyprus flag this time, and then the U.S. Central Command in the early hours of the morning here in Dubai saying that it finalized yet another round of strikes on targets in Iran, a lot of them military targets, some of them in the southern part of Iran. Bushehr, a province there, a famous province there, was also hit. Now, Iran's retaliation came in a shape that is familiar. It attacked countries in the region, that is Kuwait, Qatar, Jordan. Air bases in Jordan were attacked. Qatar saying yesterday 3 people were injured, including a child. And so we're watching, again, the tit-for-tat, the escalation in the rhetoric. We're not yet seeing signs of us going back to full-on, full-fledged war similar to what we saw back in March or the beginning of this whole thing. But it definitely seems to be tilting towards a slightly more dangerous phase. You just mentioned the foreign ministry through the spokesperson Ismail Baqai about an hour ago saying that the MOU that was reached about a month ago at this point is in crisis mode. We wait to hear from the Iranian side a little bit more just about what the retaliation is going to look like. But up until the early hours of Monday, Vonnie, we came into the office with Iran continuing its attacks on countries in the region, the U.S. not backing down either, saying that if Iran continues to attack ships in the Strait of Hormuz, it will retaliate.
All right, Abir, thank you so much. Bloomberg's Abir Abu Omar keeping us up to date. Diverging stories in Asian tech stocks this morning. SK Hynix shares falling the most ever in Korea after debuting on the U.S. stock market Friday. Meanwhile, TSMC shares are soaring after reporting impressive quarterly sales. Matt Bloxham of Bloomberg Intelligence joins us now. Matt, why this continued repricing? Let's just take SK Hynix, for example, trading at a massive discount to where the ADR is traded Friday in the US. Who's right? What valuation is more correct?
Yeah, it's interesting. I think I have 2 very different views of the world here going on. I think particularly when it relates to AI, I think generally US investors very optimistic about the runway that AI has ahead of it, and that companies like SK Hynix and TSMC are going to be really critical as that industry continues to expand. You know, I think direct investors in Korea and SK Hynix perhaps have, you know, kind of painful memories of the kind of historical cyclicality we've seen in this industry, and aren't yet prepared to kind of buy into a kind of a permanent shift in that dynamic. And so, you know, the shares trade at a single-digit price earnings ratio, reflecting an expectation that at some point the demand is going to slow down, and they're perhaps going to be left with oversupply in the market, which squeeze their pricing power. So two very contrasting views. It's going to be interesting to see how the ADRs open today, given, as you said, there's close to a 25-30% difference in the pricing of the ADR versus the underlying.
Matt, on TSMC, we'll get the full quarterly results on Thursday, but we do know several details, including that TSMC is setting aside close to $56 billion for CapEx this year. I mean, is the market still okay with these kinds of massive, gargantuan figures?
Yeah, I think obviously, you know, we had good results today, 68% year-on-year growth in revenue for June, so overall about 36% for the quarter. You know, largely where the market was expecting it to be. And interestingly, the market's looking for an acceleration in growth in the next quarter, so increasing to about 40% year-on-year. So I think it's going to be interesting to see what they say about forward growth when they come up with the numbers on Thursday. Yeah, you know, CapEx is obviously in focus. I think for now, TSMC is in an incredibly strong position, being the primary supplier to the likes of Nvidia and Apple. I think whilst there's been some softness in the consumer electronics market, I think largely the AI market, particularly through Nvidia, is supporting that. So I don't think there's so many concerns about the CapEx cycle near term for TSMC. You know, I think like a lot of these companies, though, perhaps what's on the horizon is that some companies, particularly in the US, are looking to kind of self-provide. And so that might be the disruptive layer of competition that TSMC faces. You know, we've seen them talk about expanding their US manufacturing capability. And I think they're going to need to do that to kind of keep the demand that they've had historically from US customers.
Just when we thought the AI trade had got reinvigorated last week, Matt, thank you so much. That is Matt Bloxham of Bloomberg Intelligence. Well, it's a big week for markets in general, with CPI data, the Fed Chair Kevin Warsh's congressional testimony, and of course, big bank earnings. Joining us now is Bloomberg MLive editor Morwenna Coniam. Morwenna, it's been pretty chaotic in the last couple of weeks. How will markets digest everything that needs to be digested this week?
Yeah, there is definitely a lot coming up, and there's a lot of context around that. So key economic data this week will be the US's CPI report. We also have PPI as well. Those will be the final inflation readings before the Fed's meeting at the end of this month. But of course, the data is for June. It's expected to show inflation easing slightly, but any upside surprise is going to be particularly negative, I think, given that since the month ended, we've seen a re-escalation of the situation in Iran, and the volatility and uncertainty is there. And with oil prices rising again, then we do have that inflation concern being priced back into rate hike expectations as well. So I think it's going to be very closely watched within the context that things are probably slightly worse than the data shows. And as you said, we also will hear from Kevin Warsh this week. So I think what he says will be extremely closely watched as well.
Well, would he calm the markets on inflation? He seems to be concentrating only on that for the moment.
It will probably be the focus. I think what he says about where the bank is looking at it, he's already previously sort of dialed back the forward guidance slightly, and obviously the bank did keep rates on hold. So I think any indication there about how concerned they are about inflation will certainly feed into further expectations. I think it will be very interesting to see how the market responds to what he says as well as what he says.
Morwenna, is there more of a connection between what happens in South Korea and the US now? And will that sort of decouple at some point? I mean, for the longest time, whatever happened in South Korea didn't matter that much to US trading. It always started off on a fresh footing. But recently, with these massive swings, we have seen a little bit of pass-through.
Definitely, we have started to see this recurring sort of risk-on, risk-off trade where when tech does well, it's not the same as before, where I think we did see them moving quite separately in Asia and the US. Certainly what we're seeing is that the sort of days when oil prices are driving up inflation concerns, we've got energy stocks outperforming, but we have tech lagging. And that does seem to be the trade, because it suggests that more of it might be about broader sentiment and concern about that AI trade momentum waning. Rather than the specifics of company reports. It does seem to be sort of moving more as a sort of general trend. And I think probably that is a bit concerning because it's not so much on the fundamentals anymore.
Yeah, exactly. Morwenna, thank you so much and good luck this week. That is Bloomberg M Live editor Morwenna Coniam. Now to other top stories trending on the terminal this morning. MUFG's stock market value shot up to the highest in Japan, surpassing Toyota. It's the first time a bank has reached the top position since the so-called 3 mega bank groups were established. Stellantis shipments climbed 10% in the second quarter to an estimated 1.6 million vehicles. The jump is fueled by growth in North America as the carmaker pushes on with its turnaround plan. Moscow is facing a second day of large-scale Ukrainian drone attacks. Officials are reporting hundreds of unmanned craft flying towards the Russian capital and 3 fatalities in the surrounding region. Coming up, we'll look at what Republican Senator Lindsey Graham's sudden death means for the GOP. Next, this is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg. Bringing you the latest business news wherever and whenever it happens. I'm Scarlett Fu, reporting from America's biggest military shipyard. This is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Bloomberg Brief, I'm Vonnie Quinn in New York. South Carolina Senator Lindsey Graham's sudden death over the weekend is setting up a succession drama that could upend the state's Senate race. Bloomberg's Kasia Klimaszinska joins us from Washington. Kasia, who takes over the senator's spot? Is it going to be President Trump that has the final say in that?
Hello, Vonnie. So President Trump already spoke about this tragic sudden death. He and the South Carolina Senator Lindsey Graham were very close. They talked very often. In fact, they even golfed together. And I suspect that Senator Graham was in touch. He was definitely in touch with the White House in perhaps his final hours, because he was trying to negotiate this bill that would impose additional sanctions or penalties on buyers of Russian oil. So the two were close, and so then President Trump went on TV networks yesterday to talk about the senator, and he said that he has a replacement in mind, but he didn't mention a name. And in fact, it's not up to him; it's up to the governor of the state to name a replacement. So in short term, I suspect that it will be a relatively smooth process. Republicans will pick somebody who will fill the seat. Obviously, that person can't possibly have the name and the impact that Senator Graham had. But in the longer term, over the next 4 months, it does create another headache for Republicans, even as South Carolina is a safely Republican state. Democrats have a candidate trying to get this Senate seat in November, and now this candidate has a kind of an advantage given the surprise that Republicans have to deal with.
Well, beyond giving Ukraine huge support, the senator was also key to the Save America Act. Can it survive in its current form without him? Will whoever takes his place keep his opinions?
Yes, that's a big loss here domestically for Republicans, but also internationally. As you mentioned, Senator Graham was a big supporter for Ukraine, visiting that country just before he died for 3 days. And in turn, here domestically, he was representing interests very much aligned with President Trump. It's hard to say what will be the views of the next person. It's clear that President Trump, again, he's engaged here. He has his thoughts, so he will try to get somebody in this seat who will have similar views. But again, without Senator Graham's seniority and his kind of persona, it's doubtful that this person will get as much traction as this senior senator used to have.
Well, it's funny, the senator's death seems to have prompted GOP Senator Mitch McConnell to break his weeks-long silence. So he posted on social media finally that he had suffered a fall in June and also contracted pneumonia that sent him to the hospital. What more do we know about when we might see him return?
Yes, this statement came, at the right time, or perhaps maybe even a little bit too late. Senator Mitch McConnell wasn't seen here in D.C. since mid-June, and so there was speculation about his health, his condition, whether he will be able to come back to work. So Senator McConnell issued a statement yesterday. The statement came with a photograph of him with his wife smiling, reading a newspaper, but he said himself that, yes, he suffered a fall, and then he contracted pneumonia, and even as he's out of the hospital now and just undergoing therapy, he's not able to come back here to DC just yet. So another important, crucial and strong voice on the Republican side missing for another couple of days at least.
All right, Kasia, thank you so much. Bloomberg's Kasia Klimashinska there joining us from Washington. Coming up, we're going to be taking a look at what else is making headlines in your front page news. That's next. This is Bloomberg.
Players is back. to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard,
Oh boy.
can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anim, only on Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
This is Bloomberg Brief. I'm Vonnie Quinn in New York. Time now for your front page news. First up, the Financial Times reporting Senator Elizabeth Warren has written to JP Morgan CEO Jamie Dimon requesting clarification about the bank's relationship with Jeffrey Epstein. In the letter sent last week, Warren pressed Dimon on whether he took advice from Epstein while lobbying against a UK tax on banker bonuses. Next up, the Wall Street Journal reporting real estate giant Brookfield is in exclusive talks to acquire a stake in Hudson Square Properties. The deal would value the complex at $3.5 billion and solidify the status of Manhattan's West Side as a tech and media hub. And finally, the New York Times reporting a group of states are preparing to file a lawsuit to block Paramount's $111 billion acquisition of Warner Brothers as soon as this week. The legal challenge would create a major obstacle for one of the biggest media mergers in history. Let's take a look at the macro picture as we head into your Monday session. We have futures pointed lower, but fractionally. The dollar index unchanged and the 10-year yield close to the highs of last week. Coming up, we're going to take a look at the big economic week ahead with Terry Wiseman of Macquarie. This is Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country.
We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. The U.S. and Iran trading fresh strikes. Oil higher on conflicting claims over whether the Strait of Hormuz is actually open. Two tech tales. SK Hynix posts its biggest drop on record in Seoul trading after its U.S. debut Friday. TSMC shares are higher. Sales soared on AI momentum. And a big week for markets. Kevin Warsh making his first appearance on Capitol Hill as Fed chair, plus CPI data and Wall Street earnings on deck. So let's take a look at those markets then. Futures pointed fractionally lower. Nasdaq 100 futures are off their lows. We had a massive drop once again in Korea, particularly SK Hynix and Samsung dragging down shares, down 11% and 9% apiece. At one point, in fact, SK Hynix dropped 15% for the close of the session there, even after Friday's 13% gain for its ADRs. Treasury yields back up to last week's highs. We're at 507 on the 30-year yield. And then things like the VIX are also showing just a little bit of pressure. It did have its lowest close since January on Friday, though, and volume has been very low. It's actually at the lowest all year. That could all come to an end today. A massive week. $6 trillion in market cap reporting in the United States this week. Let's get to some individual pre-market movers down, though, with Chloe Melly.
Good morning, Bonnie. Those U.S. tech stocks are seeing quite a bit of weakness this morning after this huge sell-off in the Kospi in South Korea. There seems to be growing concerns around whether or not this AI boom is becoming overstretched. And so this is resulting in a lot of volatility in that South Korean market, which is spilling over into that global AI trade, with European stocks and now also U.S. stocks are seeing some of that weakness, with SanDisk in particular down more than 6% this morning. Staying within this tech trade, but going to an individual name, we've got TSMC doing actually a little bit better than some of its peers, and that is because it reported a huge jump in sales, which seems to indicate that there is this demand that is still there, that is intact for AI compute. So there's that is a bit reassuring in terms of this AI trade. And finally, let's go over to the biotech company Q32, which is soaring this morning in pre-market trading, up almost 26% as it prepares to unveil clinical trial results for an alopecia treatment. We've got the presentation due this morning, and it seems that analysts are very optimistic ahead of those clinical trial results for that biotech company.
All right, Chloe, we'll keep an eye on those shares in particular today. Thank you, Chloe Melly there in London. It is a big week for markets, with Fed Chair Kevin Warsh appearing before Congress and new inflation data coming during his two-day testimony. Also, of course, all of the earnings that we're about to see. Joining us now is Terry Wiseman, Macquarie Global FX and Rates Strategist. Terry, how complex is this trading environment? We went from war off to war on. We've got this massive yo-yo trade in South Korea that seems to be suddenly impacting U.S. markets. What do you do?
Well, I think you have to take a close watch at the news and the headlines and try to infer from those headlines what the direction of geopolitics certainly will be in diplomacy. I think the biggest issue right now for the markets is whether or not this war will resume, because if you think about it, the most important variable for the markets right now is the price of oil. And the reason is because it's going to drive inflation over the short and medium term and potentially inflation expectations. And we are all obsessed with what the Fed does. But of course, what the Fed is going to do is going to be determined by what inflation does. So it all goes back, at least in the short and medium term, to what's going to happen to the price of oil. Unfortunately, that's not going to be driven by, unfortunately, standard analysis. You really have to watch what the diplomatic track is doing here and whether or not the U.S. and Iran could stick to an MOU that allows uninterrupted passage of traffic through the Strait.
It's so difficult to infer anything, though. So we got an Iranian response this morning, and it was that the MOU is in crisis phase, but that means the MOU is still in effect, right? That's sort of what that means?
Yes, but keep in mind, if an MOU can be broken this easily, even if we reach another MOU, I think the market will have doubt as to the durability and stability of that MOU, given that we have a precedent now for how easily ambiguous MOUs, very fluid and MOUs with a lot of latitude can effectively be. So, you know, the market is now going to discount whatever agreement comes, whether it's on paper or not, with the U.S. and Iran. So I think that's a problem. And as a result of that, you're going to see an embedded premium in the price of oil that may stick for a while.
So we do seem to be capped. We're around $78, $79 a barrel in Brent, 74, 75 in WTI. Are you anticipating that that would go higher if the current situation persists?
It's important to keep in mind that there is a structural glut of oil on the market right now, and I think you could use that as a reason for why oil prices didn't go even higher during the war. There have been workarounds. There are plenty of countries that are pumping more. We have the UAE leaving OPEC. We have the U.S. pumping maybe 1.5 to 2 million barrels a day extra. So there is a structural glut that has, part of which has come in response to the blockage. I don't think that oil prices will go up above $100 that easily per barrel. But keep in mind, we were getting very excited about the prospect that we would see declining inflation in the U.S. if the barrel stayed in the low 70s, high 60s, and at least in the short term, that doesn't look to be the case.
Right. Now, a $5 or $6 premium, is that enough to send inflation materially higher?
Not materially, no, but I think it might draw out the more cautious elements of the FOMC to say, look, let's take some precautionary steps just in case. We already have inflation in the U.S. that is high. We've had inflation on a core basis running near 3% for many years now. So even without that extra $5 or $10 per barrel in the price of oil, there are reasons, of course, to be somewhat cautious here and not assume that inflation is going to go down that easily, especially on the core side, because it's been high even before the war began.
Now, you were looking for a hike this year. Is that still the case? Might you even bring that hike closer?
Yeah, so we've been thinking about a Q4 hike, and I'm inclined to think that it's going to be October. Why October? Because we're going to have some revisions in the PCE data, the Personal Consumption Expenditure Price Index that date back a full year. They may be coming down a little bit. To the extent to which they come down may determine what the Fed wants to do. But I think Kevin Warsh has an excuse to now wait until he sees those revisions. Those revisions are not coming out until late September, so he may be able to say or nudge the committee towards thinking, let's just wait, and that would take us into October. Of course, if the price of oil goes back up because of the recurrence of these hostilities, then I think that we could move that rate hike in September. But our baseline right now is October.
Terry, you'd been looking for a weaker dollar, but what is that contingent upon?
Well, it's very contingent on what happens to the price of oil again, right? We saw during from late February and into March, into April, and into May, and even into early June, generally speaking, the dollar was strong. I'm not saying it was a straight line through those months. There was some time when the central banks in Europe, the BOE, the ECB, were sounding very hawkish, and the dollar weakened as a result. But the general tone had been towards a stronger dollar when oil prices were higher. Now, if oil prices go back up, I would expect that would recur, that we would see a strong dollar again. If oil prices come down, I think we would see a weaker dollar. At least that would be the tendency. And the reason is very straightforward. Higher oil prices actually help the U.S. economy. We are a net oil exporter. Our real incomes actually do well when oil goes up because we can sell what we export at a higher price. Countries that are oil importers see effectively an erosion, a degradation in their terms of trade. So that's one reason why the dollar can continue to do well if oil prices go higher. If they don't, I expect the dollar to weaken.
So favorite pairs at the moment, and how long do you anticipate that you can hold on to those, targets, in the sense that things seem to be changing literally every day?
Yeah, look, I mean, how to play the weak dollar that we might anticipate, I think it's usually, it should be through dollar Asia, right? I think the strongest case for where we could make for the dollar weakening is against the yuan. It's against the Japanese yen, where the pair is very overextended. Conceivably, also the euro, if the ECB continues to raise rates as well. Those are the places we would expect the dollar to weaken if it does.
Is risk so much higher now, though? Because if anything goes wrong with those trades, if the Bank of Japan doesn't hike, or if it does an emergency, 50 basis point hike, or if something goes wrong with Korea, for example, you're cooked, right?
Yes, but I would say any trader who makes the wrong call is cooked. I would not single myself out in that regard. But we're in the business of making money, and you have to have an opinion. And you have to sell that opinion effectively if you're going to get attention and people to follow you.
But is it riskier than, I don't want to say normal times, because no time is ever normal, but...
Look, in terms of the day-to-day volatility of the markets, and I'm singling out the foreign exchange markets here, things have actually been relatively calm. If you look at implied volatilities, they're actually low. I would say that the market is underestimating how much volatility conceivably can be out there, not overestimating it. Does that make my job harder? Yes, conceivably, because at some point we can see an explosion of volatility on this news. And of course, if you're trading the wrong way, you would get hurt. But let's not submit right now that the market expects volatility. The market actually doesn't expect volatility.
Okay, all right. Well, we should listen to the market and sleep soundly at night. Terry, thank you so much for joining us this morning. That's Terry Wiseman of Macquarie. Now, to other top stories trending on the terminal this morning. Andy Burnham, the UK's presumptive next Prime Minister, is considering unveiling a bolstered budget later this year. The Financial Times reporting that Treasury officials are exploring the idea of merging the annual budget and the spending review. Burnham is on course to take over from Keir Starmer on July 20th. A bipartisan group of lawmakers have signed a letter saying a California business tax credit cap aimed at saving $4 billion threatens to drive away film and television production. They warn that efforts to woo production to California will be significantly kneecapped, and that's a quote, without a quick fix to the budget. The U.S. is advising its citizens to avoid all travel to the Democratic Republic of the Congo because of Ebola. The warning comes after a second American aid worker was infected while responding to the country's escalating outbreak. Coming up, Iran says the MOU is in crisis after the U.S. and Iran exchange fresh strikes. More next. This is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Anything we do in Africa is going to be more risky than the U.S. I think the approach we want to take is, how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation was a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
This is Bloomberg Brief. I'm Vonnie Quinn in New York. The US and Iran trading fresh strikes overnight. Both sides are claiming control over an open Strait of Hormuz. Iran says the MOU is in crisis phase, though. Bloomberg's Kasia Klimashinska joins us from Washington. So, fresh word from Iran just in the last hour, Kasia, that the MOU is in crisis phase and that no ship should cross through the strait on the US so-called routes. What happens next? How does the US respond to this?
Vonnie, that's a very good question. We haven't heard from President Trump yet this morning. He will have at least one event open to the press later today, so I'm sure he will address the situation. But what we know is that yesterday, around 5 p.m. In the afternoon here in Washington, D.C., the U.S. Central Command resumed attacks on Iran, targeting their capabilities around the Strait of Hormuz. What the U.S. wants to do is to diminish Iran's ability to hurt any vessels that try to cross. But this is the key area for disagreement. Bad news for the markets. We saw oil going up. Now it's off the session highs, but it's still up compared to where it closed, for example, on Friday. And that's because the Strait of Hormuz is the area of main disagreement. Iran says that no ships should cross, and in fact, it tried to attack some of the vessels over the past week, whereas the U.S. says that this key waterway is open and that the U.S. is prepared to help ensure the freedom of transit. The U.S. wants to see oil flowing from the region, and so do its allies in the region as well.
I suppose the one silver lining is that if somebody says something is in crisis phase, it means it does still exist, right? So at least Iran is acknowledging there is still a memorandum of understanding. Domestically, South Carolina GOP Senator Lindsey Graham passing away Saturday after a brief and sudden illness right after the NATO summit and, of course, his trip to Ukraine. It does set up a succession race in South Carolina. Who will most likely toe the Graham line most?
Very surprising development over the weekend. Very big loss here domestically for Republicans. Senator Graham was a big ally of President Trump. He was, for example, a big supporter of war against Iran, and he also tried to help Ukraine. As you mentioned, he went to Ukraine. He spent his last 3 days pretty much in Ukraine, meeting with President Volodymyr Zelensky and touring a drone plant over there. He also was in constant talks, not only with other Republicans here on the Hill, but also with his Democratic counterparts and with the White House. So basically on Friday, he issued a statement urging Congress to pass a bill that would increase penalties on buyers of Russian oil. It's unclear. We don't know yet who will replace Senator Graham. President Trump said that he has somebody in mind. It's the governor of the state, so governor of South Carolina, that will get to pick somebody. But obviously this person will not have the personality and the skill that Senator Graham had, again, being able to talk to both sides of the aisle, and he was very persistent on the issues that he cared about.
All right, and we just saw some names crossing our screen there of potential candidates. Kasia, thank you so much. Bloomberg's Kasia Klimashinska there from Washington. Oil higher after the U.S. completed another wave of strikes against Iran. The two sides are disputing whether the Strait of Hormuz is open. Joining us now is Bloomberg's Anthony De Paula in Dubai. So we got the Iranian response just a little while ago, Anthony. How do you read it? A couple of messages about the MOU being in crisis phase and also a warning for ships not to cross even what the U.S. considers U.S. routes.
Hi, Vonnie. Yeah, as you said, there are those conflicting points of view on whether the Strait of Hormuz is open or not. And really, this is kind of a continuation of what we were seeing last week, with a lot of caution from shippers, traders, potential crude buyers about going into the Persian Gulf. So what really needs to happen is vessels that are empty and outside Hormuz need to pass through Hormuz, get into the Gulf, pick up oil, and be able to bring it back out. But because of that heightened risk, we are seeing a huge reluctance by ship owners to take their vessels into the Gulf under fear of getting attacked or even potentially being stuck in the Gulf once they do load if they can't come back out again. So these are real risks, and that's adding cost to the voyages if they do go through, and it's adding cost into the oil market because that oil is not getting out and getting into the market. We're around about $80 now. So of course, well off the highs that we had seen during the earlier parts of the crisis, but we are back up again where we were before when that MOU was signed, and up again before where we were prior to the war. So we'll really need to see whether these vessels continue to sneak out, going dark, turning off their satellite signals, and getting out to get some of that oil to the market. We've seen some of the national oil companies here, ADNOC in particular, the Kuwaitis as well, really being aggressive about using their own vessels or vessels that they've leased to get their oil out in the market. So we'll need to see that keep going. Yes. Of course, those are voyages that we can't see because the satellites are off, and what we can see going through is really nothing. Satellite signals turned off, not much traffic going through the Gulf, going through Hormuz. So that's the situation that we're seeing right now, Vonnie.
Yep, dark crossings. Anthony, there had been a lot of talk about a glut because a lot of things had gone into effect in order to make sure that countries had oil, right, including China dipping demand and the US producing more and so on. How long could we run through that glut for before we would see oil prices really climb again?
Yeah, I mean, well, things are moving so quickly here. I mean, you saw how quickly we went from higher prices back down to where we were before the war. And as soon as that happened, that talk of that glut returned. So that was a glut that we'd been talking about appearing in the market this year, really weighing down prices. Of course, the war reversed that mentality. But as soon as that oil that was stored up on tankers was able to get out of the Gulf and get to markets, we saw talk of that glut return. We saw the prices go down. But we are potentially going to keep some of that risk premium on prices. We are going to have to see how long it takes for demand to come back. You mentioned China there. I mean, cutting 5 million barrels a day of exports, which is what the Chinese did, is a major move that took a long way to balance the markets. At some point, they're going to have to bring that back because they will need more fuels, and we are still seeing fuels expensive. So those are all factors that we're watching here, Vonnie.
Yep, very closely. Anthony, thank you so much. That's Anthony De Paula in Dubai. Nasdaq futures down today on further volatility in tech stocks. SK Hynix shares plunged the most on record in Seoul. Its newly listed ADRs lower in the pre-market. Meantime, though, TSMC shares soaring after it posted strong quarterly sales, signaling AI spending momentum. Matt Boxham of Bloomberg Intelligence joins us now. With today's drop, Matt, SK Hynix shares are down 35% from their peak, even though we know there's clear US demand. ADRs were up 13% on Friday. Why the repricing here?
Yeah, I think we've got this kind of big profit-taking unwind in Korea right now. It's obviously been going on for a week or more, and I think, to some degree, perhaps got a little bit of a life of its own and some technical stuff going on there. And it does create this kind of big arbitrage between the ADRs listed last week and the underlying. I think something like a 25 to 30% premium that the ADRs are trading on. So it's going to be interesting to see what happens when that opens. I think obviously that there's two quite different fundamental views at play here. I think the US investor base perhaps more open to the idea that the chip market can break this kind of cyclical boom and bust cycle that we've had many times in the past couple of decades, and that we have seen a permanent structural shift in the way that market works because of the huge amount of demand mainly from the hyperscalers for AI chips, which also need a lot of high bandwidth memory. On the flip side, I think there's still a lot of people that have painful memories of those previous boom and bust cycles and are reluctant to kind of really buy into that until they see more evidence that really this AI cycle has got a lot more legs to it. And I think for that, you need to see sustained enterprise demand and probably another big leg up in enterprise AI demand as the return on investment becomes clearer.
Okay, Matt, we have to leave it there, but I do want to point out that TSMC sales were up 68% in June, and that means 36% for the quarter in total. Matt Bloxham of Bloomberg Intelligence, thank you. Coming up, Wall Street earnings this week. Also, the Fed chair on Capitol Hill will get you set up for your trading week. This is Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up to them in the news whenever and wherever it happens. I'm Chevrian in Seoul, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead this week, and there is a lot. We'll kick it off with big bank earnings on deck. We get 5 of them on Tuesday. JP Morgan, Citi, Wells Fargo, Goldman Sachs, and Bank of America. Morgan Stanley wraps up Wall Street results on Wednesday. We get inflation reads CPI Tuesday and PPI on Wednesday. And then Fed Chair Kevin Warsh gives his first semi-annual testimony before Congress, Tuesday before the House and before the Senate Banking Committee on Wednesday. Here's your macro picture going into your Monday session. A similar story. We have oil higher off the back of tit-for-tat strikes and Iran responses. NASDAQ 100 futures lower and the 2-year yield at last week's highs.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need,
There's going to be now tons of tariff headlines until midterm elections.
hear it first on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
We're still in a really strong earnings environment for U.S. stocks.
Tech is going to remain well supported. Really, it's about rebalancing.
The churn is not necessarily detrimental.
Investors are being cautious ahead of the earnings season.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Monday, equity markets sliding. The United States and Iran trading strikes, pushing crude higher as a record drop for SK Hynix is sparking a rout across tech stocks. Investors are facing down a week absolutely packed full with event risk. Bank earnings, CPI, Chair Walsh, just around the corner.
And this morning, really, the event risk is the heightened tension in the region, in the Gulf. What's going on between Tehran and Washington? Continuous strikes over the weekend, tit for tat. They're targeting each other, military installations back and forth. And then you have the Strait of Hormuz, and they don't agree on whether or not it is open or not. Iran's foreign ministry this morning came out with a statement saying the U.S. has, quote, undoubtedly entered a crisis phase, basically saying the MOU is not useful anymore. And right now what you have is some ships getting through. We saw that over the weekend, but in secret, their transponders off. Today, it looked like the Strait of Hormuz pretty much grounding to a halt.
So here's the move in crude this morning. Bring it up, Brent and WTI. Got a move of about 2 to 3% here. Brent at 77, WTI at 73. Let's take WTI. WTI this morning is $5 above the post-war low. It's $35 below the post-war high. So this is a market that's still discounted a lot of tension in this region. I'd go one step further. There are some guests over the last week that are suggesting this is just the new normal, a messy negotiation punctuated by strikes every other week, and we carry on without a destination in mind.
This is what I hear from a lot of people. We need to get used to this stalemate when potentially there's going to be calm waters for a few weeks and then the strikes start again because talks break down, or you see the IRGC going after the vessels in that U.S. path that hugs the Omani coast. When you have a moment like that, you would arguably think that if prices get higher, that could push the president to maybe want to go back to the negotiating table and have these kind of talks when it comes to nuclear.
And the back and forth continues. I've got no idea if that's the right way of looking at this, but that's the way a lot of people are looking at this. Let's pull up the bond market. 2s, 10s, 30s. Yields higher across the curve just a little bit by a basis point, the very long end of the curve this morning. 30s up by 1 or 2 basis points to 5.07%. This Fed is dealing with some really, really fine margins. And a move in crude can push this story one way or the other. Chair wars just around the corner. The final CPI print before the Fed's next meeting just around the corner. Setting the stage for a real debate. Is this meeting live or not?
And how much is that CPI print going to push him in the direction of how he communicates what the Fed should be doing, even though he refuses to offer forward guidance, in front of congressmen and women and then senators for the first time ever, having this testimony as the Federal Reserve Chair after we get that CPI data? This is going to be an incredibly interesting hearing. And a lot of people say he's just going to say what we have already heard, but he's going to be pushed by these elected officials to give potentially a little bit more guidance than he's been offering us journalists.
Chair Walsh testimony coming up tomorrow in front of the House, the day after in front of the Senate, a few weeks away, the Fed's next meeting. Coming up this hour, we'll catch up with Jeff Yu of BNY as tech names lead equities lower. Clayton Siegel of CSIS as the US and Iran clash over Hormuz, and Sarah Kunst of Clio Capital, with a volatile semis trade keeping investors very much on edge. We begin this hour with stocks lower and oil higher. Jeff Yu of BNY writing the following: disinflation hopes are still carrying sentiment. Growth, earnings and policy risks are harder to ignore. Jeff joins us now for more. Jeff, welcome, buddy. Let's frame the next 24 hours together and you tell me your priority. We've got earnings, we've got CPI, we've got Chair Kevin Walsh, we've got developments in South Korea and issues through the Strait of Hormuz. What's your focus this morning?
Well, so all of the above and how that impacts Fed expectations, how that impacts policy expectations, full stop. Everything will be fine as long as there's no major shift higher in inflation and inflation expectations. For now, that remains our base case. And to be frank, don't think anything changes that. We need healthy disinflation at this point. But I agree with what you were saying earlier. What's going on in the Strait right now, it's a new equilibrium. We have to get used to it, not just in the short term, but over the long term.
Well, Jeff, let's turn to 8:30 Eastern time tomorrow morning. CPI drops. If we get an inline CPI, do you think that closes the door to a July rate hike?
I would say the door wasn't really open, maybe ajar in the first place, but clearly yes. And to be frank, I don't think any central bank right now, given the state of demand globally, should be thinking about rate hikes unless there's a serious change in the inflation outlook right now, be it the Strait or otherwise. The US, the Fed is a bit different, where there's more of a demand impulse in the US and you're driven by the capex for the hyperscalers and the like, driven by the AI view that you don't see in Europe. But right now, to be frank, I really don't see a case for hikes anywhere.
Well, you see it in the market, the front end of the curve. Just the market starting to speak to that story, Jeff. The 2-year trading this morning around 421.64. So where are we? Something like 50 basis points above where the policy rate is at the Federal Reserve. Jeff, how do you see that spread closing?
So the spread will close with the CPI print and with Fed Chair Walsh's upcoming guidance. And I think he will need to raise a very high bar for rate hikes. So it may not be the entire view on the FOMC right now, and there's still questions over how much he will be actively disclosed. But the bottom line is, again, given the state of demand, and we keep on drawing comparisons with 2022, this is very different compared to where we are in 2022. So the bar is far higher, and I think he and his peers around the world, especially Madame Lagarde, I might add, need to make that clear. If that is set, then I think all of the hikes that were priced in around February and March and onwards, that should really come down.
Jeff, if you take this view that he's going to potentially be a little bit different than some of the other members and some of his colleagues on the Fed, who else are you looking at in terms of speaking this week? So you have a ton of Fed speak, including Waller and Cook and Jefferson.
So, yeah, that's a really good question. All of them, will have their own views on this. But I think there are two things that matter. A, do the individual views of the central bankers matter, and two, how do we find a consensus? There's an article today noting just the Bank of England, which is in a good place, and you've got diverging views across the board in the UK, and that's starting to cause communications issues and market guidance. But at the same time, the Bank of England, taking a lead from what Fed Chair Bernanke advised, is looking at scenarios. So the Fed perhaps should be looking at scenarios. Maybe that's what the task force will try to elaborate upon as well. So which FOMC member will adapt to which scenario? Where do we set the bar? Let's not look at individual names, but where the data conforms to the scenarios, then we go from there.
Well, traders are almost fully pricing in a hike in September. Do you think they're just getting used to this new normal, what's going on in the Strait of Hormuz?
So I think two aspects there. I think less about the new normal and the Strait of Hormuz. If I had to decompose and just ballpark numbers out the air, probably 20% at most from the Strait of Hormuz and the remaining 80% from the CapEx trade in the US, from the AI trade, because that's still what, again, is separating the US from the rest of the world. There is genuine growth. But why I mention that 80% number, if 80% of US growth is being generated from the AI view and the relevant investments, then that's what the pricing is. But then we get into an equity story. So if inflation comes off, but because demand is coming off from the AI side, but without anything on the consumer side, the household side to compensate, then I think that's where we get a few more wobbles. But let's cross that bridge when we get there.
Jeff, there is an inevitable home bias to this conversation sitting here in New York, focused on US events, CPI tomorrow morning, Chair Walsh as well. For the global fixed income market, which market is in the driving seat right now? Is it Washington or the latest in Tokyo, Japan?
So we're trying to get a straight answer out of Tokyo, I guess. And I think what happens in Tokyo will matter for the US Treasury market as well, given not just the Japanese holdings, but also broader North Asia holdings. But let's make it clear, what GPIF does, what any one fund in Japan or elsewhere in Asia does is not enough. You need a comprehensive change in behavior. Total Japanese assets are 10 times the level of GPIF. If we get a 10 percentage point or more move in asset allocation there, then that we can start to discuss whether it's a game changer or not, especially if those in Korea, Taiwan and China follow onwards as well. For now, we're just talking about one fund, but I think that discussion is a healthy one. That's what's needed to change behavior to get dollar down against the rest of Asia, because that's desperately needed right now.
Jeff, that discussion is live, so let's have it now. What do you think would change behavior? Regulation or price? And is price right now sufficient to get that money to come home?
Right. It's price. And let me tell you my favorite headline this morning. Tokyo Disneyland is raising prices. Right. Those are the things that people on the ground will feel, and they'll ask, why are they raising prices? Is it because the yen is too weak, or is it other aspects, labour market too tight, a combination? But when you start to feel it in inflation that people look at every day, maybe Tokyo Disney Sea prices will go up as well. That one's even more popular. Then I think there will be pressure on the government to act. We need to get inflation over and beyond a certain level that's tolerable. And then you realise if the weak yen is a part of that story, then behaviour will start to change on part of government and associated entities.
Jeff, is the income and yield level available in Japan right now enough, sufficient to offset some of those concerns?
So, right now, probably not. I think international investors are looking at 3-4%. But again, let's go back to real yields, right? So if inflation hovers around 2% or so, and then longer dated bonds, go 3, 4, 5, those kind of levels, you get real yields at a comfortable 2%. Then I think more money stays at home. Then you get international funds going in as well. But as always, given Japan's debt stock, can the government's debt to GDP ratio and funding, financing live with 2% real yields? That's a different situation. But there are trade-offs. And I think right now, the trade-off with dollar yen is becoming a bit too hard to ignore.
That's a very different question, Jeff. Thank you, sir. Jeff Yu there of BNY. It's a difficult question for the Japanese authorities. Dollar yen around 162 this morning. Can't get away from the 160s, even with the threat of intervention on both the regulatory side and the policy side. Let's turn to equity futures this morning. Equity futures sliding by about 0.25% on the S&P 500. Turbulence in South Korea. We'll spend some time on that. That ripples through global markets. The Nasdaq underperforming so far this morning. Let's get you an update on news worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Good morning, John. The US and Iran exchanging fresh strikes over the weekend and issuing conflicting reports on the status of the Strait of Hormuz. Tehran saying the strait is closed, the US saying it's open to all vessels and the military is prepared to ensure freedom of navigation. Shares of SK Hynix tumbling by a record 15% in Seoul. The sell-off sent the Kospi down 9%. SK Hynix's newly listed American depository receipts may be under pressure today after surging 13% in their debut Friday. South Carolina Senator Lindsey Graham died unexpectedly over the weekend at age 71. His death sets up a succession drama in the state less than 4 months before midterm elections. The governor can name a replacement for the remainder of Graham's term, but state election law then calls for a special primary election. And that is your Bloomberg Brief. John.
Vonnie, thank you. Thank you very much. What a life that man had. Just reading about in the last 24 hours or so. Lost his parents young, both of them, some 15 months apart. Became the legal guardian of his sister. Went on to have a military career, then went on to be the senator in South Carolina. Just an absolutely phenomenal life that man led.
He's dedicated almost his entire life to public service. Air Force, then congressman, then, of course, a senator. senior voice on foreign policy, which is why there has been a ton of talk about who replaces him and also what kind of void this is going to leave in terms of this was an individual that sometimes was able to speak for the entire Senate to the President of the United States.
We'll spend some time on that dimension in the next 15 minutes or so. Up next on the programme, fighting for Hormuz.
Those boats are coming out of the Hormuz Strait.
We're doing very well with respect to the Hormuz Strait. Those ships are flowing out of the Hormuz Strait like nobody's ever seen before, actually. The strait is open.
That conversation up next with Clayton Siegel of CSIS, live from New York City this morning. Good morning. We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Two days of gains on the S&P, 2 weeks of gains dominated by a bounce back in tech. This morning, a bit of a reversal, a bit of a slide. So we're down 0.25% on the S&P, down 1 full percentage point on the Nasdaq. Some real weakness in South Korea on SK Hynix specifically. On the Russell this morning, some relative outperformance in a down market. We're down by 0.1%. Into the bond market, what are 24 rounds we've got coming up for you? Chair wash, CPI, bank earnings and more. Yields this morning just a bit higher, up a single basis point on 10s, 457. On 30s, just north of 5% at 5.07%. And setting the tone for the market action, in some places at least, is this move in crude. The bleed higher continues. WTI and Brent up by close to 3% this morning. WTI right there at 73.50 so far today.
Based off the rhetoric you're hearing from both Washington and Tehran, if you are an individual that's in charge of a vessel and you're sailing through the Strait of Hormuz, you don't know what to do. Do you actually go through or not? Tehran's saying it's open, you have to use their strait, but you won't get the protection of the United States. If you go through the United States way, then potentially you have a target on your back from the IRGC. All of this is happening as you make that decision when you have strikes continuing from both sides, the U.S. going after their military installations and vice versa.
It's one of our top stories. Under surveillance this morning, fighting for Hormuz.
The strait is open. Those boats are coming out of the Hormuz Strait. We're doing very well with respect to the Hormuz Strait. We have an oil gusher. The strait is totally open. Those ships are flowing out of the Hormuz Strait like nobody's ever seen before, actually.
So here's the latest this morning. Crude pushing higher as the US and Iran remain at odds over the status of the Strait of Hormuz. The two exchanging fresh strikes overnight following a weekend of fighting. With the latest, Bloomberg's Tyler Kendall has more. Hey, Tyler.
Hey, John, good morning. Well, this standoff over the strait only appears to be deepening as the U.S. military confirms it conducted at least 3 waves of strikes over the weekend designed to degrade Iran's ability to attack commercial shippers. The thing is, the threat is still very much there as Iran chose to retaliate by targeting U.S. allies in the region. And we heard from the IRGC declaring that the strait would remain closed until further notice unless ships get the approval from the Iranian military to cross. Now, CENTCOM is disputing that notion, says the U.S. is working to ensure freedom of navigation, though the satellite imagery is showing us that observable transits have all but ground to a halt, though data analyzed by Bloomberg News shows that so-called dark crossings, when ships transit through with their transponders off, have now exceeded observable transits for the last 3 days in a row. Now, this wave of escalation started in part because Iran has been dismayed by the fact that ships have been using that corridor that hugs the coast of Oman instead of getting closer to the coast of Iran. But, John, we should point out over the weekend, we saw that Iran's foreign minister was in Oman for meetings about the Strait of Hormuz, but there was no sign of U.S. Counterparts taking part in those discussions.
Tyler, as you've seen repeatedly so far this year, Capitol Hill has pushed back against action in Iran. We've just lost a key voice, a key interventionist voice in an increasingly isolationist Republican Party, Senator Lindsey Graham. How will that change the relationship potentially between this White House and that Congress?
It has the potential to really change the relationship, John. I mean, Washington has been absolutely stunned by the passing of Lindsey Graham, who also worked to build those bipartisan ties over his 30 years in Congress, as well as be that close ally of President Trump. But as you're outlining, Lindsey Graham was considered to be a foreign policy hawk in the Senate, perhaps the staunchest supporter of President Trump's policies when it comes to Iran, as well as the staunchest supporter of Ukraine in the Senate. And that's another angle that we should definitely be watching here, considering Graham had just come back from his 10th visit to the country over the weekend. And he had just announced with a group of bipartisan senators that they had gotten White House approval to move forward with this critical sanctions package against Russia. So a lot of different dynamics to watch here, John. Also important to note, he was the chair of the Senate Budget Committee, which has been absolutely instrumental in getting through some of President Trump's top priorities, like the One Big Beautiful Bill, and now the potential that we could see a third reconciliation package is going to hang in the balance.
Tyler Kendall with the latest. Tyler, thank you. Appreciate it. More from Tyler in the next hour. Clayton Siegel of CSIS with this to say this morning. As fighting steps up and Gulf export flows recede, the MOU trade is poised to fizzle. Washington will stay worried about higher fuel prices and may consider market interventions. Clayton joins us now for more. Clayton, let's just get to how we define this current phase. We've had some people come on the program and call it the new normal. What would you call it?
Hey, good morning, John. I do think that that's the case. I think that we are basically in the third phase of the Battle of the Strait of Hormuz. That first phase, of course, being the open warfare between the two sides that we saw in March. And then we had a second phase between the April 8th ceasefire and then the imposition of the U.S. blockade all the way until the MOU was adopted in early June. And we've started to see a resumption of those flows from the Strait of Hormuz and the Mideast Gulf. But as Anne-Marie noted in the last segment, it's really rolled over. It's really tailed off in the last few days. The market thought that this thing was over, but the signals that we're seeing in the Gulf, on the ground, in the field are it's not over. Oil assets, particularly ships, are coming under fire. But at the same time, the Iranians are probably keeping some of their powder dry. They're certainly not attacking oil installations, export terminals, refineries, et cetera, like they were during the hot war in March. But again, to Anne-Marie's point before, if you're a ship operator, you have to wonder what's the best thing for safety. Is it taking the new and improved route through the southern side of the Gulf, through Omani waters that's been endorsed by the United States, by the International Maritime Organization, or is it complying with Iran and its new Persian Gulf Strait Authority to use only the northern route through Iranian waters? And it's not only about safety, it's also about the business implications for that oil trade. Because after all, if you take the northern route, you might be safer from Iranian attack. But if you run afoul of United States sanctions, what can you do with the oil anyway?
Clayton, when it comes to Washington's response, how long can they withstand this current phase before the president decides he wants to escalate or de-escalate?
Hey, Anne-Marie, well, I think that apparently in Washington they've already decided to escalate, and we saw much more widespread attacks against Iranian military targets over the weekend, and I think we can expect more of the same. I think crude prices are probably going to follow that headline risk a bit higher. But remember that a lot of the paper traders thought that it was much to do about nothing, that flows would eventually resume from the Gulf. Those guys look like the smart money at this point, but you can stay too long at the dance. And it's not clear that in this third phase, the United States and the Trump administration will be able to keep those flows at the levels that we saw during the past 4 weeks or so. And as we mentioned, we've already seen a pretty substantial rollover of the ones that are using their AIS beacons and the ones that are so-called going dark. And so both of those numbers are rolling over, and it makes us think that ship operators are going to pull back. So we have this battle of the narratives where I think the Trump administration will continue trying to assuage the concerns of ship operators and their owners, their other stakeholders, that the Strait is safe for use. We see these comments from CENTCOM, from the United States military, almost on a daily basis. But they have to worry about safety, and I wonder what the administration will be thinking of next if we see a resumption in fuel price escalation.
Well, Clayton, you say keep one eye on Russia, and this morning we heard from the Iranians that Sergei Lavrov will be visiting Tehran. Is there going to be more coordination between Tehran and Moscow?
Well, I think it's too early to say. I think that Russia has a lot of risk here when it comes to oil supply policy. They're going to see more competition from the Mideast Gulf if the Strait remains generally open. And it's going to be even more than before once we get to a steady state because, of course, the United Arab Emirates has left OPEC and OPEC supply coordination. So it seems like there'll be more competition there. And at the same time, the Russians have a newfound need to export even more volumes of crude oil than before because of these devastating attacks by Ukraine on Russia's refineries that have taken fully offline 6 or maybe 7 refineries at this point at peak gasoline demand season over there, just like we have it here during the summer. So there could be more gasoline tension there and also more crude supply flowing from the Mideast Gulf and Russia that has to be coordinated.
Clayton, you've alluded to this a few times now. The prospect of market intervention. We've seen the intervention throughout the summer so far. We have really eaten into inventories worldwide. What options are elsewhere on the table, Clayton, if things start to go the wrong way again?
I still think that it's too early to completely take off the table the risk, and I'm talking about the risk primarily for United States producers and sellers of controls over oil and refined product exports. You would think that with gasoline prices coming down substantially during the month of June, and I think that we'll see that reflected in CPI tomorrow, that maybe the pressure is off there. But we still have a few months to go before that critical midterm election where we really do have the balance of power kind of hanging on the results here in Washington. And so I think that the administration and other folks in Washington are going to keep a close eye on retail fuel prices, not only gasoline, but also diesel. And they could consider even ill-advised policy options like controlling or even banning exports if those prices resume their escalation.
Hey, Clayton, it's good to see you. Thank you, sir. Clayton Siegel of CSIS. We're both smiling because that policy proposal just won't die, will it? It just won't go away.
No, this is a case of good politics, potentially ahead of the midterm election, but bad policy because we operate in a global market. But I agree with Clayton, which is why I continuously ask the administration and sources, and everyone says, no, stop asking, it's not happening. But what happens when prices potentially go higher?
Crude this morning, up 3%, 78 on Brent, WTI at 73. Up next, we'll catch up with Sarah Kunst of Clio Capital with the volatile chip trade back under pressure.
Hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Bramo is on tour this morning. We'll catch up with Lisa at 8:45 Eastern Time, a few hours away, as she catches up with Ed Bastian, the Delta Airlines CEO, as they confront and navigate record quarterly fuel costs in a previous quarter. And they navigated pretty well because demand in this economy is so good.
Well, that's what's going on right now when it looks at airlines. You think that how much can you throw at the airline industry? A lot. And still robust demand when it comes to the summer. Everyone is out there vacationing, going on holiday, business travel. Take your pick.
Bramo doing lots of business travel.
Lots of Rio.
Not jealous at all.
Atlanta.
Many
I had my fair
trips.
share. I went to Turkey, so.
You're helping Delta too. 8:45 Eastern Time for that conversation later on this morning. If you're just joining us, welcome to the programme. Good morning to you all. Getting your week started with equity futures just on the back foot. We're down by 1/3% on the S&P, on the Nasdaq down by 1 percentage point this morning. Some relative outperformance on small caps. We're down by 1/10%. Underperformance through last week. Back-to-back weekly losses on the Russell for the first time since March. Big cap tech making a comeback in the last week. This morning, a bit weaker. We turn to the bond market, 2s, 10s and 30s. Yields up at the long end of the curve by a basis point or two. Up a single basis point on 10s to 457. 2s up a basis point as well. Let's call this 422. Trading comfortably above the policy rate of the Federal Reserve. A market that on the margin is pricing in the risk of rate hikes from this Fed. Setting the tone for that, at least for the conversation this week, CPI tomorrow morning and testimony from Fed Chair Kevin Warsh. Heading into CPI, crude bouncing, WTI and Brent. Crude this morning just short of 80, up by more than 3%.
So tomorrow at 8:30, everyone was thinking it's going to be a really good CPI print in the sense that potentially some of the inflationary impacts from oil will start to ease. But now you have a spike once again. We just heard from a guest who said the MOU trade is basically fizzling. We're in this moment where the president is really struggling to communicate what's happening. He says the ceasefire's off, but refuses to say we're back to full-fledged war, even though if you look at what everyone's doing, it's a lot of strikes that are happening. And then Kevin Warsh, for the first time as Fed chair, is going to have to speak to the Finance Committee after the CPI print. That's going to be a challenging one because with journalists, he can maybe say, I'm not offering forward guidance. I'm not sure that's going to work with congressmen and women.
It's difficult to strip the energy story out of the broader debate around inflation when inflation has been above target for 5 years of this Federal Reserve. And anxiety on the committee is already quite high. Get a bounce back in crude, it could tilt one member here, one member there to start thinking about rate hikes sometime sooner. That July meeting, only a few weeks away. As we count you down to the cash open, a few hours away, let's get you some morning movers, some single names. Yahira has more. Hey, Yahira.
Hi, John. We are seeing SK Hynix's ADRs falling at 8.7% in the pre-market, giving back some of the gains from its stellar debut on Friday. And this weakness comes after overnight in South Korea. Its shares suffered their worst drop on record as investors took profits following the U.S. listing on Friday and reacted to a report from a South Korean brokerage that suggested its quarterly earnings may miss expectations. But there is a broader risk-off mood in the market, and that is weighing on the biggest winners, the memory, the chip makers, with Micron, SanDisk, and NVIDIA all falling in the pre-market, and that overshadowing what would normally be viewed as bullish news for the sector. TSMC just gave us a preliminary look at its earnings, which come out on Thursday. Sales were very strong, reinforcing this idea that AI demand remains strong, but investors looking past that this morning. And that broader risk-off mood is also spilling over into the airlines, where higher crude prices are raising fresh concerns about fuel costs. As you said, Delta just told us on Friday that it recorded its biggest quarterly fuel bill in its history. So that just is adding to concerns of whether that could just be the beginning for these names. The next up to report is United on Wednesday. Those shares falling 1.6%. John.
Yahara, thank you. Thanks for the update. More from Yahara in the next hour. On our radar this morning, one of our top stories, the US launching fresh strikes on Iran, targeting air defenses and missile sites. Tehran responding with strikes on sites in several neighboring countries and reportedly intercepting at least 2 vessels through the Strait of Hormuz. Elsewhere, the Republican Senator Lindsey Graham has died at the age of 71. Graham representing South Carolina in the Senate for more than 2 decades. State officials expect to move quickly to appoint a replacement to serve out the rest of his term. And finally, a blockbuster week ahead. 5 of the nation's biggest banks reporting earnings before the opening bell tomorrow morning. CPI due out later in the morning at 8:30 Eastern Time. Then, later that morning, we'll hear from Fed Chair Kevin Warsh. Testimony before lawmakers on Capitol Hill. You'll hear from him again on Wednesday, I believe, and we get PPI as well.
Yes, so you get CPI, you hear from him. You get PPI, you hear from him. Basically, his reaction in real time, his first Humphrey Hawkins testimony as Fed chair. And it also comes at a time that not only is he going to be able to digest all this data, but it's not just him. Before the blackout period at the end of the week, we're going to get a ton of Fed speak. So what is he saying when it comes to the testimony versus what's the rest of the committee saying, especially Governor Waller, based off what he had to say last week? A year ago, he said I was advocating for rate cuts because the labor market was not looking good. He's feeling a little bit different now. Does it mean that potentially we're moving towards a committee that thinks those insurance cuts you took last year, maybe they need to come out?
I'm pleased you brought up Governor Waller because he speaks later on today at 12:30 Eastern Time. Is that a man who thinks this meeting is live or not? That's what it comes down to for me, at least. Got a broader debate about the backdrop, got thresholds. You want to understand how they react to the incoming data. No doubt the governor's going to spend time on that. But the headline people are looking for is whether that meeting is live or not in a few weeks' time. Are there individuals actively going into that meeting looking to push for higher interest rates?
And potentially won't know until we see the CPI data and the PPI data. Potentially that, for some individuals, is going to push whether or not this meeting is live. Are we actually going to see some of the heat get taken off of that data or not? What's interesting is we hear from Waller before the data, and we hear for, of course, the Fed chair after we get both CPI and PPI.
Governor Waller today, 12:30 Eastern Time, speaking at the New York Association of Business Economics. Looking forward to hearing from the governor. A key speech to start the week. Turning to tech, the volatile chip trade under pressure. SK Hynix plunging by the most on record, sparking a sell-off in Korea and US equity futures. Sarah Kunst of Clio Capital writing, tech isn't a monolith, and that's even more true in semi and AI exposed names. This week, we'll see if they move in a block or on their own merits. Sarah joins us now for more. Sarah, this morning at least, moving on a block and really setting the tone is South Korea once again. Sarah, how key is that trade in South Korea across just 2 names for the global tech trade?
It does seem like it's the story right now. And the ironic thing here is that sell-off you're seeing, particularly in SK Hynix today in Korea, you pull back and you look at the 1-year chart and they're up something like plus 500%, right? So wanting to lock in a little bit of those gains as all of that exposure that had been maybe from the US, through indexes, through some of those more synthetic trades, or just from people sitting in the US who found a way to buy in Korea, now they can buy in the US. And we know that those valuations tend to be higher, so they're likely going to do that. So I don't see this sell-off as a huge problem. Now I just need the entire rest of the market to agree with me.
We'll see if that changes as we get closer to the opening bell, Sarah. We can reflect on Friday as well. Fantastic demand for a record issue by a foreign company, equity issue here in the United States. Sarah, what was your reaction to the amount of people that just welcomed that supply with open eyes, open arms?
I wasn't surprised. I wasn't surprised. I think that Asia has taught the market over the last couple years with Taiwan Semiconductor, which is one of my favorite names, as well as obviously a lot of the exposure that you have to fabs and the entire ecosystem there, that, hey, you want to track this, and if you can buy in, you should. We know that historically South Korean companies do trade at a little bit of a discount. So it's not shocking to me that there was a feeling that there is value here, that maybe this is a better priced way into some of these AI and semi positions versus, Taiwan Semi's had a monster couple of years. NVIDIA, obviously, everybody in the US feels like they have already been kind of fully bought. And so I think people were really excited to bring in new names to buy.
When it comes to memory chip shortages, the SK Hynix CEO caught up with Ed Ludlow and said it'll probably persist beyond 2030. Do you agree, Sarah?
I think the question is going to be demand. Yes, right. If the demand continues to follow kind of the current trajectory, there will be sort of behind. Keep in mind, it's not bad for them necessarily to have a shortage, because it means people are willing to pay more to lock in orders further in advance. It means that their businesses are healthier, but certainly they are trying to produce more as quickly as they can, which is slow. The real question is, does the demand stay? We know that companies are looking at their bills from the Anthropics and OpenAIs of the world, wanting to tone that down, capping usage. The leaderboards are going away that were ubiquitous a couple months ago. And then on the flip side, we know that Anthropic and OpenAI and SpaceX and all of these AI names are also kind of looking at their P&Ls going, oh, wow, this is insanely expensive to let everybody make a cat video of their cat that died 20 years ago 10 times in a row and not post it anywhere and not pay us for it.
Well, when you say it's all about demand, a few weeks ago, I remember, of course, Apple having to raise prices because of the memory shortage. At some point, will demand destruction solve this problem?
I don't know that demand destruction on price will, unless the OpenAIs and the Anthropics of the world massively raise prices so that you're actually paying what you spend. A lot of people have been likening it to kind of the Ubers of the world. You used to be able to basically go across the country in an Uber Black for $10, right? And then the VCs and the public market said, hey, maybe you should pay what this actually costs. The prices went up, and they still have a healthy business, but it did change sort of how people value it and how people think about usage. So I do think we will eventually see something similar with the Neo Labs, but then you also have to remember that the Metas and the Googles of the world have tremendous amounts of cash, and so they do make money already, so they can actually afford to sort of subsidize our AI use for longer. And so I do think there's a really big question, especially when you pull back and remember that for the most part, we don't actually know what month over month or weekly users look like for most of these AI labs.
They are increasingly turning to the debt market to raise capital, though, Sarah. I think it's interesting to see how the warm welcome that we received, that SK Hynix received for the equity issue, wasn't really reflected in the Amazon debt issue earlier in the week. Just raises questions. I'm not saying that we're getting a full-throated pushback by capital markets on the fixed income side, but just the fixed income message, for me at least, was if you want to issue here, you're going to have to pay up. Sarah, did you see the same thing in the Amazon debt issue last week?
Yeah, I think that the debt piece of it has not gotten the same warm reception. One, I think that it certainly doesn't have as much retail and Main Street exposure as the equity does. And two, I think that people are starting to really dig in and say, wait, why do you need this money, right? If this is going to work so well, is there something that we don't understand that you do that makes you want debt instead of just relying on your cash flows, instead of relying on the equity? And so overall, the debt buyer has been much more cautious than the equity buyer.
Sarah Kuntz of Clio Capital. Sarah, thank you. Appreciate it. That was a key distinction last week. We had two big offerings. One on the equity side, SK Hynix, the biggest equity issue we've seen from a foreign company here in the United States. Open arms, well received on the equity side. You saw that stock rally into the weekend. On the debt side, when Amazon came to market, bit of pushback. Not just on the Amazon debt, but in the secondary market across a lot of tech issuers. And maybe the prospect of, increasingly the prospect of later this year, if you want to issue debt in this market right now, this market's going to push you to pay up for it, and pay up maybe big time in the years to come if it continues. Equity futures this morning on the S&P, negative by 1/3%. Tech stocks underperforming. With an update on news worldwide with your Bloomberg brief, Vonnie Quinn has more. Hey, Vonnie.
Thank you, John. Qatar's former emir, Sheikh Hamad bin Khalifa Al Thani, has died at the age of 74. Sheikh Hamad overthrew his father in a bloodless coup in 1995. He transformed the Gulf state into one of the world's wealthiest nations thanks to its vast natural gas reserves. Apple is taking OpenAI to court, accusing the startup of stealing trade secrets. The lawsuit accuses a former Apple engineer of downloading confidential files and continuing to access Apple's systems after joining OpenAI. TSMC reporting a 36% jump in quarterly sales. The results meeting elevated expectations, signaling global demand for AI computing remains intact. The company's steady growth highlights its central role in producing the world's most advanced chips for data centers and smartphones. And that is your Bloomberg brief. John.
Vonnie, thank you. Tells you a lot about sentiment that people are talking more about what's happening with SK Hynix and less about fantastic numbers out of Taiwan Semi. That's the situation for now, at least. Up next on the programme, awaiting inflation data.
Pieces of the CPI this month are going to matter more than what we've seen historically.
This is not like we're waiting until 2028 to see inflation moving down.
You have the market pricing in one hike and then followed by cuts. That to me looks like risk management.
Up next, we'll catch up with Sonal Tazai of Franklin Templeton. Live from New York City, you're watching Bloomberg TV.
Look at the more successful economies in the region. The key to their success is continuity. But the way our constitution is written, it actually encourages a lack of continuity. And that's a problem. The term for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
A Live from New York. Welcome back to the program. A snapshot of the price action for you. Down a third on the S&P. Underperformance in tech. It's last week upside down in reverse. The Nasdaq 100 is down by 1 full percentage point. The Russell with some relative outperformance. In a down market, we're down by close to 0.2% on small caps. Switch up the board and get to the bond market. Yields bleeding higher by a single basis point across the curve. 2s north of 420, 10s north of 450, 30s north of 5%, heading into CPI tomorrow morning. Heading into CPI tomorrow morning, this data here. In the commodity market, Brent and WTI pushing higher, up by more than 3% so far this morning. 2 weeks of gains for crude. Last week, a move of 5% plus, briefly breaching $80 a barrel last week on Brent. This morning, getting close to that level again.
And right now it's a deadlock in the Strait of Hormuz. And even though over the weekend you had some ships go through, put their transponders off, basically guide in the dark, in secret, today what we're seeing in terms of the data is no ships are moving through. So potentially this story is going to get a whole lot worse if ships are unwilling to take that risk right now.
What does it mean for the outlook for prices? Under surveillance this morning, awaiting inflation data.
Pieces of the CPI this month are going to matter more than what we've seen historically.
This is not like we're waiting until 2028 to see inflation moving down.
You have the market pricing in one hike and then followed by cuts. That to me looks like risk management.
If the Fed does feel the need to hike before the end of the year, they're arguably hiking for the right reason.
So here's the latest this morning. Fed Chair Kevin Walsh testifying before Congress this week with new inflation data also on the way. Sonal Desire Franklin Templeton writing, Walsh wants to move back towards a situation where financial markets react mostly to the economic data. Asset prices would then become a valuable additional source of information for the Fed. Sonal joins us now for more. Sonal, good morning and good to see you. Let's get to the price action. What's the source of information in the shape of the curve this morning?
You know, honestly, very little. Day-to-day movements aren't telling you much. I do think we're moving to a point where 10-year treasuries are moving back to where they probably should be, which I've said for a while is more like 475 to 5 in terms of fair value. So overall, I think these are short-term moves. We're going to see more volatility as markets absorb the fact that we're not getting forward guidance or will not be getting forward guidance from the Fed.
So now why do you believe that the 10-year belongs somewhere closer to 5 than, say, 4?
So mainly because, Jonathan, look, I think that neutral Fed funds is closer to 4 than 350. 2% productivity growth, 2% inflation, if the Fed actually meets its target, gets you to 4. Now, if I just look, rule of thumb, if I look at historical yield curve shape, at a time that the economy is not falling into recession and is not overheating, we should have an upward sloping yield curve of 100 to 150 basis points. Knock off half of that, if you will, for the fact that, you know, you've got abundant liquidity, you've got, all of that feeds in to generally saying, OK, you're not going to get all the way to fair value. And I just don't see a recession in the horizon.
So now just build on that if you can then. So you've got the yield curve potentially normalising to something as steep as 100 to 150 basis points. Shouldn't you expect tends to be higher eventually beyond 5 if the Fed needs to catch up on the front end and maintain that spread?
I think that it could, yeah. I think we could. But the other piece to keep in mind is we're still in a situation of truly abundant liquidity. Therefore, you might not get back all the way to what I would consider theoretical fair value on the 10-year in a rush. On the other hand, there are so many other factors which come into play, including what's happening to fiscal policy, which people aren't talking about very much. But, there's absolutely no consolidation coming. And around the world, fiscal policy is very easy as well. So overall, I'd say yields are going higher. And that's before we even start talking about inflation.
Well, Kevin Walsh will have his first Humphrey Hawkins testimony this week, of course, tomorrow and then Wednesday in the Senate. Can he avoid the questions he avoided with journalists in front of elected officials?
Well, I'm not sure he really avoided it. He said he wasn't going to comment on the near-term outlook for the economy. And I think it's fair for him to avoid that because he is sitting there and the entire council is sitting there and they're taking into account all available data. And he can certainly recap what that available data says, which is an economy which is certainly not in dire straits. And on the other hand, from an inflation perspective, there are definitely some tailwinds and there's some headwinds. And so I think he can certainly talk about all of that and not get into what the Fed's next move is likely to be.
Is the risk then for this week that someone else fills that void, like a Philip Jefferson or John Williams?
From essentially forward guidance in terms of the next policy moves. I didn't get the impression that the FOMC disagreed with that. So to me, the most interesting thing this week is going to be exactly how each of these governors responds to questions and how explicit they're going to be on something which could be interpreted as forward guidance.
Well, so I'm with you. They agreed to have a very short statement, but I'm not sure how much you can read into that at this point. Have they agreed, can you mandate other officials on the committee not to provide guidance and say where they think policy should be?
No, I don't think you can mandate it. But the question is, Jonathan, did they talk about this and talk about the relative usefulness of having a market which is hanging onto every nuance of a Fed official's words instead of every nuance that comes out of the data? And I don't know. I think that for a market which isn't illiquid, which isn't frozen, we're not in immediate post-COVID global shutdown, we're not in a post-global financial crisis space, maybe the market does need to revert to a little bit more of what I would consider healthy volatility and pricing in of risk. And that is something, it's not happening overnight, but I'm going to be very interested in seeing over the next several months if the Fed in general moves in this direction.
Well, help us price that risk this morning. Do you think the July meeting's live?
Honestly, no. I don't think they're raising rates this week because you just don't have enough data. Why would they raise rates as quickly as this week? There is absolutely no reason. We've got close to zero visibility on what's happening in the Middle East. We have zero visibility on whether we're getting second round effects yet. We're all waiting to see, are we going to see food price escalation? We haven't seen any of this so far. We have not. That's a genuine truth. And where they are in relative terms is not so far away from where they need to be that it's egregious. We're not talking about, we're not talking about the transitory point for the Fed, right? We're not talking about a Fed which is on the verge of seeing inflation ratchet up to 6, 7, 8%. Above target. And we have been above target for the better part of 3 years. And so I don't think they're under any pressure, frankly, to do anything this week, this meeting.
It's good to see you. Sonal Desai of Franklin Templeton. No pressure on the Fed. Little pressure, according to Sonal. That next Fed meeting, July 29th. CPI tomorrow morning. We'll hear from the Fed Chair, Kevin Walsh, as well, later that morning, too. Coming up next, we'll catch up with Steve Orth of Federated, John Lieber of Eurasia Group, Erica Najarian of UBS, Christina Campbell of Invesco. The second hour of Bloomberg surveillance is just around the corner, with equity futures down 1/3% on the S&P. Bond yields higher across the curve by around a single basis point, and crude on WTI and Brent higher by more than 3%.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
I've been called worse things than that.
Oh! You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting. What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
the shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it paradise ahead or Gattaca?
Maybe somewhere in the middle.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
The U.S. has too much inflation.
Pieces of the CPI this month are going to matter more than what we've seen historically.
The scenario for a hike is one where inflation stays elevated.
You have the market pricing in one hike and then followed by cuts.
If the Fed does feel the need to hike, they're arguably hiking for the right reason.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your price action of scores looks like this. Equity futures on a back foot this morning, just a little bit softer on the S&P. We're down a quarter. On the Nasdaq 100, we're down by 0.8%. The tech trade at the epicenter of the weakness out of South Korea. In the bond market, 2s, 10s and 30s, yields bleeding just a little bit higher, up by a basis point plus across the curve. 2s north of 420, 10s north of 450, 30s north of 5%. Setting the tone for this morning, this move in crude, WTI and Brent. WTI and Brent this morning up by more than 3%. Brent crude breaching $80 a barrel briefly last week. This morning, 78. WTI at 73. Heading into this in the next 24 hours. Take a look at this. Look at it twice. Sit on it for as long as you want. Tomorrow morning, we get 5 banks on Wall Street reporting earnings. We get CPI at 8:30 Eastern Time, and then later, the Fed Chair Kevin Warsh testifies before the House Financial Services Committee. All of that in the space of what, 4 hours?
Pick your poison, what you care about this week and what's going to be the next catalyst. I go back to what Sonal Desai just said, though. The Fed has no insight, which is why she doesn't think this is a live meeting in July, on what's going on in the Middle East. But I look what's going on in the Middle East and think, when are we going to get that insight? We went from war to somewhat peace to now this purgatory, this stalemate that I don't see ending in the next few months based off of what we're seeing out of Iran and the United States, continuously both laying different claims to what's going on in the Strait of Hormuz. And that's going to push oil prices higher, and it's going to potentially make it much more challenging for this Federal Reserve to talk about the inflation story.
As Lisa and others have said repeatedly, it's persistence that can be the problem. And as many guests have suggested in just the last week, included this morning, if this is the new normal, and it keeps crude and energy prices elevated, even if we don't retest 100, if you've got a Fed that's anxious about being above target for 5 consecutive years, the itch to hike interest rates will only get greater if the energy story continues to be a problem through the summer.
Especially if you think about it, if you're on the Fed and you think about it as actually, we're not hiking from here, we're just taking back insurance cuts that we had last year, and what we are doing is what we were supposed to do, which is risk management.
3 cuts last year, 3 cuts the year before that. Those cuts have been adding up. Later on this morning, 8:45 Eastern Time, speaking of Bramo, Lisa's on tour. She's catching up with Ed Bastian, the Delta Airlines CEO, a little bit later this morning, 8:45. Don't miss that. Navigating higher energy prices against the backdrop, at least if you're the Delta CEO, of good demand.
Good demand. They reaffirmed a full-year profit guidance, even though they have an incredibly challenging environment. How do you think about jet fuel costs, not even the present day? What is it going to be in August? What's it going to be the end of the year? At the same time, people are still traveling. It is peak travel season this summer. People are traveling for business. I mean, you see all the travel right now, what's going on in the United States with the World Cup, on top of everyone chasing the, cheaper yen, what's going on potentially in Japan.
Need to make Japan happen this year, right? Trip to Tokyo, 160.
I told my parents this, and they looked at the flight times, and they're like, ooh, and I was like, but you don't understand. It's the cheapest we can ever go.
Dollar yen around 162 so far this morning. Brent crude, 78.60. Coming up this hour, Stephen Orth, the Federated Hermes, expecting earnings season to bolster the bull market. We'll catch up with Erica Najarian of UBS with 5 key themes to watch ahead of results from the big banks, and Christina Campmany of Invesco previewing a busy week of inflation data and Fed speak. We begin this hour with stocks lower as AI concerns weigh on investors ahead of the latest round of earnings. Stephen Orth of Federated Hermes are writing, given high expectations, the setup isn't perfect for this season to ignite another big move higher in the next 6 weeks. But for longer-term investors, this season should reinforce the bull case. Stephen joins us now for more. Steve, good morning, sir.
Good morning.
I can't believe that's the last time I get to say that on TV. Stephen Orth retiring in the next couple of months. Steve, can I just say how much I've learned from you over the last decade plus? I came from London in early 16, scarred by back-to-back crises, obsessed with what can go wrong. And you taught me pretty quickly to start thinking more about what could go right and that risk can cut both ways. You've rode the bull market the whole way up, and every time you've been on, I've sat here opposite you and said, Steve, what can go wrong? What can go wrong? And over time, I've started to ask more, what can go right? What can go right this morning?
Well, in the long term, a lot of things are going right. I mean, earnings are exploding to the upside, Jonathan. I mean, this bull market started with earnings down below $200, and we're looking at $450. We raised our numbers twice now on 28 earnings. We like to look at where things are heading. I think this earnings season, looking at plus 22% year-over-year earnings growth, and those numbers are probably too low. So, yeah, I mean, the earnings, stocks eat nominal earnings, and some of that is inflation for sure, but that's why people invest in stocks and not bonds, because they eat nominal earnings. And yeah, I think it's going to reinforce the case. Now, the stocks have run up into this. The sell side has raised their numbers into the earnings season. Last 3 months, earnings are up about 4% estimates off of where they were three months ago. Normally, we're cutting into earnings. So it doesn't seem to us like there's going to be a big disappointment out there. There may be stock by stock for sure. It's become a stock picker's market, but it looks pretty solid to us. I mean, the earnings, the banks' earnings, the banks have been raising dividends, since their capital test last few weeks ago. So they're not doing that because earnings are about to surprise to the downside.
We should reflect on how unusual this is, though, in direction and in size. As you indicated, to be raising estimates into earnings season and to have expectations this high outside of recoveries is incredibly rare. Very, very unusual. In fact, some people might say unprecedented. What's behind that positive earnings shock?
A lot of it is margins. The bears have been saying for actually the extent of this bull market, which has been almost 15 years, a 13-year anniversary a few weeks ago. The bears have been saying quarter after quarter we're at peak earnings, because it makes them crazy. I mean, peak margins rather, that the margins keep going up, but the margins do keep going up because the mix of the U.S. economy is shifting increasingly towards higher margin businesses. And the companies that are in the index are using things like now AI, but before that, the Internet of Things and the cloud. It's a transformative technological change that's driving across the board margins to go higher. And, one of the reasons we've had this broadening out idea for the market is that, the first stage of AI was the spenders, then it was the companies that are immediately beneficiaries of that. And now it's the guys that are using AI across the broader economy. So we see margins going up. And we've got margins continuing to rise over the next couple of years.
I'm going to take the flip side of Jonathan's question. What could go wrong?
Well, a lot of things could go wrong as usual. That's the wall of worry we're riding. But, you know, what is it? The Strait of Hormuz. That was supposed to shut down everything. And what's happened is the world has figured out how to get oil out of the Mideast without the Strait of Hormuz. We were looking for 10 million barrels a day. We were all hysterical. You know, how many barrels a day are now getting through the Strait or some other means? I said to you this a few months ago, if it can't happen, it won't happen. People are figuring out how to get the oil out. So I think I know it's a headline today, but my guess is a year from now, no one's going to really care about the Strait of Hormuz.
But how long can we live in this somewhat purgatory? We're not at peace. We're not at outright war.
It looks like we can go on for a while, Anne-Marie. I don't see it. Every day, the Iranian military capability is declining. So it feels to me like we hit the peak of problems here probably 3 months ago. And since then, it's been going down. It's going to be kind of like a purgatory, as you said, but we're finding other ways to get the oil out. And the market's kind of looking past this issue. You know, another thing, like the chip stocks today are getting hammered. And we talked about this on the show. You guys have been talking about this for a while. Spot market versus futures market. And, you know, one of the lessons I've learned over the years is focus on the futures market, not the spot market. So for oil, it became very obvious to people. Spot oil has a clearing price. Longer-term investors were looking at the futures market. You guys kept talking about that. That was the right thing to do. But if you think about it, even in the stock market, there's a kind of spot market for stocks and a longer-term market for stocks. The spot market in chip stocks, is being set in Korea. These are folks that are using the market as a gambling mechanism. They're playing short-term movements. They're playing charts. They're not really looking at fundamentals. So we had a huge move up, 5x. Now we're had a 30% correction. A long-term investor looks at that and says, okay, the first move up in these chip stocks was an earnings explosion. We've seen that. The next move now is a revaluation, because now we're down to 3 manufacturers. We had, which is a really well-controlled oligopoly. Adding CapEx is very, very expensive, so that is a discipline in itself. And what's happening is, and we're seeing it, we've been expecting this, the chip manufacturers are now getting long-term contracts with built-in price increases. That's changing them from being cyclical growth companies to growth compounders. They're still priced like cyclical companies. So somewhere out there is a revaluation in these stocks.
Give me an idea what those numbers look like. They trade at single-digit PEs right now. Where should they be?
We think they should probably, over the next 5 years, trade up closer to a market multiple, at least to 15 times.
That's a big reevaluation.
Sure.
You think they'll be able to convince this market that this earnings story is that durable, that's sustainable?
I think it's going to prove to be.
They've escaped the boom-bust cycle.
We'll see. No, I mean, not completely, Jonathan, but not like they had. Not boom-bust. Maybe a little more like this.
They're less cyclical, which is what you're getting at.
Right.
Why have
but
they
that
become...
revaluation takes more time.
Well,
I mean,
just explain to everyone why they've become less cyclical.
Well, we had...
Because this market right now is not buying the valuation story.
We had 6 or 7 of these guys. Every time prices went up, they added capacity, and then it's like an airline. You know, too much capacity. You got to drive the price down until you can sell it. Now there's only 3 of them. It costs an enormous amount of money to build a fab nowadays. And they're being much more disciplined about adding capacity. And they're basically don't have enough capacity for the next 3 years. So we've got a pretty good backdrop. And now they're signing long-term contracts. We think probably 50% of their revenue base over the next couple of years is going to be kind of locked, not, softly locked in.
Is this your contrarian bet right now? The revaluation trade of some of these names? Because it feels slightly contrarian. A lot of people are saying maybe this is the peak of the story. They started to raise capital. This is SK Hynix on Friday to build out capacity.
Well, we've been warning our investors that a correction was coming across the board. To us, the spot market for stocks in general has gotten kind of overheated. What we've been happy to see is been more of a rolling correction, which is a healthier way to do it. You guys have been talking about that as well on the show. And on the chip stocks, yeah, I mean, this has been a pretty serious correction. And usually in bull markets, 20 to 30% pullbacks are the time to be for long-term investors to add. Now, do I know anything about the spot market? Not much more than you. it could be down another 10, 20% the next 3 weeks. But I think layering into these stocks here makes sense.
We've got some time for some final words of retirement wisdom. Over your career, going back to when, the 80s? Prudential?
Yeah, right? The 80s, 79.
What have you got to share with us this morning? Just reflect on that. Just some advice to the next generation of investors. What's your advice for them?
Well, the big piece, I'm writing a book about this, humility at the highs. But humility at the highs, confidence at the lows, integrity always. Those 3 lessons in equities or in any other form of advancement in life make a lot of sense.
Steve, you're a gentleman. Thank you, sir.
Thank you, John.
We're going to spend more time together away from the studio anyway. It's good to see you. Thank you, Steve. Stephen North there, a Federated Hermes, just a fantastic career. Let's give you an update on stories elsewhere this morning with your Bloomberg Brief. Vonnie Quinn has more. Hey, Vonnie.
Good morning, John. Republican Senator Mitch McConnell giving an update on his health. The 84-year-old saying in a statement that he suffered a fall in June and contracted pneumonia that required hospital treatment. He says he's moved from the hospital to a rehab centre, but still isn't healthy enough to return to the Senate. Meta is expanding its plans for a data center in Louisiana. The social media and AI company committing an additional $40 billion to the site it began constructing in 2024, bringing its total commitment for the campus to over $250 billion. The World Cup semi-finals are set. England moving on after defeating Norway 2-1. They'll take on the defending champions Argentina, who once again survived, beating Switzerland 3-1. Kicking off the semis tomorrow will be a European blockbuster with France taking on Spain. And that is your Bloomberg Brief. John.
Couple of days of fantastic football coming up. Away from the markets. Of course, the week is absolutely stacked already, if that wasn't enough. Up next on the programme, protecting the Strait.
Those boats are coming out of the Hormuz Strait. We're doing very well with respect to the Hormuz Strait. Those ships are flowing out of the Hormuz Strait like nobody's ever seen before, actually. The strait is open.
Up next, John Lieber of Eurasia Group, live from New York City this morning. Good morning.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Stocks are negative this morning, down by a third of 1% on the S&P. Just fantastic advice from Steve North, the Federated. What was it? Humility at the highs, confidence at the lows, and integrity in between.
Yeah, but fantastic advice, I think, if you're in the market, but also just for life.
Yeah, for life and markets. Steve, just one of the best. Nasdaq futures this morning down by 0.9. Some tech jitters coming out of South Korea. We'll see if those losses hold as we get closer and closer to the cash open. That's the equity story. In the bond market, 2s, 10s and 30s, yields pushing just a little bit higher, up by a basis point at the front end, up by 2. The further out you go on 10s this morning, 457 on 30s, just north of 5%. Crude up on WTI and on Brent. WTI this morning at 73, Brent crude at 78. Under surveillance this morning, protecting the Strait.
The Strait is open. Those boats are coming out of the Hormuz Strait. We're doing very well with respect to the Hormuz Strait. We have an oil gusher. The Strait is totally open. Those ships are flowing out of the Hormuz Strait like nobody's ever seen before, actually.
So here's the latest this morning. Crude moving higher as the US and Iran give conflicting claims over the status of the Strait of Hormuz. Both sides exchanging new strikes following a weekend of escalation. Bloomberg's Tyler Kendall has the latest from Washington. Hey, Tyler.
Hey, John. Well, breaking within the last hour, we heard from Iranian state TV reiterating a threat from the IRGC that the Strait of Hormuz will be closed until the U.S. ends interference. In their words, we know Iran has been dismayed by the fact that more vessels started using that U.S. coordinated route that hugs the coast of Oman instead of getting closer to that route that would be closer to Iran. But still, the U.S. is saying that that's not true. CENTCOM says that they are working to ensure freedom of navigation after the U.S. military confirmed it conducted at least 3 waves of strikes this weekend designed to degrade Iran's ability to target commercial shipping. There are still a lot of big questions here, though, as we know that observable traffic in the strait has basically ground to a halt, though data analyzed by Bloomberg News does show that ships transiting with their transponders off, so-called dark crossings, are now exceeding those observable transits for at least the last 3 days. And the fighting is continuing. New this morning, Iran says that its military is launching drones at U.S. Army positions in Kuwait following a weekend of targeting allies. John, it's very clear that Iran is making its outreach to some of its regional partners, including Iran's foreign minister meeting with his counterpart in Oman, and then Iran's oil minister meeting with his counterpart from Russia ahead of what is expected to be a planned visit from Russia's foreign minister to Iran sometime in the near future.
Tyler Kendall with the latest in Washington. Tyler, thank you. Appreciate it. What's important for markets here, what they chose to hit, what they chose not to hit, is just as, maybe even more, important.
Why it's interesting that CENTCOM is saying U.S. forces did not strike Karg Island in Iran. That would be a serious escalation when it comes to the risk premium and the price in the oil market.
This is not a popular conflict down in Washington, D.C. Capitol Hill has been pushing back against the White House, and the Republican Party has lost a key interventionist against the backdrop of an increasingly isolationist party. Lindsey Graham, the senator from South Carolina, has died over the weekend. John Lieber of Eurasia Group wrote this. Graham was a hawk on Iran and cultivated a lot of relationships overseas, one of the most prominent Republican senators on foreign policy. John, we have a hole in that party this morning. What are your reflections on the senator from South Carolina and what it means for the outlook for foreign policy for his party?
Yeah, I mean, look, Lindsey Graham was he would be the first to tell you that he was in favor of an extremely interventionist American foreign policy. He'd been somebody that had wanted the U.S. to target Iran for a very long time. And he was a key interlocutor across the Middle East, across Europe, for the U.S. and for the Republican Party on that interventionist agenda. And of course, importantly, he was also an important influence on Donald Trump, who kept a lot of the relationship alive and warm with the United States Senate when a lot of people wanted to walk away from Trump. And I think we have to give Graham a lot of credit for pivoting from being one of Trump's biggest critics to being somebody who was pretty effective at pushing the president towards this more interventionist stance that we've seen in Iran, in Venezuela, and even keeping a lot of the U.S. influence alive in Ukraine. So I think that's an important role that Graham played. It's not entirely clear who will play that. Now, of course, the president's got a lot of other influences around him, and he's in this war far too deep now to back out of it. But over the longer term, this is going to represent a shift in the Republican Party, like you said, John, from this interventionist type like Lindsey Graham, who are, sadly dying off, to the more isolationist Republican that I think keeps the U.S. out of these types of foreign entanglements.
John, he wasn't just an interlocutor on the international stage, also domestically. It wasn't just Republican senators in the White House. He also was an individual that has very long-term relationships with Democrats. Who can fill that kind of void? An individual that's almost a fixer behind the scenes.
I mean, I'm not sure we know yet. A lot of the new generation of Republicans are quite a bit younger. Graham had been around a long time, since about 25, 26 years in the United States Senate. And I don't think you see those kinds of relationships developing the way they did, or they could have. They had space to 20 years ago when members would go on congressional delegations together frequently and generally were much more positively inclined towards each other. So I think it might be, you're going to lose a bit of bipartisanship too with the passing of the torch to the new generation.
Do you think there's more of a chance now with his passing that the Russian sanctions bill gets put through and Trump signs it?
I doubt it. I think that bill faces hurdles, and Graham was one of the biggest proponents. I don't think Trump's in favor of it. Now, that probably depends on what happens in Ukraine. The dynamic over the last month or two has been that the Ukrainians have sort of got a boost of momentum, have been attacking a lot more deep into Russia, and so as a result are looking like they're on their front foot instead of their back foot in that war. That dynamic could actually help push the Trump administration to be much more tougher on Russia and maybe potentially embrace those sanctions. But they've got to get past Iran right now, and they've got to get past the bigger issues they're dealing with across Latin America as well.
John, another key senator in focus as well is a man that you've worked quite closely with in the past, Senator Mitch McConnell. Can I get your reflections on what's happening with Senator Mitch McConnell? Because it was a bit of a mystery up until the last 24 hours, and for some remains a bit of a mystery.
Yeah, and it's no mystery that Senator McConnell is getting up there in years, and he had a childhood battle with polio that has, I think, affecting him to this day. He's announced his intention to step down, and he's going to be vacating his seat for the next generation in this upcoming election cycle. And I think that, he's always been fairly private about his health, and he doesn't share a lot of details. And so what we've seen is an aging senator dealing with health issues who doesn't really want to talk about it in public. And I think that's led to a lot of speculation about what's actually going on with him. He's not missing any important votes at the moment, and he's finally over the weekend released a statement giving some clarity about what's going on. I think that we're looking at the end of a long and well-regarded career for him. And, I wish him all the best in his recovery from this illness.
John, we appreciate your clarity this morning. Thank you. John Lieber there of Eurasia Group. To John's point, when you seek out privacy, but you're in public office, tends to be incompatible.
Well, this is where I have a problem. If you're scheduled to come for votes, scheduled to represent a state, well, then when you go missing and there's not a lot of clarity about you and also your wife, who was a former cabinet minister, secretary, goes to China, there needs to be answers. You can't just go dark.
It provides some oxygen for conspiracy theories, let's put it that way. OK, coming up next on the programme, Erica Majan of UBS looking ahead to a key week of big bank earnings, plus Shahira has your morning movers. SK Hynix ADRs are lower ahead of its full first day of trading. The stock is down by more than 8%.
weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Coming up in 1 hour and 15 minutes, don't miss it, Ed Bastian sitting down with Bloomberg's Lisa Brambitz. Bramo coming up a little bit later with the Delta Airlines CEO. Looking forward to that at 8:45 Eastern Time. Ahead of that, the price action looks like this. Equity futures on the S&P 500 pulling back following 2 days of gains, 2 weeks of gains. On the S&P, we're down by a third this morning. On the Nasdaq 100, we're down by 0.9. The epicenter for the tech jitters, guess where? South Korea. SK Hynix down a record 15% plus overnight in the Asian session. That ripples through Europe and into US equity futures. In the bond market, 2s, 10s and 30s. Yields higher across the curve by a single basis point, setting the tone for this move in crude. WTI and Brent higher by more than 3% through much of this morning, following a weekend of escalation over the weekend and into Monday to start a new week. Trading strikes between the US and Iran.
Trading strikes in the Strait of Hormuz right now. There's no ships moving through, according to the data what we're seeing. You saw some ships, about a dozen commodity vessels moving over the weekend, and they did so by putting their transponders off. So going in secret, going in the dark. Right now, today, no one is feeling safe enough to go through. And I am interested why CENTCOM came out and said U.S. forces did not strike Karg Island in Iran. They came out, felt the need to say that. Something potentially is going on there. And I think that's important because Karg Island obviously is the epicenter, the lifeblood of the Iranian oil and gas world. And if that was to be struck, you would see prices potentially a lot higher than we are today.
We breached 80 last week, still south of that this morning, 78.50. If you look at WTI, 73 handle, so $5 away from the post-war low. And I mentioned that we're still $35 away from the post-war high. So it's a market pretty comfortable, relatively speaking, to the developments in the last week.
Yeah, what did Steve Off say? We can pretty much live through, and it's proven, we've already proven in this market that we can live through this almost purgatory. We're not at peace, but we're not at full-fledged war. And it's been difficult to understand from the president how he would describe this, because he said the ceasefire is off. But when pressed by reporters last week when I was with him in Turkey, he would not commit to going back to a full-fledged war.
Purgatory comes with its own problems. Just short of 74 this morning on WTI. So we count you down to the open and bow, 2 hours away. Let's get you some single names, some morning movers. Yahara has more. Hey, Yahara.
Hi, John. This is not purgatory. SK Hynix ADRs are falling 8.4% in the pre-market, giving back some of the gains after its Friday debut. The weakness coming after overnight, as you said, it suffered its worst drop on record as investors took profits following the listing and reacted to a report from a South Korean brokerage suggesting that quarterly earnings could miss expectations. But there is a broader risk-off mood in the market tied to, as what you were talking about, the war in Iran, and that is weighing on the market's biggest winners, the memory names. So Micron, SanDisk, and Western Digital all falling in the pre-market, and that overshadowing what would otherwise be seen as good news from TSMC. It gave its preliminary report. Its full earnings come out on Thursday, and sales were strong, reinforcing that AI demand remains strong, but investors looking past that. this morning. And we end on some sell-side action with Shopify rising 2.6% in the pre-market after Jefferies upgraded the stock to a buy, saying it expects it to beat quarterly results. Plus, they say that the e-commerce giant is well positioned as AI agents become increasingly part of the shopping experience. John?
Yahara, thank you. Thanks for the update. More from Yahara in the next hour. On our radar this morning, shares of SK Hynix tumbling by a record 15% plus on the South Korean exchange, sparking a row across the broader tech sector. The group's chairman remaining confident in the company.
I have some confidence that the demand will be grow. Our supply capacity never going to catch up. So first thing is that we have to keep the stock price stable, and hopefully in the long run, then we can have that upside potentials.
Nothing stable about the stock price this morning. The chipmaker's US-listed shares falling ahead of its first full trading day. That stock is down by more than 8%. Elsewhere, the US and Iran trading fresh strikes while issuing conflicting declarations over the Strait of Hormuz. Tehran saying the waterway is now closed, quote, until further notice. US Central Command disputing claims, saying the strait remains open. And finally, Kevin Warsh making his first appearance before Congress as Fed chair this week. Warsh will testify in front of the House Financial Services Committee tomorrow following the June CPI report. Its testimony continues Wednesday before the Senate Banking Committee.
So his first Humphrey Hawkins testimony as Federal Reserve Chair. And I think what's so interesting about this week is that we're going to get live reaction from the Fed chair after two key data points that we really care about. You keep asking this question, is July live? Is this a live Fed meeting? Well, we're going to find out tomorrow morning, potentially at 8:30, and then we're going to get some color around that from the Fed chair. Then we're going to get PPI. And then we're going to once again get some color around that from the Fed chair. On top of that, we have a ton of Fed speak this week before we have the blackout period at the end of the week. So I think it's incredibly important that we're having the data on the front end of the week, and then all of that, we're going to get the Federal Reserve massive members talking about what all of this means.
Governor Waller, a key member, speaking a little bit later this afternoon. Before we get all of that, the data and hearing from Chair Warsh, we get this. Earnings on deck, with 5 of the nation's biggest banks reporting before the opening bell tomorrow. Erica Najarian of UBS remaining mostly bullish on the sector, writing, we expect any beats to come mostly from cap markets and trading, and any misses to come from deposit cost surprises and higher costs related to higher transactional fees. Erica joins us now for more. Erica, good morning.
Good morning.
It's never been like this. I don't remember the last time they all did this at the same time. What's that about?
I don't know. Everybody had a great 4th of July weekend, long weekend, and like,
I'm feeling sick.
I'm feeling sick Tuesday. Look at my earnings, everybody.
Right. Fantastic. What are you expecting to see tomorrow morning?
So we're all expecting great things, right? But can the mega cap banks really exceed the mega expectations that have been put on? So the whisper numbers from the buy side or the investor base, especially for Goldman and Morgan, tend to be higher than where consensus is. And so with 5 of the 6 of them reporting and expectations ratcheted up pretty high, I'm a little bit nervous that tomorrow is going to be a little bit of a mess and that it's going to be difficult to stand out, especially since I expect that JP Morgan's earnings call will be somewhat dominated by succession questions. And so if you think about sort of what sticks out in a 5-day sort of 5-bank reporting day, that might be it. So results might be, you have to really stand out, right, to catch the headline.
So let's try and unpack some of it now. So you mentioned the likes of Goldman. So Goldman's up 20% this year. Morgan Stanley's up 25%. Those two names have almost traded as one, had a fantastic year. How crowded is positioning around some of those names within the banking sector? Because I would often come on air and I'd say the banks as a group on the S&P, record highs. But the performance spread across that group of banks is actually pretty wide, isn't it?
So it feels a little bit like the investor base is playing kind of like a little dangerous game, and they're actually long Goldman, short Morgan Stanley. And so they're trying to be long the purest expression of capital markets and short a name that's trading at a very lofty price to tangible book multiple. And seasonally speaking, wealth flows are typically negatively impacted by tax payments. So they're, I think, also banking on that. But that is a super, super crowded trade. And so not only do they have to beat consensus significantly, both companies, but we also have to have pretty encouraging, outlooks in terms of the pipeline.
So when it comes to Goldman, out of all of them, is that going to be the highest bar for them to clear?
I think Goldman has probably the highest bar to clear, yes, tomorrow, given positioning.
So then who do you want to be exposed to if you're an investor going into tomorrow?
I like a little Wells here, right?
Because no one's talking about it.
No one's talking about them. Everyone's like, oh, they may not make their $50 billion net interest income target, although Charlie, the CEO, and Mike, the CFO, had reiterated it during conference season in May and June. And, they're not as purely exposed to cap markets names. But, if they can hit anywhere near consensus, that stock is really sort of inexpensive. And if they could reiterate in that public forum that they could hit their targets, I think that stock could actually have a little bit of a squeeze.
Do you see a new phase to the banks trade emerging with the likes of Wells Fargo and others, a purer play on just the traditional banking story away from capital markets? Is there a next phase to this long bank trade?
I had hoped so, but I'm still skeptical.
What
right?
makes you skeptical?
Because at the end of the day, as I think about what the fundamental question mark is, it's really about deposit growth and deposit cost challenges. And that is a little bit more acute in the regional bank names or names that don't have as much capital markets exposure. So if War sounds hawkish, for example, during the testimony, and all of a sudden September is live, and by the way, loan growth is fantastic. However, it's outpacing deposit growth by 2 to 1. And then all of a sudden there's sort of like a potential for earnings downgrades because of higher deposit costs versus the fantasy of the capital markets revisions continuing to go up and up and up.
So wait a sec, higher rates would be a problem for some of these banks?
I think higher rates could be a problem for some of these banks if it's coming from the short end. The regional banks are very much tethered to the shape of the curve. The ideal scenario for them is that if we had a few cuts on the short end of the curve and the curve was steep.
You said September. So do you not think July is even an optionality to be live?
Girl, who knows? But I mean, if you don't see those ships passing,
we got a problem.
We have a problem. If the CPI number's hot, we have a problem.
Maybe good news for JP Morgan. They won't talk about any of this because on the call, you know what they'll be talking about. They'll be talking about succession planning. You said it. Succession does matter, though. What did you find out? What did we learn in the last few weeks with JP Morgan?
So I think we learned that the sort of rolling retirement for Jamie is over, right?
You think it is done now?
I think it is done now. And I think that I would peg his remaining time with the length of the retention award contracts that they gave to Doug Petno and Troy Rohrbaugh.
So do you think he needs to come out with clarity on when he is going to retire?
I think so, because I do think that long-only investors that are staunchly loyal to owning the stock still somewhat believe in this rolling retirement, right? Especially since, the sort of heiress apparent, the star that everybody had thought was going to take over had left, right? And so they have sort of less time to get to know Troy Rohrbaugh, especially, who's newer than Doug Petno. And so I think a little bit of clarity, but also I think investors are wondering, what is Jamie looking for the new CEO role? Right?
What do you think he's looking for?
I don't know. I'm going to ask him tomorrow, right? But what are the key characteristics for JP Morgan, who's already so far in the lead, to further future-proof their business? And by the way, you're not just CEO and chairman of JP Morgan. You are the spokesperson for the entire financial services industry. So
do we want that as a shareholder? Do we want that person to fill those shoes, to be the spokesperson for the industry? Is that something we actually want?
There's no choice. They're huge, right? They're going to be $1 trillion in market cap pretty soon.
Does it automatically pass to the next CEO of JP Morgan, or potentially the spokesperson is someone who's already a CEO at another bank?
Just given, technically it could be Bank of America, right? But given JP Morgan's size and just its returns, right? I mean, and also, there's also a retirement question over the next several years with Brian Moynihan as well, right? And so, it does automatically still is JP Morgan.
How great is the key man risk at JP Morgan? I ask this question with a great deal of respect for the man and, of course, the institution. That goes without saying. But to believe in the stock, you have to believe that the company survives past the handover from one man to another. There's got to be more to a company than just one man running JP Morgan.
You could have said that about GE and Disney, right? And you can say the same thing like Berkshire Hathaway and Apple. But there is an enormous amount of talent. The reason that JP Morgan's returns are 20% plus on tangible common equity is everybody goes into 270 Park or wherever else and rows the boat in the same direction, right? Obviously, it's chock full of talent. But for the stock and for investors, key man risk is real. At some point, hopefully, it's called key woman risk, FYI. But the key man risk is real.
Well, it is over at Citi. But when it comes to John's point, isn't this part of his job to set up a proper successor? So as a shareholder, you're not sitting here wondering what's going to happen next.
But I think that's what he's doing, right? I think that we're just a little bit perhaps surprised that Marianne Lake is not part of the discussion.
Was that a fumble?
Is that a fumble? Look, I think Marianne Lake is extraordinarily talented, but there has to be a reason why one of the best boards in the globe, one of the best bank boards in the globe decided that Troy Rohrbaugh and Doug Petno had to be sort of the ultimate successors. And I think he's doing the right thing, right? Troy comes from a trading background, and now he's running, the largest consumer bank in the U.S. And Doug Petno gets to run the whole, corporate investment bank on his own. So I think they're doing the right thing. I just think that Marianne was so considered to be the heiress apparent that everyone needs a second to digest the new reality.
Does this feel like a repeat of Goldman, Harvey versus David? Does it feel like that again, or is this different? You lived through that, we all did. Is this different?
A little bit.
What makes this one different over at JP Morgan?
It was just such a longer, we have been talking about succession like forever, right? I think I had a 3 handle in my age when we were started talking about, succession. And so it's just that there's been like so many, like Mike Kavanaugh, there's so, Jen Piepsack, there were so many other folks to have considered. That's what makes it different from, the Goldman succession.
Nobody believes you've got anything but a 3 handle on your age, Erica. It's good to see you. Thank you. Appreciate it.
Thank
Erica
you.
Najarian of UBS, thank you very much. The big banks, 5 of them reporting tomorrow morning. Just Morgan Stanley, I believe, sitting this one out and reporting on Wednesday morning. Let's give you an update on news worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. The US and Canada are preparing to open a new bridge connecting Detroit with Windsor, Ontario. The Gordie Howe International Bridge will open July 27th. The deal was announced after Ottawa agreed to give the US a share of net toll profits. The U.S. Department of Justice launching a grand jury investigation into United Auto Workers President Shawn Fain. The DOJ is looking into accusations that Fain pressured another high-ranking union official to secure benefits for his fiancée and her sister. In an email to Bloomberg, Fain called the allegations false. In sports, Jannik Sinner winning his 2nd straight Wimbledon trophy, beating Alexander Zverev in 4 sets. The world #1 player dropped the first set before pulling ahead for the rest of the match. It's the Italian's 5th Grand Slam title and first since last year's Wimbledon tournament. And that is your Bloomberg brief. John.
Vonnie, thank you. Thanks for the update. Up next, awaiting inflation data.
We're already starting to see some downside surprises to inflation, and that's why we do see value across a number of the different government bond markets.
Up next, we'll catch up with Christina Campmelli of Invesco, live from New York. You're watching Bloomberg TV.
Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Feel
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that.
And the speed of the business has never moved faster.
My career might stop, but I'd still be driving something.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need,
There's going to be now tons of tariff headlines until midterm elections.
hear it first on Bloomberg.
Bringing you the latest business news wherever and whenever it happens. I'm Scarlett Fu, reporting from America's biggest military shipyard. This is Bloomberg.
Stocks down this morning by a third of 1% on the S&P, by 0.9 on the Nasdaq 100. In the bond market, yields higher across the curve by a single basis point. 2s, 10s and 30s. 2s up by a basis point to 4.22, just off the highs of the year. And in the commodity market, Brent and WTI look like this going into CPI tomorrow morning. Brent is 78, WTI at 73.80. Under surveillance this morning, awaiting inflation data.
You will be able to see enough sequential improvement in inflation.
Economic data and Fed speak, hoping they'll get some for insight into the central bank's outlook for monetary policy. Christina Count-Many of Invesco writing inflation data will continue to drive markets' behaviour, with general labour market resilience removing much of a tail for easier policy in the short term. Christina joins us now for more. Christina, good morning. Good to see you.
Good morning. Thanks for
So
having
we
me.
get back-to-back CPI and then share wash. What do you expect to see and hear tomorrow morning?
So I think that the market is very excited for this week. We have earnings. We have all the Fed speak just beyond wars, too, because so far it's been a little cagey of like how much information and insight we really get. I think for the inflation number itself, the markets are looking for a kind of okay number with like a 0.2 core. I think it takes really like a 0.4 core or more to say July is 100% a done deal.
That's what I was going to ask you, Christina. If we get an in line,
yeah,
okay, does that just shut the door on the July debate?
I don't think that they go in July, but I don't think it shuts the door in the pricing of July. I think we kind of sit here maybe at 7, 8, even half price. I think we live in a different world that you can go into meetings with much more price and it's less of this certainty. And it's interesting because in the press conference after the meeting, Wirtz talked a lot about, I want to take a step back from forward guidance and all of this market hand-holding, and it's not what the market dictates because we're not in crisis. But at the same time, we have to have a shift back to how the market's pricing is the most valuable tool for the Fed and switching of this. So I think it'll be this interesting dynamic as we learn of how do we interpret the Fed chair's communication. Does the balance of communication from the rest of the board change, or is it status quo? Like, how much agreement is there on how much we give? So I think we're still in this learning phase, and I think that we need a bit more, and maybe September is the more likely of if the data goes that way, and if you see a pickup or stickiness further in inflation, that may be September, but I think July is a harder case.
How much do you think he's going to be influenced by the CPI print, his testimony?
I don't know that he'll be influenced by it particularly. I think it'll be interesting how he responds into the questioning, because both the press conference and at Sintra, he was I have a task force for this. I don't want to give you anything, really. I think that's a harder case to do when you're testifying to Congress. But I don't think it'll be as much like reactionary to this data point versus here's the trajectory of where we're coming from. We're coming from years of sticky inflation. we were concerned about the labor market, that's proved stronger in the last 6 months.
I agree with you. I think it's harder to back away from elected officials. Tuesday then might be a little bit easier because some people will say, you know, no offense to, you know, Chairman French Hill, but the Senate might be a little bit more of a serious juncture. And that's going to be after PPI. Is Wednesday the more interesting testimony?
I think both will be interesting. I think you might get more challenging questions and I think what his tone is and how he responds and his willingness to engage, this is new to all of us in terms of how we're reading him in this role. So I think it's the jury's out of, are you talking strong? Is it speak softly, carry a big stick, that just the threat of saying we're very aggressive on inflation is enough for the market, or are you ready to act at a moment's notice?
We always frame this as a grilling, and then it turns out to be a total dud down on Capitol Hill. You know how it goes. Sort of individual social media videos that each individual is trying to clip and send to their constituents.
Especially in the House.
Right.
But what did we see in Sintra? A lot of dad jokes. That's not going to fly. It's not going to fly in the Senate. It's just not at this moment.
Christina, before you go, I want to talk about supply and the price you need to pay to clear that supply. Amazon last week, are we getting some pushback in credit?
Finally, a little bit. But credit spreads remain very tight. I think the market is starting to deal with this, grappling with this. You have a lot of supply that's come into the market, and you really are not being compensated out the curve for that. And you have questions of why are some of these hyperscalers issuing so much? What is there something under the hood that we don't know about? Is there a need for this cash? Are you just optically taking advantage of the market because you think you can? And up until this point, it's been gobbled up. I mean, this spring, long dated supply has been absorbed super easily.
I see the door being open, but for a high yield, a wider spread maybe. What would it take for the door to slam shut?
I don't know. I think when we take a step back and look at who is the investor base or market, there is a structural investor base for long duration assets. And even internationally, there is still that money coming into U.S. credit. So I don't know, barring some kind of crisis, that the door slams shut. I think you have a slower supply period over the summer, so maybe that kind of can support things a little bit more. But I think it's either we have a very different world from the Fed and talking about, even different from what we're talking about now, of we might get hikes, but it's, do we get 75 basis points of hikes? That's normalization off of the last 75 of easing, for a real hiking cycle or something that changes the dynamic in terms of that, I think, to change it.
Christina, good to see you. It always is. Thank you. Christina Campmany there of Invesco. Looking ahead to what we could hear tomorrow morning from Chair Walsh and what we could see in the CPI data. Coming up tomorrow, we'll be continuing to cover that and all the financials. In the next hour, we'll catch up with Chris Harvey of CIBC, Steve Paliuca of Bain Capital, Lindsay Piegza of Stifel, and the Delta CEO, Ed Bastian.
On AI, some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns. And a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets. And the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
Know how
how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Anything we do in Africa is going to be more risky than the U.S. I think the approach we want to take is, how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation was a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
We're still in a really strong earnings environment for U.S. stocks.
Tech is going to remain well supported. Really, it's about rebalancing.
The churn is not necessarily detrimental.
Investors are being cautious ahead of the earnings season.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Did you hear about the Jay-Z concert last night? It took hours for people to get into Yankee Stadium.
Yeah.
Some problems outside of the stadium.
I heard it was crazy.
The performance didn't start until midnight, and it went on until the early hours of this morning.
Went on to the early hours this morning. I felt really bad for those people who had to go to work.
Were you one of those people?
I was one of those people who had to go to work.
What time did you get out of Yankee Stadium last night?
I left at 2 a.m.
Okay, so 6 hours ago.
But guess what? He still did. I left friends behind. Hello, friends, Chris, Marcy, everyone.
Okay.
50 minutes. He did another 50 minutes.
After
he
you
said,
left?
Yes, he said.
Right.
So I left after Rihanna. I had some intel that Rihanna was going to come out, and I was like, I'm not missing Riri. Then Beyonce came out. It was unbelievable. Saturday night, Eminem was there. Incredible. Jay-Z, incredible. And you know what? Hats off to the Yankee executives and Rock Nation. Once they realized there was a problem outside, they wanted to control the crowd and said, we're going to get everyone in safely, then we'll start the concert. And that meant Jay-Z started after midnight.
So let's just do some basic maths on this. So you got to studio a few hours before the show when I walked in the door, and you left there at 2. How much have you slept?
Sleep.
Have you slept?
You sleep when you're dead, isn't that the saying?
Something like that, yeah. Okay. Not made anything up this morning, as far as I can tell, so you're doing pretty well. Hang in there. All right. We've burned through another 2 minutes, 58 to go. You can do this, all right. Live from New York City this morning. Good morning to you all. The third hour of Bloomberg Surveillance starts right now, and your price action looks like this. Equity futures down by a third on the S&P. We're down by 1% on the Nasdaq 100. On the Russell, some outperformance this morning following some underperformance last week. In a down market, we're down by a third of 1% on the Russell 2000. Elsewhere in the bond market, 2s, 10s and 30s. Yields bleeding higher by a single basis point. 2s up to, let's call it 422. With this move in crude supporting higher yields. WTI and Brent higher by more than 3%. 78 on Brent, WTI just short of 74. Heading into this week right here, and what a week it is. Wow, what a Tuesday morning we've got coming up for you. Tomorrow morning, 5 major banks on Wall Street reporting earnings. By the time you get to 8:30, you'll have all of that plus CPI data, and then about 90 minutes after that, Chair Walsh on Capitol Hill in front of the House Financial Services Committee.
How many aides are going to have to change some of their questions for Kevin Warsh because of all the data, the slew of data and the bank earnings we're going to get before he appears his first testimony in front of Congress as Federal Reserve Chair? I just wonder how much the data might influence or tilt how he talks about the market right now. And then if that's not enough, Wednesday, PPI and his live commentary once again.
Remember his confirmation hearing when he was asked about being a sock puppet?
Yes.
Sock puppet and things like that. Looking at the caliber and the individuals that he's put together to run some of these task forces that are both international and domestic and lean Republican and have worked in Democratic White Houses as well.
Obama, yeah.
I think it's a bit of an effort to sit here and sit there tomorrow morning and make the case that this is somehow a partisan individual who's looking to do the work of the president in the White House.
The task force are anything but partisan, and they're also global. You have the former Bank of England governor, Mervyn King, also part of this. You have individuals like Mark Andreessen who understand what's going on in the AI trade and potentially what is that going to mean for the productivity of this economy right here in the United States. You have a lot of individuals that can meet the moment right now, but I do wonder how much that is going to be a punt for Kevin Warsh. He's like, well, now let me talk
We've
about...
got a task force.
Yes, we have a task force. I have names to the task force. Let me read off everyone's CVs and burn a ton of time.
24 hours away, full coverage coming up right here on Bloomberg. Coming up this hour, we'll catch up with Chris Harvey of CIBC, with markets facing a week full of event risk. Steve Pagliuca of Bain Capital on how the World Cup has boosted football's future in America. And the Delta Airlines CEO, Ed Bastian, on navigating record quarterly fuel expenses. Lisa catching up with Ed later on this hour. We begin this hour with stocks sliding following a rocky session for the tech trade in South Korea. Chris Harvey of CIBC writing the CapEx AI cycle still has legs and demand is fire from satiated. Chris joins us now for more. Chris, good morning. Good to see you.
Good morning. Good.
Spreads are tight. The data's good. Is it as simple as that? Keep buying stocks?
It's a secular trade. We don't want to overthink the secular trade. We're looking for things. We went back to 2008 when real rates were higher, spreads were widening, June was weak, and there's some similarities, but they're far from that close.
You know what people are sort of digging into now, the pushback you saw in credit and investment grade last week, some of the tech debt that was issued on Amazon, that kind of stuff, starting to think about whether that reshapes the outlook for CapEx, what that could mean for the overall trade. What's your reaction to that?
My reaction to that is the first thing I would say is the capital markets are wide open, right? I think we had seven $25 billion offerings this year. I think you had to go back to between 19 and 25, you had that many. So that's telling you that there's plenty of capital around. People are willing to fund risky endeavors. And if I'm Kevin Warsh, what I'm thinking about is if I need to slow things down, I have to start attacking the balance sheet, because all the liquidity that you're seeing coming out of the credit markets, that's where there's a lot of inflation coming from.
Is that the potential headwind to the bull trade, that you see a Fed that emerges that needs to tighten financial conditions?
I think so. He said that in his press conference. The good thing is, at least for risk seekers, the good thing is you're not going to attack the balance sheet probably until late 27, maybe 28, right? And so as a result, it's still open, right? But if you look at what's happening, the credit markets are, spreads were at generational tights. Issuance has been phenomenal, and the amount of issuance and risk seeking that's being done with it is incredible. It's just driving things at this point in time. And until you stop that, you're just not going to stop that equity trade.
Jonathan and I were just talking about the task force, and I loved this line in your note. We subscribe to the belief that the new Fed would feel and act like a tech investor walking into an old economy company. Are you happy with the names you've heard?
I'm happy with the name. I'm happy with what he's doing. I'm happy that he's going back and saying we need to relook at everything. I'm happy that he did not put dots down, because that shows that tradition is not so important to him. He's really about the empirical data and the empirical evidence. And I'm happy that we're getting a different look at things. At the end of the day, he's right. We haven't got inflation back down to our 2% target in 5 years. Something needs to be done, right? And I think he's working on that something right now.
Do you think him not putting a dot on the plot is a harbinger of potentially we're just getting rid of the dot plot?
Maybe, I don't know. That gets a little complicated for me because I'm not sure the rules and the rationale for the dot plot. But what it tells me is that I'm just not stuck to tradition, right? I need to look, he's going back and saying, hey, we're not getting the right data. We're not getting enough data. We're not getting timely enough data. We're not getting quality data. We need to look at communication, inflation, balance sheet, so on and so forth. Nothing is sacred at this point in time. Nothing's off the board. And I think that's very important. And that's a very strong signal to the markets and to myself.
That's why I really like Doug McMillon, former Walmart CEO. Is there a man that knows more about data and prices than that guy right there to help oversee the task force on prices and data?
Especially a part of the American consumer base that potentially rate hikes or rate cuts influence and impact the most.
The itch, Chris, to rotate away from the winners. I see it all the time. The start of every quarter, the start of every year.
Yeah.
Do you resist the urge to rotate away from the chips, the high flyers?
Every quarter, every month, every day, we look for reasons to get away from the momentum trade. What we said is it's overbought, it needed to reprice, it did. The thing about the momentum trade is you need regime change. You're not going to get regime change unless you're getting a much more aggressive Fed or the economy is going to accelerate much quicker. Right? You can have these bouts of repricing, we've had that, but you need regime change. And we're just not seeing it at this point in time.
You see this as short term then?
We do see it as short term. There's certain areas of the market that we think got a little bit ahead of themselves, a little bit bubbly. But at the end of the day, I just don't see regime change in the short term.
Where did the hyperscalers fit into the outlook then? Because that was part of the trade. I'm sure you saw it a million times from a million different people. Lean away from the chips, lean back into the hyperscalers and the Mag 7 that became the Lag 7.
Yeah.
What's the outlook now for you?
So if I look at the communications sector and you have a couple of hyperscalers in there, that sector looks pretty attractive to us from a valuation point of view, from a technical point of view, from a fundamental point of view. I'm not going to they don't allow me to talk about individual stocks so much.
Not going to pin you down.
But that group looks pretty interesting to us. And if you look at the momentum trade, and this is always true, the momentum trade begins to morph. You're starting to see more healthcare names pop up in the momentum trade. And so at the end of the day, until you get that regime change, momentum's going to be here. It's not time to go bottom fishing.
Big morning for the banks tomorrow morning.
Right.
Morgan Stanley and Goldman, I'm not expecting you to do single names, but the pure capital market plays have had great years, up by more than 20%. Rest of the sector, the other names, they're a little bit more diversified, have lagged.
Right.
What do you want to do with the banks and the financials into the remainder of the year?
Yeah, we still like the capital markets group. The capital markets, I think M&A still has another leg up here. One of the issues that I think the banks are dealing with, or investors are questioning about the banks, is just as rates go higher, especially at the front end, deposits need to reprice. And what does that do to net interest margins? And so that there's that overhang with the banks. And they just don't have enough. They have some capital market exposure, just not enough compared to some of the other players.
My deposit rate's been going down even though they've not been cutting interest rates. What's that about? Yeah, we'll have a word with them. Chris, it's good to see you. Thank you. Chris Harvey there of CIBC on resisting the urge to rotate. Let's get you an update on news elsewhere this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Republican Senator Mitch McConnell giving an update on his health. The 84-year-old saying in a statement that he suffered a fall in June and contracted pneumonia that required hospital treatment. He's moved from the hospital to a rehab centre, but isn't healthy enough to return to the Senate, he says. Apple is taking OpenAI to court, accusing the startup of stealing trade secrets. The lawsuit accuses a former Apple engineer of downloading confidential files and continuing to access Apple systems after joining OpenAI. Disney's live-action version of its animated hit Moana flopping at the box office. The film grossing an estimated $95 million globally. The original 2016 animated film grossed $643.3 million and became the most watched Disney movie of all time on Disney+. And that is your Bloomberg Brief. John.
Vonnie, thank you. Thank you for the update. So this from the President just moments ago, speaking to an American broadcaster. We're taking over the Strait of Hormuz. Iran has nothing. I'm not sure how to read into those comments this morning, given the strikes we've seen over the weekend and into the start of this week.
The United States has control of the one part of the Strait of Hormuz. It's the part that hugs the Omani coast, and that is where, if you are a vessel, you could potentially get the protection of the United States. But it hasn't meant you are safe because we have seen IRGC attack those vessels. The IRGC and Iran basically control another part of the strait where they want to make sure that you get approval before you decide to traverse the strait. potentially then you're going to become have an issue with the U.S. government.
Crude up by almost 4% this morning. Brent crude just short of 79. WTI through 74. Up next on the programme, the Morning Calls, plus we'll catch up with Steve Pagliuca of Bain Capital on surging sports team valuation as World Cup mania sweeps across the nation.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars, Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
A lot of things are going right. I mean, earnings are exploding to the upside. It doesn't seem to us like there's going to be a big disappointment out there. There may be stock by stock for sure. It's become a stock picker's market. It's a transformative technological change that's driving across the board margins to go higher. We've got margins continuing to rise over the next couple of years.
I'm going to miss Steve. Stephen Orth, the Federated, in his last broadcast conversation before his well-earned retirement. Congratulations to Steve and to his family. Equity futures this morning look like this. Your scores building as follows. Going into the cash open 1 hour and 14 minutes away. We're down by 0.4 on the S&P, down by 1 percentage point on the NASDAQ. SK Hynix in a South Korean trade down by a record 15% plus. That took the Kospi down. That's rippled into Europe and across into US equity futures as well. Into the bond market, 2s, 10s and 30s yields a bit higher into CPI tomorrow morning, up by 2 basis points now, 423 on 2s, close to 460 on 10s. With this move building in crude and not fading, WTI and Brent up by close to 4%. Brent crude closer and closer to 80 once again.
And comments from the President of the United States this morning, talking to the American press, Jonathan, the latest being will probably run the Strait. So it's giving concepts of a plan, not that they're definitely going in and taking over. Remember, there's really 2 paths right now with the Strait of Hormuz. There's one that's U.S. controlled and there's one that's Iranian controlled. Could the U.S. go in a little bit more forcefully with the 5th Fleet and other naval assets and maybe take control? Potentially. But the president came out first a little bit more forceful, saying we will run the Strait, to now probably run the Strait. So we will become the guardian of the Strait. We've heard some of this before, and yet here we are in this stalemate between both these countries fighting over control of that and continuous attacks over the weekend.
That story just won't go away. Crude pushing higher this morning. That's the price action. Let's get to some morning calls. First up, Citi raising its price target on Apple to 365, saying the tech giant should continue gaining market share. Your second call from JP Morgan upgrading American Express to overweight, saying the company offers exposure to the most insulated cohort in consumer finance. That stock is up by 1%. And your third and final call from Bernstein, lifting its price target on Delta to 106, citing growing confidence that the industry's pricing environment is improving. That stock up this morning, or rather down by 0.6%. And that this morning are your morning calls. Let's turn to sports. World Cup fever erupting across the country. More than 50 million people tuning in for the US match against Belgium, making it the most watched football game in the country's history. It comes as valuations for sports teams surge to new records. The world's top clubs more than doubling in value in the last 4 years, with private equity and media deals injecting massive amounts of capital. Steve Pagliuca, Senior Advisory Partner at Bain Capital and co-owner of Atalanta Football Club, joins us now for more. Steve, welcome to the programme, my good friend. It's good to see you. How do we translate this fantastic interest in a 4-year World Cup cycle into a bigger, stickier interest in club football being played around the world all season, every year?
You're seeing that already with the World Cup, but I think fundamentally what's going to have to happen for soccer in the USA to be a top 5, dominant sport is the economic structure is going to have to change. Right now, the payments for players in UK, Italy are probably 5 to 6 times what they make in the United States. So the best talent really is centering on the Premier League, Serie A, and the leagues in Europe. So unless you change the economic structure, you're always going to have lesser players in the United States.
And Steve, one thing I've found as well at the youth level, and it was a surprise to me coming to this country more than a decade ago, is that for the rest of the world, this is a very accessible, almost working-class sport. You don't need money to play football in the rest of the world. What I've found here increasingly, Steve, is that this has become a rich kid's sport. Steve, what can we do about that at the ground level for youth football in this country, in America?
Well, I think we have to look at the whole ground level grassroots system. As you know, Europe, it's very easy to get trained. These clubs can have boys. We have an academy with 452 boys in the Milan area in Bergamo, and it's a very cost free, and everybody can play. So we have to look at the United States system and say, how do we kind of get away from it just being a rich person's sport where you can get the training and get training across the country.
At the same time, Steve, these conversations often descend, I think, into what can the US learn from the rest of the world? I do think the global sport can learn something from the US. The Seattle Seahawks, an evaluation of that franchise, I think speaks to that. Selling for close to $10 billion. For a franchise that outside of this country, I hate to say it, hardly anyone will know what that team does, let alone where it plays. If you say the Seahawks to anyone in, say, Italy, Steve, they don't know what that team does. And yet they have a valuation at a multiple of a football club out of Europe that the whole world recognises. What can Europe and the rest of the world learn from the way sports is run in these countries to make sure that we get full valuations and the kind of franchise values that we see across this country, Steve?
Well, first of all, a big advantage in the USA sports is there's no relegation. So relegation, which is has always been happening in English football and the rest of Europe, really gives you more risks as a club, number one. Number two, the economic structures of the USA sports are better with cost controls. There's a hard cap in the NFL. The NFL is kind of the, I would say, most profitable and best run league out there with a hard cap so that the clubs can generate revenues. So really getting a system over in Europe where there is more financial fair play, cost control, and maybe playing around with the relegation rules could make the values go a lot higher.
Steve, for a lot of Americans, this has been the first introduction to FIFA, really firsthand. Do you think they've done a good job with the World Cup stateside?
Well, you know, if you look at record revenues, I think they're creating, the World Cup has created $13 billion over the cycle, $10 billion right now. And so far the games have had more interest, I think, than any other games in the history of the sport. So I think it's hard to be critical. Obviously, there have been some issues with pricing and crowds, but so far it's gone very well. It's gone very well for America. I know up in Boston, they're now in love with Scotland. I think we ran out of beer in the whole city, which I never thought could happen, but it's been an amazing experience for everybody.
Yes, if you can get a hold of tickets. To Jonathan's point earlier, how expensive soccer is in general in the United States to breach that entry. But I'm talking more about some of the controversies with FIFA. Do you think that's maybe put some Americans off of soccer?
I haven't seen that. I mean, people really are in love with the game, and it's certainly, the controversy makes people talk about it even more. And everybody's really focused on, who's going to win this incredible trophy, being the best country and best soccer team in the world.
Steve, have you got any tickets to the final?
I'm going to the semifinal in Atlanta tomorrow, and then leaving from there and actually going to Milan to introduce Coach Sarri at Atalanta, then coming back for the final.
Very cool.
So it should be an exciting week.
Very, very cool. Always envious of your life, Steve. Always envious, aren't you?
Yeah, I'm Steve, who are you rooting for? Who do you want to win?
Well, I was rooting for Belgium since we have Charles de Ketelaere scored 3 goals in the competition. He plays for Atalanta. But I think I'd like to see England win. Great Britain, they haven't won in such a long time. And I love watching Harry Kane. He's kind of a magician out there.
Steve, can I just say congrats to CDK as well? Because his growth at your club, far better than anything we did with him at AC Milan. And I'll leave that there. Steve, it's good to see you. Best of luck for the new season. Thank you.
It's great to be here.
Steve Pagliuca there of Bain Capital.
Interesting. He thinks it's coming home. Isn't that the phrase?
Yeah, it's coming home.
I lived there for 8 years, and that's all I heard. It's coming home. It's coming home.
That's all I've heard for 30 years since the song came out in 1996, and here we are. It used to be 30 years of hurt, and now it's 60, because the last time we won it was 1966. Can I just say, the complaints that I hear about soccer or football in this country, about the lack of fluidity, the lack of athleticism compared to, say, the speed and strength of something you'd see in American football. I've heard loads of complaints, VAR.
Total garbage.
I'm going to park that. What I think it comes down to is something much more fundamental. As a guy, as a boy, it's the sport you watch with your father. You grow up watching. And then you start to gravitate towards that sport. You play it with your dad, your parent. And then you learn to grow and love the team that they supported. And then it gets passed on from generation to generation to generation. To crack that, in this country, you need to focus aggressively on making sure that this is a game that is played by kids. And unfortunately, as you know, that once you get to a certain age in this country, to play football or soccer, it becomes very, very expensive. That is not true in Europe or anywhere else to the same degree that it is true in this country.
Playing soccer growing up, it was expensive when you started joining all these travel teams. It became a lot more pricier, and then you have to do the indoor leagues in the winter. What you're describing in America is akin to baseball. Little league, very inexpensive. You can start off with t-ball, and everyone has a team. That is what it feels like having lived in Europe, how everyone feels about either their Serie A team or their Premier League.
That's where the focus needs to be, at least in our opinion. Up next on the programme, Lindsay Piegza as Steve Full.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
So equities stand near the lows going into the cash open 1 hour away. We're down by 0.4 on the S&P. You can just see from this picture where the losses are concentrated. It's in tech, it's in the NASDAQ. We're down by more than 1 percentage point. But the issues around tech and SK Hynix, South Korea, importing that volatility. It's not the only story this morning. Yields are pushing higher too across the yield curve going into inflation data tomorrow and testimony from Fed Chair Kevin Warsh. We're up by 2 basis points on twos, up by 3, close to 3 basis points. The further out the curve you go, 10's around 460 so far this morning. Building on this move in crude, up on WTI, higher on Brent. Brent crude up by close to 4%, WTI at 74. And not really words of comfort coming from the president this morning. I'm not sure how to translate this for you. I'll just share the headlines. This from the president speaking to Fox earlier on this morning. We're going to get paid for guarding the Strait. We'll become the guardian of the Strait. We'll probably run the Strait. What does that mean? I've heard it before. I'm not sure how it works in practice.
Yeah, and he just said we just want to be reimbursed for doing all this, for putting our people in danger. Basically saying, I mean, the Strait of Hormuz is an international waterway, but obviously I think potentially protecting it for years has been the U.S. Navy and Fifth Fleet, of course, right? Now we're in a new paradigm. There's been a paradigm seismic shift with the fact that the Iranians have demonstrated they can take control of the Strait of Hormuz. I'm not really sure what the president's getting at here. No one will be reimbursing him unless maybe he struck up some deal with NATO. Don't think that's happening. But the fact of the matter is, it would be beneficial to this White House and everyone else if potentially the Fifth Fleet is able to get control of the Strait of Hormuz.
Those comments this morning, not reducing prices, that's for sure, on both WTI and on Brent. 60 minutes out from the opening bell. Let's get you some morning movers. Yahara has more. Hey, Yahara.
Hi, John. After its hot debut on Friday, SK Hynix shares ADRs are giving up some of those gains, down nearly 10% in the pre-market, and that coming after some major weakness overnight in South Korea, where its shares suffered a record drop, down 15%, as investors took profits after that U.S. listing on Friday. But overall, as you mentioned, it is a risk-off mood in the market, and that is weighing on the biggest winners, the memory names. So we are seeing Micron and SanDisk falling in the pre-market and overshadowing what would otherwise normally be viewed as good news for this sector. TSMC came out with preliminary results. Its full results are out on Thursday, and its sales came in strong, reinforcing this idea that AI demand remains strong, but investors looking past that this morning. And we end on some bank M&A. We are seeing First Hawaiian shares falling after announcing it's buying Trico Bank shares. This company, which is rising in an all-stock deal. The combined company will have about $34 billion in assets, making it the 6th largest bank headquartered in the western U.S. It's a reminder that we have a lot of regional banks scattered all across the country, so this is an area ripe for M&A, and it comes just ahead of bank earnings bonanza tomorrow. John?
Yahara, thank you. Thank you for the update. The bank earnings bonanza, 5 banks kicking off earnings season on Wall Street in one single morning. tomorrow morning. Earnings season just around the corner. We'll be talking about earnings in about 10 minutes' time. Don't miss it. Bramo catching up with Ed Bastia, the Delta Airlines CEO, in about 10 minutes' time. A blockbuster week ahead for the US economy as well. 2 days of inflation data alongside 2 days of testimony on Capitol Hill from Fed Chair Kevin Warsh. Mike McKee has your preview. Good morning, Mike.
Good morning, John. I am not jealous of you and Anne-Marie trying to juggle all of the earnings along with Kevin Warsh and the inflation numbers. Remember when we talked about inflation could go up, either go down? Tomorrow we get CPI, and CPI forecast to go down on a month-over-month basis for the first time in 6 years because gasoline prices fell during the month of June. And then on Wednesday, we get PPI, which should give us some hints of price pressures going forward, although it too is expected to drop a little bit. We also get on Wednesday the beige book, and we'll see what people around the country are telling the Fed about prices and where we're going. Thursday, retail sales. How much influenced by inflation? How much influenced by people's concerns about the economy and consumer confidence, which is really lousy? Also, Philly Fed certainly has a price component to it. And then Friday, import prices round out the week of inflation, along with housing starts. And we do have this big week of Fed speak. We will start with Chris Waller today, along with Mickey Bowman. She's already out on the wires talking about regulation. But Waller, who is going to be the counterpoint probably to Kevin Warsh going forward on the Fed, speaking at noon today. We'll see what he has to say about the economy. Tomorrow, Kevin Warsh, 90 minutes after that CPI report comes out. So you know they're going to be talking about prices, along with Barr, Goolsbee, Cook, and Bowman. Wednesday, Kevin Warsh is back up before the Senate. And we've got a whole bunch of others speaking on Thursday. We basically have 11 of the 19 members speaking this week, and then Saturday the Fed blackout begins. By that time, maybe we'll have some idea of what they're thinking about for the July meeting, although if Kevin Warsh has his way, we won't. But we will have a very busy day tomorrow for you guys.
Mike, let's look at those names together. Let's go through them. Can you help me answer this? How big is the gap between the group of individuals that want to keep rates unchanged and the group of individuals more inclined to hike? And can this move in energy, to what extent can it close the gap between the two?
Well, I don't think it's going to close the gap, John, because now gasoline prices are going to start going up again. And Javier Blas has a very good column out on the Bloomberg today about how it's the refineries that are causing us the problems at the moment. Now, crude oil going up again, but refinery crack spreads are very wide, and that is keeping gasoline prices high and probably going to send them up again. There's a division at the Fed, but it isn't that wide between those who would like to keep rates where they are and those who think we might need an increase. If inflation keeps going up or starts to resume going up after this month, then you'll see more people in the raising camp. It's more the people like Mickey Bowman who have wanted to cut rates in the past, and Kevin Warsh, who came in with that sort of cut rates mandate, who you might see as farther apart on the spectrum, but nothing that the cutting group can do right now with inflation where it is.
Mike, thank you, buddy. Appreciate it. Looking forward to your coverage as well. A busy week for Mike. CPI tomorrow morning, PPI after that. Lots of Fed speak in between. Lindsay Pieter of Stifel writing the following. There is a clear divide among policymakers, those that remain increasingly focused on tackling now dangerously high inflation and those that remain optimistic price pressures will cool. Rates are likely to remain on hold, at least for some time longer. Lindsay joins us now for more. Lindsay, welcome to the programme. I want to build on a question I asked Mike. You think rates will remain on hold for some time, but would a rebound in energy change that story for you or anyone on the committee?
Well, I do think it's going to be difficult to completely shift some of those more dovish-leaning members into the hawkish camp, even if we do see a resurgence in energy prices and, by extension, then some months of further price appreciation in terms of the headline and core CPI, or more importantly, the PCE. Right now, that camp is very much in the wait-and-see position. They want several months of data, if not more, convincing them that inflation is going to be a long long-standing issue to tackle. So right now, there still is a good amount of optimism that while acknowledging inflation is elevated and above that 2% target, that eventually price pressures will cool, potentially into the end of the year, negating the need for a reversal in course. Now, I don't think there is a strong argument right now among Fed officials for cutting rates. But again, there is that very firm position among those more dovish-leaning members to maintain the current pace of policy until we have a better sense of the underlying momentum of the economy.
Well, this is the momentum in the crude market right now. Brent higher by more than 4%. Brent crude to 79, WTI for 74. Maybe the Fed chair chooses to bide his time here. Maybe he waits to see what the outcome is of these task forces. Lindsay, do you see the others coming along for the ride? Is there enough individuals on this committee right now that share the patience that he might have?
I think right now the committee is very much divided. As I mentioned, I do think there is this cohort of Fed officials that are increasingly concerned about now this dangerously elevated level of inflation. We're talking near double the Fed's intended target. But there's also those Fed officials that are able to look through this and say this could be a temporary, or bringing back a favorite word, transitory impact as a result of not only the lingering impact of tariffs, but of course the international conflict that continues to wreak havoc and uncertainty on the marketplace. So I do think it's going to be very difficult to overwhelmingly convince those that are sitting in the middle of the road. And of course, the more that we see this conflict, just like in politics, this is likely to beget gridlock, keeping policy steady for longer, despite the fact that I would like to see them raise rates, despite the fact that I think looking at the current data, this does more than justify a reversal in course. Again, that divide among policymakers is likely to leave us on this steady course, at least for the near term.
Lindsay, let's get into that. You would like them to raise interest rates. Let's sit on that for a moment. Why would you like them to hike? What do you see that the dovish members of the Fed don't?
I think the Fed made a significant policy mistake early on, stopping short of a sufficiently restrictive level the first time around. Remember, inflation back then peaked at 5.6%. And historically, the Fed needs to raise rates, not just above inflation, but often notably above inflation. So stopping at 5.5% really left us with this lingering ingrained level of inflation for years, never getting us back to that point of price stability. Now, the second time around, we see this additional layer of price pressures, and I think the Fed should act with even more force in order to reinstate that level back to 2%, if in fact they do intend to get us back to that price stability level at some point.
When, Lindsay, when do you think they should act?
Oh, I think they should have acted already. In fact, I continue to question the 175 basis points of cuts going into the end of last year, with us still well above that 2% target. Now, there was a lot of optimism that disinflation was well set and we would move towards that level, but I would have liked to have seen the Fed wait until we actually reestablished price stability. So now on the flip side, I think the Fed should have acted and at this point needs to act to a higher interest rate environment in order to quell these dangerously elevated levels of prices and get us back to that price stability.
Above target for 5 years, nothing stable about it. Lindsay, thank you. Appreciate it. Lindsay Piegza there of Stifel thinks this Fed will remain on hold, but ultimately making the argument that they should be hiking interest rates. Let's give you an update on news worldwide this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. The US and Iran exchanging fresh strikes over the weekend and issuing conflicting reports on the status of the Strait of Hormuz. Tehran saying the strait is closed, quote, until further notice. US Central Command saying it's open to all vessels and the military is prepared to ensure freedom of navigation. A group of U.S. states led by California is preparing to sue to block Paramount's takeover of Warner Brothers. According to the New York Times, a draft complaint says the deal would stifle competition in the market for blockbuster movies. The World Cup semi-finals are set. England moving on after defeating Norway 2-1. They'll take on the defending champions Argentina, who once again survived, beating Switzerland by 2 goals. Kicking off the Final Four tomorrow will be a European blockbuster. France is taking on Spain. And that is your Bloomberg Brief, John.
Thank you. Thank you very much. Up next, setting you up for the day ahead and a week ahead, plus Lisa sitting down with the Delta Airlines CEO, Ed Bastian, as the carrier affirms its guidance despite record quarterly fuel costs.
Hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in Season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is, like, very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch Season 2 on all these lovely channels.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Capital markets are wide open. We had 7 $25 billion offerings this year. That's telling you that there's plenty of capital around. If I'm Kevin Warsh, what I'm thinking about is if I need to slow things down, I have to start attacking the balance sheet. All the liquidity that you're seeing coming out of the credit markets, that's where there's a lot of inflation.
Record IPO, record raise for a foreign company tapping US equity capital markets. Chris Harvey of CIBC. There's been a lot of capital raised in both equity and debt over the last few months. Equity futures this morning negative by 0.4. As we get closer to the opening bell, we're down by 1 full percentage point and change on the Nasdaq 100. Tomorrow morning, packed full of earnings from the banks. In the last few days, we've heard from the airlines. Investors gearing up for the major airlines to report after Delta reaffirmed its full-year profit guidance. The company seeing strong demand despite higher fuel prices. Lisa joins us now from Atlanta with a special guest. Hey, Bramo.
Hey, how's it going, John? I am here in Atlanta at the headquarters of Delta, and I'm here with Ed Bastian, the Chief Executive Officer of Delta, after reporting earnings, overcoming what was a record bill for fuel and still continuing to maintain full-year forecast. You talk about the difficulties of this quarter as well as the resilience of the U.S. consumer. How much momentum is there under the U.S. consumer?
Well, first of all, thank you for coming down. You know, there's not just one consumer in our marketplace, but broadly speaking, I think the consumer is doing well. Certainly the higher end consumer is doing very, very well. That's our consumer base. When you look at what's happening in the market, when you see what's happening in real estate, opportunities for that consumer to invest in themselves, invest in the experience economy. They may not be buying things as much, but they're investing in things they care about for themselves, their families, their friends in the future, and that's travel.
You also talk about the difficulty, and we have seen oil prices inflect a bit higher. How much room do you have to maneuver if this is the new normal, or potentially $80 on Brent crude is the new normal, which we're just up against?
I think we'll do just fine. You know, we look at our business model. Our business model is geared towards a higher end consumer, so our consumer has the ability to sustain this level. In fact, we saw it in the quarter. We made at 9% operating margin with fuel prices much higher than where they are in the existing, the existing landscape. So I think oil is going to stay sticky for longer. I'm not sure it's going to be in crude, though. I think the refined costs, the cracked spreads are where you're going to find it's going to take a lot longer for that to come down. All that's going to mean is those brands that bring value to consumers in terms of experience, bring opportunity for people to go and explore and give them adventure as their means for enjoying life and getting away. And our international travel season is looking very, very healthy. Businesses, international, as I just said, American Express, our loyalty programs, our cargo business, we have so many different lines of business, including here in the U.S., our domestic travel. It's all doing very, very well, and I don't see fuel prices deterring that.
You talk about how this has been a sea change in terms of the ability for airlines to catch up with the pace of inflation. Not completely, but enough. You saw a big jump up in airline prices over the quarter. How much further does it have to go to catch up and potentially offset stickier oil prices?
If you look at post-COVID, airfares are about 10 to 15% below where inflation has been. So I think there's still significant room.
So if oil prices go further, you think that airfare prices could go higher without causing just demand destruction?
I think so. We just saw it in the quarter.
Is it going to come across the board or more particularly with the premium cabin?
It's going to be in the premium cabins. When we look at the lower end of the market, the low fare carriers, they're still losing a lot of money. And so while Delta, which sits at the top of the food chain, did very well, we represented 60% of the overall profits for the industry, our estimate in the quarter, despite only having 20% share. It means the other 80% still has a lot of work to do to get caught up, and it's going to happen by being more disciplined in terms of the strategies they deploy, making certain that they can only put out capacity that is profitable, that will return a margin to them.
Do you think that there's going to be more consolidation? Have you been surprised that there hasn't been more during this period of higher prices?
No, I'm not surprised. There's been some in the market, on the lower end. There's been some. Now, I think we're going to be fine. We're going to get through this period of time. Now, if you said that this is going to $4 oil is going to be sustainable for a very long period of time, of course there will be, but not in this marketplace. I don't see oil prices returning back to the peaks we saw a few months ago.
Going forward, you talk about how the premium really is where the revenue driver is, and you recently had the basic business rollout. What prompted a sort of paring back or a more specified product offering at a slightly cheaper price point, but still with the flatbeds?
We've been talking about this for a while. As an airline, we're good about transporting people. We're not necessarily great at merchandising and retail strategies, and we kind of have blunt force instruments. You had your main cabin, you had first class, and not a lot in between. Consumers want different value decisions to take. And if you can give people the opportunity to sit in first class, they may not want different elements. They may not need to go in the lounge. They may not care as much about certain aspects of what the fully bundled first class fare is. Maybe they just care about the seat. And that's actually what consumers care more about than anything, is the seat. All the other things are nice, but it's the seat and the comfort of the seat that's most important. We can find different ways to bring greater value, to reduce fares at some times, or increase fares in terms of people say, do you want to have the elite services drive you to the club? Do you want extra frequent flyer miles? We can become a much better merchandiser because we're a consumer brand. I think that's been the biggest change we've seen at Delta over the last decade. We're now not just a consumer brand, we're a loved consumer brand, and we can pull this stuff off.
You talk about how there is flexibility to raise prices at the premium. A lot of people are getting in because it is lucrative. We see, for example, even Southwest trying to get into the premium, or JetBlue. Of course, United has made pretty significant inroads. How competitive has this area gotten?
I think that's the strategy. We laid it out. We started this path 15 years ago, and it's not easy. It's easy to say you're going to be it, but it's harder to do. It requires having great reliability, creating a great experience, building trust with your consumers, having the technology, having the corporate market share. Delta's the #1 in terms of corporate share in the U.S., and we've been the #1 business traveler for the last 15 years in terms of all the surveys. So, those are moats that are going to hard, but there's room for more. I mean, we're only 20% of the overall share in the market, so there's certainly opportunities for more, but it's much easier said than done.
Is there the beginning of pushback on the economy side of things in terms of pricing or just in general? As capacity has come in, as flights have gotten reduced, have you started to see some flyer fatigue in the main cabin?
We had good results in the main cabin. In fact, to your point, we reduced some of the supply in main cabin in the current quarter, given the fact that we were concerned with oil prices, what that meant to fares. But our unit revenue growth in the main cabin was 10% year over year, so it looked pretty healthy.
Do you think that you're going to continue to constrain capacity?
We're going to be disciplined. We've got a strategy, and airlines historically have been, accused of, when times are good, they grow fast, only to find out then they bring too much supply, and all of a sudden then fares go down and the airlines are losing money, and it's the up and down, the roller coaster. We've been on a strategy path to kind of only put in the marketplace capacity and share that we know is going to be profitable and that consumers are going to value. And so we don't follow the day-to-day. We around the edges, maybe one to 2 points here, 1 to 2 points there, but we're very disciplined. And if you look at our history, you'll see Delta will lead the way.
One issue has been pilots going forward, and I just wonder, from your perspective, do you think you're at a good staffing level currently, or do you still plan to expect expansion of the pilot staff?
We're at a good level. We've been hiring pilots this year. We had a number of changes in the contract that created some difficulties with respect to recovering from interrupted operations as quickly as we'd like to, making progress on that, and we'll continue to make progress.
Ed Bastian, thank you so much for being with us this morning. Ed Bastian, the Chief Executive Officer of Delta, and I do happen to be down here at the same time that England versus Argentina is expected on Wednesday, so maybe I'll just have to extend my trip. John?
Why not, Bramo? I mean, you did Brazil. Might as well stay there and watch the World Cup final, semi-final, then come back up here and watch the final at the weekend.
YOLO. Honestly, you're there?
Bramo's just living it, right?
I mean, I got lucky. I was in Houston
take the days off, Lisa. You enjoy yourself.
Game 5. I think if you're somewhere it's meant to be, you just go.
You think Ed Bastian's got the tickets? You think he's got the in?
Definitely.
Without a doubt.
Yeah, I think so.
Without a doubt. You're not going to see Bramo tomorrow. I hope we see Bramo tomorrow, because coming up tomorrow, we've got this on deck. 5 banks reporting tomorrow morning, followed by CPI in America, followed by testimony from Fed Chair Kevin Warsh shortly after that. What a Tuesday morning we have for you just around the corner. Before we get there, look out for this. Chris Waller, of the Federal Reserve, speaking at the New York Association of Business Economics a little bit later this morning. Look out for that at 12:30 Eastern Time. From New York City this morning, good morning to you all. Thank you very much for choosing Bloomberg TV. This was Bloomberg Surveillance.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years when I first became a congressman. It takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
The biggest single-day sell-off for SK Hynix ever. 30 minutes until the start of cash equity trading. I'm Danny Berger.
And I'm Bonnie Quinn. Bloomberg Open Interest starts right now.
Coming up on today's show, more tech turbulence. SK Hynix leads a chip sell-off after its Wall Street debut.
And investors face a packed week of catalysts with big bank earnings and key inflation data in focus.
Plus, fresh strikes drive up oil prices as President Trump vows to take over the Strait of Hormuz.
Let's get some individual stocks to watch. SK Hynix has to be the one we're all watching today after Friday's historic listing where the ADRs jumped 13%. Well, the stock fell the most on record in South Korea today amid growing investor concerns that the rally has become overstretched, trading at a 27% discount to those ADRs now, Danny.
You mean to tell me a record listing of an ADR that literally everybody in the world knew about wasn't a bullish event for this market? Who would have thought? The AI trade, though, it's completely under pressure today. Had a second quarter earnings results starting this week. We did get some sales numbers from TSMC. They were good, a 36% quarterly jump in sales. Demand is strong, but traders say there will be no mercy for earnings misses this quarter. NVIDIA and Micron, those shares down at least 5% for Micron. Maybe it's the story of Samsung. Expectations are high, so even if you beat, you're going to sell off, Bonnie.
Well, we've seen it before, Danny. We'll see it again. Let's dig into the sell-off now with Bloomberg Tech's Ed Ludlow. So, Ed, what happened?
Yeah, the why on the Korean session is very difficult to answer. There are some local reports about maybe SK in the near term presenting numbers that aren't as rosy as the market had assumed. Certainly in the Korean session, people are asking the questions that maybe we did ask on Friday during the start of trade of those ADRs, but essentially whether this was the correction we were due in some names that had terrific run-ups, right? You know, SK is still up 180% year-to-date in Korea. It is down 30% from its prior peak, but it's a stock that on a 12-month basis was up almost 1,400%. You know, there's been a lot of focus on how core they are to the memory story, but lots of people in the markets, Vonnie, and I think we did go over this at the end of last week, right? Saying that a pullback was not just inevitable at this stage, but it's something that's quite healthy.
And maybe it has larger consequences, Ed, given your interview with SK Hynix and the desire maybe to bring more shares to the United States. I just wonder how much of this AI trade, not necessarily the trade, but the spend by these hyperscalers really hinges on their ability to see stocks continue to rally that allow them this cheaper cost of capital.
Yeah, it's why the conversation's already moving to this earnings season, right? Because capital expenditures are one data point. What you said about the future, you know, it was the same with SpaceX, to be fair. But when we were in at the NASDAQ Friday, the question is, when does SK think about, or how regularly does SK come back to the market, sell ADRs? And, you know, ironically, the point that Chairman Che made in that interview was, well, not until we see price stability in the ADRs and we see some return. So, like, clearly in the first instance, you know, the fact that the ADRs are down almost 10% and following the Korean session is logical because of how they're structured. But yeah, they might be waiting a little while.
Yeah, we certainly are not there yet. Ed, thank you so much. Again, a really fantastic interview on Friday. Bloomberg Tech's Ed Ludlow. Turn into Bloomberg Tech in about 2 hours' time. Let's turn to Wall Street earnings, though. 5 of the 6 largest U.S. banks are set to report tomorrow, offering investors an important read on lending in the broader economy. Let's get to Bloomberg Intelligence Senior Bank Analyst Herman Chan.
Herman, why they got to do this to us? That's way too much. 5 on one day.
It is a lot, right? And then 2 of the earnings calls are at the same time. So we've got our hands full tomorrow for sure.
We definitely do. Do you expect it, though, to be a broadly constructive day, let's say?
I would say so. There's really high expectations. We just talked about tech expectations going forward. The bank stocks are up about over 17% in the second quarter, and analysts are estimating earnings up 20% year over year. That's really led by trading, investment banking, and then lending activity as well. So really high expectations. We'll see if they meet that bar.
If we see a disappointment, where is it going to come from, Herman?
Yeah, if there is going to be a disappointment, probably on the net interest margin side, given the fact that we have rates steady on the short-term side for the foreseeable future until potential rate hikes later in the back half of the year. And then there's a lot of loan demand. So in order to fund the loan demand, you might have higher funding costs, particularly on the deposit side. So that's something that we're looking for throughout the banks that are reporting next week.
Does credit quality largely look healthy? Because we have seen some consumer reports, from thinking of Pepsi last week, that did start to show some consumer stress creeping in. Do you think any of that will show up among these banks?
I think that's going to be a key question on the earnings call from the analysts, where analysts will probe if you're seeing a pullback in spending on the consumer side, given the fact that we've seen higher energy costs. And what does that mean for consumers that are paying back their credit cards, paying back their mortgages? How is credit quality holding up? And are there any early indicators in terms of delinquencies and the like that really point to a deterioration in the economy?
What will we hear from the regionals that'll differ from the big bulge bracket banks?
That's right. So the regionals, a lot of the same factors that the big banks are seeing are also happening on the regionals. There's a really strong resurgence in lending, particularly in commercial lending. Your bread and butter small businesses, small and then medium-sized corporations are really driving growth, and they're more comfortable with the backdrop where last year there was concerns about tariffs, then the geopolitical concerns. A lot of the sentiment seems to indicate that these borrowers are okay with where we are today and are taking a bit more risk in building capex and building plants, equipment, et cetera. So that's helpful for the regional bank space.
All right, Herman Chan, thank you so much. No doubt we'll be speaking with you again several times this week. That's Herman Chan of Bloomberg Intelligence. Brent moving higher after the US and Iran exchanged fresh strikes overnight. President Trump telling Fox News this morning that the US will take over the Strait of Hormuz. Joining us now is Bloomberg Washington correspondent Tyler Kendall. How exactly is the US planning on doing this, Tyler?
Well, Vonnie, we didn't really get much details from President Trump, though it does seem to indicate longer-term U.S. involvement when it comes to the strait, since at this point the standoff over the waterway only really appears to be deepening as we get conflicting information from both sides on the exact status when it comes to what's happening with traffic in the Strait of Hormuz. Iranian state media earlier today reiterated a threat from the IRGC, which said that they are going to close the strait unless the U.S., quote, ends interference, as we know that the country has been dismayed by the fact that more vessels are using that U.S. coordinated route that hugs the coast of Oman. Instead of taking that path that would get them closer to the Iranian coast. There are a lot of different factors to watch here because it is very clear that this White House's patience has worn thin when it comes to the status of the strait, as over the weekend, CENTCOM confirmed that the U.S. military conducted 3 waves of strikes ultimately aimed at degrading Iran's capabilities to interfere and target commercial shipping. But Danny and Bonnie, we're really seeing those ramifications already take hold of this latest wave of escalation in just the past few days, because basically all of that traffic, observable traffic, has come to a halt. According to satellite imagery, though, our analysts at Bloomberg Intelligence analyzed the data, and they say for the last 3 days, the so-called dark crossings, when ships go through with their transponders off, those are now exceeding those observable crossings as commercial shippers show that they are weary of what has been this wave of attacks.
Peter Scheer of Academy this morning basically saying that it appears that Washington is approaching this with a priority of reestablishing deterrence, that is, showing their military might to deter Iran from trying to control the Strait of Hormuz or preventing ships from going through. Tyler, does it essentially seem that any hopes for continued talks are dead at this point?
Well, according to the White House, they're not. The president still says that he will let his negotiators move forward, but he doesn't necessarily think that it's going to actually yield some sort of tangible result. For months, the White House has said that it has been prioritizing a diplomatic solution to the conflict, but it has become very clear that Iran isn't willing to give up its leverage when it comes to the Strait of Hormuz, even without the carrot of that sanction waiver that we saw the U.S. just remove last week amid this escalation. It appears evident that Iran is saying that its control over the strait would take precedent over that potential financial benefit that the country would get from selling its crude to market. Definitely something to watch here, but the U.S. military is making it very clear that more could be to come. We heard a threat from CENTCOM saying that if Iran does not issue this statement saying that the Strait of Hormuz is open, there could be additional attacks after more than 140 targets were hit over the weekend, according to the U.S. military. But Danny and Bonnie, we saw Iran take the opposite tact. In fact, it hit one commercial LNG tanker over the weekend and instead said that the strait is going to be closed unless the U.S. cedes to its demands.
And price of oil higher by 3.5%. Tyler, thank you so much. Bloomberg's Tyler Kendall in Washington, D.C. That's the latest on oil markets. A check on broader markets being dragged down by semiconductors after SK Hynix in the Korean session logging its biggest one-day drop on record. At one trading day after cross-listing in these United States, the Nasdaq leads losses down by more than 1% as 10-year yields creep ever higher. We're higher by about 1 basis point, 4.57, with 30-year yields back above 5%. Bonnie.
Well, let's get a look at some other movers on our radar, Danny. Bloom Energy down as much as 13%, although it's well off its lows now. This after Hunter Brook Capital disclosed it is shorting the stock. Bloom Energy told Bloomberg it's reviewing the report and will, quote, correct the record.
Spotify, meanwhile, upgraded at Jefferies ahead of second quarter earnings. Analysts say that they will likely beat estimates as its AI tools start to show improvement.
Shopify up almost 3% there. And a check on the travel sector as oil prices climb, as you can see. Not looking too good for the airlines, although we're really only down about 1% apiece. Same for the cruise liners.
Coming up on the show, it's a huge week for economic data and Fed speak. Kevin Warsh heads to Capitol Hill. We'll talk through the details with Michael McKee next. This is Open Interest.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Bersetchi. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Western countries, all of them are cutting funding to Africa. And some of these programs were supported by funding coming from Western countries, like for human resources, for testing, for transportation of samples. And suddenly, African countries have to think how to fund money and to cover this gap. But it takes some time. And I think the combination of all of these factors are fueling this mistrust that we see at community level. We value the support we got and we are still getting from the US. And we think that if we continue to work together, and there is no reason for the US not to work with Africa CDC, Africa CDC is the leader in terms of public health in Africa.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Now to high interest to look at what's making headlines around the world. South Carolina is facing a scramble to replace Senator Lindsey Graham after his sudden death over the weekend. Governor Henry McMaster will appoint an interim senator, while a special Republican primary could shake up the race ahead of November. The vacancy temporarily narrows the GOP's Senate majority as both parties watch that seat closely. Meta is dramatically expanding its Louisiana AI data center, boosting the project's costs to over $250 billion. The campus will deliver at least 5 gigawatts of computing power and support 1,000 jobs. The move also underscores Mark Zuckerberg's massive AI infrastructure push as Meta races towards superintelligence. And Fed Chair Kevin Warsh faces Congress this week as investors press for clarity on how he'll respond to inflation, jobs and growth. Warsh has rejected signaling future rate moves, but critics say he's also failing to explain the Fed's reaction function, leaving markets looking to other officials for guidance. Danny.
It's going to be a busy week because alongside Warsh's Capitol Hill testimony, we're also going to maybe get a clear picture on this economy. We'll have CPI and retail sales and PPI this week, along a lot of bank earnings. Let's bring in Bloomberg International Economics and Policy correspondent Michael McKee. Mike, let's just start with the data. CPI, PPI, what are we expecting?
Well, you remember the old days when we just talk about inflation, because it could go either way,
sure.
Not inflation or deflation. We might get that this week because CPI is expected on a month-over-month basis to drop for the first time in 6 years, the first month-over-month drop in 6 years. And that's because energy prices went down over the month with the so-called ceasefire that is no longer in place. PPI on Wednesday, and that's going to give us some sort of clue as to pipeline inflation pressures also expected to go down on a month-over-month basis. But the real question is what's happening with services. That's what the Fed's going to be taking a look at. We'll get some kind of picture with that with the beige book on Wednesday as well. And Thursday, did you guys go shopping? I noticed you and Danny have, you and Tyler have the same jacket. Maybe you contributed to retail sales. That's something to watch as well. And then, of course, Friday we wind up the week of prices with import prices. But it is CPI that's going to matter. CPI and interest rates and what we have seen with the rise in the consumer price index. You can see it crossed over wages there. The yellow line is the December market for Fed rate increase. And right now we're at a little more than 1.5. So that's gone up a little bit in the past few days, and depending on what we get the next 2 days.
Just to set the record straight, Tyler and I did not shop at the same place for tech. It wasn't coincidence, but I'm expecting you to add to retail sales and match us next time.
Yes, I will get a green stick.
The semi-annual testimony doesn't usually tend to move markets, but this one has the potential to, Michael. What kind of question might we really want to hear from Kevin Warsh on?
Well, you were just mentioning the idea that the market wants to know how they're at least thinking about how they're going to react to higher prices if they get that, because he doesn't want to give forward guidance. We've got 11 Fed speakers this week, including Kevin Warsh, and that doesn't count duplicates. They're all going to be offering their opinions on this various stuff. And today we start with Chris Waller. So while the focus is on Kevin Warsh, and he's not going to give guidance, we may get guidance from the others or some of the others. What you're probably going to get out of Kevin Warsh is maybe a little bit about how important it is to bring prices down. And also, I bet you're going to hear the words, there's a task force for that.
Oh, I'm sure you will. But that's an interesting point. That's what I wanted to ask you about. With Waller today, I wonder if we're just going to be looking to him and other FOMC members to really divine what the reaction function of this Federal Reserve is.
I suspect that Waller's going to be the counterpoint to Kevin Warsh going forward, since he has the sort of most the deepest economic chops, and since he's been right about several important turning points in the past, people will look to him for guidance on how the rest of the committee might be thinking, until and unless Kevin Warsh gives us more of his own views, which at this point he doesn't want to do. So Waller is someone to watch going forward. I'd say Jay Powell but he doesn't want to talk, so we probably won't hear from him.
He is not going to talk. Also, the difference now between now and the FOMC is that there is actually a task force for that. There wasn't at the time. There was no personnel. Michael McKee, thank you so much. Coming up, Citi's Stuart Kaiser talks tech volatility and the high bar for earnings this quarter. Also, what he's watching from the Federal Reserve. This is Bloomberg Open Interest.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need,
there's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Minutes ago until the start of your cash equity trade. We're being dragged down by chip stocks this morning, down more than 1% for the NASDAQ after SK Hynix booked its largest decline ever in South Korea. Brent crude, that's up 3%. As Iran says the Strait of Hormuz is closed, the U.S. says it's not, that they're going to take control of it, and the dollar unchanged this morning. Let's bring in Citi head of U.S. equity trading strategy, Stuart Kaiser. Stu, great to see you this morning. And look, already we had seen some previous bleed over from the Korean session. Like, chip makers have a bad day, and the U.S. does poorly. I wonder if that relationship gets even more exacerbated now that we have this big listing in the form of SK Hynix ADRs in the U.S.
It's going to be interesting because what the ADR does, it actually provides you U.S. hours liquidity and access to these stocks in the way you have it in the past. And for that reason, you have a huge premium. I mean, the Hynix shares probably traded about a 25% premium in the U.S. relative to Korea. So, yeah, it does kind of create a little bit more reliance, but to some degree, it gives you sort of U.S. hours liquidity in a way that you haven't in the past. And hopefully more liquidity means more price discovery, and these things kind of calm down after a few days.
Yeah, I mean, the shares were down 15% in Korea. The ADRs are only down 8.5% in the pre-market, right? But it does speak to this idea of contagion, right? So Korea never used to affect the U.S. market, not very often anyway. Suddenly it seems to be. Is that just because of the two chip makers? It's the global chip trade?
Yeah, it's the global chip trade. I would even broaden it out. It's the global AI bottlenecks trade. You know, it's just massive amount of CapEx spending coming from the hyperscalers and Mag 7, and people are following that spending down the supply chain, and they're ending up in a lot of these memory stocks in Korea. And, you know, you've also added leverage to a lot of these trades via levered ETFs and other approaches. So, yeah, I think
that theme has become globally interconnected in a way that it hasn't been in the past. And to your point, half of the Korean index is 2 stocks. So, that's the, epicenter of that risk potentially.
Given all the leverage and given just the huge amount of ownership, household and otherwise, to these chip stocks, is what we've created is just chips becoming a high beta trade. Today, for example, there's no clear reason to sell off, maybe after the euphoria of getting this listing of SK Hynix, but we do have a little bit of risk off because of what's happening in the Middle East. And I wonder if chip makers become just that, just high beta now.
Yeah, I mean, they definitely are. It's a tricky one with this whole AI trade because it's not just the chip makers. Our quote-unquote AI basket is the equivalent of 60% of S&P market cap. It's over 100 stocks. So I would argue the concentration right now is in the CapEx spending side of things. It's 6 companies in the U.S. that'll spend more than $1 trillion on CapEx next year. That is a very concentrated spend, but that spend then gets it's like trickle-down economics. It kind of spreads throughout the market. So right now, the chip makers and the memory stocks are sort of the flavor of the day, but people are kind of hopscotching around. But again, I think if you're looking at where is the concentration, it's actually more in the spending than it is in the share price performance. I mean, you have the S&P up double digits year to date. The Mag 7 are about flat on a year-to-date basis. And what does that do? That is they are the spenders, and that spending is then translating through to earnings and price performance of other stocks.
Stuart, you had been very hot on the broadening trade, right? The, I guess, rotation trade. Are you still as convinced that it's going to continue on for the rest of this year?
The Mag 7 sort of AI theme?
No, the rotation out of some of that.
It's interesting. Yes, you are getting some rotation out of Mag 7, but it's staying within the tech complex, right? So it's kind of like a mini rotation or a half rotation. If you look at what's not owned in the market, it's things like software, it's things like healthcare equipment, it's the non-AI part of the industrials trade. It's a little bit of financials. So, what you have to ask yourself if you're an investor is, I'd like to rotate, but then I give you the list of, okay, this is what you have to buy. And it's like, maybe not quite yet. So I think what we've seen, to my point earlier, is a broadening out of the AI trade, but the rotation has kind of been limited still, broadly within that space. What would get you out of that trade? There's a good way to get out of that and a bad way to get out of that, I think. The good way is the market keeps rallying and it just drags those laggards higher. The bad way would be you get a broad-based de-risking and the favorite stocks get sold. We're obviously hoping for the first, not the second outcome in that case.
Can I just ask, not to split hairs, but is it even fair to call what's happening in tech a rotation right now? Because it feels like this back and forth between whether the chip makers or Mag 7 are having a good day. It doesn't really seem to be a clear kind of consensus or winner emerging at this moment.
Yeah, look, I think the rotation trade within tech would almost necessarily have to be selling semis to buy software. And we've seen that for a day or two. We've not seen it sustainably. And I think what you're describing, frankly, is the AI trade has become much more fluid and dynamic, and people will hopscotch around. Oh, Mag 7, no DRAM, no memory, no, I'm going to analog semi, but it's all within sort of the same pool of stocks. So I think that has definitely happened. What we have not seen is people saying, oh, no, I'm just going to get out of semis and go into software, other than a day or two. It'll happen for a day or two really quickly, and then that'll sort of like dissipate pretty quickly as well.
All right, Stuart, you're going to stick with us. We have to discuss earnings, too, with yesterday unofficially kicking things off. We are just moments away from your opening bell as stocks fall 1/3 of 1% for the S&P 500, falling 2 consecutive weeks of gains. After this commercial break, your opening bell.
As an exchange, what can you do to make it more attractive to be a
publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but it is going to be a platform that runs in parallel to our more traditional exchanges.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Just seconds until we begin your trading day. You're watching Bloomberg Open Interest. I'm Danny Berger. 2 consecutive weeks of gains. We're certainly starting on the back foot when it comes to Monday's trade. NASDAQ, that's down more than 1% in your futures trade. SK Hynix having a really tough go of it in the Korean trade after the cross listing on Friday. S&P hanging tight, trading down by 0.3%, while the Dow Jones is little change. We have Wisdom Tree. They make a lot of ETFs. 2020 Vision, 20 years. I'm going to guess it's their 20th year anniversary, ringing the bell at the New York Stock Exchange. And meanwhile, we have Pegasus down at the NASDAQ. I think they do something AI related because everybody does, it seems, these days. So that's what's happening down at the NASDAQ. Meanwhile, SK Hynix, let me show you what the ADRs are doing this morning, because again, we had a historic tumble down in Korea. We're just talking to Stuart Kaiser about this, the kind of high beta nature of SK Hynix, the bleed over to the U.S. trade. Again, I thought it was very interesting, his comments, that now that you have American hours trading, that you bring in more liquidity, and maybe it won't be as volatile. But for now, we're down 8.2%, Fani.
All right, Danny, the AI trade under pressure, as you've been saying, ahead of second quarter earnings results starting this week. Now, TSMC reported a 36% quarterly jump in sales as demand remains strong. We'll get the full data from TSMC Thursday.
All right, and we're back with Citi Head of U.S. Equity Trading Strategy. It is Stuart Kaiser. Stuart, I was just looking through some of your research about what options are implying for this earnings season. It seems that we are implying less of an extreme move this time around, which in itself seems surprising given earnings expectations are so high. We have one day where like 5 banks are reporting tomorrow. It seems like there is, I don't know, odds that we will get something of a volatile earnings season.
Yeah, I mean, I think that has to be your base case. If you look at last quarter, 60 out of the S&P 500 stocks moved more than 10% when they reported earnings. That is a stunningly high number. If you went back 4 or 5 years, that number would have been 10 or 12. So single stocks are moving a ton. It's been a little hard to identify, which ones those might be, obviously. The implied moves this quarter are lower than last quarter, but last quarter was also a record high. So the market is still, I think, expecting a tremendous amount of volatility this quarter. And as they should. I mean, the bar has been reset materially high after last quarter. And as we've discussed, I mean, you're kind of on a knife edge on a lot of these stocks. And if you look at, Broadcom recently reported, Samsung recently reported pretty strong results if you just saw the numbers. And those stocks still moved 8 or 10% on earnings. So the bar is high and the positioning risks are substantial and people are very aware of it. So the implied move is maybe not what it was last quarter, but it is still very, very high historically speaking.
The Russell 2000 up 20% year to date. Are the gains in for the Russell, given that we really don't know where interest rates are going and they might be a little bit more sensitive to interest rate increases?
And to your point, they may be more sensitive because it's a new index, basically. You know, at the end of June, we rebalanced the Russell 2000, and a lot of the top end of the Russell 2000 had basically become AI stocks. And those are now in the Russell 1000. So if you look at the Russell 2000, the top 10 stocks were about 7.5% of that index at the end of June. Those are down now to about 3.3%. So basically, you've cut the concentration out. And the implied volatility of those top 10 stocks has gone from 90 to 50. So I would argue that, you know, the Russell 2000 right now is not the Russell 2000 of 2 or 3 weeks ago. But to your point, I do believe it's actually going back to how we would traditionally think about small cap. It should be more rate sensitive. It should be more sensitive to U.S. economic growth because we've taken some of that AI trade and moved it up the cap structure and left the rest.
Wait, what I'm hearing for you are more reasons to go back to not loving the Russell 2000.
Well, it depends. If you think inflation's going to print, well, I mean, Mike was talking about if we get a light inflation print tomorrow, maybe you get Russell moving. For me, it's actually a really positive thing because you want the Russell 2000 to express a view that's sort of independent of what the S&P and the NASDAQ do. And I would argue the rebalancing has moved the Russell back into its more kind of traditional envelope of risk.
Every time we see hostilities flare up in the Middle East, and it's clear we're not done. We may have thought we were at one point, but we are not. Do you worry a lot that this could spark something very, very serious in the market?
It's all about the price of oil, I think. I think the equity markets, if you go back, you know, as far back as the initial attacks on Israel, the equity markets are generally saying this is an oil trade for us. If oil gets high enough that it taps us on the shoulder, then we're going to start paying attention. If that doesn't happen, equities are going to focus back, I think, on the AI and CapEx story. So from here, I think you would need oil back into the mid-80s or higher.
But you could easily get that, Stuart. I mean, if tanks are low and the glut goes away and the strait's still closed, then what else happens?
Yeah, well, I think what the equity market is telling you is they believe both sides of this do not want to do that next step of escalation. And unless that happens, we're going to focus on the $1 trillion in CapEx. But look, from an equity perspective, this is about oil. From an economics perspective, this is all about the price of gasoline. And the national price of gas is back below $4, which is incrementally positive. So it's a tail risk. I don't disagree with you. But I think you would need a tail-type outcome in the price of oil to really get equity markets' attention again on Iran.
Yeah, and we already lived through this, and demand came down, and everything was more or less okay. But we have seen earnings upgrades for energy and for tech stocks. That really seems to be the bulk. And a lot of people have cited the number of 20%. Earnings expectations higher by 20% year over year. Stuart, how high exactly is that bar? Is this something we always beat it? Is it going to happen again this quarter?
Look, the bar is obviously very high this quarter after a tremendous beat last. My guess would be we get a beat of the numbers, but it looks more like traditional, like you're kind of, 5 to 7% type beat. But again, it's going to come down to that CapEx spend because that just trickles down, kind of the rest of the market. But yeah, you're going into this with a higher bar, no doubt, but also with very, very strong spending intentions. And I think in for a penny, in for a pound for a lot of those companies. And for that reason, I think ultimately this will play out well. For banks this week, it's a pretty good operating environment for banks right now. Very good IPO pipeline, very good trading environment. CCAR and et cetera went pretty well for the banks as well. So we do think banks are going to report well. And then, you mentioned banks and inflation. Later in the month, we get the FOMC and tech earnings again. So talk about a big day. You get to the end of July, is going to be some really big days for the market.
Stuart, what percentage of people that you speak to or that call you every day have already moved on from earnings season and are already talking about midterms and what happens after that?
Midterms, there was some interest in it a week or two ago on the view that with Iran risk coming down, to your point, Trump is going to refocus on domestic policies, and folks were looking for, how do I get exposure to that? How do I get exposure to the affordability theme or to the domestic growth theme? XHB and home builders was one sort of talking point there. That's going to get put on pause a little bit just because of earnings. As I mentioned, you have these are $1 trillion stocks moving 10% on earnings. It's very hard to focus on the election when your portfolio is moving that much. So I think we had a little bit of focus on the election. Probably for the next 2 weeks will be earnings again, and then back half of July into early August. Other than SpaceX, I think hopefully we'll focus on midterms.
We're not going to get a quiet summer, are we?
No, definitely not.
That's so disappointing. But we haven't had a quiet summer in a very long time, so maybe that checks out.
The World Cup will end. You'll get more sleep, and it'll all be good.
No, that's going to be a sad day for me. Stuart, thank you so much for joining. Such a pleasure to see you. That's Citi head head of U.S. equity trading strategy, Stuart Kaiser. All right, just under 8 minutes into your trading day, let's get a check on this equity market. Again, we're off the back of 2 consecutive weeks of gains, but this is an S&P 500, which in today's session is being dragged down by chip stocks. A lot of the Mag 7, though, having a pretty good day. Again, it's this back and forth that we've seen volatility between the 2 trades where Apple, Microsoft, Amazon, they're doing well. Energy companies also having a good day considering what is happening in the Middle East with the Trump administration, or Trump himself speaking on Fox, saying that they will take control of the Strait of Hormuz. So large disagreement of the status of the strait, whether it is open or closed. So Chevron, Exxon, all of those doing well. We also have some of the big financial names, Visa, MasterCard, having a good day too. To the downside, again, it's the chip makers, Micron, erasing 8.5 points from this S&P 500 itself, which is down 17 points. NVIDIA, that falls 1%. Broadcom, AMD, SanDisk, again, look at all these names. It's just a lot of chip names that are in the decline column. When it comes to this overall market, again, tech under pressure because of what's happening with the chip makers, and that is the worst performing sector today. It is down 1.2%, but there's not a lot of declines. Again, this shows you just how poor breadth is and how just the chip makers falling are able to really upset the entirety of this index. Energy having a good day. Again, the price of Brent crude moving higher. Utilities, consumer staples, real estate follow closely by. Healthcare also having a not so good day with a decline of about 1/3%. Coming up, we're going to gear up for the mega bank earnings day that will be occurring tomorrow. Hold on to your seats. 5 companies go at once. KBW's Chris McGrady. We're going to talk with him about what to expect from those big banks tomorrow. You're watching Bloomberg Open Interest.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start on the 3rd floor or the lobby. You actually have to start in the basement.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
All right, it's time now for our top calls. Some of the analyst action in focus this morning, and we're going to start with Wells Fargo saying Disney is not built to compete with Netflix or YouTube on streaming volume, and argues the stock could have a 40% upside if the company exits the streaming business. The firm says Disney's library could generate more than $15 billion in annual licensing revenue without hurting its box office, experiences, business, or its brand, and that stock up more than 1%. Next up, JP Morgan raising its rating on American Express, saying its affluent customer base and defensive revenue stream make it better positioned as geopolitical risks rise and lower income borrowers face more pressure. And finally, we have HSBC upgrading Capital One to buy, saying the bad news is already priced into the stock. The firm sees earnings picking up as the Discover integration moves forward over the next couple of years. Danny.
Bonnie, that upgrade comes just ahead of a pivotal week for bank earnings. 5 of the 6 largest U.S. banks are set to be reporting tomorrow. Joining us now is KBW head of U.S. Bank Research, Chris McGrady. Chris, thanks so much for joining. Great to see you in what I'm sure is the last calm day of the week for you.
Exactly. Let it begin.
Let it begin. Look, capital markets activity is booming. The consumer looks largely healthy. We've had record M&A volumes. Is there anything not to like this earnings season?
There isn't, but that makes us nervous, right? Expectations are high, right? The banks, the big banks in particular, have outperformed for good reason. The fundamentals are, excellent. Earnings estimates are up 15% from a year ago, and the stocks are up 30%. So expectations are high, the bar is high, but we think they will deliver.
So how will they guide? Because sure, this volatility can continue, but it's been particularly spectacular, right? How will they guide in terms of, FICC trading, equity trading, deals, everything?
That'll be, intra-quarter. They generally don't go too far out. But I would say, broadly speaking, we've been on the good side of volatility, right? If you go back in time, we'd ask ourselves when things like Iran and the war happen, who's going to get stuck with some bad trading losses? For the most part, the banks have ended up on the good side of volatility. So trading results, we think, will be up 15% year on year. Investment banking, we're going to hear about pipelines. So that'll be the outlook commentary. We heard last quarter they're at records, and we want to hear that follow through.
We've had a lot of the big deals already come into this market. Is it your assumption that we are still in this era of mega deals and that the banks are going to be capitalizing off of that? Or will we see some smaller things come through the pipeline that can still support the record volumes that we've had thus far year to date?
Absolutely. The big deals are getting the attention. There's plenty in the pipeline. And I think, beyond just the transactional nature of making, $100 million in SpaceX, is the trickle-down effect. So managing the wealth and managing the money of these companies and these individuals, that's where you get the permanency. That's where you get companies like Morgan Stanley. Yes, they'll make a ton of money this quarter on these IPOs, but it's the longevity. And as an analyst, we look at the persistence and the repeatability of these revenues.
Who will give us the most color on deposit costs?
Bank of America and JP Morgan are the numbers 1 and 2. I would be listening the most to them. I think as you get through the week, you'll see the regionals talk more about outlooks for deposit costs. That's the second major theme. The number one theme, we talked about capital markets. The second theme is just the outlook for deposit costs. Because for the traditional bank, net interest income, net interest margins are 70% of your revenue. And if the second derivative or flatlining of deposit costs are happening, you're going to have to really think about the outlook into 27 for margins. Are we at a point of inflection and perhaps rolling over?
Well, how much is that complicated by, I know you and the team's view is that we're not going to get cuts this year nor next year. How much pressure is that adding on?
On the margin, it's more difficult, right? The good thing is the assets are still repricing higher. So the margins are still, up, steady to up. I think as you go into 2027 budgeting season and looking at next year, I think if we see stable rates, you're going to see deposit costs creep up. And I think the stocks will trade on that.
So talk to us a little bit about where you're expecting the bar to be a little bit higher and be met as opposed to perhaps disappointing. So I know some of the regionals, for example, you're looking for really nice performance.
The regionals are set up to make a lot of money, right? The mid to high teens ROTCEs. What we haven't talked about is credit quality. Last quarter, it was private credit. That is absent from the conversation right now, which as an analyst makes me a little nervous.
Wait, why is it? Because they still have been really tied to the booming data center debt that's been taken out. And we've seen stories of banks trying to offset some of the exposure we have. Why won't that be present in this conversation?
I think it will be. I think we'll have to dig a little bit. But I think in general, analysts, investors focus on one or two things. And those two things we talked about, deposits and capital markets. But I think in terms of what could wreck the rally, what could really deter confidence, it's any conversation around credit. And so this higher for longer narrative, that has the potential over time to weigh on credit concerns. So higher rates make it a little bit more difficult on credit.
So at the same time, I know that you also like Morgan Stanley over Goldman Sachs heading into the earnings season. Why is that?
Well, first off, they're both excellent at what they do, right? Goldman is the number one in investment banking and trading. Morgan Stanley's got this powerful $10 trillion wealth management business. Our difference is really what you, in terms of repeatability, we think Morgan Stanley's business model deserves a higher multiple. They're both trading at very high multiples. Goldman at 3 times book, Morgan Stanley at 4 times tangible book. But it was more just a nuance. Like they're both going to have blowout quarters. I think there's probably more likelihood that Morgan Stanley's earnings beats run rate into earnings projections going forward, but they're both going to have outstanding quarters.
For Citi, Bank of America, JP Morgan, Goldman Sachs, we're talking about a 20 to 25% gain year to date, right? You think that's not really pricing them fairly, that perhaps there should be more gains there?
They're expensive by historical standards, right? The largest banks are trading roughly 13 times next year, and the smaller banks are trading at 25% discounts. You go back in time, that was flipped on its head, right? The small banks would get a growth premium, the large banks would get a regulatory discount. We think because of the regulatory momentum that's apparent in the system right now, and the repeatability and the scale that these large banks have, we think they deserve high multiples. And when you think about it broadly, outside of the bubble of financial services, 14, 15 times earnings isn't that expensive compared to other sectors. So it's uncomfortable as a bank analyst to put a 15 or 16 multiple, but they are growth companies in some capacity.
We had heard for Diamond saying in May, late May, he basically said, we are on the lookout for deals. We're on the lookout of adding more capacity for JP Morgan. Do you think that there are a lot of opportunities out there? Do you look around and maybe some of the smaller, the regionals, and see, yeah, they're real M&A targets for some of the big players right now?
There's no holes in JP Morgan's franchise, right? They are at scale in all their businesses, technology, investment banking, depositories. They can't buy another bank because they're above the cap. Sure. Could they fill out the wealth management, asset management, payments? Absolutely. So could some of their peers. But I think broadly, the regionals, they are scale buyers, right? They are looking up in terms of scale. They're doing a great job, but we are at a moment in time where the regulatory world is allowing banks to do deals, and they're allowing them to do them quickly. And I think they'll capitalize on that.
Just want to let everyone know, so you love PNC among the super regionals, Flagstar, Popular, Hancock, Whitney among the SMIDs. You have downgraded First Citizens.
First Citizens is a name we stepped aside from this quarter, and those were all calls into the quarter, the PNCs and the likes. First Citizens is the #1 bank in terms of regionals that has grown tangible book over a 1, 3, 5, 10. So they are working for shareholders every day. Our decision to step aside was really based on the conversation earlier about deposits. They have a nuanced headwind from the SVB acquisition a couple of years where they have to pay back the government. And so they have to raise more deposits more quickly and at a more expensive rate. So that's impacting the margin outlook a little bit. But again, great company, very cheap valuation, continuing to buy back stock.
All right, Chris, you better get home, get some sleep.
Great.
You're going to have a long day tomorrow. That is Christopher McGratty of KBW joining us. Coming up, Delta CEO Ed Bastian says his airline will do just fine with higher fuel prices. More from that interview next. This is Bloomberg Open Interest.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back to Bloomberg Open Interest. To check on your equity market about 20 minutes into your trading day. And just keep in mind where we're coming from. 2 consecutive weeks of gains, a lot of enthusiasm over SK Hynix listing in the U.S. on Friday. Even the chairman telling Ed Ludlow, when things calm down, we're going to be issuing more shares. Today, my friends, is not that day. The NASDAQ falling more than 1.5%, being led by chip makers. Look, nothing specific out there. No news that would necessarily derail this trade. But considering we are trading more risk off, it has become a high beta play. The S&P down by 0.4%. The Russell 2000 also down by 0.33%. Stuart Kaiser pointing out that the Russell 2000 has become more of an interest rate play because we had a rebalancing and a lot of the AI names went up into the Russell 1000. So thus you have something that's more interest rate sensitive. And it makes sense why you'd get some interest rate sensitivity today. Yields are moving higher with the price of oil moving higher too. I don't see oil on this board unless I'm going blind, but the price of oil is moving higher today. I can promise you that. Gold, that is falling by 1.7%, as is Nvidia. And again, look at these huge declines in the chip makers. SanDisk down 10.4%, Micron 6.5%, SK Hynix, the US ADR is down 6.9%, not as bad as the South Korea session. Much more leverage in the system there, although we are getting more of these ETFs coming to America. Carnival, that is surprisingly higher by about 1/3%, but most of the travel names are off today. Given the price of oil continues to climb over uncertainty in the Middle East and the status of the Strait of Hormuz, Delta Airlines among those declining, down 0.6%. And of course, they had their earnings last week. They beat expectations, but the shares had fluctuated on their outlook. And Delta CEO Ed Bastian says that higher fuel prices, though, they're not deterring travel. He spoke with Lisa Abramovitz earlier on Bloomberg Surveillance.
Our consumer has the ability to sustain this level. In fact, we saw it in the quarter. We made at 9% operating margin with fuel prices much higher than where they are in the existing, the existing landscape. So I think oil is going to stay sticky for longer. I'm not sure it's going to be in crude, though. I think the refined costs or cracked spreads are where you're going to find it's going to take a lot longer for that to come down. Our international, travel season is looking very, very healthy. Businesses, international, as I just said, American Express, our loyalty programs, our cargo business, we have so many different lines of business, including here in the U.S., our domestic travel. It's all doing very, very well, and I don't see fuel prices deterring that.
Delta CEO Ed Bastian on surveillance there, speaking with Lisa Abramovitz. And it's incredible, Danny, how optimistic he sounds. They've really ridden out this quarter really quite well. And if that was the end of it, great. But it looks like we might be kicking off again.
Well, the thing that's good news for Delta is the fact that they've really geared their business to be one that's premium. They've really lent into business, now also having basic business, which I hate, and I could spend an hour on why I think that's horrible. But they are more immune. Their consumer is more immune. Even if oil prices go higher, we have seen people continuing to travel if they're able to afford it.
They have pricing power, and that's what this market is all about, whether it's from the memory chip makers to the airplane to the cruise ships, right? Do you have pricing power?
Yeah, certainly. Coming up in the next hour, we're going to continue the conversation on the economy. RBC economist Francis Donald will join us in a very busy week, along with a lineup of power CEOs.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
From ABC News, I'm Chuck Severson. As efforts to resolve the Iran situation appear to be going nowhere, what are going somewhere are missiles. The U.S. and Iran shooting them, the U.S. at Iran and Iran at several Mideast countries. Oil prices have jumped, and so could gasoline. On the Strait of Hormuz, ABC News Chief White House correspondent Mary Bruce.
The ceasefire is now unraveling. The Iranians this morning say the agreement has, quote, entered a crisis stage. Now, overnight, the U.S. launching a new round of strikes against Iran, the fourth series of attacks in less than a week. Iran then responding with a barrage of strikes aimed at American military assets in the Middle East.
More Israeli air attacks on Gaza City. At least 6 Palestinians were killed, say Palestinian health officials. The Israeli military says it targeted terrorists. Extreme heat spreading across more of the nation, storms and flooding from the Midwest to the east. ABC News Chief Meteorologist Ginger Z.
In Philadelphia, the National Weather Service confirming at least 4 microbursts tore through the city. 70-mile-per-hour winds downing hundreds of trees and ripping roofs off buildings.
Mandating more motion.
It's part of a nationwide drive to get kids off their devices, at least for a few minutes a day. But Oklahoma school officials are in a dilemma.
Students need to be outside playing as much as possible, but they also need every instructional minute that we can get our hands on.
Holly McKinney is an assistant superintendent in Norman, Oklahoma. Instead of lengthening the school day, her district is incorporating literacy into science and social studies lessons, freeing up the additional 20 minutes of recess time mandated by the state. Jim Ryan, ABC News.
South Carolina Senator Lindsey Graham's sudden death was due to a ruptured aorta from heart disease, says preliminary info from the medical examiner. A statement explaining his absence from the Senate, Kentucky's Mitch McConnell, saying he had a fall last month and was in the hospital for a while, now in rehab. McConnell is 84. You're listening to ABC News. A Russian missile attack in the Ukrainian city of Sumy Saturday was caught on security cameras. This at a coffee shop. At a playground, people dropped to the ground. Adults covered kids with their bodies. Ukrainian officials say at least 5 people were killed, dozens more injured, and some residential buildings damaged. Cleanup going on in Philadelphia and surrounding counties after violent short thunderstorms called microbursts Sunday with straight-line gusts. We get more info on the cost of living this week, according to ABC's Dave Packer.
On Tuesday, we got the government's June Consumer Price Index data. Producer Price Index data comes out on Wednesday. That's a measure of how much products or services cost manufacturers to produce, and a closely watched measure of inflation. Compared to last month, the street expects no increase.
ABC's Dave Packer. A reminder that wildlife can get wild and dangerous. It happened at Yellowstone National Park on Friday, according to ABC's Melissa Don.
The man and his grandchild stopped to take photos of the bison. Seconds later, the massive mammal then charges, chasing the family around trees before the man is thrown into the air, seriously injuring him. Bison! Look out, bison! The grandfather is lucky to be alive.
ABC's Melissa Don. It is Monday, July 13th. On this day in 1985, the Live Aid benefit rock concerts were held simultaneously in London and Philadelphia, raising millions for famine relief in Ethiopia. Chuck Sievertson, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, originals and the Bloomberg Business app.
Good Monday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we are streaming live on YouTube. We're streaming live on Bloomberg.com as well. We got red and green on the screen. Scarlett Fu and Paul Sweeney, the Bloomberg Intelligence Program. Coming up, we're going to check in with Tyler Kendall, Bloomberg News Washington correspondent, get the latest news coming out of D.C. as it relates to Iran, certainly first and foremost. James Worden, CIO at the Wealth Consulting Group, will get his thoughts on these markets and what to look forward to in some of these bank earnings coming up. Mandeep Singh, Global Head of Tech Research for Bloomberg Intelligence, we'll get to talk to him about what's happening in the world of tech. I see SK Hynix shares trading down pretty big. First in Hong Kong, first in Korea, now here in the U.S. Got SpaceX trading down. What's happening out there? Tamlin Basson, Bloomberg Tech litigation analyst. Apple likely gets injunction relief in OpenAI trade secret spot. So there you go. Apple stock trading up on that news. And Sam Fazeli, Bloomberg Intelligence, he covers all the healthcare stuff. He's based in London. We'll get the latest on all the healthcare news out there as well. Let's kick it all off right now with Alexis Christopher. She's still here.
Oh, I am still sitting in the studio, Paul. Hello, everyone. And this Bloomberg Business Flash is brought to you by IBKR. For the past 3 years, Interactive Brokers individual clients averaged 24.3% annually, beating the S&P 500. Lower costs and access to 170-plus global markets matter. Visit ibkr.com/performance. An AI-fueled stock rout in South Korea has spilled over into the U.S. markets as SK Hynix American Depository shares fall more than 7.5%. That brings ADRs to trade just a few dollars above the $149 level where they priced last week ahead of their trading debut on the NASDAQ. By the way, shares of SK Hynix tumbled 15% in South Korea, the most on record. Memory and storage peers here in the U.S. dropping across the board. Micron Technology down 5.5%. SanDisk plunging 9%. We've got shares of Western Digital off more than 7%. Here's how this is playing out for the indexes. NASDAQ is now down 257 points or 1%. The S&P 500 is down 23 points, but the Dow is holding on with a gain of about 51. Even Taiwan Semiconductor getting swept up in all this selling despite a 36% jump in quarterly sales. That stock is down 1.33%. Quick check of oil. Brent crude, $78.42 a barrel, up more than 3%. And West Texas Intermediate crude up more than 3%. Now at $73.65 a barrel. That's your Bloomberg Business Flash. Back over to Paul and Scarlett.
All right, Alexis, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Scarlett was just, Alexis was just mentioning kind of red and green on the screen out there, kind of mixed, but let's take a look at some of the stocks that are on the move today, and we can do that today with Bloomberg's Judy LeGroux. Judy, what are you looking at today?
Good morning, Paul. I'm looking at, as everyone is, SK Hynix, ticker SKHY. The stock is dropping for, just a really big loss here, as much as 9.3%. Korean shares, as we know, dropped most on record, and a lot of other companies are dropping in sympathy. So we've got Micron, Western Digital, St. Disk as well. In an interview with Bloomberg, Chan Lee, a managing partner at the Korean hedge fund Petra Capital Management, actually called the SK Hynix listing highly successful and noted that much of the success had already been priced in, but today's weakness is reflective of a typical, quote, sell the news reaction and profit taking rather than any sort of change in fundamentals here. So one thing I also found interesting too is that a researcher in Hong Kong at Julius Baer anticipated elevated volatility for this stock through late July as foreign investors rebalance their positions. So really interesting story, great space to watch there.
And we had Stuart Kaiser in surveillance he's from Citibank on the trading desk there. And we were talking about there is a arbitrage between the valuation of SK Hynix in the U.S. trades at a premium to what it trades at in Tokyo. Korea.
Seoul,
in Korea. Apparently, that's not unusual. Taiwan Semiconductor has a similar type thing.
Yeah, and I know a lot of traders that look at that very carefully,
Yes.
and when it starts to narrow, they can jump in.
Yep.
When it starts to widen, they also jump in. So I'm just looking for any kind of change in that relationship.
Yep.
All right, so SK Hynix, the ADR is always on our radar. What's next for you, Judy?
Thanks, Scarlett. We've got Blackstone and Williams. So Blackstone, ticker BX, and Williams, ticker WMB. So there's not a ton of movement here with Blackstone. They're wavering sort of flat to positive, flat to negative. But what we're looking at is the natural gas deal that was announced this morning. Blackstone announced that it has entered into an agreement with Williams, the natural gas company, to support the development of 5 power projects. And so Apollo and accounts managed by KKR are also partners to Blackstone on this deal. But here, Blackstone and its partners are providing Williams with over $5 billion in exchange for a 49% non-controlling equity interest in these 5 projects. So, interesting space to watch. We are certainly watching these two companies to see how investors respond to this news.
You know what you need for AI? Power, electricity.
Yes.
So there you go.
Yes.
That's what everyone's been betting on.
Yep. Okay, there you go. One more here.
Oh, sure. And it's another twofer. I mean, look, this M&A activity between Trico Bank Shares, ticker TCBK, and First Hawaiian, ticker FHB. So we've got a tale of two stocks going on here. So TCBK, Trico Bank Shares, the holding company for Tri-Counties Bank, which operates in Northern and Central California. Those shares are climbing as much as 10%, and it is on track to reach its highest intraday price on record. And what is happening here is that First Hawaiian agreed to acquire Trico in an all-stock transaction. So on a combined basis, the company will have about $34 billion of assets and become the 6th largest bank headquartered in the Western United States. There are no expected branch closings here, but JP Morgan analysts are noting the key question in this transaction is whether it will materially improve the balance sheet growth profile versus First Hawaiian on its own. So First Hawaiian, on the other hand here, is sinking. The share is sinking as much as 9.5%. It is on track, for its biggest drop in over 3 years. So again, this M&A activity, definitely some place that we're watching here with these two stocks.
Yeah, especially with the smaller banks. We've been saying, and analysts have been saying for a long time, that the U.S. is overbanked. There needs to be consolidation in this sector. And you see dribs and drabs of it, but you don't really see as much as maybe we thought we would, given that we have a very pro or hands-off, kind of touch-free administration that would encourage M&A.
Yeah, a buddy of mine, he's an M&A banker at KBW, and he said he's put off his retirement for a couple of years because he's just too busy. They're doing too many deals. They're making a ton of money. He's like, this is like some of the best earnings years of his career. They're just cranking it out. So, Judy, thank you so much. We appreciate that.
Thank you.
Judy LeGroux covering all the stock movers here. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Geopolitics it is front and center yet again. It was a busy weekend from that perspective. You know, you kind of feels like they just kind of do stuff on the weekends when the markets are closed.
It's exactly what someone told us, which is the Strait of Hormuz open?
During the week.
Yes, it is. During the week when the market's open,
Right.
during the weekend when it's market's closed, and it's not. And there were skirmishes.
Yeah, it's just, let's try to get some of the latest reporting on there. And of course, we're fortunate to have Tyler Kendall, Bloomberg Washington correspondent, joining us remotely from the White House. What is the state of this ceasefire that just day-to-day back and forth between the U.S. and Iran as it relates to military strikes and overall the security of the Strait? Tyler, where are we today?
Well, Paul, as you guys are outlining, we really saw an escalation when it came to the kinetic action over the weekend, with the U.S. military confirming that they conducted at least 3 waves of strikes in Iran over the weekend aimed at specifically degrading Iran's capabilities to attack commercial shipping, because the Strait of Hormuz still remains the #1 point of contention, which at this point is stalling any sort of diplomatic progress when it comes to potential curbs on Iran's nuclear program, which is supposed to be where we are in the negotiating period. At this point, we're getting heightened tensions and rhetoric from both sides just this morning. If over the weekend they traded actual attacks, today they are trading these heightened threats. President Trump saying that the U.S. will guard the Strait of Hormuz, seeming to imply that there will be further and longer-term U.S. involvement in the strait. He said that the U.S. would be looking to be reimbursed for its efforts, though declined to give a framework or a timeline on exactly what he was referring to. But he made it very clear that CENTCOM isn't going anywhere when it comes to actually helping to ensure safe travel through. But meanwhile, pair that with what we're hearing out of Iran, some really tense words from Iran earlier today, threatening that the strait will be closed unless U.S. interference ends. So it is definitely going to be something to watch, because, Paul and Scarlett, we're seeing those ramifications already. It appears that ships that are transiting through with their transponders on, what we call observable traffic, has basically ground to a halt, which means that ships are now part of the so-called dark fleet. They're going through without that radar indicating, which makes it hard to track just how many vessels are actually making it through the waterway.
Yeah, that's a really important distinction there. And because of all of that, we're seeing oil prices rise again. Brent is just below $80 a barrel. WTI just below $74 a barrel. Tyler, you are in Washington right now, and we got some news over the weekend that Senator Lindsey Graham has suddenly passed away. Just give us a sense of how important Lindsey Graham is to U.S. foreign policy, and especially when it comes to his ability to advise President Trump on foreign policy.
Scarlett, he was absolutely critical when it comes to foreign policy. Washington was absolutely stunned when the news broke out in 2 ways. One, yes, Lindsey Graham was a very close ally of this White House, but also importantly, he had really strong bipartisan ties across the aisle, having built that up over nearly 3 decades serving in Congress. And that is where we really saw, in some cases, Lindsey Graham be able to make some really substantial moves when it comes to foreign policy and trying to reach across the aisle, including when it comes to Ukraine. Now, Lindsey Graham was perhaps the staunchest supporter of this administration's policies when it comes to the conflict in Iran, but then also a really staunch supporter, again, when it comes to Ukraine. He had just come back from his 10th visit to the country this weekend, and he had announced last week, alongside a bipartisan group of senators, that the White House had given them this very critical green light to move ahead with a sanctions package against Russia, which at this point had been stalled for basically over a year, and that Lindsey Graham was really trying to get through. We're going to have to see where foreign policy develops from here, because he very clearly had the ear of President Trump. The president said so himself in multiple interviews over the weekend. But Paul and Scarlett, I'd also put on your radar how essential he was when it comes to the domestic policy agenda, sitting as the chair of the Senate Budget Committee, which really served as the launching off point for many of the priorities that we saw get through this Congress so far, including the One Big Beautiful Bill.
Tyler, thank you so much. We really appreciate your reporting. Tyler Kendall, Bloomberg Washington correspondent. She is joining us today from the White House down in Washington, D.C. So again, some surprising news regarding Lindsey Graham's death. We also got a little bit of news regarding the health of Mitch McConnell. And apparently he had suffered a fall in hospital, contracted, I guess, some pneumonia, but apparently, I guess, still on the meds, I guess.
We have not seen him, though. This
Right.
is a statement from his office.
That's right.
So there is still a lot of talk everywhere about, just exactly his condition, where things stand. There's a lot of, I mean, the Senate is just overwhelmingly old.
Yes.
In terms of age of the members.
Yep. And so we're starting to see some of that just in the last few days. We'll have more coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's coming up on 10:22 on Wall Street. I'm Alexis Christoforous, and we have oil prices at new highs for the morning after President Trump said the Strait of Hormuz is open with or without Iran. He also said the U.S. is reinstating a blockade against Iran. As a result, we've got Brent crude up more than 5%, nearing in $80 a barrel right now. WTI crude up 5.25% at $75.08 a barrel. This has got the airline stocks and the cruise ship companies under pressure. Delta is down more than 1%. American Airlines down about 1/3%, but United is off more than 2.5%. We've got U.S. listed shares of SK Hynix sliding this morning. That is after the company went public on the NASDAQ on Friday. U.S. listed shares, that is. Those ADRs are down nearly 6% after plunging 15% in South Korean trading. That is a record. Meta plans to spend an additional $40 billion on its data center campus in Louisiana, bringing total costs to above $250 billion. And we have got the S&P 500 now down 30 points. Dow Jones Industrial Average has turned negative, down about 6 points, and NASDAQ Composite down 278 points. The Bloomberg Dollar Spot Index up 0.1% at 1220.61, and spot gold down more than 2.5% at 40.13 the ounce. That's a Bloomberg Business Flash. Back over to Paul and Scarlett.
All right, Alexis Christophers, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Well, earnings kick off in earnest tomorrow with some of the big banks reporting. We want to get a sense of kind of how that's going to shake out for the banks and for the market in general. Jim Worden joins us. He's the Chief Investment Officer of the Wealth Consulting Group, joining us from Folsom, California, via that Zoom thing. Jim, thanks so much for joining us here. We're going to learn a lot tomorrow about not only the banks, but also the consumer and also corporate America. What are you going to be looking for tomorrow with the banks?
Yeah, thanks for having me, Paul. I think we're really looking just to see, how do they do versus the street, but then more importantly, guidance. Where do they see things ending for the year, going into next year? Obviously, one of the things that we are looking at is how well some of these companies are integrating AI or leveraging AI, how much revenue is coming from AI deal making. So those are some of the things that we're looking at.
What do you think is the data point that investors will really key in on for the banks? I know for the big hyperscalers, we're all going to look at CapEx and how that progresses, especially their forecasts for CapEx. But when it comes to the banks, is there a specific data point that you think really investors will look to determine whether they stay with a certain stock or a sector?
Yeah, it's a good question. So we try to look at things through multiple lenses, multiple factors, momentum, trend, quality, value, volatility, all of those things. But when we lift up the hood, we're really trying to see, I think with the banks, the amount of revenue that they're getting through some of these deals, but almost more importantly, cost savings. What are they doing to trim the expenses, and how are they doing that? And so and also, how are they positioned with leverage? Is the leverage, more positioned with duration? Is it more positioned with AI expansion? How are they integrating it? So those are some of the things that we're looking at.
Stepping back a little bit, Jim, kind of how are you guys and your team? How are you thinking about just the market in general here? We're starting to hear maybe a little bit of talk is, are we in a bubble here? Are certain parts of the market in a bubble, whether it be kind of the AI trade? How do you guys think about that?
Yeah, Paul. So we've had some discussions kind of internally, and we were kind of really looking deep into the data. We own some of the companies that have done extremely well. Our clients have been very, very happy. Some of them haven't been thrilled that we've had this risk management process to trim while they're going up, and so taxes are becoming a thing that they talk about more. But yeah, for sure, we believe that there are pockets of froth, and for some of the memory based companies, it's not normal and natural for companies to be up 5,000% in a short period of time. And so to the extent that we have exposure in areas there or adjacent to those areas, we've been trimming things like Micron. But I don't believe this is a systemic, bubble everywhere. You still have a lot of companies that are just growing the revenues. And by the way, they're not expensive. And so to the degree that you have companies like NVIDIA that are still priced attractive relative to the market, we still like those names. We are a little bit cautious on some of the software names just because of the potential for disruption. And so spending a lot of time there, but overall this market feels, there's still some volatility. The war is on again, off again. Interest rates are a little bit higher. And so we believe that this is certainly a time that you want to stay diversified. You want to own plenty of boring names in there too, that have attractive valuations and that can grow some. So that's kind of how we're looking at it.
When you say not expensive and boring names, are those individual companies, or do you see them proliferating in certain sectors over others?
That's a great question too. Everything I'm doing is bottom up, quantitative driven. And so I'm saying specific companies that, they're not going to talk about on the radio or TV that are boring, we're maybe priced too low and neglected. And so, some of these are turning around. Some of these boring companies are turning around. So one of the things we do look for when we look at just the technicals, we're looking at trend reversal. And, is all the bad news priced in for some of these companies? In some cases it is. It's not, there's no additional seller coming to the market on those names. And so you get additional buyers, and then a lot of times you have the company turning around. Their margins are getting a little bit better, their revenue's getting a little bit better, but they're still not talked about. And so we believe a lot of those are really, really great to have in the portfolio when some of the other, sizzling names aren't doing as well.
All right, Jim, thanks so much for joining us. Really appreciate it. Jim Warden, he's the CIO at the Wealth Consulting Group, giving us his thoughts on the markets and maybe a little bit of a preview for tomorrow when we get to hear from a lot of the big banks here. Switch gears to technology. Why not? Mandeep Singh joins us here, Global Head of Tech Research for Bloomberg Intelligence. Lots of ways to go here, Mandeep. Let's just start with SK Hynix. What did you make of their U.S. listing on Friday, and maybe how the stock's trading off today, 5%, but then traded off pretty, I think, was it 15% in Korea?
Yeah, and the cost being down about 9% on the day.
What do you make of all that?
I mean, I think the day-to-day volatility will be there, and we're kind of going through a phase where everyone is trying to figure out the next leg of this AI infrastructure build-out and how the companies would be reporting, especially the hyperscalers. I mean, at the end of the day, everything comes down to the CapEx numbers for 2027 and 2028, and we'll learn about that when they report earnings, the hyperscalers. And, there is some profit taking right now, but overall, I thought the IPO was well received in terms of, the first day bump that we saw in terms of a close. And the long-term investors do think this is a multi-year cycle for memory names. And even though they are cyclical and there is a fear around peak earnings, I think on the whole, everyone buys into this multi-year build-out for AI.
It feels increasingly like everyone's taking their cue from the Kospi, from what happens in Korea, and that the tail is wagging the dog here. Is that the case, Mandeep? I mean, when you come in the morning, do you look at what's happening in Korea and say, okay, now I have a better picture of what's going to happen globally, because that sets the tone every day?
No, I mean, for me, it's just another data point where, I look at the futures, I look at how the markets have reacted. But at the end of the day, there are some data points that weigh a lot more for me. And the hyperscale CapEx guide is one of them. And if I know that all these companies are, raising their CapEx for next year, and we are into a third year of a 70% increase in CapEx, and if next year is going to be another 50%, then there is not much to worry about, at least for the next 12 to 18 months.
Okay, and it looks like some of those hyperscalers really don't report earnings until the end of this month. Tomorrow we're going to get the big banks reporting. We're also going to hear from TSMC and ASML, two big chip names globally. How do you see that kind of filling the vacuum between now and when the hyperscalers do report and give us a better picture of their CapEx plans for 2027 and beyond? Yeah,
I mean, TSMC reported their monthly number today, and we are easily tracking over a 40% increase year over year, and the seasonality was better than expected. So when you look at TSMC's results, which hasn't really used their pricing power like the memory guys have. So in the case of memory top line, you see a lot of pricing growth. TSMC, on the other hand, has been a lot more balanced in terms of volume versus pricing. And it's just a question like the durability of TSMC's growth, ASML's growth, and all of these memory guys, whether it's SK Hynix or Micron, have talked about raising their own CapEx. So that means ASML is a beneficiary of memory CapEx. And right now, everyone buys into this thesis that you have to keep investing to keep raising their CapEx just to increase the supply by 15-20%. And even that would not be sufficient. That's what the SK Hynix chairman said is, we will double our supply through 2030 at a CAGR of 15%, but we'll still be undersupplied. So the demand growth will outpace 15 to 20% supply growth that these companies are investing in.
Okay. Again, the numbers just blow me away, dude. But I'm going to take what you're saying face value. If I'm a Meta or Google or Amazon, what do I want to put up a big CapEx forecast or not? Where are we in that play there? Does the market want to see these guys keep spending, or are we kind of past that?
I think the market wants to see them spending, at the same time show some revenue lift to their top line. So in the case of Meta and Microsoft and Google, they want to see that cloud business get a bump, the core ads business get a bump from AI, and the AI contribution has to be very clear. So like Google Cloud growth, for example, has surpassed 50% now, expectations. Why? They were growing, traditionally cloud was growing 20 to 25%. That additional 25% plus growth is coming from AI. So similarly, you want to see that reflected in all the hyperscalers that are reporting that this is the AI portion, and hence we are raising our CapEx, and I think the market will cheer for that.
All right.
Show me the evidence, basically.
Show me the evidence. I think you're right. Mandeep Singh, he always shows us the evidence in studio, not some remote island up in the North Atlantic. Mandeep Singh, thank you so much. Appreciate it. Global Tech Research Head, Bloomberg Intelligence, joining us here in studio, which is what professionals do. S&P's off 22 points. The Dow's off 8 points. The NASDAQ off 212 points, 0.8%. Bitcoin also lower. Go figure that. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
10:40 on Wall Street. I'm Alexis Christophers from the Bloomberg Interactive Brokers Studio. Oil is surging after President Trump said the U.S. would reinstate its blockade of Iranian ships transiting the Strait of Hormuz and demanded a 20% reimbursement on all other cargo shipped through the critical waterway. Brent crude is up 4.5% at $79.45 a barrel, and West Texas Intermediate crude up nearly 4.75% at $74.71 a barrel. Meantime, chip stocks are leading the way south for equities. S&P 500 down about 32 points. We've got the Dow Jones Industrial Average down 73 points at 52,566, and the NASDAQ Composite now down 254 points, a loss there of about 1%. U.S. listed shares of SK Hynix, they are lower, down about 5% after their blockbuster debut on the NASDAQ Friday. That follows a 15% drop in South Korea overnight. That is a record for the South Korean memory chip maker. And the big banks, they're going to kick off earnings season tomorrow with results from JP Morgan, Bank of America, Wells Fargo, Goldman Sachs, and Citigroup. Those reports will give investors an early read on loan demand and credit quality. I've got my eye on shares of MGM Resorts, up about 0.5% now. It's said to be in discussions over People's Acquisition, or that unsolicited takeover offer from People Acquisition. That's the Barry Diller-owned media and internet conglomerate. It's just the latest sign that casino stocks are increasingly becoming M&A targets. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christophers, and that's a Bloomberg Business Flash. Paul and Scarlett.
All right, thank you so much, Alexis Christophers. This is Bloomberg Intelligence with Paul Sweeney and Scarlett Fu. It is Monday morning, and Alexis mentioned M&A. We have a group of about a dozen states getting ready to sue to block Paramount Skydance from buying Warner Brothers Discovery. This is according to Bloomberg reporting, which cites a person familiar with the matter. So this antitrust lawsuit will be filed in federal court, according to our reporting. And we know the federal regulators have already given this deal their blessing. It's the states that are opposed to it. And there are a lot of strikes in Hollywood, or I should say protests in Hollywood, Paul, objecting to this deal on the grounds that it will reduce jobs, it will reduce employment, and it's bad for the industry overall. And they're hoping that the states would pick up on it, and that's what we get right now.
Well, just about 10 seconds ago, I got a note from Jen Rhee in my inbox because I asked her, can these states delay or block the deal? Her answer is yes, but they have to win a preliminary injunction in federal court. Once the EU and the UK clear the deal, which is probable, the companies are free to close because the U.S. Department of Justice has already cleared the deal. So all the major entities have cleared the deal. But if they do close, the state's lawsuit is a bit futile because the companies will integrate and the judge would not be inclined to unwind. But the states could get a preliminary injunction stopping closing pending a suit on whether to block the deal altogether. So they could probably get a preliminary injunction is what Jen is saying, but maybe not a permanent one. So
they got to move quickly if anything's going to happen, right?
Yeah. I mean, so it's a long shot. I think that's kind of how my understanding of it is. But you're right. It's if you're in California and New York and these states that have where the entertainment business is a big part of the economy, this is bad because you're going to put these two studios together, and there's obviously, just as you can imagine, a ton of overlap. You're sitting on the Paramount lot, looking across the street at the other studio's lot, and you're like, gee, you have my job, my exact same job.
Yeah,
one of us
they
has
don't
to
need
go.
two of us.
Yeah.
Paramount Skydance, it's worth noting here, is up about 3% on a day where the broader market is lower. Warner Brothers Discovery is up about 1% at the moment. So we'll continue to keep an eye on these developments. But as Paul mentioned, the DOJ has already given this deal its blessing. Alexis was also telling us earlier about what President Trump has been saying when it comes to the Strait of Hormuz, because there have been some tit-for-tat attacks over the weekend. And now the president is saying that the U.S. is going to be seeking reimbursement for making sure that ships can get through the Strait of Hormuz, which is a decidedly different tone than what markets had anticipated, which is the Strait of Hormuz is open for business. Tyler Kendall is our Bloomberg Washington correspondent, and she joins us now. So, Tyler, just give us a little more context about what the president has said about the Strait of Hormuz and the U.S.'s role here.
Well, Scarlett, It's really interesting because President Trump saying here that the process and the formation of this plan will begin immediately. But we didn't really get more context on exactly how the U.S. intends to implement this. I was just catching up with our analysts at Bloomberg Economics that say that as far as they can tell, the president's post is inconsistent with international law. This also would be a very high fee, if you will, higher than what Iran is currently trying to charge when it comes to transiting through the Strait of Hormuz. What is very evident here, though, is that the White House's patience has run incredibly thin, as we saw CENTCOM over the weekend demand that Iran issue a statement saying that the Strait of Hormuz is open, but instead we got the exact opposite. The IRGC came out and said that the strait would be closed, and we actually saw them fire on at least one commercial vessel in the waterway. Now, I will point out, because we may hear some talk about this, there's something known as the UN Convention on the Law of the Sea, UNCLOS. Neither the U.S. nor Iran is actually a party or has signed this specific treaty, though Oman has. And it is important because it does ensure freedom of navigation. But there is a provision inside of that law that says that these can be rendered for services that are rendered. So maybe there may be something here that we could see the U.S. looking into, though if you look into the actual provision of this treaty, it does seem to apply only to those countries that share a border with the territorial seas. But I put that on your radar because it may be something that we hear more about.
So, Tyler, earlier this morning, Tom Keene on the surveillance program, we were speaking to Ed Morse, a longtime oil and energy analyst, currently at Hardtree Partners. We asked him, or I asked him, can the strait ever be considered as open as it was before the war? And in his opinion, he thought the answer was no, because now even the threat of military action by Iran is enough to slow, if not completely shut down the strait. What's the feeling in Washington, D.C. about ultimately how this plays out?
Yeah, that's a really good point, Paul, at this point. We know that the White House would like to see it get back to those pre-conflict levels, but this really seems to be Iran holding on to its leverage when it comes to the Strait of Hormuz, appearing to opt for that over what could be potential financial relief, since we saw the U.S. move to reverse that sanctions waiver that had allowed Iran to sell its crude to market. The U.S. had really been hoping that the carrot approach would help guide Iran to the negotiating table, give a taste of what financial relief could look like, say that there could be more benefits down the road. But it has become evident that Iran has opted instead to try to maintain and retain this control over the vital waterway. Interesting to see how Iran is also trying to work with regional partners. We saw Iran's foreign minister over the weekend meeting with officials in Oman. That is, of course, something to watch, because we know that the two countries have previously said that they are trying to work on some sort of framework that would give them authority over the Strait of Hormuz. But the U.S.'s position long has been that there can be no fees, no tolls, whatever you want to call it, when it comes to the waterway. But at this point, it seems like the U.S. is really ratcheting up that economic pressure now with this blockade and now with these latest comments from President Trump.
And because of these comments from President Trump, we've seen oil prices move higher, with WTI up about 4% and Brent up about 4% as well, just under $80 a barrel for that global benchmark. Tyler, before we let you go, just a quick question here on the president's latest remarks regarding Lindsey Graham, the senator who passed away over the weekend.
Yeah, President Trump trying to use this to push for his domestic agenda, saying that in his last conversation with Senator Lindsey Graham, he had urged for the passage of the Save America Act. We should note that Lindsey Graham served as the chair of the Senate Budget Committee, where we know there were talks about a third reconciliation package that could see some of these provisions related to the voter ID law rolled into in a bid to get that priority over the line, as President Trump has really made that his top priority as we head into November. We saw him refuse to put his signature on that bipartisan housing bill that became law over the weekend, because this has been so essential to him. Lindsey Graham, of course, a very close ally of President Trump's, and that is also raising questions here about what foreign policy is going to look like under the Trump administration, considering that the two had such a close tie and connection. Lindsey Graham, a huge supporter of the president's when it comes to Iran, but also a major backer of Ukraine.
All right, Tyler, thank you so much. Tyler Kendar, Bloomberg Washington correspondent, joining us from our Washington, D.C. bureau. Coming up next, we're going to speak with Tamlin Basin, our Bloomberg Tech litigation analyst, on Apple likely getting injunctive relief in its OpenAI trade secrets spat. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Right now, we want to talk about Apple. They're in the courts fighting OpenAI regarding intellectual property. It's legal stuff, folks. But let's get to an expert because I'm not really sure what's going on here. Tamlin Basin joins us here, tech litigation analyst for Bloomberg Intelligence. He's based in London. Tamlin, summarize what's going on here with OpenAI and our good friends at Apple.
Yeah, sure, Paul. So this is a intellectual property case, and specifically it's on trade secrets. Now, trade secrets are sort of the most cloak and dagger form of intellectual property disputes, and sort of reading the complaint over the weekend, that's, there's no exception here. So Apple is accusing OpenAI of a coordinated, orchestrated attempt to gain some of its proprietary know-how relating to making devices for the next iteration of AI rollouts. So this started about a year and a half ago when OpenAI spent about $6.5 billion to acquire a company called I.O. This had been founded by some former Apple executives. One of those executives is now the head of software development at OpenAI. And what this lawsuit lays out is various stages where even engineers at Apple were recruited, were asked to bring Apple devices to OpenAI interviews and to share proprietary information. So what Apple is doing is they have sued, they want an injunction, they want to put a stop to what they see as an attempt to shortcut, OpenAI's attempt to shortcut its way into devices.
Okay, so lawsuits typically take a long time to get resolved. And of course, technology and technological change happens very, very quickly. What are you thinking about in terms of timeline for any kind of landmark, not even decisions, but landmark events in this lawsuit to affect the technology that both sides are working on?
Yeah, and that's an excellent point. These cases often do have long tails to them. However, I think what we're expecting over the next 2 to 3 weeks is Apple to follow up with a request for a preliminary injunction. Really, what it's going to ask the court to do is put some guardrails around what it says are its trade secrets, preservations of evidence. So it's going to be probably looking for something in 3Q, if not in 4Q, for an early ruling on that preliminary injunction request. And we do think Apple has a pretty strong argument here. Courts are, it's so difficult to pull those trade secrets out of a product if it goes to market. So I think now no products have shipped yet. I think Apple's going to have a fairly strong chance to get that temporary preliminary injunction probably in the next few months. After that, we're going to have to see, that there's potentially going to be settlement talks as they go forward. But I do think Apple's eyes right now are on getting some near-term relief in this.
How do you think about the employees that have left Apple and gone over to OpenAI? What kind of risks do they face now?
Yeah, a few of them have been named in this lawsuit. And for those named defendants, the risks are very high. So we've seen these litigations play out. Some other high-stakes instances are Waymo, which is Google's self-driving car division. About 5 years ago, it sued Uber over sort of self-driving car technology. The executive there ended up going to jail. This was somebody who left Waymo, went to Uber. So the stakes can be pretty high. Right now, there's no criminal component to this case. However, for trade secrets disputes, that can sort of escalate quickly. So I think everybody is going to be a little bit on edge. And it's also interesting because there's such a talent war right now, not just between these companies, for all companies trying to gain as much AI talent as possible. So I think we're going to have to see if this has sort of a dampening impact on how much poaching we're seeing in the industry.
On Wall Street, there's something called garden leave. When you leave one firm for another, you can't go start work at that new firm for at least 6 months, sometimes longer, to try to preserve some of the corporate intellectual property from the firm you're leaving. Is there anything like that in technology?
Technology is generally pushed back on that just because sort of, again, as Scarlett pointed out, a lot of the development in this is so fast paced that having an executive, having a star engineer sort of sit on the sidelines for 6 months can be really a disadvantage. So sort of we've seen across the entire tech space is resistance to that sort of garden leave type scenario. We'll see if going forward, if firms are more open to implementing that, but so far we've seen a lot of reluctance.
What does this mean for OpenAI's ability to recruit tech folks from other firms in Silicon Valley?
Yeah, I do think it's a bit of a reputational risk right now. I think until there's more clarity on what's going to happen with this lawsuit, and again, this is not the first time OpenAI has been sued. So I think there's been a lot of litigation that's attached to it. So I think it probably does, over the near term, until there's more clarity, it probably does put a bit of a dampening impact on its ability to go out there and recruit some of the biggest names that it may want.
All right, Tamlin, thanks so much. Appreciate it. Tamlin Basin, he's a tech litigation analyst at Bloomberg Intelligence, joining us from London. I never adhered to those garden leave things and all the job switching I did on Wall Street.
Well, what do you mean? How do you not adhere to it?
I just said, come sue me. I mean, and I'm not worth it. So they just said, all right, whatever. So, I mean,
So you take a little bit of time off, but not the mandated, 3 months or?
Solomon Smith Barney left Friday at the close, got my deal signed from Credit Suisse on a Saturday, initiated coverage on Monday.
Okay, so
no
the
6 months went right back. I was on the road on Wednesday.
But they did pay you out for the 6 months from the departing firm, or not even?
No. I just got all my stuff vested, and I sold it literally 5 minutes before the close on that Friday.
Paul Sweeney and his Wall Street career. That's how you do it.
No loyalty, zero. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Golden Crest Metals. Next hour, BI starts right now.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, originals and the Bloomberg Business app.
Good Monday morning from the Bloomberg Interactive Brokers studio in Midtown Manhattan. This is Bloomberg Intelligence with Paul Sweeney, Scarlett Fu, and Charlie Pellet. A lot to cover here on this Monday. A very busy week, certainly because earnings season begins with the big banks reporting tomorrow. We're definitely going to be talking about all of that. But first, we have oil prices on the rise yet again, with Brent approaching $80 a barrel. Salih Yilmaz, our senior oil analyst, will be joining us to give us his take on what we're seeing out there. We're also going to have a conversation with the FCC chair, Brendan Carr. He'll be speaking with our B-Tech anchor, Ed Ludlow, in about 10 minutes' time. And we're going to check in with Megan Horniman, CIO of Verdance Capital Advisors, to get her take on the market. Kevin Warsh, the new Fed chair, will begin to testify before Congress, first the House and then the Senate on Tuesday and Wednesday. And of course, we need to check in with Herman Chan, our senior analyst covering U.S. banks, to give us a preview of the 5 banks that will be reporting on Tuesday morning alone. Let's go over now first to Charlie Pellet for a check on our Bloomberg Business Flash.
All right, thank you very much, Scarlett. Happy Monday morning. The Dow, the S&P, NASDAQ, all trading lower. Stocks are falling as the Hormuz standoff spurs a rally in oil. S&P right now, to put everything in context, down 19, 75.56. The S&P is down 0.3%. Dow Industrials right now down 74 on the Dow. That is a drop of 0.1%. Back to work Monday. Tech's tumbling. Right now we have the NASDAQ 100 index down 1%. NASDAQ Composite Index down 0.7%. All of this with the stocks hit hard. The Philadelphia Stock Exchange Semiconductor Index down now by 2.9%. The VIX, though, just above 16. Your 10-year 4.59% with a 2-year currently yielding 4.24%. Spot gold is down $105 the ounce at $4,014 on the precious metal. That is a drop of 2.6%. West Texas Intermediate crude up 4.3% now, 74.47 a barrel. Brent, the global benchmark, still below 80 at 79.21. Barrel of Brent up now by just about 0.4%. As for the overall market backdrop, heading into those big bank earnings tomorrow morning, Stuart Kaiser is head of U.S. equity trading at Citigroup Global Markets, and he was the guest this morning on Surveillance.
Year to date, the story's been earnings. I do think we're seeing people, and I hate to say this, kind of rotating into Mag 7 or using Mag 7 as a catch-up trade, which seems almost comical if you think about how those things have traded over the last 12 to 18 months. But yeah, estimate momentum. It's all about earnings this year.
Stuart Kaiser of Citigroup Global Markets. Now, sources tell Bloomberg a group of about a dozen states is poised to sue to block the Paramount Skydance deal from happening. Paramount, of course, buying Warner Brothers Discovery. Those sources say the antitrust lawsuit set to be filed in federal court. Paramount Skydance shares now, they are trading higher. We got Paramount Skydance up by just about 2.8%. Warner Brothers Discovery up by 0.9%. Recapping, oil is surging, stocks lower, S&P down by 0.3%. I'm Charlie Pellet. Scarlett Fu and Paul, no garden leave Sweeney.
Nope.
That, my friends, is a Bloomberg Business. I can't believe that story, Paul Sweeney.
Keep
Thank
working,
you for,
never stop.
And
working.
nobody ever came after you once.
Who's come after me?
And he didn't. There you go. And he didn't care.
Exactly. All right, very good, Charlie. Appreciate that. As Charlie was just reporting, we've got some red on the screen here. Let's take a look at some of the stocks that are on the move today. We can do that with Bloomberg's Avalon Purnell. Avalon, what are you looking at today?
Yes, definitely a lot of red and green. We can start off with Trico, that's ticker TCBK, currently jumping about 11% to hit a record high. And that's after First Hawaiian agreed to acquire the bank for about $63 per share. The deal will expand First Hawaiian's footprint into the mainland through Trico's Northern and Central California branches. And worth noting that upon closure, the bank is expected to have about $34 billion of assets together and be the 6th largest bank headquartered in the Western U.S.
All right, so some M&A in the banking sector. Let's move on to the tech sector.
Yes, SK Hynix, that's ticker SKHY. Those American depository shares are falling about 6% right now, though earlier dropping as much as 9%. And that's after an AI-fueled stock rout in South Korea, really underscoring investor concerns that the AI boom may be overextended. Traders are also pointing to fears of lower than expected earnings for the company after a report from Korea Investment and Securities predicts that SK Hynix's operating profit for the latest quarter may trail expectations. Others also told Bloomberg that today's weakness reflects a typical sell the news reaction and profit taking. Still worth noting, though, those ARs continue to trade higher than the $149 that it priced at last week.
One more. What do you got for us?
Humana, that's ticker HUM, currently gaining about 3.8%. And that's after Wells Fargo upgraded the health insurer to overweight from equal weight on moderating cost trends in their Medicare Advantage plans. That analyst also saying that these trends significantly decrease earnings risk and could also mean margins will make meaningful progress next year. Worth noting that their peer, United Health, will be reporting earnings on Thursday, so we'll definitely have a slight idea there and a much firmer idea by the end of the month as well.
All right, good stuff, Avalon. Thank you so much. Avalon Purnell is our Bloomberg News equities reporter. And for more conversations like this, be sure to subscribe to our Stock Movers reports. These are 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. All right, in today's trade, we are seeing declines in equities, and energy stocks are the best performers. They're defying the declines in the broader market as oil prices rise once again. WTI now approaching $75 a barrel, Brent approaching $80 a barrel. And this, as it appears the Strait of Hormuz is not open for business, at least the way that it was before the war began. And now both sides are talking about tolls and costs imposed on shippers. Let's bring in Salih Yilmaz. He is our Bloomberg Intelligence senior oil analyst, joining us right now from Dubai. Salih, give us a state of play right now when it comes to the Strait of Hormuz. Is it open? Is it not open? And are shippers paying tolls right now?
Uh-oh, technical difficulties coming out of
maybe he's on
London,
mute right now.
England. So,
hold on, we're going to see if we can figure that out. But yeah,
you can make the argument that it may never really be fully open here unless you get something really strongly worded.
Salih, let's go back to you. I think we have your audio working.
Okay, if you can hear me now.
Yes.
Sorry about that. I was saying it's a good question, and we've been trying to figure that out. I think it never really was open during this period in the way that it was before the conflict. But during the ceasefire, there was clearly a trickle of movement. And you can argue that even a trickle of movement when it's just a couple of vessels, but some of these big VLCCs that can carry up to 2 million barrels per day each, that was enough to kind of ease that tightness in the oil market, and that certainly helped. But in the last few days, the data that we can see shows that the movement is slowing down once again. That data that's available to us is useful, but usually doesn't give us the full picture because some of these vessels can be taking a chance, can be turning off their GPS, and can still be moving through the Strait of Hormuz. So my view is that there is some movement, less than last week, but definitely not as much as before the war.
All the other countries that move commodities, principally energy, throughout that strait, I can't imagine they want to sign up to fees or taxes from anybody. What are we hearing from them?
Absolutely. I mean, until today, the conversation was very much around, is Iran going to be charging a toll or a fee? And then I think, namely the US, many other Western countries, and many vessel owners were generally against that idea. But today, President Trump making the suggestion that, the US might start charging fees for these cargoes, I would suspect that many other countries and many other ship owners, vessel owners would be against that idea as well. So, I mean, these were headlines from just 20 minutes ago or so. So we don't know what the reaction will be, but I suspect generally these vessel owners would be against the idea of paying any sort of fees either there or in any other kind of choke point that is responsible for movements of a lot of these important commodities.
So the rise we're seeing in oil prices feels very much like a knee-jerk reaction to all these headlines. What does the oil picture look like when it comes to supply and demand right now?
Yeah, I mean, I think supply is still very much constrained until we get back to the pre-war levels of flows through the Strait of Hormuz. It will continue to be. I think we've had a lot of adjustment mechanisms in the oil market that certainly helped. The bypass pipelines around the strait in the UAE and Saudi Arabia, some demand destruction, especially in China. But also, I mean, you can argue these are not maybe so temporary, but we had some adjustment mechanisms like strategic reserves, using of commercial inventories, which are a lot more of temporary buffers. So, on the supply side, we are on a bit of a clock because we don't have infinite amount of inventories. On the demand side, we've had some demand adjustments, some demand destruction, if you will, especially in China, which has started importing a lot less oil than it used to. But I would say, as things stand, the market is relatively tight, and as flows through the Strait of Hormuz gets constrained, I think that tightness will return, and this is exactly what we're seeing in oil prices, with Brent, testing $80 a barrel again today.
Boy, if I were a buyer of Mideast oil coming through that strait, I'd have to just assume going forward that's not going to be available to me, or at least in the size that I've become accustomed to, because I'm not sure how you ever really securitize that strait there. Are you seeing China, other Asian buyers looking for alternatives that might be a longer term alternative?
I think so. And I mean, anecdotally, we did a roadshow a couple of months ago in Asia, and we were in China, we were in Japan, we were in Singapore. And a lot of our conversations kind of gave me the sense that a lot of these countries are already thinking about diversification of the source of their oil, their LNG. And, we've just published a report that we called Peak Hormuz last week. It's a long report. And there we're arguing that, this episode may mark the peak dependence on Hormuz. So I think on the consumer side, a lot of these consuming nations that rely on Hormuz, that rely on the fossil fuels from this region, will start to diversify away as much as possible. I mean, I don't think they can fully diversify away. Yep. And on the producer side, I think, our report argues that a lot of the countries in the Gulf will try to build more bypass pipelines, will do whatever they can to reduce their reliance on Hormuz.
All right, good stuff, Salih. Thank you so much. Salih Yilmaz joining us from Dubai. He's our senior oil analyst on location in the Middle East. We want to go now to our colleagues at Bloomberg Technology. Our Ed Ludlow is speaking right now with Brendan Carr. He's the commissioner of the FCC, the chairman, and he joins us now to discuss the latest FCC actions in the wireless market, especially as it relates to FCC approving deal flow, satellite connectivity, and FCC spectrum auctions. Let's listen in.
Good question. So at the FCC and frankly, all across the Trump administration, we're focused on two things. One, we want to make sure that consumers are right away feeling a difference in their life. And right now we're seeing that on the connectivity front with speeds are up, prices are down, competition is intensifying. But the second piece goes to your question, which is what are the fundamental regulatory changes we can do that are going to pay off for consumers in the long run? And a lot of that has to do with the emerging space economy. To your point, we're seeing many, many more things go into orbit, whether it's all of this new generation of low Earth orbit satellites or data centers. And so the FCC has a role to play, one, to make sure that everyone has the spectrum access they need in order to launch those. But even things like orbital debris end up hanging off of a lot of the FCC's authorizations. Right. And of course, that's in conjunction with a broader group of regulators as well.
When SpaceX or another player comes to the FCC seeking approval to deploy data centers in the form factor of a satellite into orbit. What are the considerations by which the FCC decides approval or to block approval?
Well, the first thing for us is we want to go much more quickly. You know, when I took over, we launched what we call a Build America agenda, and a key piece of that is boosting America's space economy. And it used to be when we would get satellite applications that would come in, we would get, you know, 1 or 2 or 3 a year, and we would do individualized, bespoke, custom reviews. And what we're fundamentally changing is to an assembly line mindset. In fact, we're going to vote this month to change how we run our Space Bureau operations. So it'll be objective criteria, and if you hit those, you should expect much faster FCC approvals. In fact, we've cut the backlog of FCC approvals down by about half. We're moving much faster, and so we're giving people objective criteria to hit. That way we can end up improving, you know, thousands or hundreds of thousands of applications, whereas before our processes would take us, you know, months or years to do a small handful of that.
Away from orbital data centers, a big focus right now is the wireless networks in the context of space. Prior iterations of the SEC debated and looked at a 4th national wireless network with EchoStar, right? And I think I'm right in saying, Chairman Carr, you were critical of prior approaches to that future market. What has happened in the interim is that the FCC has handed some of those same licenses to SpaceX for Starlink. What do we interpret through that mechanism?
Well, you're right. There was a mindset several years ago that said we have to have 4 separate, standalone mobile wireless providers, let alone many other competitors that we have in the broader connectivity market. And people said that if you didn't have 4, that prices would rise for consumers or speeds would slow down. And we haven't seen that, obviously, at all. We've completed the process of facilitating Dish EchoStar effectively exiting the market when it comes to mobile wireless, and consumers continue to benefit from a lot of price competition. So it's a great time for consumers, but it's also a really good time for companies because we're taking a lot of the costs, unnecessary costs, out of the system, whether it's permitting reform, whether it's allowing providers to retire these old copper networks that they had to subsidize in addition to their new networks. And so this old view of having to have 4 individual mobile wireless providers or the sky would fall, we didn't buy. And obviously, I think the evidence is coming in to show that this new theory is correct.
You told Bloomberg last week that you have not had substantial conversations with SpaceX about their wireless ambitions, substantial conversations. So Chairman Carr just asked if you had any conversations of any degree of substance with SpaceX about it.
No, I don't think I've had any of much. I guess if I hadn't used substantial, maybe I would have avoided the follow-on question. But I don't recall having any conversations with them about that. Look, I do think one of the things we're really excited about is this new emerging trend towards direct-to-cell technology, where you can go straight from one of these low Earth orbit satellites right to a handset. Obviously, Starlink is doing that. We've facilitated them getting some spectrum to do it. But also, Amazon is looking to do it. AST Space Mobile is looking to do it. So we want every single competitor in this sector to do well.
Overall, you know, the FCC's done a quite a large body of work to come up with some kind of regulatory framework, I think, right, for direct-to-device. The accusation is of maybe favoritism towards SpaceX. You've also denied several of their requests. How are you going about building out that framework?
Yeah, a couple things. On direct-to-cell in particular, you know, our view was to have 2 or 3 facilities-based providers in that segment so that the United States could lead the world in that. And that's something I think it's really important to President Trump, is that U.S. lead when it comes to these new emerging technologies, and we are in really good position to do that. There are always lots of stories about FCC taking action to benefit Starlink or SpaceX, and I get it. It probably results in more clicks. But the reality is we are, you know, uplifting every single operator or business that's in the space economy. We're taking actions that benefit Amazon Leo, that benefit many smaller providers as well. So Reflect Orbit, Logos, AST Space Mobile, of course, SpaceX as well. So there's many, many companies in this sector that are benefiting from our new mindset at the FCC, which is to go faster with these approvals. We don't want to get stuck navel-gazing.
We're live on Bloomberg Television and on Bloomberg Radio. This is Bloomberg Tech, speaking with FCC Chairman Brendan Carr. There's also a technical consideration about spectrum, which is Why is it important, Chairman, for a direct-to-device provider to have exclusive spectrum use in and amongst everything else that's happening up there?
Well, it's a very efficient way to operate, to have your own spectrum. And so we've been very open to spectrum deals. On the one hand, we've had about $130 billion worth of deal flow go through the FCC, this Trump administration, not just mobile wireless, but across the board. And we're moving hard on spectrum as well, and not just direct to sell. We're voting this month to create 160 megahertz of new spectrum for mid-band offerings in what's called the C-band. And it's effectively going to create what we're referring to as a super band of 440 megahertz wide channel for mid-band spectrum for 5G, for 6G. But you're right on the satellite side as well. So SpaceX has access to, I think it's 65 megahertz of spectrum that they can use for direct to sell. Amazon just announced that they are looking to purchase Globalstar, which also has spectrum that could be used for direct to sell technology. So you see a lot of the players in this space, AST as well, that are looking to obtain their own spectrum rights so they can stand alone and offer that service in a complement to existing connectivity services.
Chairman Carr, just before the show started, Bloomberg broke some news in a story that a group of about a dozen states is poised to sue to block the Paramount Skydance Warner Brothers deal. I think there had been prior reporting that various attorneys across those states had been preparing for that anyway. I know that the FCC kind of has a nominal role to look at the foreign financing of such a deal, but I hope you appreciate I have to ask you about what the latest is there and your reaction to a statewide antitrust suit.
Well, it's hard to see a real legitimate antitrust action, but of course, I leave it to the antitrust experts to weigh in on this. I did think it was interesting that there was a statement at least attributed to the California Attorney General that said that they would not sue if Paramount agreed to spin off CNN. It's hard to conceive of a competition or antitrust theory that takes you all the way up to the point where owning or not owning CNN as part of that broader group is a legitimate line that antitrust or competition law would draw. For our part, we do have a piece of this with respect to some of the foreign investment, and we're running a standard process on that, and we haven't made a final decision there yet.
In recent interviews, you've also been asked, of course, about Disney. And you've said that you've not made a decision on whether to pull Disney's broadcast licenses over various diversity and inclusion practices. Again, remind us of the FCC's remit in that area, but what it would take for you to look at a potential action.
Yeah, with respect to Disney in particular, the FCC has three proceedings that are going on, or sort of three buckets of issues. One, starting all the way back in March of 2025, I wrote a letter to Disney leadership raising concerns about some of their practices, including what we call invidious forms of DEI discrimination, where there's potential evidence indicating that they may have been discriminating with respect to pay or compensation or workplace opportunities based on race, gender, or protected characteristics. There's a role for the FCC there. We have particular rules on EEO policies and discrimination. So we've been looking into that for quite a while. In fact, we've been doing some letters of inquiry, our versions of subpoena, and frankly, the view was that Disney was being disingenuous in the way it was responding to the FCC's inquiries. And so we took the next step in our enforcement abilities, which was we called in all of Disney's broadcast licenses for early renewal. So Disney has now applied, and they have to demonstrate that they've been operating in the public interest. There have been petitions to deny the renewal of those Disney stations. And so the FCC is looking at all of that very carefully right now. To your point, we've not made the final decision. But at this point, Disney is attempting to demonstrate that it should get those licenses renewed. And we'll ultimately see what the record shows. We also have obviously a separate issue going on with Disney right now with respect to The View and their claims of The View being a bona fide news program. But we have the DEI, the license renewal in The View proceeding going. But more broadly, we're trying to hold all broadcasters accountable to their public interest standard. We have issued similar actions with respect to a number of other broadcasters. I think for years, people took the view that broadcast TV should be treated just like cable or a podcast or a newspaper, but that's not what the Communications Act and Congress said. And so we want to make sure that all broadcasters are, in fact, living up to their public interest obligations.
FCC Chairman Brendan Carr joining us from our DC studio. Thank you very much.
All right, that was FCC Chair Brendan Carr speaking with Bloomberg Tech anchor Ed Ludlow, getting the latest on the purview and the policymaking coming out of the FCC. Let's get a little bit of a check here on these markets, a little bit of a reset, and we'll get a Bloomberg Business Flash with Charlie Pellet.
All right, I thank you very much, Paul Sweeney. The chairman mentioned Disney. Disney shares up 1.6% right now, 97.14. The Dow, the S&P, NASDAQ, all in the red. And this Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide, goldencrestmetals.com/guide. As I mentioned, stocks lower. The standoff between the U.S. and Iran lifting oil prices. That is dragging down stocks and bonds. Also, questions about a potential disruption in energy that has crude advancing. And let's begin there with West Texas Intermediate, $74.72 a barrel, up 4.6%. Barrel of Brent still below 80 at $79.45. Brent crude up by 4.5%. Right now, we do have a sell-off in chip makers underway. S&P down 26, drop there of 0.3%.